Four straight days of gains. We'll see if today is a fifth. Certainly futures are pointing higher by 0.7%, despite the fact, to your point, that oil prices are higher, at least today, but lower, to your point, on the day. Currently around 104, 105 on Brent. FTSE 100 futures looking to add just 35 points, pointing higher by 0.3%. DAX futures looking to add 194 points, pointing higher by 0.8%. The earnings story as well, another factor. Anna.
Let's talk about individual stocks, sectors that are in focus this Friday morning. And we'll start with the retail space and Puig, which is, of course, a business that's listed over in Spain, has a number of beauty brands and other things under its remit. And they've been in talks, of course, with Estee Lauder. Those talks have collapsed. Estee Lauder not buying Puig, and so we would expect to see some weakness in that stock at the start of trade. The UK retail space is broadly in focus as well, because UK retail sales dropped, of course, as the Iran war is leading to fewer car trips. So actually people pulling back on the car journeys. We'll see whether they're spending on other things. And Richemont is also in focus as we have numbers out there. And some really interesting commentary, Guy, from the chairman actually there, saying we have to think about turbulence as the new normal.
Yeah, he's talking about volatility. It's just being something he's got to get used to. Keep an eye on SAP this morning. The workday numbers will factor into what it does today. Keep an eye on the chemical sector. I think there's JPM note out on that. These are the early indications. You've got a FTSE 100 that is flat and doing not very much. It was expected to be the underperformer today. We are already seeing that. The Stock 600 is up by 0.3%. You've got moves in other markets that I think are going to be worth paying attention to. It's going to be interesting to see what the IBEX does around the Puig story, the AEX, what is happening in terms of the semiconductor space story. That's all going to be interesting. So as expected, kind of 0.6–0.7% to the upside, pretty much across the board. The DAX isn't open yet, but we are expecting a decent performance coming out of it as well. Tom.
Let's get you a take on some of the individual names then that are moving. We've been talking about Richemont, of course, in terms of the earnings story, pretty positive. It's the jewelry space, of course, at the high end that is performing relatively well, as maybe people look to focus there in terms of their spending at the high end, at least versus things like handbags. So that company is up currently at 4.3%. The luxury sector more broadly, of course, has been challenged by what's happening in the Estee Micro in the chip space, of course, so linking to the broader AI theme, is gaining 3.5%. So that's one of the best gainers as well. Just checking some of the stocks on the downside right now. We look at energy prices, of course, are up. You've got on the downside some of the biggest losses coming through for the likes of BP, down 1.3% despite the higher oil price. RWE also a little weaker, down 1.4%. But again, oil prices off for the week. Anna.
Yeah, in terms of the sector picture then, we see what's going on with Richemont dominating the upside. So you talked about the strength in consumer-facing companies, and that's what we see this morning. So Richemont is trading higher by 4% on the back of their numbers, which is an interesting one, especially as the chairman's been talking about the possibility of doing M&A. Cartier providing some resilience in the numbers seems to be the story there. And Tom, as you said, that there's an interesting dynamic at play with energy names, because that is the worst performing sector. BP down by just over 1%, and it's in good company with others in that space, despite the fact that we've got oil prices a little higher than the close. Now, the close of oil and the close of stocks is different. So it was a very volatile picture on oil yesterday, wasn't it? Perhaps that explains some of that. Talking about vulnerability to oil prices, Guy.
Quick look at the Turkish stocks. So down 6% yesterday. Looks like they're bouncing a little bit today. Let's see what is happening here. Officials certainly are out this morning pushing very hard to signal stability, and we are seeing some response maybe in the market to that. It's obviously a market the foreigners don't play as much in anymore, so I'm just kind of wondering what is happening below the hood in terms of kind of how the market is being coordinated. Turkey says coordinated steps to be taken on disinflation. That's the latest line we've got out. I think Mehmet Şimşek is meeting with officials today to try and at least stabilise the situation. But after a big drop yesterday, if you look at the numbers in front of you, they indicate some signs of stabilisation. What they don't indicate is a significant bounce. So we were down hard yesterday, and we are staying at those kinds of levels.
There's political risk and there's energy risk for Turkey.
Those two things are overlapping, though. Is the political risk being amplified because of what is happening in terms of the inflation rate in the country, the energy risk, which is pushing people towards the opposition, which is why the government maybe is responding in the way that it is?
We have this sort of fight-back statement coming through, as you say, from the government, the finance ministry, releasing a statement on their economy meeting, saying that they have strong buffers against shocks. This, according to the finance ministry over in Turkey. No doubt we will return to that theme a little bit later on. Let's bring into the conversation Sebastian Redler, who is European Equity Strategy Head at Bank of America Global Research, and he comes armed with a fund manager's survey. Sebastian, good morning.
Good morning.
Nice to see you. So we've had a little bit of discussion this morning about, yes, there's a sort of K-shaped economy in many senses, K-shaped stock markets, different things happening in different parts of the world, AI booming, worries still persisting about what's going on with energy markets. And we've seen, therefore, Asia doing fine, the US doing okay, stocks in Europe you'd think would be more beaten up, but actually even Europe's had a good week because oil prices have dropped, or a decent week, maybe not good. But you see pessimism returning on the European side, according to fund managers. So what's the story here?
So Europe very clearly, normally if you had told anybody at the start of the year, we're going to casually close the Strait of Hormuz for 2 months, you would have thought this is really a disaster scenario. And what has continued is the same story that we had for the last 4 years. Something really bad happens, a trade war, aggressive monetary tightening, and we're just cruising through it. So we really haven't seen the demand destruction. The only place in the global picture where data has weakened is Europe. PMIs are down, macro surprises are at the lowest level since 2023. Credit conditions are now tightening very sharply. So everybody else in the rest of the world is bullish, but Europe is seeing the macro hit. So European equities are underperforming. But because the global picture is holding up in absolute terms, European stocks are down 2% from the peak. So Europe still holding up in absolute terms because of the strength in the global picture, but underperforming because you are the regional weak link.
You say credit conditions are tightening. So what is it in credit conditions that's tightening right now, Sebastian? We've got expectations of rate hikes, of course, but spreads, have they been quite well behaved? Corporate spreads, have they stayed quite tight? They were tight going into this.
So we have to distinguish between financial conditions and credit conditions. Financial conditions basically a market phenomenon. Credit conditions is the ECB goes to bank lending managers and say, by the way, guys, what are you expecting to do? Are you going to lend more? Are you going to lend less? We've effectively seen a recessionary turn in this quarter of bank lending managers saying, we're now going to pull back. We're not happy to extend credit in the same way. And it might be a combination of geopolitical risk and the expectation of tighter monetary policy. And typically, that's a key driver of actual credit flows, and it's a key driver of economic indicators like the PMI, like domestic demand growth, and so on.
Is that pointing to a risk around a potential credit crunch at some point?
No, I think it's not a credit. It's basically a sharp growth slowdown that takes GDP growth or final demand growth into mildly negative territory. And of course, everybody's been watching the rest of the world. Now, in China in April, we've started to see a weakening in the activity indicators. This is historically, if you get a big energy supply shock, this is what you would expect. Demand destruction, weakening growth. And so I would say in Europe, you're very clearly seeing it. In China, you're starting to see it. The big surprise is that you're not seeing it at all in the US. The labor market is holding up. The consumer is still spending. CapEx is going strong. And so now what we are asking is this going to be different this time? You get a big energy supply shock. Normally, the way that you balance demand and supply is you destroy demand via higher prices. But we're not seeing it in the US, and the US will set the tone for the global picture. So the absolute key question in this moment is, will you get demand destruction? Or is this time different?
Well, Walmart earnings suggested that people are starting to ration oil purchases. So there's evidence there, isn't there?
You're seeing a lot of hints. If you look at the real income growth for the consumer is in negative territory. That is typically very recessionary.
In the US?
In the US, real consumer income growth is now in negative, 3-month annualized. But what you're not seeing is, in aggregate, the consumer pulling back. What you're not seeing is corporates pulling back on hiring in response to weaker final demand. We're holding our breath. And our economists put it very nicely in their recent research note. They're saying, for now, you got the support of tax refunds, so you had the fiscal support. This is running out right now. The real test for the consumer starts here.
How long are you going to hold your breath for?
I think, well, I'm holding my breath in two different ways. The first question is
complicated.
Unpleasant.
Well, that's what you have to do as a market strategist. It's unpleasant, complicated, but also exciting, I would say. So you're holding where's the shock coming from? It's, of course, coming from the closure of the Strait of Hormuz. So we're holding our breath and saying, are you going to reopen that strait? Then secondly, if you don't reopen it, how long can you keep running down oil inventories to make up the shortfall? You're right now running the global economy with a 10% supply shortfall that you make up via the drawdown of inventories. And then if at some point the inventories run out, how long will it take for the growth momentum to break? And I would say my best answers are the probability that the strait opens is far lower than what the market prices today. I think the equity market is pricing 90%. Prediction markets are saying it's a 30% probability that you reopen it by the end of June. And then if you don't get these supplies back soon, then within the next 3 months, you should start to see macro weakness, not just in Europe, not just in China, but also in the US.
Stock 600 is trading at 624 right now. Where should it be trading?
So I would say your base case should be a probability-weighted average of these different outcomes. The market is saying only the positive outcome exists.
So 64 is pricing in the 90% it opens.
Basically, this is pricing in virtually no risk of demand destruction. The AI investment boom continues. The consumer keeps spending. And there's not going to be any loss of growth momentum, and therefore no reason to increase risk.
So should that number start with a 5?
I think it should start with a 5.
What about a 4? Like, how much lower could we go?
So basically, we have what I'm saying is, if you were to get renewed escalation, or if you really get the energy supply shock, then you could go down 30-40%. But we don't know yet none of us knows where we're going. So my best estimate is basically a probability-weighted average of these outcomes, and that for us is around 560, is around 10% downside, where you say maybe there's a 40% chance this all gets resolved, but there's an important chunk of the probability distribution that looks darker and that is not reflected in today's prices.
We've seen an incredible pivot in sentiment toward European stocks, haven't we, this year, Sebastian? Because before the war, we were busy asking questions about whether we were going to see the end of US exceptionalism in some way across all kinds of different assets, even though we had the AI boom taking place. And then we find ourselves you described the rotation away from Europe as one of the sharpest pivots on record. That's the stakes here.
Yeah, I think I would say right now, I just was in the US for a marketing trip. I think there are 3 big consensus views. The first one is the one we just discussed, namely, nothing can go wrong, energy crisis, just noise, it's going to work itself out. And I'm basically saying that's too complacent. Maybe it works itself out, but the risks are higher. The second top theme is the one that you mentioned, is people were very excited about the relative prospects for Europe. And it's not just the end of US exceptionalism, it's the prospect of German fiscal stimulus finally hitting and basically lifting growth momentum. As we see from the numbers, that is out. And everybody who was interested in Europe at the start of the year is no longer interested now. It's really fallen down the interest list. And then the third big theme, which is very interesting to me, is the belief that regardless of what happens to the real economy, regardless of what happens to energy supply, the AI investment boom is on autopilot. It is completely divorced from the rest of the macro picture, and it will go on regardless. And I have my doubts. If everything goes well, of course, but this is a very energy-intensive technology you're trying to launch into the middle of an energy crisis. Look at the cost of compute. The cost of 1 million tokens is going through the roof, which means this attractive, cheap intelligence is increasingly not available. And of course, the AI investment boom, crucially, is financed by advertising revenues. Google and Meta, they're all advertising companies. They had 80% of their cash flow from advertising, 90% of that cash flow goes into AI investment. Advertising is very cyclical. It's very dependent on the consumer. If the consumer caves in, advertising will be down. The thing that fuels your investment boom will start to dry up.
There you go. There's the answer to that question we keep asking about what joins these narratives. Is the consumer joins the AI narrative to the oil narrative?
With what lag, I guess, is the question that you need to figure out. Always nice to see you. Thanks for stopping by to see us. Sebastian Redler, European Equity Strategy Head, joining us from Bank of America Global Research. The Core 6 looks like this. Let me show you some numbers, give you an idea of what is going on. It's a pretty positive picture across Europe this morning, from left to right. Let's dig into some of the other interesting elements, though, we are watching carefully this morning. The luxury space, definitely front and center. And Charlie, starting with Richemont.
That's exactly right. That is exactly right, Guy. We see a lot of green for this bling coming from Richemont. So they had a strong earnings report. And look, they are a harder luxury company. Those sorts of firms tend to do well in an uncertain market environment. And that strong earnings report really seems to be boosting Richemont this morning, despite the fact that the broader luxury sector really has been struggling. Let's flip and look at Deutsche Post, because they got an analyst upgrade from Deutsche Bank, with analysts talking about how they're in a pretty strong position. Again, we've got a lot lot of this uncertainty, that can really weigh on some of these parcel companies, on some of these shipping companies, but it's the strategic positioning of Deutsche Post that seems to be giving analysts a little bit of an optimistic take on this stock. So again, seeing the market like this up well over 3%, nearly 4% for Deutsche Post. Let's flip and take broadly a look at software, because again, we were seeing that AI trade get a boost today in the markets. Let's start with SoftCap, because they just raised their outlook for the year ahead, talking about a lot of this AI demand, giving them a lift, and they are an IT infrastructure company. So a lot of green this morning, really leading here amongst a lot of these big European software companies, but again, green when it comes to software. Let's end on BT Group, because they had a little bit of a challenging report yesterday, but also we heard that Bharti, that Indian conglomerate, wants to raise its stakes, according to reports. So we're seeing BT up over 2.3%. That could be linked to some of this interest from that Indian conglomerate this morning.
Charlie, thank you very much indeed. Let's check back in then. You were talking about Richemont. We can talk now about Puig, because this is also within the luxury space. Slightly different. This is about what has been a potential takeover that has now collapsed, and the stock is down heavily, down around 13% on the back of that news then, Anna.
Safe to say the market didn't particularly see the value in this one. When you see Estée Lauder about 16% after hours on the back of this collapsing, and Puig, you know, there's a substantial reaction there, isn't it? But certainly from an Estée Lauder perspective, analysts had been doubtful as to whether they could integrate this.
Yeah, this was definitely a challenge. So maybe we should have seen this coming. It's interesting they're pointing at sort of Charlotte Tilbury, but I think there were bigger challenges that maybe would have been faced.
Yeah, analysts have pointed out the fact that Estée Lauder is going through its own restructuring, and taking on a deal of this size and scope at that time would prove challenging. So we will get more details and analysis on that story in the next block. Coming up, though, Turkey's stock market stabilising this morning after slumping 6% yesterday, after a court removed the leader of the country's main opposition. We have more on that, the latest developments and the impacts across the EM space. Stay with us. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to the opening trade. Happy Friday. European stocks then set for a fifth straight day of gains across the benchmark. You're seeing gains of 0.5%, despite the fact that oil prices are higher on the day, lower on the week. Yields are lower as well. That is also a positive catalyst. DAX is currently up 0.7%, so outperforming the likes of the FTSE, which is edging up just 28 points, up 0.3%. But again, you're on track for a fifth day, straight day of gains for European stocks, Anna.
Let's talk about some of the sectors in focus, and one of those is luxury retail and retail of various forms. But Richemont is in focus, up by 2.6%. Richemont reported full-year sales that rose more than expected. It's launched a new share buyback. Andrea Felsted, Bloomberg opinion columnist, is here with us to talk about Richemont. We'll also get your thoughts on Puig and Estée Lauder, because that one is certainly moving as well this morning. Andrea, I mean, how much read across is there from a company that sells a lot of Cartier necklaces to the rest of retail? Because it does seem as if it's having a bit of a positive halo effect.
It's probably limited because jewellery has just been the sector that has really outperformed. Jewellery's been really in vogue because, ironically, up until now at least, the prices for jewellery haven't gone up as much as handbags. So actually buying a Cartier bracelet or a Cartier watch is cheaper or better value for money than buying a bag. So plus, the luxury sector's matured. We've all been buying knit bags for sort of 20 years, and now we're moving into a different stage of the luxury market where jewellery, we've moved on from a knit bag to a knit necklace.
What's a knit necklace?
It's either the Van Cleef and Arpels.
You say a knit necklace?
It's.
Oh.
So the big one has been the Van Cleef and Arpels clover necklace. You have these clover motifs,
I've seen a few of those.
long necklaces.
You can't move for those, though.
Yeah. That is the question, is it now becoming overexposed? The other one that is gaining a lot of ground and that LVMH did very well is Tiffany's hardware. This is quite chunky chains and variants of chains. That's definitely one to watch.
I can see Guy Johnson in chunky chains.
Just trying to think my way through this process. Puig, do you want to do that?
Yeah,
Puig?
the deal is the deal's not happening. Estée Lauder, Puig. Estée Lauder investors are very pleased. Puig investors not so pleased. What happened? Does this make sense?
Well, it seems to have come unstuck over Charlotte Tilbury, a change of control clause. Estée Lauder shareholders are very happy. They really didn't like this deal.
Why didn't they like it?
Estée Lauder's doing a lot of heavy lifting at the moment, a lot of cost cuts, reinvesting in its brands, revitalising its brands. Some of its peripheral names are on the block. It's trying to revive its big houses. It's a lot of work. And I think they felt that bringing in another load of brands like Charlotte Tilbury or Urban Fragrances was just a step too far. I mean, the Lauder argument was, we're sort of towards the end of this process. It will have a long closing, and Puig will be the next stage of growth. So if you take that, if you maybe think about that, then does it come back when Estée Lauder's further down the line, or does someone else come in for Estée Lauder? I mean, the one that has been talked about is Unilever, but they've just done a deal to sell the rest of their food businesses to McCormick. Investors don't like that either, so it's got to make a good fist of that, have some credibility.
Who could they be interested in? Sorry, Unilever?
I don't think it would be. I think it would be Estée Lauder. People have talked about Puig as well, but I think it's much more likely to be Estée Lauder than Puig. But I don't think that's going to happen now because of the McCormick deal.
Yeah, I mean, so back to why this fell apart. I mean, what does it tell us about the difficulty of doing these deals, that a change of control clause that Charlotte Tilbury had attached to her namesake brand is one of the things, at least, that made this difficult?
Yeah, I mean, it's always complicated when you've got these big big name cosmetics brands, and she was one of the reasons why Estée Lauder wanted it. So we think over here that that Charlotte Tilbury is quite not over, but it's quite mainstream, and everybody knows it. How much further has it got to go? In the US, it's still got a lot more growth, so it's probably quite an important part of the deal to get that over the line, to get the growth in the US.
Andrew, thank you very much indeed. Andrea Felster, Bloomberg opinion columnist. Later this morning, by the way, we have a rare exclusive interview with the CEO of Zara owner Inditex. That is at 9:30 a.m. London time, so stay tuned for that interview.
Okay, let's talk about what's happening in Turkey this morning. Big move yesterday to the downside on the stock exchange. You can see we're getting a small bounce this morning. On a two-day basis, you are still down circa 4% and a bit, nearly 5%. So that is the state of the stock market. Obviously, the currency has been under significant pressure for quite some time. This is a country that imports a lot of energy. You've got a political crisis that feels like it's kind of stemming off an economic crisis. The two, obviously, are heavily mixed together in terms of what is happening here. Yesterday, we got a circuit breaker moving through. Let's talk a little bit about kind of what is happening with the political crisis and how this is relating back into the markets. Selva Baziki joins us now, Turkey economist at Bloomberg Economist. We've had this ruling that relates to the opposition party and the effective ousting of the current opposition party leader, but this kind of obviously relates back to the kind of the past opposition leader who is now in jail. Just kind of talk me through why the markets are reacting so violently to all of this and how the significance relates to the Turkish economy as well.
Good morning. This is a very significant escalation in Turkey's political trajectory. It's arguably one of the most consequential steps, actually, since the jailing of Istanbul's elected mayor, Ekrem İmamoğlu, about a year ago. Now, the core issue is that it strikes at the organizational structure of the core main opposition party, and it removes the leadership, it removes the face of what was seen as the reunifying force after the local and the general elections last year. With the leadership change and the party now challenged, it remains to be seen how strong of a rebound we can expect from the party and over what term. Now, this is just the last step in a series of judicial steps against the opposition party. We've had the jailing, as you know, the detention and the jailing of the Istanbul's elected mayor, Ekrem İmamoğlu, who was a presidential hopeful in the coming elections. And since then, several heads from the key opposition party have been detained as well. So taking the whole thing together, of course, that eats away at lira confidence. The lira suffered as a result early today. We think that the central bank's initial response was to intervene in FX currency markets. Our news colleagues have reported about $6 billion of intervention in just one day following the news, which arrived late last night. So going forward, the policy scheme is going to be targeting a pro-lira stance, trying to protect the savers and also to increase the attractiveness of the currency to regain some of the sentiment back.
Okay, just very briefly, what have the top economic policy officials said today? Just very briefly.
Yeah, following the top meeting earlier today, there was a very generic statement released saying coordinated steps would be taken. We expect the government to actually take a step to make Turkish lira deposits more attractive by lowering the withholding tax, and the central bank is likely going to be tightening borrowing costs.
Selva, thank you very much. Thanks for the update. Selva Baziki, economist at Bloomberg Economics, joining us there with the latest on that Turkish story. We continue to watch emerging markets. Another pressure point for them, perhaps. Coming up, the World Bank warning that fertilizer prices could rise by 1/3 this year. We'll speak to the CEO of Yara. That is next. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade. We're 30 minutes into your Friday session. There's the now pretty usual rinse and repeat volatility uncertainty when it comes to Iran leading up to the weekend. So obviously that could be and is a factor for investors. Nonetheless, 5 straight days of gains right now for European stocks. Let's see if that holds. Across the benchmark, gains of 0.7%. We're seeing yields lower. Oil prices lower on the week, up today in the session. Up 0.8% on the DAX over in Germany. Gains of 0.6 over in France. And a slightly weaker session versus its peers here in the UK. The FTSE 100 adding 44 points, up 0.4%. Guy, what are you seeing?
Buoyant but unconvincing would be the way that maybe I would put what we're seeing in the markets this morning. Look at this picture tells you the buoyant bit. 467 up, only 120 down. So yeah, more buyers than sellers. But are there more buyers than sellers? This is the volume picture that we are watching. Volume remains quite light. What does that tell us about kind of how convincing what we are seeing on the screen in front of us really is? Richemont is up very strongly on the back of its numbers. Nice numbers coming through. Hard jewelry doing very well. But so maybe getting used to more turbulence. That's the narrative. Stellantis on its investment up by 3.2%. It's investing across its brands. The market likes what it's hearing. Infineon in the chip space doing well as well on the back of the AI trade continuing. That narrative is there. So that's the picture we're seeing on the upside, which is dominant. On the downside, we talked about Puig. It is down by 14%. The Charlotte Tilbury story seems to have upended the Estee Lauder acquisition. The stock is definitely responding to the downside on that. More updated numbers coming through from Julius Baer this morning. It is down by 8.4. And all stocks are a little softer, which is interesting. On the week, we are down on the oil story. Today, we're bouncing a little bit. More volatility expected. But BP, it's interesting that how the oil stocks have not actually delivered that much upside, despite what we're seeing in terms of the oil price picture. Anyway, we are down by 1%, Anna.
Let's get an update then, Guy, on some of the other stories we're covering this morning. And we start with the geopolitics. Iran says the latest peace plan from the United States partly bridges the gap between the two sides. But then subsequent comments from its supreme leader about Tehran's nuclear stockpile, along with the dispute over tolls in the Strait of Hormuz, are clouding the outlook for a breakthrough. The conflicting statements on key issues leaves it unclear if the two sides are any closer to a deal after renewed threats of escalation in recent days. The US president says he's sending an extra 5,000 troops to Poland in an apparent backtrack on a plan to suspend an army deployment to the country. Last week, the Pentagon said it was pausing plans to send about 4,000 soldiers to Poland, even though some were already there, or at least were on their way. Donald Trump says the decision to reverse course follows the election of President Karol Nawrocki, who came to power nearly a year ago. Bloomberg has learned that the EU will propose temporarily lifting sanctions on a major Chinese chip supplier just weeks after it included the company in its 20th sanctions package against Russia. European automakers had lobbied the EU for a delay to the ban, saying that the measure would cause stocks to be depleted in weeks and calling for more time to find alternate suppliers. Tom.
Okay, let's get more details on what's happening in terms of shortages beyond oil when it comes to the closure of the Straits of Hormuz, because the United Nations warns that an additional 45 million people face acute food insecurity as the Strait of Hormuz blockade cripples global fertilizer supplies. The World Bank expects fertilizer prices to rise by nearly a third this year. Sven Tore Holseter, President and CEO of Norwegian chemical company Yara International, joins us now. Sir, thank you for your time. So a big producer of fertilizers. When I ask about constraints, the most acute constraints that your business is facing right now, of course, you have to factor in freight costs, ammonia, feedstock from gas. What for you is top of mind in terms of the shortages that you're seeing that is impacting fertilizer prices right now?
Well, it is already a very dire situation, and fertilizer is not just another commodity. Half of the world's food production is a direct result on the farmers' ability to put fertilizer into their fields. And we were already in a demand-driven market before the crisis in the Middle East, and this has a direct impact on the flow of fertilizer. 1/3 of global urea export is going through the Strait of Hormuz. And when we look at the trade patterns here, that fertilizer flow to Southeast Asia, to Africa, to Latin America. But these are global markets, and it's impacting the prices to farmers across the world. And when we look at global reference prices, they're up by 50% compared to where they were before the crisis.
Have you had to trim production then? What is this doing to production, particularly when we think about that shortage in terms of the flow of urea that is so essential to the production of fertilizers, as you say?
Not in Yara, because we are a battle-proven organization, and we've really been through challenging times ever since the energy crisis hit Europe already in the summer of 2021. And we've invested in our assets. We've created flexibility in order to shift ammonia across the world to maintain finished goods production. And we're running at full blast in Yara right now, doing our utmost to serve the farmers. But that's not the case for the whole industry. And that is the key challenge right now, that there is a lot of fertilizer production behind the Strait of Hormuz now, where either production is not happening or they're not able to reach the market. And that is creating issues across the world and putting additional burdens on the shoulders of the farmers. They were not very profitable before the crisis. Now they're hit with higher diesel prices for their tractors, it's higher fertilizer costs, and yet at the same time, there's only limited, but now starting to be an impact in crop prices as well. So it's hitting their margins right now.
Sven, good morning, it's Guy. How much higher do you think crop prices will go from here? What kind of inflation rate do you think we're going to see in food?
And this is the big question, right? It's very difficult to predict that, because there are so many variables here, including weather patterns, right? But if you look now at the winter wheat crops in the U.S., there are some warning signs there that the yields are slightly lower, which mean or lower, which means that we've seen an increase in wheat prices, but this might take some time before it spills into the crop prices themselves. But keeping in mind that half of the world's food production is because of fertilizer, if the farmers are not able to apply the right agronomic amount of fertilizer into the field, it will impact the next season's harvest. And that's something that I saw as close as where I'm at right now in Norway as well, that farmers had fertilizer in stock, they used that, but then they need to replenish, and that could also affect future yields and harvests.
Europe has lost an awful lot of its ammonia capacity, its fertilizer capacity over the last few years. Obviously, now that looks like a mistake. What do you think European governments should do next? And how are you thinking about where you are going to invest? Are you going to invest in the United States? Or do you think now we're moving into a phase where actually investing in Europe would be the right thing to do?
Well, the thing is that Europe already has the plan. It's called the Draghi Report, and that's now 1.5 years ago that was launched, and the progress is alarmingly slow in order to create an enabling environment for critical industries to invest and prosper in Europe. So that lack of progress is definitely impacting the whole chemical industry, including the fertilizer industry as well. Now, in Yara, we are in a fortunate position that we have flexibility. We don't have to produce the most energy-intensive part of the production in Europe. We can produce 75% of our finished goods with imported product, and that's why we're looking globally at this. We're using flexibility globally today, and then we're looking at increasing investments in the US on ammonia to bring that into Europe in order to sustain our production here and serve our European customers with fertilizer.
Sven, you mentioned the Draghi report. We've also seen Europe taking, well, we have seen Europe taking action more specifically around fertilizer with this fertilizer action plan. Do you think it goes far enough?
It helps, but at the end of the day, producing fertilizer is also very energy intensive. As an example, Yara is likely the largest industrial consumer of natural gas in Europe, and we use that to produce fertilizer, and so is the case for many other fertilizer producers as well, including the chemical industry. And when we're now operating with an energy cost in Europe that is not only slightly higher than competing regions like the US, but it's a multiple of it, then we need a massive move now into increasing energy production, and that's going way too slow, and that has big implications for the future. So it helps, but much more is needed to be done here in order to ensure competitiveness in Europe.
Okay, much more is needed. Okay, you say that Yara is battle-proven, Sven, and I wonder, with that in mind, can you compare the stress that is being applied to your company and the sector as a result of these developments? Can you compare and contrast that with 2022?
Yeah, there are some clear similarities on how it hits energy costs, how it hits the fertilizer industry, but there are also some clear differences as well. And last time it was in terms of energy shock and flow of product, it hit Europe quite hard in isolation. Now it's a much broader impact globally. And then one important thing to keep in mind here is that when Russia attacked Ukraine, it was one food superpower going to war with another food superpower. Ukraine is a major food producer for the rest of the world, and then it had an immediate impact also on food prices across the world, which meant that farmers saw increased sales prices for their crops, which meant that they were able to increase production also profitably. Now, with the crisis in the Middle East right now, it has an upstream impact, but not the same downstream impact as we saw last time.
Sven, you talked about that significant gap in terms of the energy price differential in Europe versus the US and elsewhere. And the urgency to address that. If that is not addressed at the speed and pace that you suggest it needs to be in terms of production of additional energy, what does that mean?
Well, what it already means is that if you look at the chemical industry in Europe, it's operating at a much lower level now than it did before 2021 and 2022. A lot of investments in new builds are happening in other parts of the world. So as Europe is trying to reduce the dependency on energy, we're losing competitiveness in other sectors, and that again, so we're moving critical products that should be produced in Europe to other parts of the world, and then we're creating new vulnerabilities as a result of this.
Yeah. So this is a strategic imperative that Europe now needs to not think of this as an economic necessity, i.e. we move to new energy sources, but this is a strategic imperative. How important do you think this is going to be over the next few years? How vulnerable will Europe leave itself?
Yeah, no, and I am puzzled. I mean, how many warnings do we need to get here? We've had a clear warning in 21, 22 on how dependent we were on Russia for energy supplies and low energy prices. That came as a huge shock to the economies and to the industries. And to see now that with the crisis in the Middle East, we yet again have another significant increase in energy prices, but also exposing other vulnerabilities in the European economy and production as a result of this. So yes, we need to take these signals now, and then we have the Draghi report. It is very clear on where we need to go. Now it's down to execution, and we need to deliver on that with more urgency than what is happening right now.
And Sven, how does this link to the debates about decarbonising fertilisers? On the one hand, it might seem like a distraction and not the area of focus. On the other, maybe medium term, some people argue that this can be the solution to more resilience for Europe. What's your view?
Yeah, we have to do both at the same time. And I mean, climate change is happening. We have extreme weather across the world. And I mean, we're supplying farmers across the world. And it's there are very few occupations harder hit by climate change than being a farmer. They're working out in nature and they're exposed to extreme weather. So we need to do both things at the same time. Now at Yara, we have already reduced our emissions by close to 50%, and we're continuing now on the hard to abate part of it as well. This year, we will launch our carbon capture and storage in the Netherlands, capturing 800,000 tons of CO2 a year. It's the biggest industrial decarbonization with carbon capture and storage in Europe taking place right now. But at the same time, it's about creating a level playing field, right? So we're paying for emissions in Europe, and then there needs to be protection, and that's where we have the carbon border adjustment mechanism to try to create that level playing field. But at the same time, it's important that this is not just been put on the shoulders of farmers that need to pay more for the products. This needs to be supported with incentives to ensure that it's evenly spread and that we're doing this together. But I really do think that we need to do two things at the same time now, to both decarbonize and also build resilient and competitive industries for the future.
Sven, thank you very much. Thanks for your time. Svein Tore Holsæter, President and CEO of Yara International. Much more ahead. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back. You're watching the opening trade. We are 48 minutes into the session, this Friday session, and we are still higher in Europe. We are off our highs, which is worth bearing in mind. So we've faded a little bit. And you've seen a similar move kind of over in the United States. US futures are a little lower as well. They're not lower. They're lower than they were. So they're still positive, but a little lower than they were.
Okay, those are the markets. We're still dealing with the fallout from Standard Chartered. Remember, we've been covering this story all week. The CEO, Bill Winters, earlier on this week, using the phrase lower value human capital when talking about AI and the jobs market. Well, now the CEO apologising, this time online, with some commentary that's been posted by the company, saying he knows that his comments have caused some upset to some colleagues. And so in response, as the fight back continues, he's posted the entire context, the wider context around those comments, which does paint a slightly different, perhaps more nuanced picture around the development of the labour market and AI. So he would be urging people to go and read those fuller comments, I suppose. But this in the face of regulators even raising questions and raising queries about these comments from the CEO.
Yeah, a number of other bank executives as well and CEOs asked about their views on the AI impact on the labour force on the back of that controversy. Let's look ahead to what else we are watching throughout the day then. Gathering of NATO foreign ministers is taking place in Sweden. Marco Rubio will be meeting with his Turkish counterpart, the Turkish foreign minister, at a pretty challenging time for Turkey. That's at 2 p.m. UK time. 9 a.m. UK time, we're going to get the German IFO Business Climate Survey. That's after the PMI data came in pretty weak for Germany earlier this week. At 9:30 a.m. UK time, it's the turn of ECB President Christine Lagarde to speak. We'll be listening, of course, for any comments she has on the inflation challenges, the growth challenges of the Eurozone. 3 p.m. UK time, University of Michigan Sentiment Survey. And at 4 p.m. UK time, Kevin Warsh will be sworn in as Fed chair by Trump at a challenging time for the Federal Reserve in terms of their future decision-making and pressure, potentially, from the Trump administration to lower rates. Let's get back to what is happening across the markets right now. Bring in Bloomberg MLive strategist Adam Linton. Adam, you're thinking about the IFO Institute survey out of Germany. Why is that on your mind?
Yeah, I mean, it follows hot on the heels from those PMI metrics we saw yesterday, which were relatively soft. As Tina set for a Q2 contraction, very much overshadowing the Q1 data that we saw earlier. And I think the key takeaway, what we've seen so far from survey data is, yes, input costs are surging, but they're really struggling to pass them on to the end consumer. And so, from an equity standpoint, it's obviously a negative, and that's consistent with Bloomberg survey data out today, which says that Stoxx 600 is going to go nowhere for the rest of the year. In terms of what that means from an ECB reaction function, we've been relatively consistent saying the parallels for 2022, don't really hold water. We think that any, kind of hiking cycle by the ECB will be a relatively shallow one. Yes, they're priced to hike next month, but it seems that's more for the purpose of credibility. And I think we're kind of seeing growth and inflation come better into balance. And if that is the case, we might potentially see a bit of a ceiling on some of the front-end yields across European curves. And I think the penny's dropping a little bit in FX markets as well. So it's in euro dollar on the back foot. Part of that's obviously the dollar leg of the equation, Fed hike expectations. They've been ratcheted to do that, but we could see a bit of further jolt to that move. We've got Waller today, who's obviously a key signaler on the FOMC.
How are you feeling about the yen?
Yen, so I think, look, dollar-yen fundamentals, they argue for upside in dollar-yen, but I think the risk-reward isn't particularly appealing at these levels. I mean, if you look at the fundamentals for the dollar, we have hot inflation, the Iran war continues to rumble on, and like I said, Waller could potentially give this a bit of further momentum today. For the yen side, yes, they'll probably hike next month. It's about 80% priced. But ultimately, real rate's still deeply negative. People aren't looking for a mass hiking cycle from Japan at these levels. We've also seen a bit of fiscal angst return this week with the U-turn on the need for an extra budget. So yes, that would suggest higher upside in dollar-yen. But this 160 level is kind of the line this time for Japanese authorities, and they like to intervene at times of low liquidity, and that's what we get this weekend. So Monday, you've got UK, US out, obviously London, New York, massive pools of liquidity for the FX market. Japanese officials, they've still got plenty of firepower, and yes, intervention efforts haven't been particularly fruitful thus far. We've also seen comments from Besant this week. It seems like US and Japan are on the same page. There is still the risk we do potentially get a coordinated response between the US and Japan.
Okay, Adam, thank you very much. Bloomberg Markets Live strategist Adam Linton. So a long weekend perhaps features some Japanese FX intervention. It also features football. That's my attempt at linking these two stories. That was difficult. Lionel Messi has joined an elite club. No, he has not moved clubs, but he's still at Inter Miami. But he's joined an elite club, that is the Billionaire Club. Widely considered one of football's greatest players, the Argentine's net worth has now surpassed $1 billion. We're joined by Bloomberg's Spain Bureau Chief, Rodrigo Orejuela, who has the analysis you need this Friday on Messi's fortunes. Good to see you, Rodrigo. So how did Messi make it to this point then? How did he accumulate this wealth?
So, good morning to you. And one thing that's interesting about Messi's case compared to other players, other athletes in general, is that he has done it, while being active, which is a rarity in itself. Cristiano Ronaldo also did it, but people like Michael Jordan only reached the status after they retired. So that's the first point, that he did it while he was still playing. The other point, which is super interesting, is that the bulk of his earnings are linked to actual salaries and compensation and things like equity options while he is a player, rather than through sponsorships and business he has outside the field. So that's what makes him really unique, that most of it comes because of what he gets paid for playing.
Yeah, we talk about it being a club. Like, it's only just become a club, hasn't it? Because Ronaldo's the only other kind of football billionaire. So I guess it is now a club. How do these two compare?
So yes, it is a club. I think when we talk about the club here, it's more than only footballers, because there aren't that many athletes in general. And as you say, there's only two footballers who've reached that level. Cristiano Ronaldo did it last year. The two players are extremely different. I mean, as an Argentine, I'll just take a little point of contention there with Anna and say that he is undoubtedly the best player ever. But some would say that maybe Cristiano could have fought for that title. But,
Did I say otherwise?
But other than,
I don't recall.
You said he could be, but anyway, we'll move on from that.
Okay.
But one thing with Cristiano is that Cristiano was very focused on the marketing machine, on building the brand Cristiano Ronaldo. Messi has never been a brand builder in the sense that he isn't a brand in himself. And also his first few years while he was playing, his whole personality made it difficult to sell him because he's so shy and such an introvert, something he has spoken about publicly. In a recent interview, he said that one of his favorite things in the world is to be watching television all by himself at home when his kids leave. And so that is the big difference between him and Cristiano. Cristiano is very focused on business. Messi is not. When you go into the website of his real estate trust, it's called Edificio Ross Tower, you even see in the kind of properties he owns. They talk about parking lots, they talk about run-of-the-mill office buildings. They don't talk about high, glamorous hotels or restaurants. And so that is the big difference between the two, I would say.
Okay, really interested. Putting his money into parking lots. There we go. Rodrigo Orejuela, thank you very much indeed for that fantastic story. You can get more details, of course, on the terminal and on Bloomberg.com. We're thinking about other weekends then. This sets us up nicely in terms of what to be watching.
Yeah. Selhurst Park?
Selhurst Park, Gooners will be lifting the trophy, whatever the result, of course, of that game on Sunday afternoon, having won the Premier League.
And if you want more glamour than the parking lots we were just discussing, there's Cannes.
I thought you were going to say there's Guy Johnson's wardrobe, but there's also Cannes.
I think we all know that's not true.
It's going to be hot for Roland Garros. It's going to be hot for Cannes. It's going to be a hot weekend.
It's going to be a hot weekend. Canadian Grand Prix. Anyway, have a great weekend, folks. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Signs of progress in Iran talks, but a stalemate over nuclear ambitions and tolls in the Strait of Hormuz. We discuss all of this with Eleanor Carrois, the French Deputy Foreign Minister. Kevin Warsh is said to be sworn in as chair of the U.S. Federal Reserve. 10-year yields hovering near the highest level that any incoming Fed chair has had to face since Alan Greenspan in 1987. And footballing maestro Lionel Messi has joined his long-term rival, Cristiano Ronaldo, in the sporting billionaire club. So there's a lot of news, geopolitics, but also a little bit of sports. What I'm also looking forward to is a rare exclusive interview this hour with Oscar Garcia Maceiras, the Inditex chief executive. That's at 9:30 a.m. London time. He'll be joining me here in the studio in London, and we'll discuss the consumer outlook, how the company became the world's largest fashion retailer. But first thing is first, as always, let's look at stocks and S&P 500 futures heading for the longest streak of weekly wins since 2023. This comes as there's more and more hopes that the U.S. and Iran are moving closer to a peace deal, and there's also a little bit of enthusiasm for AI driving global equities higher. Now, there is quite a lot to talk about in the bond market. You can see U.S. 10-year yields at 4.5697. We're getting that German May IFO business confidence. That's coming in 84.9. The estimate was 84.2. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. We definitely have a packed show with the French Deputy Foreign Minister, plus our exclusive conversation with the Inditex chief executive. But first, the AI trade is offsetting the stalemate in the Strait of Hormuz between Iran and the U.S. Now, peace talks between the two have been clouded by Tehran's comments on its nuclear stockpile and, of course, the dispute over tolls in Hormuz. Well, let's bring in Wei Li, BlackRock's global chief investment strategist. Wei, as always, thank you so much for joining us. Every time you come on, we talk about the fact that actually equities are saying one thing, mainly because of the AI trade, and actually global bonds focusing on inflation. Who's right?
Well, I think both are right because the AI is the reconciliatory factor between kind of what markets are doing, pricing in stagflationary impact of the Middle East disruption, and also what is happening in the micro space, which is the earnings and AI space. So I would say that we're quite far along in this war now, and at this point, the macro impact is very clear. You look at yesterday's PMI, you look at how Europe has been affected. So our estimate of global macro impact at this point of the Strait of Hormuz being shut for so long is about 0.5% of global GDP hit. In terms of inflation impact, we're talking about 1% headline inflation push higher for this year. And no wonder markets are pricing out rate cuts and now pricing in more rate hikes to reflect the stagflationary shock from the supply disruption.
So wait, I mean, we also have the, of course, confirmation of Kevin Warsh as the next Fed chair. What are you expecting from the Fed?
Well, markets priced out the 2 cuts at the beginning of the year to now even looking at probability of hikes for this year. We think that's appropriate because not only the headline inflation is being affected by supply disruption, but even if the Fed were to look through that, because it is, it could be one time, it could be just temporary, we're still talking about underlying inflation running hot. You look at labor market, there is very little sign of slack. You look at core services and core goods. The core goods stopped kind of falling, and core services still is quite persistent. So you bring all of this together. Even if the Fed wants to look through the headline impact, we're still talking about the Fed staying put for a while.
Yeah, it certainly seems hard at this point to look through it. Wei, don't go anywhere. Wei Li stays with us because we also need to speak a little bit about Germany. The Germany May IFO Business Confident Index coming in a little bit better than expected. Let's get straight to Clemens Fuest, the president of the IFO Institute, who joins us now. Mr. Fuest, when you look at the numbers, but when you also look at the underlying inflationary pressure, it's been nearly 3 months since the U.S.-Iran war started. How are businesses in Germany dealing with these more elevated costs?
After the shock of the war, which could be seen in the numbers in March and April, we now have a slight stabilization. So businesses are trying to adapt to this new situation. Nevertheless, they are facing challenges. If we look at supply chains, for instance, before the war, 5% of all companies were telling us we have trouble with supplies, we have bottlenecks, and now we are at 16%. So that's a huge increase, and that will add to inflationary pressures. We also see this in price expectations. Companies are telling us, yes, we are more likely now to increase prices. So despite the stabilization at the moment, the situation is still very fragile, and companies are struggling.
So what does that mean in terms of GDP growth? Are we looking at a contraction possibly in the second quarter? And is there a real risk of a recession or a contraction for the full year?
Well, given that we have a slight improvement in the index now and a slight improvement in expectations, we think that we will probably get something like stagnation in the second quarter, may even be slightly negative. But we do not see a recession. Of course, this is conditional on assuming that the Iran war, that the hostilities are really over. Of course, a lot depends on the opening of the Strait of Hormuz, but currently we don't see a recession. We see lower growth in Germany, but we don't see a recession.
How do you think that the government has been reacting to the economic shock? I know the Chancellor is not exactly popular right now in Germany.
The trouble is expectations in the population, I think, as in other countries, are very high as to what the government can do. And this is a classical supply shock. So there isn't very much the government can do. The government has cut petrol taxes like in other countries. That's popular, although it's not the smartest way, most economists would say, to respond to this crisis. The government is already spending a lot. The deficit is growing very quickly. So there isn't really much the government can do. The government is now considering extending the petrol tax cut because normally it would end at the beginning of the summer holidays. So I think we can expect an extension of that cut. but the impact will probably not be very large. There isn't much the government can do.
Mr. Fust, let's also talk a little bit about market expectation of an ECB rate hike. So the market is expecting something in June and then possibly a second rate hike, by the end of the year. Do you think there's any other choice at this point, and what impact would that have on German businesses?
Well, I guess the alternative would be to say, okay, we look through this shock and we'll expect energy prices to come down, so we do nothing. But the risk is, of course, that inflation will be running away. And given that we do not just have issues with energy prices, but also with supply chains, we are really set up for an increase in inflation. So my view is it would be prudent for the ECB to raise rates later in the year if nothing changes. And the impact on businesses may not be so strong because I think markets have anticipated a lot of that. So interest rates have increased. We see this in construction where the industry is struggling and projects are being cancelled due to financing restrictions. So I think the prudent move will probably be indeed to hike in the autumn, but of course that depends on how the situation develops.
Okay, so you would delay a hike because would that have, I mean, if there's a hike in June, would that significantly, materially impact the economy, you think, or business confidence?
I don't think it would impact business confidence very much, but it would certainly not make things better. And I think in June, in the current situation, there is still a chance that we have some kind of deal in Iran and that energy markets improve. So I think the option to try and look through this shock is not off the table, but things will be different in the autumn. If we continue to have this crisis, I think that will be the time to hike the rates.
Mr. Fust, thank you so much for joining us. That was Clemens Fust, president of the IFO Institute. Still with us, Wei Li, BlackRock's global chief investment strategist. Wait, we'll get on to talking about earnings expectations, which actually have been quite strong, and we'll talk about AI. But is there a risk of a policy mistake from central banks?
Well, right now, markets are pricing all major developed market central banks hiking this year to varying degrees, and this compares to some central banks' price to cut at the beginning of the year. So there is a meaningful kind of repricing pivot, and the nature of the supply shock is stagflationary. So obviously, the trade-off between inflation on the one hand and growth stagnating is becoming tougher. And I would also note that the latest round of rate repricing is mostly driven by real rates, which would tighten financial conditions that have been easing. So all of that could weigh on growth, which is very, very difficult to manage. So it's a tricky time to be a central banker right now.
Yeah, is it even a trickier time to be in Europe? Because, of course, what's supporting a lot of, for example, the U.S. economy or U.S. valuations is AI. Earnings season will actually okay, across the board, but will Europe take the brunt of a possible correction?
It might be tougher here because micro is macro and AI micro is driving the macro picture in the U.S., which provides a bit of a buffer in terms of the headline growth. We see that coming through in the GDP data. We see that coming through in the trade data. In Europe, there isn't as much kind of tech investment pushing up growth, which makes the trade-off a bit tougher, which is why even though yesterday you look at PMI disappointing to the downside, markets are still pricing 2 hikes for this year, which makes it really quite challenging, which is why we prefer from an investment perspective U.S. equities over European equities at this point.
Wei, let's also talk about geopolitics. Wei Li, of course, stays with us. We heard from the NATO Secretary General Mark Rutte. He's meeting NATO foreign ministers this hour. He said allies are talking about a potential role for the military alliance in the Strait of Hormuz. Now, one of those members, France, remains one of the few Western countries to maintain frequent contact with Iranian officials at the highest level. So let's discuss all of this with Eleanor Carrois, the French Deputy Foreign Minister, who joins us from Paris. Thank you so much, Deputy Minister, for being with us. Now, Iran, we understand, is, of course, discussing with Oman how to set up this permanent toll system to formalize its control of the maritime traffic through the Strait of Hormuz. What's France's take on that?
Well, good morning. Thank you for having me. Indeed, France is looking at the situation extremely carefully because what is happening in the Strait of Hormuz is affecting all of our economies, and we are feeling the consequences right now. France is attached to international law and will in no way accept any form of toll, blockade, blackmail that would prevent navigation. On the contrary, France has been instrumental in building a form of coalition of countries that are pushing for a de-escalation and return to navigation in the Strait.
But, Deputy Minister, we also heard from Secretary General of NATO saying that actually he's not ruling out using some kind of force or military prowess, using the military alliance in the Strait of Hormuz. Would France support the idea of NATO getting more involved?
First of all, what's important to stress is that France is not a part in this conflict and that NATO's mission is not to intervene in the conflict. Discussions are taking place right now and we're following them carefully, but at this stage our position with regards to NATO is that its role is to protect the alliance. Its role is a defensive one and in no way to become part of this conflict.
There's also, I guess, a little bit, amongst intelligence services, a little bit of sadness that, they don't maybe understand the Iranian regime as they wanted to. We understand that France is still quite close and has great intelligence because of your frequent contacts with Iranian officials at the highest level. What is your understanding? What are those contacts telling you?
Well, since the beginning of the crisis and even before, France has been able to have meaningful discussions with all of the belligerents, with all of the parties. President Macron has exchanged messages and discussed with President Pezeshkian in Iran, and at ministerial level as well, there has been talks. And of course, we are discussing with the U.S. and discussing with many other actors in the region, and not to forget all of the Gulf countries with whom we have alliance and agreements and treaties that attach us to them, and they're allies. So we are, again, in this role of, we're not part of the conflict, and this is extremely important to stress that. So all of our interventions are merely defensive, and they have one objective, is de-escalating the situation, resuming diplomatic discussions, and abiding by international law, because this is, what remains our goal. And any agreement that it's reached, because we, of course, wish an agreement to be reached, must be holistic. That means it has to include Lebanon, it has to include Iran's ballistic and nuclear programs, and it also has to include all of Iran's proxies in the region, because you can't just think of the Strait of Hormuz in it by itself. You have to look at the entire region.
But what's your understanding of how strong the Iranian regime is?
It is difficult to say at this stage, and also without revealing any confidential information. But at this stage, my understanding is that the discussions are continuing, that all the parties are showing their position, and also all the leverage that they have. Again, we're not part of the negotiation discussions, but we are at different level, and in particular at presidential level, trying to resume these negotiations and to ensure that they go the right way, in the right direction.
There's, of course, in the right direction. So there's a big G7 meeting that France is putting actually in Evian in June. Do you think that the Iran war will be over by then?
It is very difficult to predict when the Iran war will be over, but what we intend to do is to address the consequences of the Iran war, whether it is still going on or whether a real ceasefire, reopening of the Strait and discussion has been able to conclude by then. In all the ministerial meetings that we had around the G7, the discussions around the Strait of Hormuz were really important. I, for instance, presided the development track of the G7, and one of the main issues was the impact of the blockade of the Strait of Hormuz on developing countries. There's a risk that 45 million people will suffer from severe starvation due to the absence of fertilizers. So this is, of course, something that is at the heart of the discussion that we're having at the G7 level.
What will be the priority for France, actually, at the G7?
So the G7 is an interesting setting to have discussions because you have around the table the countries, the members that account for 70% of investment and development. So if I look at my track, because there are two main priorities, one is addressing trade imbalances, and the other one, which I'm more directly involved in, is reforming the architecture of the investment and development. So what we used to call development assistance or aid, turning it into investment. And so that is extremely important because having a consensus with the countries that are the biggest donors around the globe to readdress, have more impact, more efficiency, it's something that we are aiming to achieve. We were able to have a communiqué signed at ministerial level. I do look forward to this turning into concrete agreements at the summit. And then, of course, there are many other discussions that will take place with many deliverables that all go to these two main objectives, addressing global imbalances and reforming the architecture for development.
Deputy Minister, yesterday Bloomberg had a scoop saying that the EU will propose temporary lifting sanctions on some of the major Chinese semiconductor suppliers because they've had so much lobbying actually from the European car makers saying they just need this. But, I mean, should the EU be putting car makers ahead of national security if there are security concerns?
At this level, all of the European economies are extremely concerned about the impact of the current situation, geopolitical situation on their economies. Our response to that has been ensuring that we are every day more sovereign, and we're working very hard on a plan to ensure our energetical sovereignty, in particular with the electrification of our cars and of all of our households' needs. At this stage, you know, EU is having also discussions and looking at different options, but I will not comment on that at this stage, given that it is still an ongoing discussion.
Thank you so much for your time today. That was, of course, Eleonore Carrois, the French Deputy Foreign Minister, for a robust discussion on exactly what we're living through geopolitically. Now, coming up, plenty more to unpack with Wei Li from BlackRock. Plus, a little bit later, we have an exclusive interview with the Inditex Chief Executive, Oscar Garcia Maceres. That's coming up shortly, and this is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back, everyone. This is The Pulse. Now, still with us, Wei Li, BlackRock's Global Chief Investment Strategist. Wei, thank you so much for sticking around. We just heard from the Deputy Foreign Minister of France talking about geopolitics. We touched a little bit on earnings. I mean, geopolitics seems to be driving everything, apart from AI. Over the next couple of months, I mean, when does it become tricky if we really don't have a deal with Iran?
Well, for every day that the Strait of Hormuz stays shut, macro damage is accruing. We already talked about how much we estimate from the shut so far, and that is increasing by the day. So, so far we're able to re-risk, deploy more risk beginning of April because we saw signs of economic incentives working, and every time we got close to a major escalation, parties step down, and that is to us signs that the incentives are binding. But we're getting to a point where no further escalation may not be enough for markets to push higher. We would need to see de-escalation because of the accrue nature of what is happening there. So that is the trade-off that we have to weigh up as we think about pricing for both Middle East and AI in markets.
And so when you look at AI, and you've touched on this, but when you look at AI and actually, supporting earnings, how long can they continue to support everything, really?
Well, so far, AI is behind a lot of the major earnings upgrades in equity markets, but also in AI spending is driving up growth in the U.S., right? So we think that there is further to go if you just look at the momentum of earnings upgrade. Big tech companies, they deliver 3 times the earnings growth for this past quarter compared to beginning of the reporting season. But one thing that is changing in AI is that these companies are running low on cash. They're now having to leverage up, issue more debt to fund growth, and that to me points to playing the AI theme through growthy exposures like selective equities rather than in the debt market where we're getting more supply. But I would also note that there are different layers within AI, right? You have the infrastructure intelligence layer, you have the infrastructure build-out layer, you have the model intelligence layer, and you have the application layer. Right now, the first 2 layers are seeing significant revenue ramp, but in terms of the winners and losers of the application layer, it's still too early to say. The last thing I would say is that our framing around constraints, potentially binding AI, has really been helpful in identifying some of the thematic plays within AI. So if you look at energy constraint, that is binding. The AI power basket is really doing well, outperforming broader market. The chips, physical chips binding as a constraint,
for sure.
Semi is really flying. So yes, we can look at AI lifting the whole market, but identifying where the bottlenecks are is a good active play.
Yeah, what's your take on the UK? So we've had quite a lot of political turmoil. Honestly, we don't know where the leadership contests go. Does that really weigh in on investment opportunities for the UK, or is the FTSE still fine?
Well, FTSE has been holding up okay because of the energy exposure. But if we have more political kind of risk premium being baked in markets, I see that being reflected further in sterling and also in the gilts markets that have seen significant repricing already. But so far, a lot of the repricing has been kind of the cash path markets pricing BOE policy rate trajectory. But if risk premium is baking in further uncertainty, then the term premium needs to increase further.
Wei, when you look at, very quickly, where's the biggest dislocation that you see right now? And does it change almost on a weekly basis?
I would note a interesting kind of, I wouldn't call it dislocation because there's a good reason for it. But what is really notable is how well credit spreads are holding up. It's tighter than pre-war, and that is in the face of significant increase in issuance, right? But the way that I look at it is the credit spread is measured above risk-free rate, above treasury yields. But if the risk-free rate is becoming less risk-free, then maybe the spread tightening is just a reflection of fundamentals.
It's so interesting. Wei, thank you so much. Wei Li, of course, of BlackRock. Coming up, our exclusive interview with the Inditex chief executive. We discuss fashion, how the retail giant navigates consumer demand. This is 25 years since Inditex has been listed. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called the ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combined to Japanese style and another country food, then make a novel style.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your Opening Trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Signs of progress in Iran talks, but a stalemate over nuclear ambitions and tolls in the Strait of Hormuz. Well, we discussed all of that with Eleanor Carrois, the French Deputy Foreign Minister. Kevin Warsh is set to be sworn in as chair of the U.S. Federal Reserve. 10-year yields hovering near the highest levels that any incoming Fed chair has had to face since Alan Greenspan in 1987. And the footballing maestro, Lionel Messi, has joined his long-term rival Cristiano Ronaldo in the sporting billionaire club. Now, on to something else that's quite fun. It's been 25 years since Inditex made its IPO. It's now the world's largest clothing retailer with a market cap of more than 150 billion euros. The retail giant operates more than 5,000 stores across the world, including key fashion labels like Zara, Massimo Dutti, and Bershka. Its latest results in March show the group was still drawing in shoppers despite mixed consumer spending and wider uncertainty from the Middle East. Well, Oscar Garcia Maceres has been the Inditex chief executive since 2021, and he joins me now for a rare and exclusive conversation. Thank you so much for joining us. So welcome to Bloomberg. We're extremely happy to have you. And so today is really the day that 25 years ago, Inditex IPO'd. I mean, everything's changed in terms of how we consume, how we spend, how we shop. What do you think that the future of retail is from now?
Well, this is a sector that is changing absolutely every day. For us, has been absolutely critical and key to keep on listening at our customers, to put our customers in the center, and to improve every day, understanding what are their desires, what are their ambitions, in order to offer them the right product and the right experience. So probably going forward, the most relevant part should be to keep on listening at our customers and to try to understand what they are looking for.
So we'll talk about business and economics and even AI in a second, but maybe let's start with fashion. I mean, fashion went from quite loose and not very tailored during the pandemic to now Zara offering things that are very popular, that's more tailored, more business-like. Is that where it's going? Is that what your customer wants?
We have been considering always that fashion goes beyond transaction in garments. We consider that fashion should be aspirational, should be inspirational, and that is very consistent with this idea of providing customers any new trend and to adapt our fashion propositions to them. Maybe we should highlight also that customers are increasingly becoming more experiential, looking for a wow experience, both in the online platforms and in the physical stores.
But do you see actually Inditex just being more bold with fashion choices, especially if you look at the higher end of Zara? It just feels a lot more experimental.
Yes, well, in fact, for us, it's great to have the opportunity to provide the new fashion trends with design, with quality, with sustainability, and of course at affordable price. And that's our main focus, and our business model relies on those principles.
Does it help having actually a family member as chair and taking more risk fashion-wise?
Well, we are absolutely happy to have this nice combination of being a family-owned business that allows us to focus on the medium to long term, and at the same time being a listed company and subject to the daily scrutiny by the markets with rigor and discipline. And of course, Marta Ortega's vision is key in order to develop our strategy in terms of strengthening the level of relevance of our different brands. So we are very, very happy and very confident.
I mean, how do you think about continuity? Again, the founder and actually the family owns 60% of the company. The founder, Amancio Ortega, is 90 years old. As you're saying, his daughter is very involved in the business. How do you think about what comes next? Strategy, shareholder structure, and all of that.
For all of us, was great news. Marta becoming the chair of our board of directors 4 years ago, and that's a signal about the commitment of the family and the next generation for that medium to long term, for the long term growth of the company. Amancio Ortega, our founder, remains being a very positive and relevant influence for all of us. Is a source of inspiration, of course.
We were looking actually in the newsroom about all the properties that you own, and it's Zara, it's also Lefties, which is a value retail brand, it's Massimo Dutti. How do you think about, I guess, mixing the two, right? Is now the right time to expand Lefties because people will be more careful in how much they spend? Is it for a younger crowd? What's the mix and match between your brands?
Diversification is one of the key strengths of the group. Diversification from the geographical perspective. We have physical stores in 98 different countries. Our online platforms are performing in 214 different markets, and we have 8 different brands. In the case of Lefties has been selling its own collections for women, for men, and for kids for over two decades, and expanding but basically mainly focus in Spain and Portugal. So expanding the brand to another markets where Inditex has already presence is the natural step for the brand.
Where will you expand it to? Because we were looking again at the geographies. I think 60% of stores that are outside Iberia are in the Middle East and North Africa for Lefties, compared to 5% for Zara. So again, how do you look at that mix going forward?
Well, we have plans for all of our brands expanding the presence, and in fact, even in our most mature markets like Spain, we have plans for improving our physical store presence, combining with a strong performance of our online platforms. And to give you an exact example of Zara, this year we will open or totally refurbish some of our iconic and flagship stores in cities such as London, Rome, New York, or Shanghai. So many plans to keep on executing the selective growth that has been executed in previous years.
I mean, this is something that I find quite amazing, because you have these mega stores that, frankly, in London are often really, really full, where a lot of your rivals have gone online. So do you see that changing any time, or do people shop differently at Zara than they do for some of your rivals?
Well, in fact, that's one of the main changes in our industry in the last three decades. You know, the online platforms. We have built a model that relies of the full integration. So the journey of our customers could go from the screen of the devices to a store, or from a store to the screen of the devices. So that's why we are looking for improving our commercial presence, larger stores, well located. And for us, the very positive performance of our online platforms is highly connected with the strong operational support that our online platforms are receiving from our stores. And on the other side, the online platforms are one of the main prescribers of our physical stores performance. So you are right that change in the industry is leading us to look for better locations and larger stores in many cities.
I mean, there's a lot also that you tried to do to try and, you know, put productivity higher, basically to keep margins higher. Is there anything that's still, you know, to be done in terms of automation, or how do you look at how much this will change, for example, the in-store online mix going forward?
Well, we are always trying to improve our operations, and for instance, we are in the process of implementing assisted checkouts that could help our customers to have a far better experience in our stores, avoiding some of pain points like queuing for the checkout, and it's performing very well. And we are reinvesting all of the potential efficiencies, allocating our teams in order to provide our customers also a better experience, taking care of them and supporting them during the journey throughout our stores.
How are you using AI? And again, how will that change? Give me something like, is there something incredible that will happen with AI, and how we'll shop?
Well, as a consequence, and I mentioned previously that we consider that our sector, our industry should, and the fashion is beyond pure transaction in garments. We truly believe that the human factor should be a key and should remain being key. But, of course, we have been preparing ourselves, building the strong architecture and the strong governance for the use of AI that currently is applying in many different fields within the company to improve the experience of our employees and also the experience of our customers. To give you an example, we launched in mid-December a new functionality in Zara.com called Virtual Try-On, just taking two pictures, one of your face and one of your body. Thanks to the artificial intelligence, we create an avatar that allows you to try any single product available in our platform. That functionality is available in more than 40 different markets, and with very positive feedback from our customers.
I mean, will you look at agentic AI on your website going forward? Will it change also with like garment design?
Well, we consider that, for instance, the artificial intelligence could help to improve the experience of our customers in a more interactive and more personalized way of navigating in our platforms. And so we are, of course, working very hard in order to keep on improving the experience from customers.
I mean, do you think it'll go faster or actually slower than when we talk about AI? Because, again, it's personalization. It's a real game changer, but you've already done quite a lot as a fashion brand over the years.
Well, we consider that that in order to develop properly the AI, you should have the basic pillars that should be strong, and that's why we have been building the architecture and the governance. But at the same time, we are testing many different aspects of the AI, and with real examples like the virtual try-on that I have already mentioned.
How much investment are you putting in AI compared to, for example, new warehouses and things like that?
We have a policy to keep on investing in the future profitable growth of the business. For this 2026, we announced 2.3 billion euros of capital expenditure. And the main focus of our investment are our physical stores, improving with new openings, enlargements, relocations, refurbishments. But at the same time, we keep on improving our technology. And part of the investment that we are allocating for technology is directly connected with the artificial intelligence as well.
I mean, if one were to pause and think everything that actually, companies such as Inditex has gone through over the last years, it's trade tariffs, it's routes, it's now the Strait of Hormuz. How have retail companies been able to adapt and adjust?
Adaptability and flexibility belongs to our DNA. So we are a global company. I mentioned we have a very strong presence in many different countries. And diversification also applies to the origins. We are sourcing in around 50 different countries. Around 50% of our total production is for us in proximity. That implies Spain, Portugal, Morocco, and Turkey. And our teams are more than used to manage changing in the tariff regimes and some potential changes in circumstances for the operations. So again, flexibility and adaptability. It's something that belongs to our daily lives.
On sustainability, Inditex has made a huge leap, actually, in cutting emissions. I know you have some pretty ambitious targets for 2030. Are you on track, and are there any measures, that are your biggest hope to hit that target?
Well, sustainability is a key part of the model, and it's nothing new for us. So we have been working for decades. Bear in mind that, for instance, we were the first Spanish company as signatory of the United Nations Global Compact. And as you mentioned, we have set very ambitious targets. One of them is that by 2030, 100% of the total fibers, of the total materials should be of lower impact. And in this previous year, in 2025, we reached a remarkable percentage of 88%, with around half of that percentage of materials proceeding from recycling processes. So we are on track. Ambitious goals, but the final outcome should be to be net zero goal by 2040.
And how do you see, I'm not going to ask you what you see for the next 25 years, because 25 years is a very long time frame, but it does seem that also more consumers, even for some of the pieces that they buy in your stores, then resell online and vintage. I mean, how do you see the consumer changing? Will they be more mindful on either recycling or reselling some of the outfits?
Well, that's a possibility. We have in Zara our pre-owned platform that is allowing our customers also to resell the garments. So the many changes, and as you mentioned, 25 years should be a long period of time. But our ambition is to keep on listening to our customers, to keep on adapting the model to what they are looking for in terms of products, in terms of experience, and that keeping that very unique essence of our group should be very relevant in the medium to long term, of course.
I mean, I can't ask you what Zara and Inditex will look like in 25 years, or can I? I mean, your time horizon must be, 4 or 5 years? I mean, 25 feels like, given all the changes, we really don't know what the world looks like.
Yes, absolutely. So the point should be to be absolutely spotting any new trend, and to be in a position in good shape to keep on adapting ourselves to anything new in our sector.
Thank you so much for joining us today. That was a real pleasure to speak to you. Oscar Garcia Maceres, the Inditex Chief Executive Officer, joining us for that exclusive conversation. Coming up, we talk football, and football has a new billionaire. Lionel Messi is not the only one cashing in. Richemont sales climb as shoppers also splurge on Cartier watches and jewelry. More on both stories next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Well, the UK Chancellor has announced a raft of measures aimed at softening the blow of inflationary pressures paid for by closing a tax loophole on oil and gas companies. It comes with the Prime Minister under intense pressure, less than 2 years since Keir Starmer's landslide election win. Well, Bloomberg Originals explains how British politics collided with economic reality, fueling a revolving door of prime ministers.
Spare a thought for 19-year-old Larry.
Larry, the Downing Street cat, has outlasted David Cameron, Theresa May, Boris Johnson, Liz Truss, Rishi Sunak, and maybe now even Keir Starmer.
The knives are now well and truly out.
Dozens of MPs call for the UK Prime Minister to get ready to step down.
And this is what's got people asking, what on earth is going on in the UK?
If you speak to any of the last few prime ministers, they might tell you that Britain is ungovernable.
Well, except the current one.
No, I don't think Britain is ungovernable.
The rhetoric stems from a reality that over 7 years, Britain has churned through 5 prime ministers, while lack of growth and a cost of living crisis have stubbornly stayed put.
Voters and other politicians are so impatient to see change and improvement that the immediate thought goes to, well, let's change the Prime Minister.
And would-be successors are lining up again. But voters may be overlooking another permanent presence in British politics, less furry than Larry and much less forgiving.
You're seeing the bond vigilantes waving their pitchforks and coming out for blood.
Wow, gilts are really exciting.
Oh, they are. And here's the proof. Britain saw the yield on 30-year government bonds, known as gilts, hit new highs in May.
Although this is primarily a political battle, there's no getting away from the fact that the bond market looms large over the whole drama.
So this is a story of how Britain's political crisis collided with economic reality. What that means for Keir Starmer, the country, and Number 10's longest-serving resident.
Oh, we all love Larry the cat. Subscribers can watch that documentary right now on the terminal and on the Bloomberg Video Hub. Just head on to bloomberg.com/videos. Now, Lionel Messi has joined a rare club, not just one of the football's greatest players, but a billionaire. We're now joined by Bloomberg's Spain Bureau Chief, Rodrigo Orihuela. Rodrigo, good morning. How did Messi make it to this point?
How did Messi make it to this point? Well, that's quite an interesting story. When he was 12, obviously his family didn't have enough money to pay for his medical treatment. He had a hormone deficiency, which kind of stemmed his growth at the time. So they decided to move to Spain, where Barcelona offered to pay for the treatment and give him a spot on the youth team. When he broke into the top division as a professional, he was quite shy and very introvert. He recently, in an interview, said that one of his favorite things when he can is just to watch TV by himself, and he prefers not to do anything else socially. That's how introvert he is. So building a marketing machine around him was complicated. And that's one of the interesting elements in his story, that most of his fortune comes from the money he's made through contracts, through things like TV rights linked to contracts, through bonuses, rather than through his brand agreements, rather than sponsorships, which is what most of the other, or the few other athletes who have reached the billionaire level have done. People like Michael Jordan, Roger Federer, and Cristiano Ronaldo. The other interesting thing about him is that, like his perennial rival Cristiano Ronaldo, he's done it while still active. Michael Jordan, for example, didn't hit the mark until after he retired. So I think those are the two elements. He did it through salaries more than through sponsorships, and he did it while still active.
I mean, it's really quite an amazing story. So how does it compare against football's other billionaire, Cristiano Ronaldo?
Yeah, well, I think the core here, the core difference is, as I was saying earlier, the element of shyness and building the Messi brand. Cristiano Ronaldo is very well known for being very, very focused on his own brand, on the personal brand, on the Cristiano identity. Messi never had that sort of push, that drive. And so there's the first big difference. Another interesting difference came to light in 2023 when Messi was offered what would have been the biggest contract ever in the history of football to play in Saudi Arabia, 400 million euros. That same year, Ronaldo got offered a contract also in Saudi Arabia for about 250. Ronaldo accepted and is still playing there. Messi, on the other hand, rejected it and opted to go to Inter Miami for a much smaller check, but one which would allow him to spend more time with his family and have a better environment, he said at the stage, for a family to live in. And so those are two very, very big differences, the brand identity and the push to have the high-profile contracts.
So interesting. Rodrigo, thank you so much. We always love to talk a bit of football. Rodrigo Orihuela, Bloomberg's Spain bureau chief. Now, let's get on to luxury, and Richemont's full-year sales rose more than expected as shoppers splurged on Cartier jewelry. Well, joining us now is Andrea Felstedt, our Bloomberg opinion columnist. Andrea, what a way to finish a Friday, talking a bit of luxury. So what are your main key takeaways from Richemont earnings?
Well, Richemont is really in the right place in the luxury sector at the moment. You know, jewelry really is the hot category. You know, we've all been buying handbags for many, many years. The sector's kind of matured. Jewelry is the place to be. And until recently, with the price of gold, actually, jewellery was better value for money because handbags have gone up so much over the last 5 years. It's actually, you know, better value to buy a Cartier bracelet than a Chanel handbag. Plus, Cartier watches have really been on a tear. They're at the forefront of this change in fashion for big chunky watches to gold, vintage-looking smaller timepieces.
Yeah, what I don't understand about Cartier is that a lot of the pieces have actually been there for a long time, right? So I don't know if it's marketing because they're suddenly cooler and fashionable. They haven't reinvented the wheel and they're more expensive. So why do people want them so bad?
Well, Richemont in particular has been very good at sort of, you know, Richemont takes a really long-term view, and it's been very good at going, you know, Van Cleef & Arpels, which is you know, one of the hot jewellery brands, it's taken them years to reposition it and to bring back the icons. And it's the same with Cartier. They've relaunched a lot of their iconic models. So it's been a slow burn, and they have become more expensive recently, really because of the price of gold.
Very, very quickly, Estée Lauder and Puig are no longer combining.
Exactly. Estée Lauder shareholders very happy. They didn't like this deal, so they seem to be very pleased that this doesn't go ahead. What's going to happen now? Could they, you know, Estée Lauder is in the middle of this big transformation plan. This was really the idea, was they would finish that and then slot in Puig. So do they finish that and then it comes back? Does someone else come in for Estée Lauder? Probably. Unilever's offside, given that it's selling its food to McCormick, and shareholders don't like that either. So, you know, lots of moving parts here. We'll have to see what happens.
We'll have to see. We'll follow this very closely. I know Andrea will. Our Bloomberg opinion columnist, Andrea Felstedt. Up next, Bloomberg Brief, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks on track for their longest stretch of weekly gains since 2023 on optimism over AI and that potential Iran peace deal. The Pentagon mulling scrapping a loan offer to a rare earths refiner that aimed to counter China's dominance in critical minerals. And Kevin Warsh to be officially sworn in as Fed chair later today, a first-of-a-kind ceremony. Let's get a check on markets around the world, though. Let's get first over to Asia and Alice French. Alice.
Good morning. We've had another day in the green here in Asia with the Nikkei and the Taiwanese exchange both closing at record highs. The AI theme going strong. We've seen names like SoftBank, TSMC, MediaTek really rallying today. Here in Japan as well, Kawasaki Heavy coming out with a collaboration with NVIDIA that really helped a rally. Now, of course, we are heading into a three-day weekend in the US and across some of Europe, and the yen is somewhat of a concern. You can see it's hovering there around the 159 level against the dollar, and we know that the last time there was a public holiday, slightly smaller liquidity, that the government did intervene. It spent around $63 billion to prop up the yen, and there is a risk of that happening again on Monday, so let's see.
Yeah, those currency traders really keeping that yen above the 159 mark the last couple of days. Alice, thank you so much. That was Alice French. In Europe, we are managing to eke out a gain, believe it or not, this Friday. The stocks Europe 600 up almost 0.5%. But according to strategists we surveyed, that might be basically it for the year. 16 of them, the average call is for the stocks Europe 600 to rise less than 1% from where we are now. The two-year yield in Britain off a little bit from where it was, but we're still good 60 basis points above the benchmark rate there at 4.34 right now, and the market really voicing the need or the want for the Bank of England to hike rates twice this year, at least as of current market pricing. And then we got some doomsday scenario retail sales with them falling the fastest pace in a year, so that has pressure on sterling. Motor oil in particular is down about 10%. That's petrol as opposed to motor oil. Brent crude here is up about 3%, but we're still going to see a loss for the week. We're just below $106 a barrel, but of course that relief is keeping futures higher and stocks propped up. And DataTrack says with the VIX at these levels, we may not actually be in frothy territory, but then again, it's the chicken and the egg scenario, right? That is a look at your markets. This is the bond picture. The 30-year yield well below 510 again, and the 2-year yield just below 408. So we are calming down just a little bit in the bond market. All right, let's get to some individual market movers now, and for that we'll go to London and Charlie Wells. Charlie.
Good morning, Vonnie. So we're keeping an eye on some of these quantum computing stocks this morning because of investment from the U.S. government yesterday in a number of these. Now, we're seeing some positive sentiment around companies like D-Wave Quantum. They got a boost, along with the likes of IBM and a number of others. Let's flip and take a look at Estée Lauder, or Workday, which is getting a boost this morning, significant on the back of really strong earnings and an outlook that analysts like. Let's flip and get to Estée, which I've clearly been wanting to talk about this morning. This is a tie-up that has fallen apart between Estée Lauder and Puig. Analysts did not want to see this go ahead. They did not like the idea, as Estée is in the midst of a turnaround itself, up this morning nearly 10%. Let's end looking at Puig. That is the Spanish fragrance company that will not be tied up with Estée. They are down some 13% this morning because of the price that Estée was looking to acquire it at. They had been trading at that. So again, negative sentiment around Puig this morning.
All right, Charlie, thank you so much. Charlie Wells there in London. And coming up this hour, we're going to be speaking to JP Morgan's Priya Misra, as Kevin Walsh set to be sworn in a first-of-its-kind ceremony as Fed chair later today. The attack on a nuclear power plant in the UAE earlier this week, raising fears about the scope of Iran's retaliation to U.S. strikes as peace talks apparently drag on. U.S. Secretary of State Marco Rubio telling reporters earlier the two sides have made slight progress. Joining us now in Dubai is Bloomberg's Abir Abu Omar. So, Abir, slight progress according to Marco Rubio. Yesterday we heard from the Iranians that some of the gaps were at least partially bridged, but the main areas of contention are still there, right?
Yeah, good morning, Vonnie. So the main areas of contentions are two, right? One is the state of the Strait of Hormuz, and then the other is the highly enriched uranium in Iran. So what we know as of now is not very different from yesterday. Iran did say through semi-official media that the latest proposal from the United States did bridge some gaps, or to some extent bridged some gaps. But those 2 points are ultimately the most important ones, right? So the Strait of Hormuz, Iran is considering now tolling it. As a matter of fact, we spoke to the Iranian ambassador to France. Bloomberg News spoke to him exclusively, and he said that along with Oman, who, if you remember, Vonnie, were also part of the mediation talks before this whole war started, are considering tolling the Strait of Hormuz. Now, that is something that both Persian Gulf countries and the United States are not going to agree to. And then the second point is, we heard through a Reuters report that the new Supreme Leader in Iran, Mujtaba Khomeini, is sending a directive that disallows the highly enriched uranium that is now weapons making to be sent outside of the country. And that is yet another thing that the United States is not going to agree on. We heard President Trump say that he wants the Strait of Hormuz to remain open, to remain free, and not to be tolled. Secretary of State Rubio also said that if that was what Iran was going to respond with, tolling the Strait of Hormuz, that would make the deal unfeasible. So those same points still exist between the two of them.
Abir, how are investors reacting? How should they react to the latest back and forth? And are they changing their behavior at all in the last week or two?
Yeah, look, so essentially what we know between the two parties right now is that the markets are essentially reacting in a way that doesn't really understand what is happening. So you can see that reflective in Brent prices. Brent is about $105, $106 a barrel. The weekly trajectory of Brent is a decline, but today it's up around 3%. Same thing is happening in equities, right, or in broader risk assets. What we're seeing is the return of geopolitics to equities. Our own strategists say that both oil and rates are the 2 points that will bring conviction to markets again, or the removal of volatility in those will bring conviction to markets. And those are 2 risk assets that we're looking at that have risks stemming out of the region. So we're still waiting to see what Iran responds with, essentially, Vonnie.
All right, Abir, thank you so much. Abir Abu Omar there in Dubai. Bloomberg is learning that the Pentagon is considering scrapping an $80 million conditional loan offer to rare earths refiner ReElement Technologies. It's part of a bigger agreement that aims to help break China's dominance in critical minerals around the world. Joining us now is Rana Sajedi of Bloomberg Economics. How critical is this particular loan, and why is the Pentagon considering not offering it now?
Good morning. So this loan is one of a series of projects and different financing projects that the US government as a whole, and a lot of it going through the Pentagon, have been trying to kind of create to eventually, over time, increase the US's own capacity to mine and produce rare earths and try to reduce China's chokehold on rare earths. So we estimate that 90, 95, sometimes in some cases 99% of global mining and processing of rare earths, creation of permanent magnets from rare earths, which are used heavily in various industrial processes, all comes through China or depends on China somewhere in the supply chain. And that's created a really strong chokehold, and it's become, not just for the US, but globally in Europe and other regions, a priority to try to increase their own capacity to create those rare earth magnets. And this is one of those. And the Pentagon decision seems to be really more kind of in the nitty-gritty of this particular deal, this particular company. But you can see from the response from the White House that clashes with their broader strategy of really trying to put these measures in place.
And I should say the CEO of ReElement, Mark Jensen, didn't speak to this particular disagreement, but said the company is going ahead with a facility in Indiana to refine critical minerals. I want to ask you about something that came out this morning as well, China restricting more chemicals. It's essentially helping the US in terms of its fentanyl crackdown. Can you give us the context?
Yes, absolutely. So this is really the other side of this US-China trade war, and where we've got to in a year or over a year into Trump's second presidency. So if we remember, in February last year, and quite soon after the President Trump's second inauguration, he started to put tariffs specifically on China related to fentanyl. And so the idea was that the logic behind these and the reasoning behind these tariffs, which went from 10 to 20% blanket on all imports from China, the logic was that China is a key point in the global trafficking of fentanyl and opioids that ends up in the US and causes obviously a lot of social damage. And that was, this kind of latest news is really a signal that China is meeting some of those requirements that Trump has set out and the White House has set out to show and really symbolize that they are taking those seriously, that they are putting their own restrictions and measures in place to try to curb this global fentanyl trafficking.
All right, Rana, thank you so much. That is Rana Sajedi of Bloomberg Economics. Now to other top stories trending on the terminal this morning. Chinese regulators are scrutinizing recent stock rallies that were fueled by AI optimism. According to sources, some listed companies and funds have been asked to give more details on their approach to AI. The move highlights China's unease with some wild stock moves that have come with the AI boom. President Donald Trump is sending 5,000 additional troops to Poland, reversing course on a plan to suspend an army deployment to the country. NATO Secretary General Mark Rutte welcomed the decision. Sweden's foreign minister says the White House shifts are confusing and, quote, not easy to navigate. And Argentine football star Lionel Messi has joined a new club, the Billionaire Club. Messi's career skyrocketed after he received growth hormone treatment way back in his teens as part of his FC Barcelona contract. According to Bloomberg analysis, he's earned more than $700 million alone in salary and bonuses since 2007. Coming up, wheat shares sinking, the most on record after merger talks with Estee Lauder fall through. We'll have more. This is Bloomberg.
David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Bloomberg Brief, I'm Vonnie Quinn in New York. A multi-billion-dollar deal falling apart and hitting Spanish retail group Puig brands with a double-digit drop. Merger talks with Estee Lauder failing. Bloomberg learning the discussions fell apart, partially due to makeup artist Charlotte Tilbury's compensation demands. Bloomberg opinion columnist Andrea Felsted joins us now. Andrea, did Charlotte Tilbury just cause a 15% drop in a publicly traded company?
Well, it looks like it. It looks like that was one of the factors that contributed to the fall. Shareholders in Estee Lauder really didn't like this deal. So, you know, we'll have to find out what the main, sticking points were, whether it was Charlotte Tilbury or whether it was a broader unease. But, you know, Puig shareholders obviously wanted this to go ahead. Estee Lauder shareholders didn't.
Yeah, and you can see that reflected in the stock prices. Will any other suitors come along that might fulfill Miss Tilbury's wishes?
Well, Puig is clearly in play. They will be clearly open to a deal. Estee Lauder too has been vulnerable potentially to a bid given its troubles. Now, I've always thought that Unilever was a potential buyer of either. I think more for Estee Lauder than Puig. But Unilever's just sold the remainder of its food business to McCormick, and shareholders don't like that either. So it's really got to prove that it can make that deal work before it goes ahead and buys something else.
Shifting a little bit to Richemont, full-year sales rose more than expected. What is Richemont doing? Other luxury retailers are having a difficult time of it, but it seems Richemont can really do no wrong.
Exactly. Richemont is really in the place to be. There's been a shift away from handbags and leather goods to jewellery because, ironically, handbags have gone up so much over the last 5 years that jewellery, a Cartier bracelet, actually looks better value for money until recently because the prices of gold escalating has had to be factored into those retail prices. Cartier watches are also doing really well. They are really, in the forefront of fashion. We've seen a move from chunky sports watches to smaller, more delicate, vintage-inspired pieces, and Cartier is really leading that charge.
Well, what stumped me was that there was a 17% sales increase in the Americas. Andrea, thank you so much. Bloomberg Opinions, Andrea Felsted. Staying on retail, Bloomberg's Francine Lacroix spoke with the CEO of one of the world's largest fast fashion conglomerates, Inditex, in an exclusive interview. Have a listen.
Diversification is one of the key strengths of the group. Diversification from the geographical perspective. We have physical stores in 98 different countries. Our online platforms are performing in 214 different markets, and we have 8 different brands. In the case of Lefties has been selling its own collections for women, for men, and for kids for over two decades, and expanding but basically mainly focus in Spain and Portugal. So expanding the brand to another markets where Inditex has already presence is the natural step for the brand.
Where will you expand it to? Because we're looking again at the geographies. I think 60% of stores that are outside Iberia are in the Middle East and North Africa for Lefties, compared to 5% for Zara. So again, how do you look at that mix going forward?
Well, we have plans for all of our brands expanding the presence, and in fact, even in our most mature markets, like Spain, we have plans for improving our physical store presence, combining with a strong performance of our online platforms. And to give you an exact example of Zara, this year we will open or totally refurbish some of our iconic and flagship stores in cities such as London, Rome, New York, or Shanghai. So many plans to keep on executing the selective growth that has been executed in previous years.
I mean, this is something that I find quite amazing, because you have these mega stores that, frankly, in London are often really, really full, where a lot of your rivals have gone online. So do you see that changing any time, or do people shop differently at Zara than they do for some of your rivals?
Well, in fact, that's one of the main changes in our industry in the last 2-3 decades. The online platforms. We have built a model that relies of the full integration. So the journey of our customers could go from the screen of the devices to a store, or from a store to the screen of the devices. So that's why we are looking for improving our commercial presence, larger stores, well located. And for us, the very positive performance of our online platforms is highly connected with the strong operational support that our online platforms are receiving from our stores. And on the other side, the online platforms are one of the main prescribers of our physical stores' performance. So you are right that change in the industry is leading us to look for better locations and larger stores in many cities.
I mean, there's a lot also that you tried to do to try and put productivity higher, basically to keep margins higher. Is there anything that's still to be done in terms of automation, or how do you look at how much this will change, for example, the in-store online mix going forward?
Well, we are always trying to improve our operations, and for instance, we are in the process of implementing assisted checkouts that could help our customers to have a far better experience in our stores, avoiding some of pain points like queuing for the checkout, and it's performing very well. And we are reinvesting all of the potential efficiencies, allocating our teams in order to provide our customers also a better experience, taking care of them and supporting them during the journey throughout our stores.
The Inditex CEO speaking exclusively there with Bloomberg's Francine Lacroix. Coming up, a look at what's making news in your front page headlines. This is Bloomberg.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with a debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, House Republican leaders scrapping a planned vote on a measure to direct President Trump to end the Iran war or win authorization for it. The Times says party defections and absences made it clear the GOP lacked the votes to defeat the measure. It's a striking setback, says the Times, exposing fractures within the party over the war. Next up on the Washington Post's front page, the Senate GOP delaying a vote on ICE money over frustration with President Trump's $1.8 billion so-called anti-weaponization fund. Senate Republicans peppered acting AG Todd Blanche with questions including who would be eligible for the money and what guardrails would exist to prevent people convicted of January 6th crimes from benefiting, according to the Post. And finally, the Financial Times reporting JP Morgan is looking to offload risk tied to more than $4 billion in loans to private equity funds. The FT says JP Morgan is in talks with investors over a transaction that would allow a transfer risk tied to so-called net asset value loans backed by PE fund assets. JP Morgan declined to comment. Let's have a look at your macro picture this Friday into a long weekend here in the United States with Memorial Day coming up. We have Brent crude trading up more than 3%, but still we're on track for a loss for the week. I mean, not quite clear why, because we're not seeing any movement really in the things that matter when it comes to US and Iran in that standoff. Futures pointed higher and the VIX below 17. Coming up, we'll catch up with Priya Misra of JP Morgan Asset Management.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general, and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks on track for their longest stretch of weekly gains since 2023. Optimism over AI and a potential Iran peace deal eventually playing into that. The Pentagon mulling scrapping a loan offer to a rare earths refiner that aimed to counter China's dominance in critical minerals. And Kevin Warsh set to be officially sworn in a first-of-its-kind ceremony as Fed chair later today. Let's take a look at these markets as we head into the long weekend. There does appear to be just a little jitterishness, if that's a word, in the oil market, but then again, we are on track for a weekly loss. So we're still hanging out around the 106 mark on Brent. WTI is just under 100. Futures pointing higher. Again, it would be an 8th week of gains for futures. We've had a bang-up earnings season, and there just seems to be continuous positive news. Yesterday, it was the quantum stocks helping the indices. And then the VIX is just about at 17 now. We were below 17 a little bit earlier on. Let's take a look at bonds, because we're going to be talking about those in a moment with Priya Misra. We have unwound the move from last week to a certain extent, but we're still elevated. The 30-year yield at 507.95, down another basis point and a bit. And then the 2-year yield at 407.40, so still well above the benchmark rates. Let's get to some individual movers now. Over to London and Charlie Wells. Charlie.
Good morning, Vonnie. So we are taking a look at some of these quantum computing stocks this morning that really got a boost on news of investment from the United States in quantum computing. You're seeing the likes of D-Wave Quantum up some 2.4% this morning. So again, really strong optimism on this quantum computing sector. Let's flip and take a look at Workday, because they had a strong earnings report yesterday. They also gave an outlook that analysts like. They are really bullish on the case for AI at Workday, up well over 10% for Workday. Let's flip and end on Estée Lauder and Puig. This is a tie-up that has fallen apart between these consumer companies. And basically what we know is that analysts did not like Estée taking on Puig. So we're seeing relief in the market for Estée. Let's flip and look at the story for Puig, because it is a different one. They are down significantly this morning. Questions about their future trajectory, what they need to do to move on from this deal that has fallen apart.
Okay, Charlie, thank you so much. Charlie Wells there in London. JP Morgan's Priya Misra weighing in on the impact of a prolonged stalemate on the conflict in the Middle East, writing, quote, "We're at a tipping point, and unless the Strait of Hormuz opens soon and oil prices fall, we should start seeing the non-linear effects of higher oil prices on the consumer." I'm pleased to say Priya joins us now. She's portfolio manager at JP Morgan Asset Management. To some extent, it's a wonder we haven't seen it already, right, Priya? I mean, we saw UK retail sales. There was a 10% drop in motor fuel sales month over month. So Europe is seeing it a little bit more than the United States. When do we see it? How long more?
I think that's the key question. Now, what has actually helped the U.S. consumer is we've had the tax refund. So I think you've had some fiscal stimulus come in. I think that's helped. The wealth effect has helped the upper part of the K. So even though you're paying more to fill your gas tank, you've got this, you're sort of feeling somewhat richer. I think that's helped. That runs out at some point. So we really need, the Strait to open. I think that's what we're watching. And along with that, I think this concern around, is there a spillover into other prices? Because gas prices, diesel, that's such a huge input. So I've been watching all the retail earnings this week. We haven't seen signs of that happening. Wage inflation is still not high. So I think that's why, I think there is this food and energy issue. But I think we haven't yet seen it into the rest of inflation. So I think we're sort of getting there in the next few months. If the Strait doesn't open, I do think the consumer, not just the lower part of the K, I think the upper part of the K starts to get impacted as well.
Well, for that to happen, we'd probably need to see stocks start to sell off a little bit, right? And we're not seeing that. The Dow hit a record yesterday, Priya. What does it take if this repricing didn't do it?
So I think the wealth effect, a large part of that is the AI. I mean, we're in this once in a generational sort of pickup in productivity. There's CapEx, there's spending. I think that can continue. That's actually not that interest rate sensitive. But I do think in the last week, I think it started sort of late, last week, the rate move is now starting to concern, maybe not still the AI stocks, but everything else. So we started to see, as the 10-year got above 450, 460, getting close to 470, you actually started to see the stock market start to pay attention. Because, when you're taking out rate cuts from the rates market, I think, the market can handle that. You start talking about rate hikes, I think, and you see this global impact. So if global rates are rising, we're talking about Fed hikes. The Fed doesn't just hike once. I think that's the concern. If the market starts to price in 2, 3, 4 rate hikes, I think then the broader market starts to worry, where's that interest rate? You're discounting cash flows at some interest rates. I think then stocks do start to worry. So that's why I think rates have now reached that danger zone. It's all been a real rate-driven rate increase. So if rates continue to rise, I think that stock market, that wealth effect that has sort of helped the consumer, that starts to unravel a little, somewhat.
So we're definitely at the point with the FOMC that the easing bias is coming out, right? But are we at the point yet where there might be vocal support for a hike, given also that, Chair Warsh is going to be coming in?
Right. So, I think the easing bias is very likely to be taken off. I mean, we saw this in the minutes as well. I think that's already priced in. To your point about hikes, I think the Fed is in a really tough position. They're dealing with a stagflationary shock, and the starting point is not great because inflation has been above target now for 5 years. So I think they will want to buy time, but they realize that raising rates doesn't open the Strait of Hormuz. And, oil prices continue to rise. That hurts the consumer. Then you've got mortgage rates rising. So, I think for them to start talking about hikes, they have to see a sign of re-acceleration in the labor market, in terms of, other inflation starting to pick up, as well as inflation expectations. We're not seeing that, so we don't think the Fed's likely to hike, but I think they stay on hold and they watch. They watch, and, if in case you see signs of re-acceleration beyond AI, I think that's when they hike.
How do you think the midterms affect the chances of a hike, though? Because on the one hand, the Fed won't want to be called political. On the other hand, we all know that there's already a little bit of a perfume of politicization at the Fed at the moment. Can they hike before the midterms?
So I think the Fed, there's been a lot of political talk around it, but they'll really look at the data. It is a committee, so you've got 12 members that vote, 19 others talk about it, they have comments. I don't think the midterm matters in terms of the optics around whether the Fed can hike if they have to hike. I think they're going to watch the data. If they see this spillover into inflation expectations, into core services, inflation picking up, into wages, I think then they hike. Where I think the midterm matters is, do we see any fiscal policy between now and the midterm? Is there any way to offset the oil shock? I think then that absolutely has an impact on the economy. So I am watching the politics of the midterms, but I don't think the Fed will do what they should do given the inflation backdrop.
So, Priya, we were in a range for the longest time on treasuries. You and me chatted many, many times during that period, and sure enough, they would always revert. Are we seeing a reversion this week after last week's price move, or are we in a new range now?
So I think the range is higher. We were thinking 375, 4.25. Now we're thinking 4.5. So we've been above that range. What gives us comfort that there is still this range, that the upside is not 5%, is the fact that this was real rate driven. Equities are paying attention. Financial conditions tightened. Now, not this week, but if you look at last Friday, you look at Monday, Tuesday, financial conditions were tightening. So that normally is telling you that the move is about to end. I think that's part of it. And global global rates. You know, a lot of the move, why we were stepping back was if global rates are rising, that does have an impact on the US. You're seeing the impact of the oil shock on on European data. You talked about the UK data. I think as global rates stabilize, that actually can also help cap these 10-year US rates as well.
Investors are going to have to get used to a new style of communication, but maybe also new content in terms of communication. How are you looking for Kevin Warsh to communicate with the public?
You know, he's talking about a regime change, so there's maybe a lot in here in terms of a new framework, in terms of communication. Does the dot plot stay? So we'll just watch. Every chair has an impact on communication. I think it might take some time because he has to win the hearts and minds of everybody at the FOMC. You know, as long as they communicate the reaction function, that's what the market wants a sense of. As economic data comes in, how does this Fed interpret it? What do they do in terms of, you know, policy? I think that's what I'll be watching. If the dot plot goes, that's fine, as long as we get maybe scenarios. So, you know, just a better sense of the reaction function. More communication, I always think is better because there's transparency. We understand how the market should respond to data. But we'll be watching because this is a new, you know, chair with an idea to reform the Fed or have this regime change. So we'll just stay attuned.
Priya, we have to leave it there, unfortunately, but thank you so much for joining us in studio today. That is Priya Misra of JP Morgan Asset Management. Now to other top stories trending on the terminal this morning. An attack on a nuclear power plant in the UAE has raised fears about the scope of Iran's retaliation to a potential US resumption of strikes. The Sunday attack was launched from Iraq. Experts say the attack indicates the greater role Tehran-backed militias in Iraq are playing in the war. SpaceX scrubbed a crucial Starship test launch with just 40 seconds left in the countdown after again seeing that a pin holding the tower arm in place failed to retract. The delay comes just after SpaceX filed publicly for an IPO and unveiled billions in losses tied to its Starship, Starlink, and AI ambitions. DeepSeek is prioritizing AI research over profits as it pursues a $10 billion funding round. Bloomberg sources say its founder told investors the company will keep developing open-source AI models while pursuing a broader goal of achieving artificial general intelligence. Coming up, the Pentagon and White House clashing over a rare earths deal. More next. This is Bloomberg.
Of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bloomberg Brief, I'm Vonnie Quinn in New York. The Pentagon and White House clashing over a rare earths deal. Sources telling Bloomberg the Defense Department is considering scrapping an $80 million conditional loan offer to rare earths refiner ReElement Technologies. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. Jonathan, what's going on here? I mean, this is part of a massive outlay on the part of the government to get stakes in different companies. Why is the Pentagon balking at this particular one?
Yeah, we're seeing a clash between the White House that really wants to move fast on this. They want to develop the U.S. rare earth capabilities to counter China's control over those metals. And the Pentagon that's raising questions about whether this company ReElement is going to be able to scale its technology up, whether its revenue forecasts check out. And so they're kind of hitting the brakes a little bit. And the White House wants to hit the gas. You know, remember, this rare earths is what gave China the ability to fight back against President Trump's tariffs. And so they want to counter that and move quickly. So we're seeing a rare clash, really, within this administration.
Yeah, and the Pentagon saying it's just doing its due diligence, and the CEO of the rare earths company saying they're going ahead in Indiana. He wouldn't comment on the actual scandal or disagreement, if you like. Now, about Trump deploying 5,000 troops to Poland, it's an abrupt U-turn. It's taking many in Europe by surprise, although the NATO Secretary General has welcomed it. Just give us the context. What's behind this, Jonathan?
So some of the context is the election of the new president there, Karol Nawrocki. It's someone who President Trump endorsed, and we know that the president makes a lot of these decisions based on personal factors, often much more than policy factors. He made tariff decisions after meeting with the King of England, for example, that really was not based in any specific policy, but they had a great meeting. We've seen many other examples like that. So it seems like this is more of a personal decision than a policy one, because they had really laid out the case for why they were going to not deploy these troops. Earlier, the Pentagon had said they weren't going to, that NATO, this was a message to NATO to, do more to defend itself. And here we are with the change. That election seems to be the big significant change that's changed course here.
Yeah, I mean, NATO had been bracing for cuts in military resources from the U.S. The ICE funding, is it in trouble for the administration, Jonathan? The $1.8 billion settlement fund is really irking many Senate Democrats, and Republicans.
Yeah, I mean, this is a mess. This ICE funding, immigration enforcement funding that the Senate was supposed to pass seemed like a very easy lift for Republicans. They're doing it in a method that allows them to do it with only Republican votes. It's an issue that unites the entire party. But you had two things dropped onto it that have really caused problems. That settlement fund that you mentioned, and money for security around the president's White House ballroom project. And Republicans are looking at the midterm elections. They don't want to be on the hook for either of those things. They think both of them are going to be very unpopular with voters. And so it stopped the train that was moving down the tracks on this immigration enforcement funding. So the House has left, the Senate has left. They're going to be gone for the next week for the Memorial Day holiday, and they're still going to be left with this in their laps when they come back.
All right, Jonathan, thank you so much, and enjoy your Memorial Day holiday. That's Jonathan Tamari of Bloomberg Government. In Europe, Spanish retail group Puig Brands extending losses after deal talks with Estee Lauder fell through, nixing what would have created the world's largest fragrance and skincare company. Let's bring in Andrea Felstead of Bloomberg Opinion joining us. And Andrea, we're reporting that it was Charlotte Tilbury that made this deal fall apart. Tell us what happened.
Indeed, that does seem to be the report. There was a change of control clause which would have added to the cost of the deal, and that seems to have scuppered things. Whether that was the whole story, because this deal was pretty unpopular with Estée Lauder shareholders, and we've seen that the shares have risen strongly now that it's fallen apart, but that does seem to be the reason that is being reported.
So we'll see if anybody else comes along to court either of the companies. But I want to ask you about Richemont's full year sales, because it was massive. It rose more than expected. Shoppers splurging on, you know, Van Cleef & Arpels brand diamonds and Cartier bracelets and rings and so on. Where's the money coming from, Andrea?
It's coming from the US. This has really been the driver of luxury sales. China is stabilizing, but it's not yet recovered. But the melt up in stock markets until recently, Chairman Johann Rupert talked about some of the money that's being made by individuals in tech. That has all fed into sales in US luxury, and Richemont is in the right place to capitalize on that because jewelry is the hot sector.
Yeah, no more bags, as you say. Andrea, thank you so much. Bloomberg Opinions, Andrea Felstead. Football star Lionel Messi has joined his longtime rival Cristiano Ronaldo. Not where you think, though. He's become a sporting billionaire. That's the club he's joined. This is according to the Bloomberg Billionaires Index. Let's bring in Bloomberg's Rodrigo Orihuela for more. Rodrigo, what's so fascinating about this is that he's done it not by brand deals or sponsorships, although they've added, you know, to his wealth, but it was basically salary and bonuses, right? How often has this happened in the past?
Yes, that is the unique aspect about this. It's he's unique, the same as Cristiano Ronaldo. They are both unique in that they have reached the status in activity while they're still playing. So that is quite unusual for the few athletes who have reached billionaire status. But the added uniqueness in Messi's case is the point that you're making, that he's done it through salaries. And something that's super interesting about this is that in 2023, he turned down a salary which was worth, a contract which was worth about 400 million to go play in Saudi Arabia. Cristiano Ronaldo did accept a salary in Saudi Arabia for about 250. And Messi instead went to the US. So on one hand, Cristiano's wealth was boosted by money straight linked to the contract from Saudi Arabia. He decided to go for a smaller paycheck, but one that also brought things like TV revenue sharing and equity options into a club. So he was more boosted by the tech and entertainment environment in the US that helped him get to this billionaire status.
Yeah, it's really fascinating how these stars are discussing money now. Apparently, as you mentioned, the TV streaming rights, there could be a revenue sharing deal with Apple, for example, on its MLS season pass streaming package, among other sort of creative ways of making money from his rights. But he's also buying up little pieces of clubs with an eye to perhaps what he might do after he stops playing full-time.
Yes, that is an interesting aspect. It's becoming more and more common to see former footballers involved in club ownership. We recently had a case of a former Spanish captain buying or being one of the shareholders in a club here. Cristiano Ronaldo has made investments. In Messi's case, what he has done so far is either buy the full ownership or be a partner in ownership in two clubs, one in Uruguay with another former footballer, and another club in Spain. And in Argentina, where private ownership is not allowed of football clubs, he founded a club and his family runs it. So clearly he has got some strategy at the back of his head. The thing with Messi is that he does not like to talk about his businesses. He's only recently started saying that he's interested in business as a whole and that he's learning, and it may be something that he may focus on once he retires. But clearly he does have a plan, at least as far as the football clubs go.
Rodrigo, can you put it into context a little bit for us? I mean, back when David Beckham was playing, for example, would it ever have been possible for a footballer or any sports star to make $1 billion from just the playing alone?
No, so I think there's two aspects there. One is David Beckham himself is a very interesting character because I do think as far as football players go, he took the marketing push and the marketing brand and strategy to a totally different level. And he happens to be a shareholder in Inter Miami. So the feeling from everybody who looks from outside is that clearly there are things that Messi can or must be learning from the Beckham brand, right? Because he's working there with somebody who has done it like nobody else and is a shareholder in the club where Messi plays. So that's point number one. Now, as far as players making that money, it would not have been possible. Messi, I mean, we've seen salaries for footballers have this huge inflation over the past 15 years. When Messi was in the late 2000s, Messi was paid about 12 million, and he was by far the best paid player on the Barcelona side. Today, there are at least 10 players who earn much more than that on Barcelona. So the salaries have changed a lot, and Beckham, you know, played even earlier than that. He played in 2000.
Well, Rodrigo, I don't think I'm giving too much away by saying he deserves every cent of it. Bloomberg's Rodrigo Orihuela there. Thank you so much. Coming up, we're going to get you set up for your trading day. There's some economic data and the swearing in of a new Fed chair. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. First up, we're going to hear from Fed Governor Chris Waller. That's at 10 a.m. Eastern. Then, President Trump is going to hold the first ever swearing-in ceremony for Fed Chair. Obviously, Kevin Warsh will become Fed Chair, sworn in at 11 a.m. And U.S. bond market closes early, 2 p.m. today, ahead of the Memorial Day weekend. So with your final trading day before the Memorial Day weekend, let's have a look at what's moving pre-market. So we have Futu Holdings, this story out of China. It's cracking down really on plans to penalize the firms such as Futu for operating on the mainland without a license, and you're seeing that with Up Fintech as well. Workday, another mover. It had results and they quieted fears about AI disruption for that name. Let's take a look at the macro picture as we head into our final trading session for this season before Memorial Day. Well, futures are higher. That's it for Bloomberg Brief.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spent a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Right now, there's so much money to be made in the AI space.
I'm actually leaning into AI almost everywhere.
This is about risk management, but maintaining exposure to AI.
On the tech front, we still see structural opportunity.
It is very, very hard to just make the worst case scenario assumptions and make that your base case.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, it's day one for Kevin Warsh, the incoming Fed chair, gearing up for a ceremony at the White House, joining an increasingly divided committee hit by the ongoing energy shock and a bond market pricing out cuts and beginning to price in hikes. The chairman facing an early test.
And right now the market is saying that he has some work to do. Even if it isn't necessarily hiking rates, it's at least giving a credible perception that he is willing to do so, even though this market believes that he is hampered by the president. I will just note that he is facing the highest yields on 10-year treasuries coming in on his swearing-in date of any Fed chair going back to Alan Greenspan in 1987. It gives you a sense of how high the bar is for him to tame some of the inflationary expectations.
Bond yield to the long end of the curve, close to multi-decade highs. You want some good news for the incoming Fed chair? The president just turning down the volume, dialing back the heat just a little bit going into this.
Yeah, he told the Washington Examiner he's going to let him do what he wants to do. And then into another interview in Fortune magazine, he acknowledged that the war has impacted prices. And he said that maybe he'll have to look at the figures after the war is done. You mentioned Alan Greenspan, 1987, where yields were. That was the last time we had a swearing in at the White House. When I've been told that this isn't some normal swearing in, some executives are going to be there, ambassadors, high-profile people were invited to this. The president wants to make this a very big event.
Energy at the heart of this debate right now. Check out crude this morning. Brent and WTI. Brent at 105, WTI at 98. It's Bramo's favorite subject. According to Iranian media, we've narrowed the gaps to some extent. According to Reuters, they want to keep the uranium. According to everyone else, Iran's discussing with Oman a permanent toll system. So this is going really well.
Okay, just to be clear, I think this is an incredibly important story. I just hate talking about it because there's no edge. And ultimately what you're looking at is people saying we're close. And then you hear any of the details whatsoever. And they are as far apart as ever. It's a question over the uranium and a question over the toll for the Strait of Hormuz. And in the meantime, you've got an increasing number of oil strategists saying we will run out of oil and it will be a crisis. So you put this together and it's sort of an existential overhang without a real compass as to how close we're going to be to get there, with a lot of rhetoric trying to make us think otherwise.
The one good thing I love about D.C. is I ran into Halima Croft literally in a hotel lobby. And she reiterated what I heard from Amrita Sen yesterday, which is that everyone is focused on June. And that is the concern where we start to hit really the bottom levels when it comes to the inventories that everyone is living on right now.
Crude this morning, higher by more than 2%. Coming up this hour, Brian Levitt of Invesco as Wall Street looks to cap off another winning week. Pierre Falagu of New Street Research on SpaceX's push to go public. And Krishna Gua of Evercore as Kevin Walsh takes the reins at the Federal Reserve. We begin this hour with stocks pushing higher. The S&P on track for an 8th consecutive week of gains. Brian Levitt of Invesco writing rising markets have diverged meaningfully from underlying fundamentals. Brian joins us now for more. Brian who? Brian Levitt, sounding a little bit bearish with that quote. Explain yourself.
No, I'm not bearish. I'm trying to think where that quote actually came from. I'm quite optimistic. If you think about are we diverging from fundamentals? No, we've had 6 straight quarters of double-digit earnings growth. So it's a market that has, fundamentals have actually been quite strong. Perhaps when you're starting to say fundamentals a little bit, it's obviously where rates have gone, it's where energy prices have gone. You would think that perhaps you might have seen some type of volatility around it or some headwind around it, but the markets have shrugged it off. Equities, all-time highs, credit spreads tight. So we've backed out 3 rate cuts and added 2 rate hikes, and the markets.
Where's the insulation coming from? Where do you think it's coming from?
It's coming from corporate earnings. It's coming from the fact that businesses continue to produce what the market wants, and forward guidance continues to be good. And it's coming from the fact that you do not have a particularly over-levered corporate sector. You have sound fundamentals within the corporate sector. And so you're not seeing a market that's responding particularly negatively to some of these risks that are lurking out there.
Is there a fear that we've seen the peak in terms of the acceleration rate in some of these AI names, especially as they cash out with IPOs?
Yeah, there's some risk of that. What the market starts to, what you hope the market gets more hopeful of, and was really in the second half of 2025 and the beginning of the year, was that you'd start to get more of a broadening out as you move from, who's going to make AI possible to who's going to build it out to who's going to benefit from it. And we had a very nice story coming into the year. I remember saying to people, if you're not bullish now, I don't know when you would be. For the second year in a row, we got disrupted a bit by a policy decision, one being Liberation Day, this one being the war. But it's a market that is looking at reasonable growth, expected productivity gains, and corporate profitability.
Are you excited to buy into all these IPOs? SpaceX, OpenAI, Anthropic?
No, I suspect I'll own them because of my passive index exposure in certain places. But no, I'm not overly excited to buy them. I think that what ends up happening is you get a lot of excitement around these things. You get valuations that are elevated, particularly on a SpaceX. You'll get a valuation that's about expected future growth, longer duration, well off in the future versus what's being delivered now. So obviously the internet provider part of it is generating revenue for the business, but some of the other things, some of the other optionality you have on it is way off in the future. So no, not overly excited, but I'm going to have exposure to it as a result of some of the positions that I have.
Does it worry you that the fundamentals seem to have broken down when it comes to the yield backdrop versus some of the incredible enthusiasm for, not PE multiples, because it really has come from the earnings, but just the flight into risk assets that seem completely divorced from the underlying inflation, the underlying economy, the underlying skepticism coming from the rank and file?
Well, you want to break down what's driving the move in rates. And I think there's just perception that it's coming from higher gasoline prices and a big move in inflation expectations. In fact, inflation expectations have been relatively benign over the last few weeks. You had a big move earlier in the year. I was so happy with 2.25 5-year inflation break-evens. Moving to 2.6 is not ideal, but it's still relative price stability where I come from. So you have not seen it move substantially from 2.6 on the 5-year, which is fine. So in essence, what else is driving it? A little bit of growth expectations, which is good, but also term premium because of expectations of the Fed. Now, I don't think the Fed's raising rates. I don't think the Fed's raising rates with 2.6 on inflation expectations and with the economy likely to moderate a bit as a result of all of us paying $80 to fill up our gas tanks. So I think the Fed is on hold. And I think ultimately a Kevin Walsh Fed would like to see 3% on the funds rate. Now, it doesn't mean we're going to get there immediately, but I think ultimately an easing bias will come back into these markets. And so I suspect the equity market and the credit market are looking past this, 40 basis point move in the 10-year.
$80 to fill up your tank, depending on where you live.
Depending on where you live, yeah.
It's actually higher in some parts of this country. You actually don't...
As my friends in California always tell me.
Yep, in California, taking some shots overnight at Chevron, telling consumers
It
actually...
makes sense of that.
Yeah.
What is the California governor doing taking shots at Chevron when California is paying so much more for gasoline than much of this country?
Yeah, California, through regulations, means a lot higher taxes. They are basically an energy island because they cut themselves off from Texas and Louisiana. They import 20% of their fuels from Asia.
And it's Chevron's fault.
And it's Chevron's fault. I think a lot of people would actually say, especially the CEO of Chevron would say, actually, this is due to policies.
Yeah.
But you don't think the recent surge in gasoline is actually going to impact spending? We heard something different from Walmart yesterday. They're actually concerned.
Oh, it'll slow things down. I don't think that it's going to lead to an inflation spiral, which is a different thing. I view it as a tax on the consumer that will slow things down. And actually, if you look at market leadership, the way we think of things in terms of the direction of the global economy, coming into the year, it was an expansion. And that's when you want to be smaller, emerging markets, more value-oriented, equal weight parts of the market. And what you've seen in this little bit of a slowdown, I mean, we're hanging in, but a little bit of slowdown is larger cap, mega cap growth, higher quality back in. The interesting thing about the slowdown is that rates have gone up, right? So my expectation would be that we will get a reprieve on rates as the economy moderates because of what we're spending on
What
gasoline.
happens in the middle of the summer, though, if we're north of $5 a gallon?
Yeah, well, the risks rise. And so what's interesting from a market perspective, the risks to the economy rise. The question is, what does that mean for the markets? Because obviously that's ultimately what we're trying to get. And Fed policy is a little bit restrictive here, not extreme, but a little bit restrictive given the shape of the yield curve. And the expectation would be if you run into these challenges, you'll start to get some of the policy easing. And I think, the administration will look for some type of way to get out, although, increasingly challenging.
There are things that matter to the economy and things that matter to the market, and sometimes they're not the same thing. If you're looking at the economy right now, going into the Memorial Day weekend, you mentioned the high gasoline prices, mortgage costs as well.
Yeah.
The 30-year fixed in this country jumped at 6.5%, the highest since last August. That's a problem.
Yeah, the aspects of the economy that are hinged to where benchmark yields are paying a lot of attention, even if risk assets aren't. You have to wonder what it would take for the Fed to move back to an easing bias with rates with inflation where it's running currently.
Still got one.
Right, but I mean, that's true. I can't get over the idea that we still have an easing bias. But I'm just saying, if they move back to an easing bias after they ostensibly remove it in June, you have to think it's not in good news. Is that still good for risk assets?
Just to set the stage for Kevin Walsh, people are wondering whether he's going to be more dovish than is otherwise necessary. The existing Fed chair of this committee was running rates at 0 and doing QE with inflation heading towards 9%. And we're freaking out about the new guy being too dovish. Come on, guys.
Well,
are our memories that short?
Well, and I would add to that the idea that we still have an easing bias, if with inflation moving to close to 4%. Try to make sense of that.
Okay, so yes, so the headline inflation, we know where it's going, right, because of what's happened with gasoline prices. The question is whether you're going to set policy based on a geopolitical event that led to a shock in these prices that are going to weigh probably on consumption. So it's why I focus on the break-evens. It's why I focus on the expectations, because when we got into trouble in 2022 was when the 5-year break-even was breaking above 3%. We're not there. The 2-year broke above it and seems to be dipping back down a bit. The 5-year's been sitting 260 kind of stable. So if you're a Fed chair, you can look at that and say, well, I have relative price stability. Let me look on the other side and see what that means for growth. So it's not Pollyanna to say that growth isn't going to be impacted. The question is whether it's strong enough for corporate earnings and whether that allows the Fed to lower interest rates, both which could be conducive for markets to continue in advance.
Brian, still bullish. I'm pleased we cleared that up. It's good to see you, sir.
Yeah.
Appreciate it, buddy. Thank you. Brian Levitt there, Invesco. Enjoy the long weekend, sir.
Thank you.
It's
You
always
too.
good to see you. Thank you. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. Iran saying the latest U.S. proposal to end the war is narrowing the gaps, but agreement is still far off. Iran refuses to ship its enriched uranium stockpile to the U.S. President Donald Trump, meanwhile, says he opposes efforts by Iran and Oman to establish a toll system for Hormuz. SpaceX delaying a critical test of its Starship rocket just seconds before launch. The highly anticipated mission was expected a day after Elon Musk's company filed publicly for an IPO. The next launch window will open at 5:30 p.m. Eastern this afternoon. Standard Chartered CEO Bill Winter is apologizing for saying AI will affect, quote, lower value human capital. Winter's writing in a LinkedIn post, he recognizes that his, quote, choice of words caused upset to some colleagues. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the programme, struggling for control of Hormuz.
We have total control of the Strait of Hormuz. It's an international waterway. They're not charging tolls. We want it open. We want it free. We don't want tolls.
Up next, Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Coming up a little bit later this morning, around 11 a.m. Eastern Time, at the White House, being sworn in. Kevin Walsh, incoming Fed chair. Look out for that. This guy's important, though, too. An hour before, Governor Waller, his view on monetary policy right now, given the pushback to the so-called easing bias in the statement over at the Federal Reserve. Where is Governor Waller on that effort?
Yeah, he has actually been shifting when it comes to his belief that inflationary pressures are reaching a crescendo that he needs to address. And so he's actually changed his rhetoric. So my question is he going to join the crew, sort of dissenting with the easing bias, and really set up June as a time where they remove it, where they then can put it back again later this year?
In like November time? Yeah. Into December.
Exactly.
Year end and then cut rates.
Yeah, exactly.
Okay. Looking forward to the year ahead, according to Lisa Abramowitz. Equity futures right now on the S&P. You're not alone, I know.
That's what people think.
Firmer by 1/10% on the S&P. On the Nasdaq up by about 0.07%. Call it 1/10% as well. In the bond market, Treasury yields shaping up as follows. 2 still close to 4%. 10 still around 460, backing away from that level, 455. In the driving seat, just seems to be crude at the moment, just whipsawing investors one way to the other. Brent crude 105 and WTI at about $98 a barrel. Under surveillance this morning, struggling for control of Hormuz.
Right now we're negotiating And we'll see the Iran conflict. That'll end soon, very soon. We have total control of the Strait of Hormuz. It's an international waterway. They're not charging tolls. We want it open. We want it free. We don't want tolls.
Here's the latest this morning. The president saying the U.S. is firmly in control of the Strait of Hormuz as Iran and Oman discuss a permanent tolling system for the critical waterway. Bloomberg's Tyler Kendall joins us from Washington. Tyler, the president's totally in control but unable to open it. That's kind of the problem.
Right, exactly, John, because at this point, Iran is trying to tighten its grip over the strait. As you heard, President Trump did say that the U.S. isn't allowing any vessels through. We did hear from CENTCOM earlier this week, confirming that so far 88 commercial tankers have been turned around amid the U.S.'s naval blockade. But then you have Iran's ambassador to France telling Bloomberg News that there are these active discussions here when it comes to formalizing a toll payment system with neighboring Oman. This is raising questions under international law, let alone concerns when it comes to the U.S.'s position. As we heard Secretary of State Marco Rubio say yesterday that if any such effort is implemented, that would mean that a U.S.-Iran peace deal would be, quote, unfeasible. It's also raising concerns among European allies. I had the chance to catch up with the EU ambassador to the U.S. yesterday, who told me that amid these threats when it comes to formalizing a toll, the European allies rather, are looking at a potential mission to help secure the waterway, but she couldn't really give me a firm timeline or what the tipping point would be for European allies to actually deploy those assets. The Strait of Hormuz really was just one point of contention that came to the forefront of the conversation yesterday, as Reuters reports that Iran's supreme leader said that the country's stockpile of highly enriched uranium isn't going anywhere. That, of course, has been a main sticking point for the U.S., as President Trump says that we could either see escalation or a diplomatic deal.
Tyler Kendall with the latest in Washington. Tyler, thank you. To build on that conversation, Colonel Wayne Sanders of Bloomberg Intelligence joins us now for more. Colonel, welcome to the program. A central question of programming on Bloomberg surveillance throughout the whole week. Is the status quo sustainable or not? Because the president is sticking with this blockade for now.
Yeah, I think the blockade right now is the only thing that the U.S. has from a lever that's actually causing some of the pain to Iran, because even the threats of strikes up until this point haven't done a whole lot. Iran has proven that when you're looking at trying to be able to protect their people, they really don't care at that point in time. They're willing to take additional losses. So the status quo ends up being one of the key pieces there. I think the War Powers Act and some of the things that you've seen across Congress right now isn't going to change President Trump's authorized use of military force if an escalation were to be required. But I don't think that's the first play in this, because as you've seen, Iran is still they still fired some attacks at the Gulf states. They haven't fired at the U.S., but they have not seen any type of military response from the U.S. at this point.
Well, what would the United States be able to use the negotiating table besides the blockade in terms of maybe giving a concession to Iran to try to open up the strait?
Well, I think, if you look at maybe its escort agreements to be able to start it, as you guys mentioned, the U.S. is not going to condone coercion. So a lot of it right now, Iran's not playing by the rules, even when it comes to the Geneva Convention and comes to the way that militaries actually fight in a conventional sense. So why would we trust that any type of deal that would be made in terms of a tolling system would actually be held up? Anytime that Iran could potentially get upset about it, they would just change the rules and go back to their asymmetric threat of shoulder-fired weapons, Shahed drones, as well as Fatah 110 missiles, and say, okay, we're gonna close that strait again.
But what does it say that Oman is willing to work with Iran on this? Obviously, the UAE and the Saudis are not signing up for an Iranian-led toll system.
Yeah, I think at this point in time, everybody's trying to find some type of answer to this, right? We've been in a stalemate now since April 8th, and we've had this ceasefire in place. And so I think some of the Gulf states may be actually Jordan's looking for some type of answer to be able to do that, because they may be willing to actually pay for that. And they could potentially mutually benefit. The problem is that the rest of the world isn't. They're not willing to take that chance and try and reopen based off of an Iranian regime that can change the rules at any time.
Colonel Sanders, when we speak to people in the market, they say everyone is incentivized to come to the table and they expect some sort of agreement, which is the reason why you aren't seeing some freak out in the oil market. When you talk to strategists, it seems like these two sides are miles apart and don't really have a reason to come together and to have a sustainable solution for the longer term. Can you square the difference here to sort of bridge that gap?
Well, I take probably the most constructive signal that we've seen in weeks, if not months, has been the fact that Iran used the phrase the U.S. is narrowing the gap. Up until now, you've heard President Trump talk about the fact that, hey, we're doing really well, the negotiations going in the right direction, and then turns around and Iran, and through Iran's state-backed media or anything else like that, comes back and said, we've never said that. So the fact that you're actually seeing on the public stage Iran saying they're narrowing the gap is actually a very positive sign at this point in time.
Do we have a sense of what China's role could be in all of this? There were 2 tankers who got through the Strait of Hormuz earlier this week. There was a lot of fanfare about this. They were going to China. They were Iraqi oil. And people were excited because it was the greatest volume of oil to traverse through the Strait of Hormuz since the beginning of the conflict. Do we have a sense of whether China is pressuring Iran to end this or whether they are sort of lengthening the time that this could go on?
Yeah, I think China's trying to play somewhat in the middle ground a little bit here, but they are trying to pressure Iran in a certain amount to be able to open up more of the straits, specifically because, President Xi's looking for President Trump to start reevaluating, if you will, some of the arms deals that the U.S. has to be able to supply weapons to Taiwan. There's a $14 billion deal that's out there right now, specifically to be able to arm Taiwan. Taiwan literally just finished putting up a $24 billion supplemental that almost doubles their defense spending, specifically so that they could actually purchase more munitions as well as air defense systems from the U.S. And so I think China's trying to play part of that balance right there to say, okay, look, hey, Iran, you need to start playing a little nicer right now because I really need President Trump to lay off some of the weapons deliveries to Taiwan.
Does it even matter if the president signs on to that $14 billion package, though? Where are we in terms of actually shipping these weapons to Taiwan? Aren't we years behind?
In some are, yes. But Taiwan has had multiple deals with the U.S. up until this point, so the deliveries have continued. So I don't know whether or not it would be a slowing down of deliveries to Taiwan, similar to, some of the PAC-3 interceptors going to, and Patriot systems going to Switzerland have actually stopped a little bit. They've actually been delayed delivery to Switzerland so that the U.S. can have them for the U.S. operational needs. So that may actually be, you're absolutely right. The industry as a whole right now has already started moving the needle. This has started back even last year when Secretary Hegseth had put out his acquisition reform on November 7th. So you're starting to see some of these larger long-term deals that have caused Lockheed and RTX and a lot of their munitions programs to double down and actually start providing infrastructure investments into their own lines so that they can double, triple, and even quadruple their production rates.
Colonel, always good to see you, sir. Thanks for dropping by and catching up with us. Colonel Wayne Sanders there of Bloomberg Intelligence. I understand we've thrown a lot of this situation, and the cushion is not as big as it was, but relative to what was expected, it's impressive how inconsequential this story has actually been so far, and I stress so far, but so far not consequential at all in the grand scheme of things.
Part of this is because of how much oil was floating on the water at the time of the conflict, the onset. So it took a couple of weeks to work through that. And the other aspect has been U.S. production, which is just absolutely ramped up, and the exports have been through the roof. Can we continue that? And I think that that's why I listen to some of the Barclays guys who are getting less constructive.
Yeah, you tell people that June matters. That's when it bites, and people are like, I heard that about April and May, and now it's June. But June kind of matters.
Well, it does kind of matter when it comes to the inventory drawdown. It might also, though, matter in terms of where you live, how hard you're going to feel the brunt of it.
Coming up on the program, we'll catch up with Pierre Federger of New Street Research as the AI race to go public heats up. Plus, Yahira has your morning movers. Estee Lauder ending merger talks. That stock is up by 10%.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Two days of gains on the S&P 500, adding to an 8th consecutive weekly gain. That's what we're on course for going into the weekend. Equity futures this morning positive by 0.1% on the S&P. On the Nasdaq, just about unchanged this morning. In the bond market, hello Kevin Walsh and welcome to the Federal Reserve. Yields very close to multi-decade highs at the long end of the curve. 30s at around 5.1%, 10s around 460. Energy crisis, a divided committee. Inflation at multi-year highs, energy prices at multi-year highs. The to-do list is building and building.
And you could make Brian Levitt's argument that, yes, this is largely due to a supply shock in the oil market, which they can look through. But people will say, take a look at the AI build-out and what's happening, the inflationary pressure from that. Take a look at the resilience in consumer spending despite these higher oil prices and commodity prices. And then you start to have a more complicated picture, which is the reason why they almost want to drop their easing bias. So, you know, I mean, it's sort of an interesting moment where we already have something, as you've pointed out, of a dovish Fed. How is he going to come in and make them dove them up, you know, given the fact that they're already coming from a
I don't know if he wants to. We don't know if he wants to.
Yeah.
Do we? And that's part of the mystery around this particular candidate, because usually they're a known entity on the current board. Think Yellen, already on the board, becomes Fed chair. You think Powell, already on the board, becomes Fed chair. We've got experience with Kevin Walsh from a decade plus ago. We don't know what he stands for now, and that's the mystery around this particular Fed chair.
Adding to that mystery, we know who he was in 2009 and 2010 and 2011. And it was this very hawkish Kevin Walsh. He said that inflation was a choice. People said, oh, you're choosing the index that's lower. At the same time, maybe he actually means that he is still the same Kevin Walsh from a couple of decades ago.
Let's turn to the energy story. It's part of the problem for the incoming Fed chair. Brent crude and WTI a little bit higher this morning. $4-5 range in the last 24 hours on Brent. 105 this morning and up by about 3%. As we count you down to the open, about 3 hours away from the cash open with some single names, some morning movers. Yahara has more. Hey, Yahara.
Good morning, John. We start with Estee Lauder. Shares are surging nearly 10% in the pre-market after the beauty giant walked away from its proposed deal with the fragrance giant Puig, a deal that investors were worried was coming at the wrong time since this company is in the middle of a turnaround due to falling sales. So investors appearing relieved that now management can focus on the core business. Meanwhile, worries about AI disrupting traditional software companies are easing a bit today after this company, we turn to AMD. Shares are rising 1.4% after some bullish comments from Lisa Su overnight in Taiwan on CPU demand, saying that it's exploded due to inferencing demand, and for that reason, Su says that AMD sees the market growing more than 35% annually for the next 5 years. And now we end on workday. Those shares are surging more than 10%. Earlier, I saw more than 10% in the pre-market after it delivered better than expected results and a solid outlook. John?
Yahara, thank you. Thanks for the update. Appreciate it. Workday up by about 9% this morning. On our radar this morning, the US and Iran at odds are the key sticking points to end the war. Tehran demanding it keep its enriched uranium and create a toll for the Strait of Hormuz.
I don't know of anyone in the world that should be in favor
of a tolling system in an international waterway. That's just not acceptable. It can't happen. If that were to happen in the Straits of Hormuz, it will happen in 5 other places around the world.
Trump warning earlier this week he'll resume attacks if Iran does not agree to his terms. Elsewhere, OpenAI expected to confidentially file for an IPO as soon as today. The information reporting the company generated nearly $6 billion in revenue in the first quarter, boosted by its coding agent and ads on ChatGPT. And finally, the drama continues. Standard Chartered CEO Bill Winters apologizing for controversial comments on AI. Winters posting on LinkedIn he's sorry for his choice of words, referring to workers as, quote, lower value human capital. The bank planning to cut about 8,000 roles over 4 years.
So this crisis for him continues. And on one hand, you could say, why did he say that? This just created a PR disaster for him. On the other hand, you can say, that is this a messaging problem or is this a reality problem? How do politicians, how do big executives respond to the existential fear throughout the population that they will be replaced by some of these technological advancements, especially given we don't know what the ultimate aim is. We hear about AGI, we hear about how they're so much more intelligent than us, that they can do things that they don't need to eat and sleep and breathe. So at a certain point, it isn't just a messaging issue. This is an issue of giving a vision over which jobs are being created and how people are going to be retrained to assuage this. I mean, yes, he did this inartfully, but it speaks to a bigger question that needs to be addressed.
Very inartfully, not elegantly, because first he said when his original apology was that it was taken out of context, now he doubled down and said, okay, I do realize maybe this wasn't the right words, way to express myself, and I've heard a lot of people in the company. We also have to ask, how many companies we're already going to lay off individuals because of cyclical patterns and needs to potentially trim down, and they're just blaming AI as the reason for doing it.
I welcome this story, and I'll tell you why. This was insight, direct insight into how this is actually talked about in the C-suite. Those words aren't by accident. This is how they talk about it internally. That's Park Standard Chartered. I think that applies to a whole host of companies right now. You just found out how they talk about this technology inside a company when they're thinking about laying off 8,000 people. It's a rather big tale to me. And why are they talking about it like that? Because they think it's going to help the stock price. That's why they're talking about it like that. Now, they might dress it up with different language in the weeks and months to come, but I think we just found out where a lot of people stand on this big issue. Now, they might come out publicly in interviews and say, no, we want to grow the pie. Things will get better. We'll do more. And overall, we'll see more programmers join the company, and we'll increase things there and increase there, even if you see layoffs over here. But that's how the industry right now on Wall Street is thinking about this technology.
They're being incentivized to think that way because they are throwing so much cash at some of this technology. They have to justify what they're getting for it. If they're not getting efficiencies, why are they spending billions of dollars to invest in it at this point? And if they don't give a sense of how they're adopting it, the market penalizes them for that too. Remember when a shoe company became an AI company? I mean, or Ford all of a sudden is an AI company? I mean, think about, who's an AI company? Suddenly their stock is a huge pop. If you don't give some sort of strategy, you get penalized. So they're being incentivized to think about it that way, and then incentivized to talk about it very differently. The reality is the world is changing. The question is how quickly, whether this is going to be wasted money, whether people are going to get lost behind. These are the big issues people need to be talking about.
How quickly will policymakers move in response? Let's turn to the other big tech story at the moment. 3 AI giants racing to go public. SpaceX, OpenAI, and Anthropic fighting to secure market dominance and compute capacity. Pierre Farragut of New Street Research writing, owning and controlling the physical infrastructure can eventually turn into a fundamental market share advantage. Compute owners are likely to become the kingmakers of AI. Pierre joins us now for more. Pierre, good morning, sir. It's good to see you.
Good to see
We'll
you.
avoid the banking story. Let's focus on SpaceX and them coming public. We used to talk about Jack Dorsey struggling to run 2 public companies. At the time, it was Twitter and it was Block, then Square. Elon Musk, SpaceX, Tesla. Is the future 1 or 2?
I hope 2 for his personal lifestyle and work-life balance.
You hope 2?
Yeah, I mean, that's like a merger that would make a lot of sense, getting like self-driving cars and robots together with orbital data centers is actually something that would make a lot of sense. And Tesla probably at some point will need a lot more compute and orbital compute.
At some point. How close are we to a potential merger between those 2 companies?
There is no, I would say there is no emergency. It's really, it's going to be a question of when the market is ready for it more than anything else. And for now, you have actually quite a good combination at SpaceX. You have like AI deployments that is going to consume billions of dollars of cash flow. And actually the telecom part of SpaceX, Starlink, that already is generating a lot of free cash flow.
This is part of the anxiety for a lot of people who are seeing all these IPOs come to market. Is SpaceX a space company or is it a satellite company? And is Tesla a car company or is it a robotics company? I mean, it's sort of a question of who's funding what and what the goal is for some of these companies. How do you understand SpaceX's ambitions versus what's actually paying the bills?
Well, let's talk ambitions. SpaceX, with like Starship, is going to start deploying V3 satellites for the telecom business at the end of this year. When these deployments get to scale, we're talking like 50 flights a year to deploy a constellation of 20,000 satellites. In the S1, SpaceX actually ambitioned to deploy 100 gigawatts of data center on orbits in the, let's say, in the near future. 100 data center in orbits, it's 20 launches, 20 Starship launches a day. So financing these deployments is actually going to require a lot of money, and that's what space is going to be. The space activity of SpaceX today is going to become very, very small compared to the orbital data center business.
How far away is that, given the fact that Starship had a problem in launching yesterday, and that was the first one since October? And there have been a lot of questions around how much has gotten launched. I think that only 10 launches have happened of this particular Starship. Correct me if I'm wrong. So how do we get to 20 a day?
So hopefully we have time for that. The good thing is that SpaceX is actually the player that has like the best time constant in the industry. When you get like a rocket ready, what matters is not the number of weeks you have or the number of months. It's actually the number of launches. And SpaceX is very good at bringing together a new launch very, very rapidly. And remember that Falcon 9 is flying like more than 3 times a week already. So a setback like yesterday is actually just a few weeks or a few months on the timeline. But actually, Starship is making a lot of progress and is getting ready, definitely.
Who is his biggest competitor? I guess it depends what you're talking about, whether or not it's the rockets or Tesla with the cars or XAI and Grok. Is it OpenAI? Who is Elon Musk's biggest competitor?
So at the end of the day, the key to this business model is to get everything together. Vertical integration is really what makes you win. You can't be in compute without being in space if compute is going to space. So the largest competitors of Elon Musk or of SpaceX are going to be first and foremost compute players, which means Google, Amazon, Meta, Microsoft. The ones who are going down the integration route the fastest at the moment, who are like the closest to SpaceX, are actually Amazon and Blue Origin, who work together very tightly to get to space, to get telecom first and then compute later. I would expect at some point an additional conglomerate, an additional vertically integrated player around Google, or maybe like a combination of multiple like compute players to get into that world as well. I think compute and space are meant to get vertically integrated going forward.
Yeah, how do we make space for this stock? Forgive the pun. How do we make space for SpaceX when it goes public? What am I selling? What am I lightening up on to get this in?
Well, ask people around. Like, I've never seen
what are they
so
telling
much
you?
Enthusiasm for that story. It's a dream. It's like the space conquest, and like the level of interest for the stock is absolutely fascinating.
Where is the interest falling away? NVIDIA doesn't feel like that magical story it used to be. When did that all go quiet?
I mean, if SpaceX is IPOing in the next few weeks, and then after that you have OpenAI and Anthropic, I think it's going to keep us busy over the summer at the very least, right?
Yeah, it's good to see you. Thank you, sir. Pierre Ferragut there of New Street Research. It has gone a bit quiet with NVIDIA, hasn't it? People starting to look at opportunities and big moves, big explosive moves elsewhere.
They want to see the exponential growth. And even though NVIDIA is still growing at a very fast clip, it's sort of impossible for it to keep growing exponentially when it's a $6 trillion company. I asked somebody this question yesterday, and they said actually they think it's probably going to be in the non-tech stocks because people have such faith in AI right now that they're going to sell the equal weight, right? They're going to sell the discretionary. They're going to sell some of the staples. And that, to me, is a fascinating read on how AI just seems to be accelerating away from the rest of the economy.
NASDAQ futures this morning just about unchanged. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The U.S. is taking measures to prevent the spread of Ebola, directing flights with American passengers who have recently visited affected countries to Washington Dulles International Airport for enhanced screening. President Donald Trump saying he plans to send 5,000 troops to Poland, reversing a previous plan to suspend army deployment. Trump has suggested a drawdown of the US's 85,000 military personnel in Europe is in the works. And the opening of a new U.S. consulate in Greenland sparking protests. Residents voicing concerns about President Trump's plans for the island. Hundreds of protesters gathering outside the new consulate chanting, USA, go home. That's your Bloomberg Brief. John.
Ivoni, thank you. Thank you for the update. Up next on the programme, Kevin Walsh at the helm.
What is really going to be important for Kevin Walsh is keeping inflation expectations in check. It's very important for the Fed to change its bias from easing to neutral.
Up next, Krishna Gua of Evercore, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stocks are positive, up by 1/10%, going into the long weekend stateside, advancing just a little bit more on the Nasdaq, just about unchanged. In the bond market, 2s, 10s, and 30s, your 10-year yield 4.55, backing away in the last few sessions, again this morning by a single basis point. Under surveillance this morning, Kevin Walsh at the helm.
What is really going to be important for Kevin Walsh is keeping inflation expectations in check. When inflation expectations start to get a bit unhinged, then he has a problem in his hands. So I think, you know, it's very important for the Fed to change its bias from easing to neutral and be ready to act if needed.
So here's the latest this morning. President Donald Trump swearing in Kevin Walsh as the new leader of the Federal Reserve later on this morning. The incoming Fed chair facing a divided committee and a market beginning to price in rate hikes. Krishna Gua of Evercore writing the voting members are more dovish than the wider group of participants. This will keep Walsh, help keep Walsh, keep the track, keep the Fed on track. Krishna joins us now for more. Krishna, welcome to the program, sir. Let's build on some of that. A lot of people are saying it's going to be complicated, difficult for him to navigate this very fractured committee. Are you suggesting it might be just a little bit more straightforward?
Well, it's certainly a difficult setup, for sure. But I think it's important to understand that there's every signal that the center of the old committee is reaching out and hopes to meet new chair Walsh halfway. That was the significance of the 9 of the 12 voting members keeping in that easing guidance at the last meeting so that Walsh gets to decide with them what to do with it at the June meeting.
You think it was orchestrated for the incoming Fed chair, deliberately orchestrated, Krishna?
I think it would have been very provocative to change the guidance 5 minutes before the new chair arrives. And I think it's the fact that they chose to defer the decision to June is part of, I think, a larger pattern by which you should think monetary policy this year will essentially be a structured negotiation between the old chair, the old committee and the new chair, not some kind of trench warfare between them.
So this orchestrated discussion or negotiation between the old committee and the new Fed chair, what is the new Fed chair arguing for, given the fact that the market seems to be moving away from the Fed right now?
Well, I certainly think that the economic circumstances are very different from the ones that Walsh thought he would be stepping into, right? He thought he would be stepping into a mid-2026 world where tariff inflation was starting to roll over, underlying inflation was starting to move down, and he could fairly quickly move the argument to rate cuts. That's clearly not the world we're in now, with the oil shock from the war. And by the way, the ongoing, still not quite resolved impasse between US and Iran, that certainly means that he can't make any kind of near-term push for cuts. I think what he's going to try to do is hold the line with an extended hold, try not to hike this year unless he's forced to do so, and then hope that the opportunity will open up again for rate cuts, possibly at the very end of this year, perhaps more likely now in 2027.
There's a delta opening up between the bond market and the stock market. When you take a look at the bond market, they're pricing in a rate hike early next year. They've priced out the easing bias a long time ago. If you take a look at risk markets, Brian Levitt said it perfectly. They're expecting that he'll come in, he won't hike, he might sound hawkish so that he can remain dovish, essentially, get that easing bias back in and then cut rates by the end of the year. Who's right?
Well, it's probably not 1-0, right? But I do have personally a bias a little bit more to the way the equity market is reading this. I think that the Fed will not hike rates this year, and I don't think the Fed will likely hike rates next year either. I still think the single most likely outcome is that the inflation waves ultimately wash through, underlying inflation tracks back down towards target in 27, and the next move is a cut, not a hike. So I do agree with that basic diagnosis from the equity market, but I certainly wouldn't be as relaxed as some people are. The modal case, the base case for inflation and rates is lower and lower eventually, but all the risks are to the upside, and I think that's what the rates market is telling us.
Krishna, conventional thinking was that the president really did want an interest rate cut ahead of the midterm elections. Potentially he's giving Kevin Walsh some breathing room and understands that he can't do much right now given what is going on with the Iran war. When do you think this first cut could happen, the earliest?
Well, you're certainly right that I think Kevin Walsh is going to get a pass on June and July. The question is whether Donald Trump can remain patient and continue to give his pick, his man, the flexibility from sort of September onwards. I think there is some risk that Trump starts to dial up the pressure, let's say from September onwards, with a view to trying to get some easing before the midterm elections. But I think if you look at the math around inflation, the need to confirm that the tariff stuff's rolling off, that the oil market is stabilizing, oil's coming down, the pass-through from oil is moderate, not more than that. that AI cost spillovers are having some moderate effect, but not a broader effect on prices, that underlying disinflation is coming through. I do believe it's possible all that could come through in time for December, but you have to run the table. Everything's got to go right in order to get a window to cut at the end of this year.
Of course, he's taking Steve Myron's seat. Do you have any sense on when Jay Powell's actually going to leave?
So I think that's a very interesting question. I had anticipated that he would stay on, but indicate that he would leave as soon as the specific loose ends associated with the investigation into his conduct in the building project and cost overruns were firmly tied up, locked down, whatever your preferred metaphor is. But the way he presented it in the press conference, his last as Fed chair, was a bit broader than that. He seemed to be indicating that he would stay until he was confident that the wider set of legal attacks on Fed independence had been shut down and were not going to come back. And I think that relates to at least rumor or chatter that there is still probes or people in the administration looking to see if they can find an angle on some of the existing Fed members beyond just Powell and Cook, the two who've been in the public crosshairs. And my sense is that Jay is saying, look, this all has to stop before I can step away. So, if that's the case, he could be gone within a few months. If not, he could be around into early next year.
Krishna, it's good to see you, sir. Appreciate your time. Krishna Gua there of Evercore. Going after central bank independence is not a good idea. We can all agree on that. Widely stated, widely agreed on all of that. Consequences are something we focused on. Haven't seen real signs that it's damaged the operational autonomy of the Federal Reserve right now, at least in the price of financial markets. That's the good news. Where it could damage the Federal Reserve is their ability to manage optics at a time when the incoming Fed chair wants to make reforms to how they communicate. So let's go with inflation, for instance. If you say inflation's a choice and you want to change the preferred measure for inflation, people will look at that and they'll make the accusation that you're doing that so you can choose an index that offers you the opportunity to cut interest rates. Enter Governor Powell. This is where I think Governor Powell can be a little bit more helpful for Chair Walsh. If Chair Walsh wants to make changes, reasonable changes, and he wants to manage the optics at the same time, getting the sign-up from Governor Powell would be a decent way of doing that, because there are changes that need to be made, reforms that need to be made at this institution, and if you can get the support from someone who's been there, and everyone knows he's not just doing it to please the president, then I think that's a decent way of moving forward.
That's the reason why some people are saying, actually, it could be helpful to the new Fed Chair Warsh. At the same time, if they disagree or if there's any dissent,
then we've got a problem.
Then we have a different story here, completely altogether. It does, though, hinder how quickly Kevin Warsh can move with some of the changes that he wants to make, given the fact that people want to see a status quo, given the uncertainty right now in the economy.
He's super well qualified. You've seen how many establishment figures have backed him up. But yeah, it complicates life. It certainly complicates life for the incoming Fed chair, Kevin Warsh. Coming up next on the program, we'll catch up with Tiffany McGee of Pivotal Advisors, Bob McNally of Rapid Energy, the NYSE president, Lynn Martin, and Debbie Cunningham of Federated. The second hour of Bloomberg Surveillance. Up next.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Markets are still viewing the driver of higher rates here as being temporary.
We are starting to see some of that bond math kicking in.
The fundamental data in the U.S. is relatively strong.
It's possible the Fed could actually be hiking rates.
I think we're higher for longer, and that's here, it's across the globe.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now with stocks within 1% of all-time highs on the S&P 500 and heading towards an 8th consecutive weekly gain on the Nasdaq this morning, firm up by about 1/10%. In the bond market, 2s, 10s, 30s look like this. Yields just about unchanged, down a single basis point on 10s, 4.55. Heading into this later on this morning, 4 hours away, Kevin Walsh swearing in as the Fed chair down in Washington, D.C.
Over to you. Aren't you excited, Kevin Walsh, to come into this Federal Reserve, take the helm at a time of surging inflation in certain metrics, and a bond market that's getting, according to President Trump last year, yippee, given where 10-year Treasury yields have gone and given how much yields have gone up. How much can he really give that dovish flavor that the president is looking for? We've already established he kind of can't for a little bit. Will he maintain it, though, in the back of his mind? And how is the market adjusting? Because right now, risk markets are saying, yeah, you can talk hawkish, but we know your story. And the bond market's saying, actually, we kind of think that maybe you're going to have to actually execute some sort of rate hike.
What does he have control over right now? He can't open the Strait of Hormuz. The president can't open the Strait of Hormuz at the moment. They're still trying to negotiate that. It's not just the US bond market, it's the Japanese bond market, the UK bond market, the German bond market. It's the global fixed income market right now, testing just about everybody.
Some of the aspects that people are looking for, yes, on one hand, you could say it's the oil price shock, but it's also the commodity price shock that's stemming from the AI outgrowth, et cetera. Not to mention the fact that you've seen resilient consumer spending. You could argue that we're at neutral just based on the fact that the economy has continued to move along at a pretty hefty pace. How he messages AI spending, how inflationary versus disinflationary it is, what that sequencing looks like, and given what kind of pain he sees or doesn't see in the underlying economy, will color how people will understand his particular reaction function.
Because all the issues right now that are taking place, the president does seem to give him a little bit of breathing room. He said to a Fortune magazine, you can't really look at the figures until the war is over. He told the Washington Examiner, I'm going to let him do what he wants to do. He's a talented guy. He's going to be fine. He's going to do a good job. But what happens before the midterm elections if this Federal Reserve is still on hold? Conventional thinking was that this president really wanted an interest rate cut before November.
Should we talk about the circus in the commodity market? Let's talk about it. Brent right now 105, up by 2.7%. WTI 98, up 2 percentage points. The last 24 hours has been absolutely ridiculous with regards to reporting, by the way, on negotiating teams from both sides, from the US side and on the Iran side.
Yeah, we seem to have removed some roadblocks. We seem to be getting closer. It looks great. We just want to keep our uranium and keep its hold on the Strait of Hormuz. So then this is absolutely unacceptable to us, but we're getting closer, and the market's sort of, like this, trying to figure out who they should look at next.
Are they getting closer? We have been here with the Iranians, not just last year, for decades. They drag their feet. Maybe they're getting closer because maybe there's more conversations happening, but the red lines for the regime in this White House have not changed. And until someone is able to give a meaningful concession, we're not going to get some sort of agreement. But to your point, there's two negotiations going on right now. There's the Strait of Hormuz opening, and then there's nuclear.
And it's the terms to negotiate the opening. Each side's trying to carve out negotiation, and they're doing that through various media reports, telling everybody what they think about the current situation. The president, at the same time, is trying to manage financial markets, and you have to say has done a decent job of that, because things could have got really out of control. That's where we are. That's why things are so confusing.
The reason why this is a difficult story is because it's like an asteroid coming toward Earth. And people are like, should we shoot it out of the sky? But it might miss, but I'm not sure. And like, how much time do we actually have? And then at the same time, you sort of have this vague sense that the asteroid's still coming closer. So it kind of is the discussion between markets that are saying, yeah, but it'll get blown up because it's not feasible for it actually to get here. And the asteroid strategist saying, not great.
Breakfast news with Bramo.
Well, come on.
Asteroids, all right. Coming up on the program, Tiffany McGee of Pivotal Advisors, with stocks inching towards an 8th consecutive weekly gain. The NYSE president, Lynn Martin, as Wall Street awaits his largest IPO in history, and Deborah Cunningham of Federated looking ahead to the swearing-in of Fed Chair Kevin Walsh. We begin this hour with stocks steady following back-to-back gains. Tiffany McGee of Pivotal Advisors writing, focus on quality, strong balance sheets, pricing power, and durable earnings. Tiffany joins us now for more. Tiffany, welcome to the program. We focus so much on tech and tech stocks and the outperformance of chips up until recently. This week, small caps, the equal weight. Just a quiet rally picking up there, Tiffany. What's going on?
Listen, there's a lot going on. Good morning. Thanks for having me. So listen, first of all, I think that the markets are like trying to really price in multiple things at once, right? So AI-led earnings power, Fed patience. We've got geopolitical energy risk. That's a lot to digest before coffee. Then you throw in some election year noise and a new Fed chair for good measure. And these things aren't really going away anytime soon. And so that idea, that saying that we always say kind of sell in May and go away, may be tempting. But after a strong rally, market timing really requires two hard calls: when to get out, and when to get back in, right? And so the bigger story, I think, right, and to your point, you mentioned small caps, is really how well diversified investors that are thinking a little longer term have been rewarded for staying invested, right? And so just by the numbers, right? If we look at 1-year cumulative returns, let's look at small caps through last week, up 35%, right? Emerging markets up 45%, growth up 25%, value up 25%. You want to talk fixed income, high yield, up 7%. But wait, there's more. When you look at the 3-year cumulative numbers, right? So not just a little bit further out. Small caps up over 65%. Emerging markets up 86%. Growth up 103%. Value up 63%. High yield up 20%. Listen, the numbers tell the story. You stay diversified, you stay disciplined, and you get rewarded.
Tiffany, what's the biggest risk right now? Is some sort of decline in the high-flying stocks or some sort of resurgence in inflation?
Yeah, I think it's both, right? Again, we have these multiple things that are kind of swarming around, and our view is that, listen, like fundamentals really kind of remain solid, and the Fed, you were talking about the Fed a little bit earlier, I think it's likely to remain on hold, right? And we have all of these things swarming, and so how do you prepare for that, right? And really, you think less about the short term and more about the longer term, right? And so, I just kind of laid out the power of strategic asset allocation, right? Don't need to predict every headline correctly to participate in long-term wealth creation. You just need a really thoughtful allocation and diversification process.
How much do you actually get pushback from a lot of clients who are getting concerned about how heady things are? I mean, how much do you find yourself counseling people on this repeatedly because they want to just pile into cash? They're not feeling great, even though markets are hitting new highs.
Yeah, so all of our clients are institutions, but they've got very varying levels of of investment knowledge. And so I think we do a lot in the beginning to really set the expectation, right? So, having a plan, setting a strategic asset allocation is very, very important. And so we do kind of preach that gospel of diversification. But yeah, certainly through March, around March, clients were, really kind of looking at the volatility and getting nervous. But, I think at the end of the day, that you need to have the discipline to not let the scary headlines become an investment policy, right? And so that's exactly where asset allocation comes in.
Tiffany,
but yeah, go ahead.
How are you feeling about the IPO market coming up? Or do you want to get involved in some of these companies that we're going to see? Massive companies coming, SpaceX, Anthropic, OpenAI.
Yeah, so I think each of those have a very interesting story. When you talk about SpaceX, we don't think it's really going to be it's going to be just like a regular IPO, right? So it'd be more of like a test of whether public markets are willing to pay private market prices. And so really for like a company, it's part rocket business, part broadband company, part defense contractor, and maybe part AI infrastructure platform, right? And so all of that with Elon Musk kind of governing risk attached, right? And so I think investors, when they think about that, are kind of focused on how much control Elon Musk retains, whether public shareholders will have kind of meaningful influence. And so, I think SpaceX is getting a lot of attention. And it might be the IPO that everybody wants, but I think that governance structure may really remind us that access is kind of like not the same thing as control. So I think that's a little bit of an interesting move.
Interesting. Tiffany, appreciate your take. Thank you. Tiffany McGee there of Pivotal Advisors on the SpaceX IPO. Happening a little bit later this morning at 7:30 Eastern Time, catching up with the NYSE President, Lynn Martin, on the race to secure some of these IPOs. Nothing regular about any of this. We're going to see some of the biggest IPOs we've ever seen, not just SpaceX, but OpenAI, Anthropic. These aren't what IPOs used to look like. Fairly young, youthful companies coming to market where the best growth might be in front of them. Some of these companies are super mature and have been around for years.
Yeah, and what's notable is how some of the indexes are adjusting to this. The NASDAQ changed their rules to allow some of these shares to get into the broader benchmarks within 15 days. That previously was a couple of months. So it gives you a sense of how quickly this will get fed into public portfolios, given the past history and how this really was a lot slower.
We'll spend some time on that a little bit later this morning. NASDAQ futures up by 1/10% with an update on stories worldwide. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The White House and Pentagon clashing over rare earths. The Pentagon debating whether to scrap an $80 million conditional loan to rare earths refiner ReElement Technologies over doubts about its ability to scale as technology and long-term revenue forecasts. Smart ring maker Oura Health filing confidentially for an IPO, seeking to capitalize on growing demand for wearable devices. Sources telling us here at Bloomberg the company is working with banks including Goldman Sachs, Morgan Stanley and JP Morgan. In sports, the Knicks winning their 9th straight playoff game, beating the Cleveland Cavaliers 109-93 in Game 2 of the East Finals. Josh Hart scored a playoff career high 26 points. Game 3 tips off Saturday night in Cleveland. And that is your Bloomberg brief. John.
Vonnie, thank you. They just don't lose anymore.
No.
What's the streak running at now?
9 straight
9
playoff
straight.
wins for the Knicks. 2 more wins and we're in the finals. 6 more wins, we have a championship.
Okay, amazing. Up next on the program, controlling the Strait of Hormuz.
We have total control of the Strait of Hormuz, the Iran conflict. That'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before.
Up next, we'll catch up with the Rapid Energy President, Bob McNally, live from New York City this morning. Good morning.
a consequence for U.S. markets. We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Check it out, into the long weekend, another read on consumer sentiment, rock bottom. It's unreal this is. Multi-decades. This survey goes back to what, the late 70s? And we've got sentiment at rock bottom, worse than it was in the GFC, worse than it was in the pandemic. And I get it, people are worried about the future, AI is a part of that. You've got gasoline prices at multi-year highs, mortgage costs are too high. There's a lot of complaints out there right now, and it shows up in this sentiment survey.
Does it show up in the economy? And some people are saying that on the margins, you're starting to see a little erosion of the buying desires, given the fact that prices have gotten higher and people don't feel good. The long-term purchases, that's what we're hearing about. The idea that people aren't buying homes, that they're not buying furniture, that those kinds of investments maybe are going away while still exploring the Instagram moments while taking planes to various places.
Consumers aren't happy with this economy for a bunch of reasons. Strategists on Wall Street love this market. Futures up by 0.1%, within 1% of all-time highs. We've had 7 upgrades since the war started, 7 price target increases since the war started. The latest from CIBC and Chris Harvey at 80.20 versus 74.50 previously. That's quite an upgrade to your price target into year-end.
It's the earnings. It keeps being the earnings. Lori Calvasino trying to make the math work for a doomsday scenario because that's what she's getting asked by clients who are getting concerned about how far this rally is going. And she's saying we have to throw so much at this market for it to go down in any sort of significant way. It really has been about earnings that have outstripped the price increase, the PE ratios, right? So this is the issue, that people are looking at stocks and saying, arguably they're cheaper than they were 6 months ago because of how quickly the E in the PE multiple has expanded.
In percentage terms, you expect recoveries to be really sharp coming out of recoveries, out of downturns, so economic depressions like GFC or the pandemic, and then you expect this, just a sharp recovery in earnings. Outside of those periods, we have not seen earnings like this in decades. You take out GFC and the pandemic, haven't seen earnings growth like this in decades. It's been that good.
It's been driven by AI. It's been driven by the fact that everyone needs to buy their chips so that they can be on the hyperscaler surge to fame. But at the same time, you're seeing it in other companies as well. Is this because some of the bigger companies are getting more efficient? Is it because of AI? Is it because they're just cutting people who they didn't like since the pandemic, who they now have the capacity to fight? I mean, really, this is sort of what people are talking about as they look at some of the earnings that keep beating expectations.
Let's turn to energy. This is the problem for a lot of you. The headlines around this story is the problem for all of you. Brent crude and WTI look like this. Brent crude at 105. WTI this morning at 98, higher on both of those contracts this morning by more than 2%. Under surveillance this morning, controlling the Strait of Hormuz.
We have total control of the Strait of Hormuz. It's an international waterway. They're not charging tolls. We want it open. We want it free. We don't want tolls. The Iran conflict, that'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before.
It's the latest this morning. The president asserting U.S. control of the Strait of Hormuz. Iran and Oman discussing a tolling system for the critical waterway. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John, good morning. Well, Iran's ambassador to France did tell Bloomberg News yesterday that there are these active discussions underway with Oman to formalize a potential toll payment system. And while President Trump has maintained that no ships are getting through the strait without U.S. approval, and CENTCOM did say earlier this week that so far 88 commercial vessels have been turned around, new this morning, Iranian state media is reporting that the IRGC claims that 35 ships have been able to pass through the strait in the last last day after seeking permission. A potential toll payment system is, of course, raising some serious questions under international law, let alone, of course, concerns when it comes to the U.S.'s negotiating position, as Secretary of State Marco Rubio maintains that if any system is implemented, that would make a peace deal ultimately unfeasible. Iran's bid to formalize control over the strait isn't going to make regional allies too happy either. There was this one analysis cited by the Wall Street Journal that estimates that Gulf states would pay between 80 to 95% of the total cost of tolls if they were implemented. The Strait of Hormuz was only one of the points of contention that really rose to the top of the conversation yesterday after Reuters reported that Iran's supreme leader maintains that the country's stockpile of highly enriched uranium isn't going anywhere. Yet, John, even as we get what appears to be pushback and a lack of progress towards a deal, we also got some signs of optimism. Iranian state media saying yesterday that some of the gaps have been bridged. Secretary of State Marco Rubio this morning telling reporters that some progress has been made. It feels like perhaps there could be some movement around this phase deal to get the Strait of Hormuz opened as quickly as possible and kick the can down the road on negotiations on curbs on Iran's nuclear program. But at this point, no formal confirmation from either of the sides.
Tyler, everyone's exhausted. I'm sure you are too. We appreciate the update. Tyler Kendall over in Washington, D.C. To build on this, Bob McNally of Rapid and Energy writing, going forward, key shock absorbers will wear off. The window for avoiding a 2008-style train wreck narrows with every week Hormuz stays shut. Bob joins us now for more. Bob, welcome to the program. That's quite a statement. The options in front of the president: maintain the blockade, certainly getting more difficult as the weeks go by, resume the hostilities, or walk away. Where do you think we're going here?
Hey, John, you know, the market is skated by on optimism that this Hormuz closure will abruptly and quickly end, and by using those shock absorbers, SPR, oil on the water, inventory declines, etc., Asian refiners dropping runs. We're just saying, as we model, like if we go through all of July without Hormuz, so another 450 million barrels gone, we think at that point, you know, no one knows where tank bottoms are. It's never been observed, but it's a real concept. And as we get down to 2.2 billion barrels in OECD inventories, we think oil prices are going to do, John, what they have done many times since World War II: end the party, catalyze an economic downturn. And so the president, I think, though, you know, the White House seems to be optimistic that they're winning. So is Iran. Both sides are playing for time. And so that optimism that Tyler mentioned, I think that comes from, if there's one thing that Tehran and Washington may agree on, is they might not want to see escalation of military conflict right now. They'd rather keep this in the status quo and wait each other out. Each side confident as time goes by, it gets worse for the other.
When you're looking at your models, Bob, what do you see in terms of, I know we see oil prices maybe potentially middle of the summer. Where do you see gasoline prices across the United States?
Well, you know, if we get up to a 130 Brent price, you know, we are probably making new highs, at least on a daily basis, in terms of average pump prices. So we're above $5 a gallon average, of course, much higher than that on the coasts. However, when we modeled, you know, let's lose Hormuz for July as well and don't get that oil back until August, then, Anne-Marie, you know, we're into a high $100 range, 175 or so Brent. Now you're well over $6 a gallon pump prices, so that's a dollar per gallon higher than the last high seen in 2022. So they're numbers the president doesn't want to see. My friend Kevin Warsh is going to do a great job, and White House colleague, he doesn't want to see, and his colleagues in the Fed. Those are numbers you don't want to see.
Well, then what do you think the domestic response would be from this president? Does he capitulate on Iran, or does he move some levers around potentially within the United States? Does, you know, the rumors and idea of an export ban, say, come back?
Yeah, so we think when pushed, the president's not going to cave in, we think, on Iran. He feels deeply and strongly about nuclear proliferation in a way his predecessors have not, in our view. And this is legacy for him. He's not running again. And so we think it's more likely we will see military escalation. Look, in the near term, in the next few days, there's a decent chance, about as close to 50-50. We don't allow 50-50 odds at Rapidan. So we're sort of 40-60. We might get a framework that basically kicks the can down the road and avoids escalation. Okay, but if we don't see that over this weekend, it's more likely President Trump to end this blockage. He will resort to military pressure, with the goal there being raise the cost on Iran, begin to attrit their ability to stop those ships, hoping that they then will do a ceasefire that allow the free flow to continue or resume.
How high do oil prices have to get before you see actual demand destruction enough to offset, to become a sort of self-correcting cycle?
So we're already seeing a little bit even at these prices. It's mainly in Asia. It's mainly petchem. It's mainly airlines dropping rates and so forth. As we look elsewhere, we look at things like Rotterdam gas oil spreads. Those aren't in contango yet, so we don't see real demand destruction there. The weeklies in the U.S. are showing U.S. product demand is okay. So I think we have to go well into the mid-high $100 range abruptly. And then here's the key thing. You just were talking about equity markets here and all the optimism. I mean, at some point, there's going to be a decoupling. I don't think the equity markets can go up while oil prices are going up. And if you see that broad sort of capitulation in these financial markets to the reality of higher oil prices, I think then you'll start to see more widespread demand destruction throughout the economy. But right now, we've only seen a little bit. We haven't seen that much yet.
How much have some of the fiscal plans by governments around the world delayed, prolonged how long it's going to take to see demand destruction that could actually be the cure, at least temporarily and painfully, to the prices that we're seeing right now?
It's a big deal. I mean, governments have subsidized consumers. We have in the United States, it's coinciding with a big tax cut going into place, so fiscal stimulus. So fiscal subsidies and support has been provided, some of it planned in response to these high oil prices, especially in Asia, some of it not just coincidental, but it is definitely helping to sort of let the market skate by here for the last 2 months. Shock absorbers, fiscal stimulus, confidence that this is going to end soon. All of those things have sort of pinned oil prices to a level where equity markets can ignore it. Going into summer, if this continues, we think that wears off.
Hey, Bob, it's good to hear from you, sir. As always, thank you. Bob McNally there, Rapidan Energy President. We can keep going back to the same three options. Option one is maintain the blockade. They like option one. They're comfortable with option one. You listen to Bob there. Option one is not going to be an option in the next few weeks.
The idea of oil prices spiking to the mid to upper 100s is a different prospect that even AI can't really contradict. That at some point you will have to get some recognition of this in risk assets.
Also, it's easy to do verbal intervention when there aren't inventories. How difficult is it going to be when we get to the very bottom of those inventory levels? It's going to be hard for this White House to keep pushing prices down.
This right now is not what the stock market is focused on. This is what the stock market is focused on. We'll catch up with the NYSE president, Lynn Martin, as Wall Street prepares for a series of blockbuster IPOs. Plus, your high-risk got some morning movers. Ross Stores delivering an earnings beat. That stock is up by more than 4%.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Two-day winning streak on the S&P 500, adding just a little bit of weight to the rally this morning, up by 1/10%, on course for an 8th consecutive weekly gain on the S&P 500. Haven't had a down week since March, just unreal. On the Nasdaq this morning, up another 1/10%. In the bond market, check it out, 2s, 10s, 30s. 30 still close to multi-decade highs, levels we haven't seen since 2007. Breaking away from them this morning, down by a basis point. 5.1%, let's call it, going into the swearing-in ceremony for Chair Walsh a little bit later this morning at the White House.
There are a lot of questions about who Kevin Walsh is, what his reaction function is going to be. In some ways, you could say that the committee set him up to do the difficult thing of removing the easing bias, despite the fact that the president is pressuring him to lower rates, at least previously had been. I know he has backed away from that just a little bit. Ultimately, the debate is a real economic one. Is this a market more primed for rate hikes or rate cuts? What is the appropriate path of travel?
Who is Kevin Walsh? Always the bridesmaid, never the bride, except for today. And what a moment it is for him, a difficult environment for him to come into this. And I know I've been talking about the president backing off, but how long can this last? Everyone I spoke to, when the president came in, the whole idea was to try to get interest rates lower before the midterm election. And now it might be the hardest time for a Fed chair to continue on that path.
This is a wedding the president will be attending.
Yes.
A little bit later
He'll be
this morning.
officiating this wedding.
Yes.
He's known him a long time.
You like that, don't you?
And the guest list is actually quite impressive.
Do you want to go there?
No.
Don't fancy it.
I just did.
I don't either. That's as far as I'll go. That's as far as I'll go. Counting you down to the oven about 2 hours away. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hey, John. We start with Ross Stores. Those shares are jumping 4.5% in the pre-market after it raised its full-year outlook and saw same-store sales jump 17% last quarter. That was a record and nearly double what Wall Street expected. It echoes what we heard from TJX earlier this week, that the consumer is increasingly looking for value. Turning to Take-Two shares, those are also rising in the pre-market, up 2.5% after the company announced that Grand Theft Auto 6 will officially launch on November 19th, easing investor concerns that we would see another delay with this video game franchise. That is expected to be the biggest entertainment launch of the decade. And we end on US-listed Chinese tech firms Alibaba and Baidu getting hit in the pre-market after Beijing announced a new crackdown on cross-border investing, reigniting fears that China could once again take a tougher stance when it comes to internet firms like these, just as investors started warming up to the space because China had become more supportive of these firms as it tries to compete with the U.S. on artificial intelligence. John?
Yahara, thank you. Thank you very much. We should have a rule. You never talk about someone's family, but the president went there. We've got to talk about this. Describing your son as someone you've known a long time is just brilliant. Sometimes the president is just, seriously, he's a comedian.
No, it's hilarious.
I mean, to me, I saw these pictures of people being like, you know, there's this kid, he's got a soccer game, but I've got a meeting.
Right.
You know, I've known him a long time. My son. Look, for people who don't know, he was talking about his son's wedding, and he said he didn't know if he could attend. You know, I've known him a long time.
It's this weekend. So if he attends, There would need to be a lot of planning because apparently it's in the Bahamas. Originally, they wanted to get married in the White House. I think the president think the optics of that would be great. Also, the ballroom's not ready yet. And the president said he's going to get killed either way if he goes
because there's a war
or doesn't go.
Okay.
Yeah.
All right. On our radar this morning. Thanks for explaining it, Lisa. U.S. Secretary of State Marco Rubio arguing against Iran's push to create a permanent tolling system in the Strait of Hormuz.
I don't know of anyone in the world that should be in favor of a tolling system in an international waterway. That's just not acceptable. It can't happen. If that were to happen in the Straits of Hormuz, it will happen in 5 other places around the world.
Iran's discussions with Oman suggest a deal to end the war with the U.S. may still be out of reach. Elsewhere, the president swearing in Kevin Warsh as Federal Reserve Chair later this morning. Warsh taking over with a divided committee and the threat of rising inflation. And finally, SpaceX delaying a critical test of its Starship rocket just seconds before launch. Engineers blaming a hydraulic pin malfunction, the snag coming one day after Elon Musk company filed publicly for what could be the largest IPO in history.
On one hand, you could say this is a pretty big setback, given that the ambition is to have 20 launches a day, as we were talking about with Pierre Ferragu earlier. On the other hand, you could say, is SpaceX actually a space company, or is it a satellite company? And that has been where the revenues have been coming from, and frankly, those revenues have been skyrocketing. So at a certain point, again, it goes to the heart of what is SpaceX. Is it just a financing mechanism for the hopes and dreams of Elon Musk?
Well, they want to have AI data centers in space. And it's not just SpaceX that wants to do this. This is also a key takeaway for Jeff Bezos and Blue Origin. When I spoke to Blue Origin CEO a few months ago, it was just when they stopped doing commercial flights. Remember all the celebrities saying they went to space?
Sure.
Because this is what they want to focus on. They want to be competitive when it comes to putting data centers in space.
You know what's pretty cool? TV-wise, in a few weeks' time, these space events are going to be market events, and you can have the stock there as these things are taking off. I just think as a TV producer, that's
Great
pretty
view.
cool, right?
Yeah, it is. Look,
very cool.
Space is awesome, and I love the ambition and excitement. Like, I want to get excited about Martians again. I want to get excited about the idea of living on Mars.
Wasn't where I was going, but yeah. All right, me too. Let's stick with IPOs. OpenAI and Anthropic joining SpaceX in the battle for control of the multi-trillion-dollar AI market. I'm very pleased to say that joining us here in studio is the NICE president, Lynn Martin. Lynn, it's good to see you.
Great to be
Fantastic
with you
to catch up. I want to talk about all the success of your institution in just a moment, but one particular name that jumps out, SpaceX, and it's going to be on the NASDAQ. And they changed a couple of rules to maybe encourage them to go over there and not over here. What did you make of those rule changes?
Well, from our perspective, market integrity is not something that is a competitive dynamic, and some of the rules that have been changed to woo some of the large companies you referenced, SpaceX, are questionable. And from our perspective, what is most important to us is protecting investors, particularly the mom and pops in the market. And when you think about the ETFs and that they invest in and the rules that have been changed, it's a question mark.
Well, let's talk about the so-called seasoning period. So for the S&P 500, to enter that, I believe the seasoning period is about 12 months. For the NASDAQ 100, for these particular names, it'll be 15 days. What kind of complications does that introduce for individual investors?
So I actually think that the fast track aspect does merit a discussion. And I know S&P, for example, has a consultation out to the market today whether it should be 12 months or it should be 6 months. I don't know what the right number is there. I know that the index providers, particularly those that don't have conflicts of interest, are going to figure it out to the benefit of retail investors, allowing companies to be included in the flagship indices like the S&P 500 in a quicker form. So I think that is actually a good discussion to have. Rushing that type of rule change out, though, is in order to accommodate a listing is a question mark. I think the bigger thing, which you've heavily covered on Bloomberg, is the float multiplier. That should be looked at more closely. And I guess we'll figure out what happens in the next couple of weeks.
Can I follow up on that? So let's talk about it. I'll be talking about some of these names, and I'll say they've got a market cap of like 2 trillion, whatever the number might be. The actual float, just how low is the actual float going to be?
I mean, I think the S1 is really what you should look at for the percentage of that will actually be floated. But what I'm referring to is the 3 times multiplier that NASDAQ in particular has put on SpaceX.
Just to give some context, people are worried that some of the new IPOs are going to have a disproportionate impact in weighting in some of the indexes. How much do you see that as a potential liability, especially without a longer seasoning period to really protect retail investors?
Yeah, I mean, it comes back to what I was saying earlier. It's about market integrity and the protection of retail investors. To be honest, I just don't know what effect this is going to have on the market, and it's something that economists have covered heavily. Economists, independently have covered heavily. So it'll be interesting to watch.
In the meantime, this is a real sea change when it comes to market dynamics, because we've talked about the shrinking IPO market and how the shrinking public equity space has really strained a lot of people's expectations of exactly how capital markets should progress. How much do you welcome all of the IPOs this year versus get a little bit concerned that it could overflow a market that hasn't been used to this type of supply?
It's been a good year so far for IPOs. I know that the big three that you flashed earlier are the ones that are getting a tremendous amount of attention, but there have been a great amount of IPOs coming to market already across all industries. And we're working with a variety of other companies to bring them public, too. I think that actually speaks to the diversification that is coming to market across all industry. You've got the energy markets, you've got the consumer names coming to market. Industrials are very much having a moment. So it's across multiple sectors. And I think that's actually welcomed by retail investors. They don't just want to invest in Elon Musk, despite the fact that he is, one of the great innovators in history. They want to invest, they want to have a balanced portfolio.
You just got to spend some time with Elon Musk.
I did. I was just with him in China.
Yeah, I was on that trip as well. Can you pull back the curtain for us and tell us what Chinese officials actually told American businesses?
Yeah, I mean, the message that America was really delivering on that trip, I think it was the first time in history that an administration had ever brought 20 of the leading CEOs cross-sector of the market to a state visit. The message that we were delivering was that business could really be transformative in transcending geopolitical barriers and could play an incredibly important role and does play an incredibly important role in the geopolitical dynamic.
How do you see this relationship developing? Do you see Chinese companies at one point being able, more of them, coming onto American stock exchanges?
It really depends on the governance. One of the things that we're focused on is how our markets continue to be transformed over the long term, but we would never sacrifice the transparency that the U.S. stock exchanges in particular require.
Can we finish on integrity? Because it's something we've talked about repeatedly on this program. It's been a sense, particularly with this war in the last 2 months or so, that people might have information ahead of time. I'm sure you're having those conversations as well. I worry that if people start to believe someone's got an edge that they don't have, that they're trading on information that nobody else has, before it becomes public, that people will disengage and it will affect liquidity. These are the kind of things I'm sure you worry about too. How important is it to get to the bottom of what's been taking place in just the last 2 months alone?
I mean, one of the things that is very much focused on, and continues to be focused on, is anyone with inside information and market integrity. And I think our regulators do an excellent job at surveilling those markets to ensure that people don't have information ahead of the general public.
Are there conversations happening now to get to the bottom of some of the price action through March into April?
I mean, I think the regulators are continuing to increase the amount of tools that they have at their disposal. I think actually AI is going to present an amazing opportunity.
In what way?
It will present an opportunity for regulators to surveil markets at a much greater speed. It's something, actually, one of our first use cases has been deploying AI to surveil our markets, given the increasing messaging that we have at our matching engines.
Because you and I are both long capitalism. We've got a bias.
Absolutely.
We aggressively love capitalism and free markets. And I just wonder that people are losing faith a bit so far this year?
I don't think they're losing faith. I'm the eternal optimist, though. I'm the person that's going to see the glass as half full, and that's why it was such an honor to represent the U.S. last week in China to talk about the role of American markets. We just turned 234 years old this past weekend. We've survived multiple pandemics, wars, financial crisis, you name it. And every time our markets have become stronger, more transparent, more liquid. And that's because of the development of technology tools that enable price discovery to happen in the most efficient fashion possible, and enable our regulators to surveil those markets and continue to build that trust.
Are you concerned that if there is some sort of deflation of the enthusiasm around AI, that could undermine people's confidence in markets akin to what happened in the aftermath of 2008?
I think there has been a bit of a broadening out of the aperture of what is happening in the world today. So if you look at, coming back to your question on IPOs, some of the IPOs that have come to market are industrials, they're energy, they're infrastructure plays that aren't just focused on AI. Our grid needs modernization. And I think there's an acknowledgement in the administration that our grid has needed modernization for some time. So you actually look at great industrial companies, great energy companies coming to market that are going to benefit and are going to really drive that industrial revolution, the next phase of it, be it AI or anything that's required in the grid.
A massive year ahead for you. It's always great to catch up. Thanks for getting some time.
Thanks for having me.
Thank you so much for dropping by. Lynn Martin there, the NYSE president. Equity futures right now in the S&P 500 slightly firmer. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Samsung is paying almost $27 billion in bonuses to chip employees this year. It's part of that last-minute deal with labor unions to avert a strike. Based on 2026 profit estimates, Bloomberg calculates the average payout per worker at about $340,000. IMAX is exploring a sale. The Wall Street Journal reporting the company has approached entertainment companies as potential buyers. The Journal is saying the sale process is in its early stages and may not result in a deal. Argentine football legend Lionel Messi joining the Billionaire Club. Messi's career skyrocketed after he received growth hormone treatment way back in his teens as part of his FC Barcelona contract. Well, according to Bloomberg analysts, he's earned more than $700 million in just salary and bonuses since 2007. And that is your Bloomberg brief. John.
Vonnie, thank you. Thanks for the update. Up next on the program, a changing of the Fed guard.
The new Fed chair, he's going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards, but the majority in the FOMC is going to keep their heads down, try to get through 2026.
Deborah Cunningham of Federated joins us next.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Stocks are positive, up by 0.25% on the S&P 500. On the Nasdaq, up by 0.2%. Also, if you turn to the bond market, switch up the board and check out Treasuries. Going into a Fed event a little bit later on this morning. Two-year yields north of 4%, above the policy rate of the Federal Reserve, and having a little sneak peek of a future that might include a rate hike. Under surveillance this morning, a changing of the Fed guard.
The new Fed chair, he's going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards, but the majority of the FOMC is going to keep their heads down, try to get through 2026, see how the situation in the Gulf finally resolves itself, and then see what the trajectory of the economy and inflation is at that point.
So here's the latest this morning. President Trump swearing in Kevin Walsh as the new Reserve Chair at 11 a.m. Eastern Time. The FOMC coming off the institution's most divided meeting in about 3 decades. Deborah Cunningham of Federated writing, Walsh is likely to uphold Fed independence and be guided by the data. He cannot afford to lose credibility. Deborah joins us now for more. Deborah, welcome to the show. Let's get to the June meeting. If they don't drop that easing bias, given what's happening with inflation right now, do they lose credibility?
Well, I think that's the first real test. I mean, I don't know that they lose all credibility at that point in time if they don't give to the market what it's expecting and wanting. But I think it takes a notch lower. So there's a little bit more to build back if they don't remove that bias. It's certainly based on what we saw from the minutes of the last meeting was contested as to whether or not it should have been removed then. It might have been an easier process to have done that, but that's history at this point. So we're looking to this next meeting, and the expectation is the bias will be removed.
Deborah, when you've got a fully seated FOMC, there's 19 members there. Voting members is 12. Can you just compare and contrast the hawkish, dovish makeup of each of those? Because we had Krishna Gua come on the program earlier, and he said, yes, there's some hawkish pushback, but as the voting members of those 12, he said that's still pretty dovish.
I would say there's at least one, maybe two more on the dovish side. I'd say the majority of the voters are in the centrist camp. And what we see with the current change that will occur today, with Walsh coming on and taking, the Powell spot, and Powell taking the Myron spot. Powell still stays as a centrist. Walsh comes on in Myron's role as the dove, and the complexion really doesn't change. What is interesting is the makeup of the doves and the hawks. The hawks, for the most part at this point, are generally the regional bank presidents that are, the three that dissented because of the wording from the last meeting. That those are staying the same. Whereas on the dovish side, you generally have more of the FOMC governors that are in that space. But I'd say it's one, maybe two more on the dovish side, with the bulk being in the centrist side.
Deborah, given the fact that stock markets don't seem to think that this is a Fed that's going to hike rates anytime soon or ever in the next few years, do you think that it is an opportunity for short-term rates for investing in the front end of the yield curve that seems to be pricing that in?
We do. Honestly, we're looking at something that, we were concerned that we were going to go down into the low 3% and perhaps even, pierce that veil and go into the 2% two-handle range sometime in 2026 or early 2027. And from our own short-term investment committee standpoint at Federated Hermes, we no longer believe that to be the case. And so we've kind of rearranged where we think the most value on the curve is right now, and that stands with short rate products like money market funds, micro short type of products that are on the very front end of the yield curve that have very low risk, but are also looking at yields that are in the high 3% at this point.
Is this a political call that Kevin Warsh will be motivated to remain on hold for a longer period of time, that the threshold to hike is that much higher as a result of the political backdrop? Or is this a market call that inflation is going to come rapidly down, potentially growth also will decelerate?
I think there's a concern about both. The jury's out on Warsh. Everybody wants to, be behind him and expect that the independence of the Fed will be maintained. And if I go back to the original, sort of 5 candidates for this position, he's our pick. We're happy with this swearing in today. On the other hand, if you have inflation that continues to be influenced by geopolitical considerations and what's happening from a war in Iran and an energy price and food price inflationary environment, you might see the consumer start to pull back a little bit. The consumer has certainly been the leg on which this economy has been standing, and if that starts to falter to some degree, you've got something that could be a stagflationary type of environment where growth is lower, but inflation remains, kind of sticky. And I think both contribute, both the geopolitical side as well as the economic side contribute then to what the path of the Fed has to be.
It's a really tricky moment, without a doubt. Deborah, thank you. Deborah Cunningham there of Federated. An otherwise very conventional pick for a Republican president, Kevin Warsh. And if you go through the candidates, any one of them could have been a great Fed chair. Governor Waller, Rick Reeder, Kevin Warsh.
You made a really good point earlier, which is that regardless of what he does, it'll be viewed in a political lens. And that's the problem. And it's at a really uncertain moment. I mean, we can't emphasize enough. You can get two people, one who argues that it'll be a policy error to cut rates, another person who's going to argue that it's a policy error to hike rates, and they'll both have really valid arguments. At this point, he has to deal with that and people who are automatically skeptical of anything that he does.
The way the administration dealt with this has made it so difficult for an otherwise very conventional candidate to drive through reforms into this institution that needed to happen anyway. It was a kind of foolish effort to go after the Federal Reserve. I still don't know what they really got out of it. Still don't really know what they continued it coming into 2026.
Yeah, and it slows down the process, potentially leaving Governor Powell to oddly clean up the mess, right, which is sort of the strange issue here. Not ideal. Coming up on the program, we'll catch up with Alex Altman of Barclays, Antoine Legault of Wedbush, Yelena Chudetseva of the Conference Board, and Earl Davis of BMO. The third hour of Bloomberg Surveillance, up next.
Now, some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks. to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank, it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Sorry. Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Right now, there's so much money to be made in the AI space.
I'm actually leaning into AI almost everywhere.
This is about risk management, but maintaining exposure to AI.
On the tech front, we still see structural opportunity.
It is very, very hard to just make the worst case scenario assumptions and make that your base case.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The last hour going into the long weekend. Equity futures look like this. Positive on the S&P 500 by 0.2%. Up again on the NASDAQ by 0.2% also in the bond market. 2s, 10s and 30s. Hello, Kevin Walsh. 4% on 2s. 4.55 on 10s. Still north of 5% on 30s. Heading into this later on this morning. A swearing-in ceremony down in Washington, D.C., and this time at the White House.
Yeah, this to me is going to be quite the interesting era for Kevin Walsh. There are two ways to look at this. On one hand, you could say that 10-year rates right now are at the highest level for a Fed chair swearing in going back to, depending on the second, Ben Bernanke or Alan Greenspan. The other way of looking at it is he's dealing with a normal economy based on the previous decades, before the past couple of decades, and that he's dealing with a fast-growing but also more inflationary economy. Either way you look at it, right now, he is not going to have an easy time giving a message of exactly what the Fed's role in all that should be.
And when you hear from the likes of Walmart yesterday, you hear that consumers are resilient, but at the same time, Walmart's coming out and saying if these rising fuel prices continue, you're going to see potentially a rise in inflation, and is going to affect especially the lower income individuals. This is not the recipe you want as a Fed chair or as the President of the United States going into a midterm election.
I think you got some good news from the retailers, though, this week, Walmart and Kroger, just the idea that they're not passing through the higher costs. Just on that one dimension, I know that can change in the months to come.
Exactly.
But so far, you haven't seen the pass-through. And I imagine, just on a relative basis, you take a little bit of comfort from that.
Yeah, and the reason is because Walmart wants to compete for market share. And you're setting off as something of like a price war, which you're seeing, for example, Kroger is coming out and saying that they're cutting prices too. Two ways to read this. On one hand, they can't pass along the price increase. That is a positive with respect to the inflationary impulse. The second way to look at this is they have the scope and the cash to compete in this fashion, and it's very isolated to just this sector.
If it hits growth, I know what to do with that as a central banker. Cut rates. You know, they always talk about central banks as being incredibly brave in economic crises. Nothing brave about buying loads of bonds and cutting rates down to zero. That's just the obvious decision. That's easy. The really tough decisions are made in emerging markets where inflation pressures to the upside, growth pressures to the downside, and you don't know what the hell to do to defend your currency. What do you do? And to boost economic growth, you can't do both. You have to pick a poison. That's the challenge that a DM central banker does not want to deal with. It's a challenge they're not used to.
They're going to get laryngitis and just speak less.
Right, take the summer
less
off.
Communication.
Fewer press conferences.
Yeah, you know, just guys, figure it out yourself.
That's the era I want, by the way, and I hope Kevin Walsh can take us to that.
That's what he kind of wants.
A world where we don't do Fed specials anymore, that it's not this big event.
This is personal, John.
You don't have to talk about where interest rates are every single day, that you just move on.
That's
I hope that's the world we can get to.
A lot of people think that we've actually moved beyond a point of Fed control. I think I always want to see the Fed show because it's always fun and I enjoy it. So clearly,
you like the long days.
I do.
It wasn't personal, just so you know. Anyway, all right, but it wasn't. Coming up this hour, might have been. Alex Altman of Barclays with stocks adding to the longest weekly winning streak since 2023. Antoine Legault of Wedbush as IBM surges on a new White House partnership, and Earl Davis of BMO making the bull case for treasuries. We'll begin this hour with stocks rising as markets await the biggest IPOs in history. Alex Altman of Barclays writing, the team is turning cautious on equities, sustaining their current upwards momentum. The risk-reward outlook for stocks has become more asymmetric to the downside. Alex joins us now for more. Alex, good morning.
Good morning.
Simple question, what changed?
A whole bunch of stuff changed, really. I mean, notwithstanding the fact that we had one of the largest rallies off the lows at the end of March that we had seen in the modern era, and then also we've been constructive on equities for basically a year now. We turned bullish last May. And then add on top, we've got like quite a quantitative framework that we use on a qualitative process. And stuff began flashing warning. Real rates being one dynamic. Spot vol correlation, which is sort of an evidence of euphoria by the retail investor, that's really ticked back up again. And then things like within the semiconductor sector, you've had this massive narrow breadth, obviously, within the market. You've had 10 stocks that have basically contributed the entire year-to-date rally. And then I suppose the last thing we've got to be aware of is the fact that we've had this big momentum charge in the market. And on all of our crowding metrics, that's become pretty stretched right now. And momentum's become very correlated to the market. So reversing that momentum unwind would probably take the market.
You know the obvious fundamental pushback that you'll get to these particular calls. The charts might look crazy, but if you look at the multiples are still okay. Yeah. They haven't expanded aggressively because earnings have been so good. That's the counterpoint. What's your pushback?
So I don't really have any pushback from a fundamentals perspective. I came back from marketing in London this week, and I heard dozens of those kind of conversations. Fundamentals are great. Earnings season was amazing. What's the problem here? Fundamentally, I don't have a problem, but we have to understand that the average PE multiple when real rates are here is lower than when we are today. That would be point number one. Point number two is that this is much more of a technical call that we're sort of making right now. It's not a fundamental call. It's more the case that the market could get gut checked here from a momentum unwind. And that is what people are not positioned for. And I really want to expand on that point just for 1 second.
Sure.
Right? Because what's happening with Iran and oil, I mean, I got asked a question this week, can you think of a trade that is not linked to the price of oil? And right now, I can't. So effectively, we're still navigating that geopolitical dimension. And so in both an escalatory outcome, which would naturally be probably quite negative for risk up here, but also a de-escalatory narrative. And what that would do is would force a dramatic rotation from the 12 weeks of massive inflows into US equities, AI story. And I think it would move elsewhere, places which have been more energy import sensitive, such as Europe and UK and parts of Asia. And I think that natural rotation can actually take money back out of US equities and lead to some weakness.
For people who are tempted to be benchmarked to the extreme, to 2008, 2020, and the initial aftermath, after the COVID-related shutdown, what does a momentum unwind look like? Are we talking about a 5% decline in AI-related stocks? Or are we talking about a 15% true correction that is a reset for a lot of these names?
So I would take, there's so many bits to unpack there, which we don't have time for, but like within the, so for example, I would just take the vaccine day. Vaccine day in November 2020 is, for me, the analog that I want to go back to. On that day, S&P went up 1%, but equal-weighted S&P went up over 4%. NASDAQ, over a 36-hour period, went down 4%. And if what we did was we reconstituted that narrative, that analog, into today's market weights. We said, okay, if the NASDAQ went down 4% today, what would the S&P do? Because obviously we've had much more concentration today. And the answer is the S&P would go down. So it doesn't have to be necessarily a protracted multi-month reset in momentum. I think it could be a several-week sharp reset in momentum that would actually force that rotation, give a bit of a gut check to risk, remind people that it's not a straight line necessarily in bull markets, and then we can move on with our lives.
Is the bigger risk right now potentially some sort of resolution to what's going on in the Strait of Hormuz, or a prolonging or an escalation in the conflict that causes oil prices to go up that much higher?
So I think it depends what kind of money manager you are. If you're a long-short money manager, I would argue that actually it's a resolution that might be more problematic. Again, going back to that vaccine day narrative, everyone knew that a vaccine was coming. They just didn't know when. And so today, I wouldn't say everyone is convinced that we're going to get a resolution, but there is still a timing uncertainty. So it's very hard to pre-position for that rotation that inevitably would happen if you had a $20 drop in oil prices. But the former, of course, an escalation, that's just risk off. That's going to hurt both long-short money managers and, of course, long-only money.
This is fascinating because 40 minutes ago, the President Truth, new stock market record, but you're basically saying U.S. equities are at this high because of what is going on in the Iran war, because we're in this Iran war.
Correct. So if you look at the leadership, and we've had virtually 100% of the year-to-date rally has come from a very narrow cohort of stocks. Those stocks, of course, have seen huge earnings momentum, and they're within this AI narrative, the semiconductor narrative, the whole CapEx build-out. But let's not forget the fact that people have been kind of forced there as well because they've been looking for narratives that have been oil agnostic. They don't want to be in European equities, which obviously was all the story for the first 2 months of the year. So if you said, and I'm making this number up, a $20 drop in oil prices from a resolution, it's going to force that narrative to shift. It doesn't take it away from the AI story. It's just going to say, well, actually, that's run up 60%.
Well, what's the catalyst then for the upside in the United States?
Well, the catalyst, I think, for the upside is the fact that you've still got positive earnings growth. You've still got GDP running in the twos, of which 80 basis points is coming from AI. You've got a new Fed chair that's, well, even if remaining on hold, ultimately, yes, real rates are higher, but it's not restrictively so. I would actually say one of the biggest challenges to that narrative is we are going to have a new Fed chair. And on our work that we've done, which has been relatively well documented, that new Fed chair is typically tested or has a communication blunder within the first couple of meetings. We've seen that repeatedly. And a fun stat for you, going back to 1930, within the first 3 months of a new Fed chair getting installed, the S&P on average goes down by 12%. So keep that in mind too, when with Mr. Walsh getting installed today.
Could happen today.
Well, I hope it's not going to be 12% today.
I hope it's not today.
No, I'm just talking about asteroids. I'm talking about a communication
Don't
blunder.
get Lisa excited. Goodness me.
Let's bring on the asteroid analyst.
Just my takeaway listening to you, how technically challenged we are on the long side right now, and how the situation in the Middle East, even if it resolves itself, I think this is a really important point, could unlock a vicious rotation that also catches people offside. And that's something you need to wait to resolve. So you kind of sat on the sidelines waiting for this to resolve itself now through the summer.
So, I mean, the way that I'm trying to position for it is that there's parts of the US equity market, which I think thematically is still very interesting. Commodities, obviously, something we've talked about in the past. But I think it's just time to revisit some of the other parts of the globe again. For example, places that have been relatively beaten up because of the oil price. And we have to consider, what would a $15 to $20 drop in oil here, even if it's only tactically, what would that do to the relative performance?
So what would I like? Because South Korea is still crazy, Japan's still crazy. Outside of those kind of places internationally, where should I be looking?
Well, I think, so internationally, I would look back at Europe again. There are pockets of, for example, European luxury goods, very sensitive to, to the consumer dynamic as well. And then areas where there's very large short bases, for example, European autos, European chemicals, places where people have been actively using as a funding short to go against their AI longs. And then even domestically in the US, just equal weighted S&P S&P. Just think about just diversifying away from just that AI concentration towards the other, basically other 493 stocks in the S&P. And that's something which we know, again, in Vaccine Day performed very, very well. And if we did have a redux of that rotation, it would probably benefit those kind of stocks.
Alex, this was great. It's always good to see you. Thank you, buddy. Thank you. Alex Ullman there of Barclays. We've said this a few times this week. If you speak to someone focused on the technicals right now, they're spooked by how quickly we've moved, and we've become very detached from the moving averages we've discussed over and over. If you speak to the guys who are focused on the fundamentals, they'll say, look at valuations, look at earnings, everything's okay. Two different stories, two different perspectives.
It goes to the idea that people have been hiding out in AI because they can analyze it when they can't analyze the Strait of Hormuz. And ultimately, when they can start to analyze the Strait of Hormuz, they might focus their attention elsewhere.
Maybe. Futures right now positive by 0.2%. Lisa excited. 12% move, single days, pandemic type stuff.
You're
there.
projecting.
GFC.
You are projecting.
Just, you know,
I meant communication
what a day that would be.
because we're likely
Be
going
awesome.
to hear from him today.
That'd be awesome, wouldn't it?
It would unlock value.
That's good. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Iran says the latest U.S. proposal to end the war is narrowing the gaps, but an agreement still seems far off. Iran is refusing to ship its enriched uranium stockpile to the U.S., and President Donald Trump says he opposes efforts by Iran and Oman to establish a toll system for Hormuz. Smart ring maker Aura Health filing confidentially for an IPO, seeking to capitalize on growing demand for its wearable devices. Source is telling us here at Bloomberg the company is working with banks including Goldman Sachs, Morgan Stanley, and JP Morgan. And Stephen Colbert signing off for the last time as the host of his CBS late night show. The finale featuring actors and comedians including Bryan Cranston and Paul McCartney, who closed the program with a performance of the Beatles' hit Hello, Goodbye. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. More from Yahara later this hour. Up next on the program, the Morning Calls plus Antoine Legault of Wedbush as the Trump administration prepares to add quantum computing stocks to the country's portfolio. That's next from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At the end of the day, the key to this business model is to get everything together. Vertical integration is really what makes you win. If SpaceX is IPOing in the next few weeks, and then after that you have OpenAI and Anthropic, I think it's going to keep us busy over the summer.
That was Pierre Federico of New Street Research joining us a little bit earlier on the blockbuster IPOs you can expect for the year ahead. Check out the market now. Bit of a turn here, up by a third of 1% on the S&P, higher by a third on the Nasdaq also. Close to session highs. Turn around in the bond market as well. Yields this morning were slightly higher by a basis point, now lower. We're down by 3, 10s at 453. 30s at 5.06%. Turnaround in crude as well. We were higher by 2%. Now just about holding on to gains on WTI. WTI at 96. Brent crude at 103. Searching for a headline to drive the price action.
Correct. I can't find one. Honestly, if you know why this Strait of Hormuz suddenly looks like it can be unlocked, please message, because I'm not finding it.
Isn't this the frustration, though, for people in this market right now? You see moves like that, you look at the charts, you start searching the wires, looking for a headline associated with that story. Every single time there's been a gain through March, through April, through May.
I need to train my agent better to go find it better. I mean, ultimately, it's going to be the agents that are looking for the headlines that then trade off of it, and the humans are just left saying, what's going on? I mean, at a certain point, how much is that part of the reason why, speaking to your point about capitalism, do people say, look, I can't get ahead of this. Somebody has the headline before I have the headline, and this isn't necessarily going on fundamental research, so I'm out of the game. I'm going long term.
It's also problematic with the headlines, given that what you hear out of Iran is from semi-official or fully official news agencies.
Yep.
There's no real reporting coming out of Iran that's independent. So that's when you're left to whack-a-mole, really, when it comes to these headlines. What are they saying versus what the White House is saying?
Brent crude still up around 1%. WTI just about unchanged now on the session. That's the price action so far. Let's turn to the morning calls. First up, Bank of America raising its price target on Ross Stores to $255, citing the company's first quarter beat and higher outlook. Your second call from JP Morgan, adding Walmart to its analyst focus list and keeping an overweight rating, saying the post-earnings sell-off is a buying opportunity. And your third and final call from Piper Sandler, raising its price target on Zoom to 107, the analyst citing vendor consolidation and price increases. Let's talk about those IPOs. OpenAI gearing up to go public, confidentially to file as soon as today. The race heating up for a historic pipeline of companies preparing to hit the public market. Ed Ludlow joins us now for more. Good morning, Ed. What are you expecting from OpenAI on top of SpaceX, on top of potentially Anthropic later this year?
Good morning. I mean, I am expecting, what I'm hearing is that this is real, that the confidential filing could be today or in the coming days, you know, through the holiday weekend in the US. Curious timing, right? You know, it's so interesting, John, like over the last 24 hours, I've been thinking a lot about what we talked about on surveillance yesterday, which is, in my world, they talk about the currency being compute. And in your world, or our broader Bloomberg world in aggregate, we're talking more about capital. And the capital markets right now are confronting a situation that's probably a little bit unprecedented, in that there is not infinite liquidity. And so if SpaceX goes in mid-June, as we expect, and this is all real about OpenAI going in September and Anthropic going in October, you've got a big decision to make, right? There's not infinite liquidity. But the biggest take that I've had now, having had a couple of short nights to sleep on it, is read the S1 again from SpaceX. And the TAM number that they gave, $26.5 trillion for AI, they're basically saying we are called SpaceX, but our story is exactly the same as the one that OpenAI and Anthropic will pitch to the capital markets. That the opportunity going forward will be in selling software to other software companies, the enterprise, et cetera. So it's a difficult one to read, but as one investment banker said to me last night, what you write in an S1, you do deliberately and with intention.
Ed, thank you, buddy. I'm looking forward to the coverage later. What a time to cover some of these stories. Ed Ludlow alongside Caroline Hyde on Bloomberg Technology. Let's talk about another one. Shares of IBM rising once again. The Trump administration awarding the tech company $1 billion to build a foundry for producing quantum computing chips. Antoine Legault of Wedbush writing, that combination of frontier innovation and manufacturing scale is, in our view, how nascent technologies become transformative ones. Antoine joins us now for more. Antoine, welcome to the program. I was looking at the price section yesterday and just reminded of what's happened with Intel through much of this year. How similar are those two stories going to be? Just the relationship between this company and the government?
Well, I think we're looking at passive equity investments, right? So the Department of Commerce is effectively institutionalizing a new model of government participation in strategic technology development, much like what we saw with Intel last year. And that creates aligned incentives, preserves taxpayer upside, and avoids, I think, the pure play or the pure subsidy optics that have historically made policy vulnerable.
Why do they need to be putting cash into some of these areas, given the enthusiasm around big tech and, or frankly, even quantum computing?
I think it reflects the critical security, national security implications, and now quantum is being lumped into the same, same field as some of these other critical technologies such as AI, or what we see with rare earths and other critical minerals that the U.S. wants to keep a really close eye on. So I think that's what it does, and that's a very powerful symbol or signal for the broader space. And that's why we saw much of the space absolutely skyrocketing yesterday, with stocks up 20-25% across the space.
Do you think it's appropriate for them to be picking who's going to be the winner and who's going to be the loser in a race that has been typically in the past, dictated by capital markets?
Well, I think what we saw is the U.S. government's willingness to deploy $2 billion wasn't necessarily on one single company, right? It was across the space, and we see it more as an endorsement of quantum computing as a strategic priority, as opposed to picking winners and losers. I mean, you saw companies like Rigetti, D-Wave, Quantinuum across a broad variety of modalities. So I wouldn't particularly say that they're picking a winner or a loser. I think they're taking a portfolio approach and expecting more than one winner as the industry matures over the next 3 to 4 years.
But do you think this helps or dampens competition within the space?
Well, I think I don't think it hurts. This definitely doesn't hurt competition. It just simply provides capital to some of these players. And mind you, most of these companies are already well capitalized, right? Most of these these publicly traded quantum companies are already sitting on hundreds of millions of cash, if not $1 billion of cash with no debt. So that money helps. And if anything, it might compress timelines towards commercial mass production of these systems. But I think we're watching quantum kind of cross an important threshold. The competition will be fierce, and the space will consolidate over the next few years as we kind of move from scientific exploration and prototypes to manufacturing readiness and industrial scale deployment. So I think competition will remain fierce across the various modalities and across the various incumbents in the space.
Competition is fierce in the United States, but where is it also fierce in terms of geopolitical landscape? Who's behind the United States right now? Is it just China?
So there's a vibrant ecosystem in Europe as well. But let's be clear, China is a formidable adversary in this industry. The government of China has invested billions of dollars behind its domestic ecosystem, which I think also was a point of emphasis for the U.S. government to step in and further these investments in the domestic ecosystem here in the United States.
Antoine, appreciate your take. Thanks for joining us this morning. Enjoy the long weekend. Antoine Legault there of Wedbush. How many people bought IBM yesterday because they saw what's happened with Intel this year, and the stock is up by more than 200%?
If the U.S. has a stake in it, they have a stake to keep that company going. At what point does it become a self-fulfilling prophecy? And are they picking winners and losers at a time where there still is plenty of capital for these companies? It's not as though these companies are starved for interest when it comes to investors. So is it necessary for the nation to get involved? It's a viable question.
I used to say this to the car makers, by the way. I remember catching up with GM a number of years ago, and they would come on and say things like, the demand for EVs is great. I'd be like, why do you need the subsidies then, if it's that good, right? And I think the same applies here to some extent. There's so much money going into the system right now. With Intel, it was slightly different. I understood the need to build out foundry capacity from a geopolitical perspective. I kind of understood that. And if the market was going to take the money there, then you had to sort of sacrifice the market at the altar of national security to some extent. And maybe you can make the argument for this as well. You just have to wonder how far they're willing to take that. And there are negative consequences associated with it.
Yeah, why not give grants that are competitive to new scientists who are coming up with interesting quantum computing models? Why not train young scientists to get involved? Why not identify talented kids and give them scholarships to go different places?
That's what the Democrats did, and they're taking a different approach in the Biden administration. Definitely taking a different approach.
A very different approach. Coming up on this program, we'll catch up with Yelena Shuletseva of the Conference Board on the outlook for the U.S. consumer under a new regime at the Federal Reserve.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Futures up here by 1/3 of 1% on the S&P 500, higher by 1/3 of 1% also on the Nasdaq. You would have noticed a turnaround of this market, so let's talk about it. We'll go through things cross-asset and then get to one of the whys with an asterisk, like kinda. In the bond market, yields this morning were a little bit higher, now a little bit lower, down by 2 basis points on 10s. You'll notice a turnaround in crude as well, was up by 2%, now up by about 1 on Brent, and pretty flat as well on WTI. So do you want to do the why? Just explain to us some of the headlines that crossed in the last 15 minutes or so.
Well, they're saying that Pakistan's military chief, army chief, is visiting Iran, but we knew that yesterday. And also, I would think if this were true, yes, he's going there, I actually think prices should be lower because Pakistan is the mediator. So this is a good signal potentially of these two sides narrowing the gap and maybe getting to a deal. So I don't know, doesn't make a whole lot of sense.
You mean oil prices should be lower?
Yes.
Okay, yeah, but they were off the highs, so they have moved lower.
Oh, okay, then this is
Yes.
potentially
Okay.
right. But again,
An endorsement of the price action.
yes, okay,
Right.
fine then. But here's the problem. We knew this, so it's nothing new. We knew he was going
It's a train
to
wreck.
Iran yesterday.
One of my favorite part is when you take a look. So the Twitterverse is afire, ablaze with this and wondering exactly how to handle this. And the responses are great. So we're using this bold again, and somebody else is saying, well, it's Groundhog Day all over again, which gives you a sense of people's exhaustion.
Can we just get to the weekend? You know, seriously. I mean, honestly, it's just ridiculous. As we count you down to the opening bell, let's get you some single names. Some morning movers. Yahara has more. Hey, Yahara.
Hi, John. I agree. But we start here with Ross Stores. Those shares are up 5.2% in the pre-market after it raised its full-year outlook. And same-store sales were up 17% last quarter. That was a record and nearly double what Wall Street analysts were expecting. It echoes what we heard from TJX earlier this week, that the consumer is still spending, but they are being very value conscious. Turning to IMAX shares, they are soaring 15% in the pre-market on this Wall Street Journal report that the company is exploring a sale and has already approached entertainment companies as potential buyers. And looking at a number of analyst notes, they are already bullish on the stock, and they say a move like this could help unlock value for the theater company. And we end on U.S.-listed Chinese tech stocks. Alibaba and Baidu, they are falling in the pre-market after Beijing announced new crackdowns on cross-border investing, and that is reigniting fears that they could also crack down once again on these internet firms, just as investors started warming up to the space because China had become more supportive of internet firms as it looks to compete with the U.S. on AI. John?
Yahara, thank you. Thank you for the update. Thanks for this morning. Let's talk about the main event later on this morning down in Washington, D.C. Kevin Walsh set to officially begin his term as the next chair of the Federal Reserve, swearing in at the White House later this morning. Mike McKee tracking events, and he joins us now for more. Michael, good morning to you. Just frame this one for us, the challenges that Kevin Walsh is going to face.
Well, that's exactly it, John. There's a lot of talk of regime change with Kevin Walsh coming in, but imagine a new president of the United States coming in And the cabinet remains all the same from the previous administration. It's not clear how much power he'll have or when he'll be able to demonstrate it. Nevertheless, here's what Kevin Warsh wants to do. We don't know how long it'll take him to do it or if he can, but he thinks AI productivity is going to be high so we can have lower interest rates. That's task number one. He wants a smaller balance sheet and possibly take us back to the era of scarce reserves, the so-called corridor system. He doesn't like forward guidance. He wants members of the Fed to speak less and stop talking about where they think interest rates will go at the next meeting. And he's also going to be looking to import new and different kinds and hopefully better kinds of forecasting models into the Fed to try to get a better idea of where the economy is. But as you mentioned, there are challenges, and chief among them is the war in Iran, which is causing inflation to rise. So although the president wants him to cut rates right away, the president's put him in a situation where he really can't. He also has Trump-caused credibility questions with all the talk from the president about Warsh is going to do this, I want a Fed chair who's going to do that. Warsh is going to have to demonstrate some independence if he wants Wall Street on his side. There is opposition to the balance sheet plan. We heard from Michael Barr last week. We've heard from Chris Waller calling the idea of going back to the corridor system stupid. And then Fed officials want to speak. Members of the regional banks especially want to tell their constituents what they're thinking. So we'll see how long it takes Warsh to do any of this and what actually works out. Here's a calendar of what to watch. The big news is going to be the 17th of June. That's the first news conference. Fed's not going to do anything, so there'll be a lot of reviews of Warsh himself. We may get a Humphrey Hawkins this summer in July. Jay Powell decided not to do one. The next FOMC meeting after that is July 29th, and then August 28th. We all go out to Jackson Hole. We think Kevin Warsh will be there. We think he'll give a speech, and if he does, there's going to be an awful lot of attention paid to that. And then September 16th, we have another Fed meeting. So taking us through the summer, there are opportunities for him to make his mark, but how much of a mark can he make?
Mike, you made a series of really good points. The one I enjoyed the most, and I think it's an important one and isn't talked about the most enough, is the regional Fed presidents engaging with their constituents. There's some egos on Wall Street. We always think it's about us. We think they're speaking to us, for us, to help guide interest rates. They want to speak to their constituents, Mike. Is there a better way of managing that? Is there a better way of managing that? Because whenever we go through the list of Fed speak, they're always speaking all the time. You and I know why, but there's a sense that it's an overload for financial markets. How do you manage one and manage the other?
That's going to be a difficult task for Warsh to accomplish, to get people to cut back because they do have their constituencies they want to talk to. Perhaps he will speak with them about being a little less predictive in what they're telling people. They can talk about the economy, they can talk about an outlook, but not say one way or another what their rate idea is. The model there might be Tom Barkin of Richmond, who generally says, you can see a case for one, you can see a case for the other. And he doesn't take a firm position on how he's going to vote at the next meeting. And that might be what the best that Kevin can hope for.
Mike McKee, thank you, sir. Appreciate it. You know how this works, Bramo. They go to a chamber of commerce somewhere in the middle of nowhere. They're speaking to constituents, and then all of a sudden the Bloomberg reporter showed up. Right? Yes. Someone else has showed up from the bank. I remember when Governor Carney first took over at the Bank of England, and I think he went to somewhere like Nottingham or something like that. He went to a Chamber of Commerce somewhere, and I think it was Michael Saunders, who was then at Citi or Credit Suisse, I forget where. He turned up to ask a question to Carney, and Carney was like, what are you doing here? Right? Sometimes they want to engage with the people, and we think it's all about us, and it's not.
And the conversations are incredibly different right now, and I think that's the key. Who do they listen to at this point, based on some of the feedback they're getting from constituents who are feeling crimped in different ways, versus Wall Street that has very different questions?
The optics are important, though. The credibility issue around that. I think it's slightly unfair for Kevin Warsh, but that's the environment that the president is largely responsible for, that he's cultivated as Kevin Warsh goes to the Federal Reserve.
Yeah, which, again, you've pointed out many, many times. Establishment across all aisles have really endorsed this person as being a traditional establishment candidate, and yet people are viewing him as ultimately being less credible when it comes to combating inflation.
It's going to take some time to work off that particular that particular accusation. Yelena Shuletseva of the Conference Board writing this: the incoming Fed chair will likely focus on changes to communication rather than an interest rate and balance sheet policy in the coming months. Yelena joins us now for more. Yelena, welcome to the program. It would take time to execute some of those ideas, but what are the ideas that you've got in mind, the changes that we should expect?
Yes, good morning. I think, while we cannot really do anything about interest rates and the balance sheet in the near term, it will take time just to make those changes. The incoming Fed chair could focus on some changes to communication. That would include the dot plot, and I think I haven't heard anybody being happy about the dot plot. Really, when you talk to people, everybody has something bad to say about the dot plot, but it's still there. So I think maybe now is the time that they will reconsider it. So what I am worried about is whether they will change the frequency and the diversity of Fed speak, at some point. And I hope it's not going to happen, because the markets are very much used to a diversity of views and hearing from different FOMC participants. So this is something I will be watching very closely. There are other changes that could be made to the summary of economic projections in particular. The incoming chair wants to focus more on rules, on policy based on rules, rather than giving forward guidance. So these are the areas that are most vulnerable to such views.
Yelena, you're talking about the removal of some of the Fed speak, and yet we got quite a bit of it. It seemed like people were fairly hawkish, didn't really endorse an easing bias, were entertaining the idea of some sort of rate hike, and then the minutes come out and really amplify that message. Why are they still maintaining an easing bias? What good is some of this communication doing if it isn't reflected in any kind of the formal policy?
I think it's just waiting for the new chair to come in, quite frankly. I think they didn't really want to change policy, like the communication right ahead of Kevin Walsh joining the Fed. So I think June is the month when they will probably do it. And, we need to be somewhat more neutral given the risks to the both sides of the dual mandate, and obviously rising risks in terms of inflation. I think June is the month when Kevin Walsh, is at the helm of the Fed, and that's probably when the committee will decide to move towards more neutral stance.
How constrained is this Federal Reserve by the long end of the yield curve? The idea that 10-year yields have been shifting higher even as people price in the potential rate hike as soon as early next year. Do you expect some sort of Fed Treasury accord to come into fruition in the first few months of his term?
Nothing is probably going to happen in the short term. I think this is a more gradual move. The balance sheet policy in particular will take time. I understand that there's some inclination, some desire for the incoming chair to reduce the size of the balance sheet, but that should come from regulatory changes, trying to reduce demand for reserves rather than trying to introduce some scarcity of reserves. I totally agree that there is probably no going back to the old scarcity of reserve regime. So I think you should ask Waller today maybe about that.
Hopefully someone's there. Yelena, when it comes to the broader inflation picture, we're going into Memorial Day weekend. We have pretty high gasoline prices, but do you see this stemming into other areas?
I think it will trickle down to other prices, particularly prices of food. Food uses a lot of packaging, and this is another area that may see the implications of supply chain disruptions stemming from the war in the Gulf. So I think that for now we don't see many changes in prices beyond those, but as the summer progresses, we will see some trickling into core prices. At the same time, I think that we will see some demand destruction. So in a typical year, gasoline prices rise 5 to 15 cents per gallon from May to June. But when supply is tight, we may see a spike of 50 cents a gallon. So that would bring us to $5 per gallon nationwide. And I think that is definitely going to slow down consumer demand during the peak driving season.
No doubt. Yelena, thank you. That is a concern. Yelena Shudet's over there of the conference board. Let's give you an update on news worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. The opening of a new U.S. consulate in Greenland sparking protests as residents voice concerns about President Donald Trump's plans for the island. Hundreds of protesters gathering outside the consulate, chanting USA, go home. A runway at LaGuardia Airport remains closed through 6 a.m. tomorrow. Inspectors finding possible areas of concern following the discovery of a sinkhole at the airport yesterday. The runway closure leading to travel delays during the busy Memorial Day holiday weekend. And 1,000 lucky New Yorkers will be heading to the World Cup at a steep discount. Mayor Mamdani announcing a lottery program that will give fans tickets for just $50 with round-trip transportation to MetLife Stadium included. For the rest of us, it'll be an arm and a leg. That's your Bloomberg brief, John.
That's what they should all cost. I mean, honestly, there should be thousands of tickets available for $50 at this stadium.
I thought you were saying an arm and a leg. I'm like, yeah, I hope not.
Bravo, no, that's very Lisa-esque. No,
on brand.
They should have made tickets available for $50. There should have been at least a minimum amount of tickets available at the stadium for really low prices.
Bring the kids in. Be able to draw in
Grow the game.
Young adults who want to play and want to get excited about it, who have that real fan energy.
Forgive me because I'll sound like a broken record for the next 8 weeks or so, but what a missed opportunity. So short-sighted of FIFA to go in the direction they've gone in.
Yeah, they're nodding and they're saying, yeah, just look at our bank account because guess what?
Right.
We're making bank, so that's why you're not running FIFA.
Up next on the program, setting you up for the day ahead and a week ahead. I should. That's the one thing, you know.
Yeah, you should.
Yes.
Yeah, be
No,
absolutely
thanks.
supportive of the sport.
It's so corrupt. The
It
whole
is.
thing is,
It's
right?
ridiculous.
Just kind of like, it's kind of sickening.
Just to the degree of
Right.
trying to just extract
Just tracking
any
some of the
penny
stories
whatsoever.
coming out of that institution
what
in the
they've-
last few decades.
We could go off on this tangent for a while.
I know. All right. Earl Davis is going to join us in a moment. He doesn't want to talk about that. He wants to talk about why you should buy bonds. That conversation next.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Market integrity is not something that is a competitive dynamic, and some of the rules that have been changed to woo some of the large companies, you referenced SpaceX, are questionable. And from our perspective, what is most important to us is protecting investors. To be honest, I just don't know what effect this is going to have on the market.
That was the NYSE President Lynn Martin. Some pushback to NASDAQ and some of the rule changes they've made to attract some of the listings. One of those being SpaceX, something to watch in the next few months. Equity futures right now in the S&P 500 positive by 0.4%, near session highs into the opening bell on the NASDAQ higher by 0.4 also. In the bond market, we'll spend some time on that in just a moment. 2s, 10s and 30s shaping up as follows. Yields down by 2 basis points on a 10-year, 4.55. Front end of the curve gets interesting for Kevin Warsh, soon-to-be chairman Kevin Warsh. The president said this recently: I'm going to let him do whatever he wants to do. That's the script. Now, I'm intrigued later when we get this signing in, the swearing-in ceremony, whether he sticks to the script, because you know the president struggles to fight the itch sometimes and might go off script.
He's known for patience and for script writing. So, you know, let's see what happens. As we get close to the midterms, though, pressure potentially could mount. And this comes at a time where people are pricing in a rate hike.
Might go off script. You can almost guarantee the president's going to go off script. And what happens when a reporter asks, "Sir, do you want to see him?"
Do we get some Q&A here? This would be cool.
No, it's in the East Room, and there's an audience. So
Okay.
I know executives have been invited, ambassadors have been invited. The president definitely wants to make this an event. Will he stop and answer questions? He might, and I imagine someone's going to say, "Do you want to see Kevin Warsh cut interest rates?"
Very
What's
cool.
he going to say then?
11 a.m. Eastern time. Don't miss it. Maybe he won't, you know. Maybe he'll hold back and say, "I'll let him do whatever he wants to do." You don't know.
I don't. You're right.
And if he does, maybe treasuries will rally because they'll take that as an endorsement of Fed independence. And
Who does?
You know, at the long end I'm talking about. You know, the front end, maybe yields creep a little bit higher again because he might hike. You never know.
Easiest job
we're
in the
live.
world.
Okay. As we count you down to the opening bell, the trading diary for the week ahead looks like this. 10 a.m. Eastern time. Fed Governor Chris Waller will be speaking. Look out for that. UMich consumer sentiment drops as well. At 11 a.m. we've talked about it endlessly. The president swearing in, Kevin Warsh a little bit later. Looking ahead to next week, of course, remember Monday is closed for the Memorial Day holiday. Oh, Davis of BMO says this about treasuries: the persistence of much higher rates from present levels is limited. Current levels provide an attractive entry point for maintaining or adding to 10-year duration. Earl joins us now for more. Earl, welcome to the program. Some people don't want to touch the long end of the curve. What's interesting for you?
We have been buying bonds, 450, 460, almost bought at 470, and will continue to buy on any pullbacks. The 4 fundamental reasons that are supportive of that are: 1, if there is a resolution in Iran, you will get a rally in bonds, a relief rally. It'll be short-lived, but you will. 2, tax refund season is coming to an end, which means you will see a pullback in consumer spending and growth, and people will have growth concerns. We do not. I could come back to that later. And 3, people forget the 2 reasons you want to own bonds are for yield income, get the coupon regularly to pay expenses, and 4, for flight to quality. You know, 1, inflation's not involved. So from a yield perspective, we are at very high all-in yields, very supportive, above inflation, real returns, underlying economy is fine. We feel comfortable buying then. And then the flight to quality. Once you have a resolution to Iran and inflation is on, let's say, the side burner, it's not off, but it's on the side burner, the thing we're watching at is the percolation right now in what's going on with Ukraine and Russia. brings back a flight to quality without the inflation implications that was happening in Iran. So those are the reasons why you want to own bonds above 450, which we still are, 10-year treasuries. We could see that very quickly going back into that 435 to 425 range. And that's our thesis, and it's held this year. It's treated us very well as active managers, and we think it'll continue to hold.
Earl, what's higher quality, the U.S. government or NVIDIA?
Great question. We would say, given the risk reward and that you're receiving a spread above treasuries, we would put NVIDIA then, because you're receiving a higher spread, and it's very safe. Cash flows are supportive right now. In regards to what is ultimately better, it's the U.S. Treasuries, because they print U.S. dollars. You'll always get paid par no matter what happens. NVIDIA is not printing any NVIDIA currency, so but we like NVIDIA better than we would U.S. bonds because of the credit spread.
Earl Davis of BMO. Next time you're on, I'm just going to freeze.
All right, thank you.
Freak you out. Thank you, sir. Coming up next week, Steve Cheverone of Federated Hermes, the former New York Fed President, Bill Dudley joining us, Mona Mahajan of Edward Jones, Amanda Lynham of Goldman Sachs joining us as well. All of that after a long weekend, and this a little bit later. Kevin Walsh, the chairman of the Federal Reserve, alongside the President of the United States.
Setting the stage for what could be a new era, not just for the Federal Reserve, but also more broadly for the economy. Are we entering a new inflationary moment that's going to cause a real challenge at the same time of weakening growth? Or is he walking into a transition period where he can then cut rates later, as many people in the equity markets believe?
And he's walking into a potentially incredibly difficult political environment. The president at the moment looks to be giving him some breathing room, says he's going to give him the space, he's going to make the right decision, do what he wants. But at some point, does that change?
We're going to have some movement in the Middle East over this long weekend.
The president literally said his son chose a really bad weekend to get married because she has a little thing like Iran going on. He's very busy at the moment. Do you think that actually
might have been an important line for the president?
Potentially, yeah.
Right?
Yeah, well, why isn't he going to his son's wedding?
Yeah, I don't think you're the only one thinking that, to be honest with you. Futures right now on the S&P, session highs, Brammer, off the back of some of the headlines on the Middle East.
Yeah, I think that we should stick around and cover this extensively through the weekend.
The wedding, you want to do wedding coverage?
100%, wall to wall.
Okay.
No, I think that, just if anything happens, we'll be ready to come back in, right?
I will take a hard pass on that, if that's okay. I'll give that a miss.
Yeah, I think a lot of people are.
I think we should wind this show down immediately, all right? From New York City this morning, good morning. Thank you for choosing Bloomberg TV. Have a very restful long weekend. From New York City, this was Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
It is Friday. After 8 weeks of gains, we are on track potentially for an all-new record close at the end of today's session. 30 minutes till the start of the cash trade. I'm Matt Miller. Danny Berger is deservedly off today. Bloomberg open interest starts right now. Coming out, the S&P 500 heads for its longest winning streak since 2023, thanks to relentless AI optimism. Stocks also getting a boost from hopes of a U.S.-Iran peace deal, though major sticking points remain. And a day after the filing for the biggest IPO ever, SpaceX delays a critical test of its massive Starship rocket. Let's take a look at the stocks that have benefited from this incredible 8-week rally right up at the top. Intel, this is a look since March 30th, up 188% if you round up. Then you see SanDisk, Micron, AMD, Seagate, On Semiconductor, Western Digital. These are all the chip makers that have pushed the SOX index up to a 25 times earnings valuation. And meanwhile, the S&P 500 is on pace, as I said, for the longest winning streak in 8 years, driven, at least in part, by these chip makers. Bloomberg senior strategist Jan Patrick Barnard joins us now out of Frankfurt. And JP, I know that our stock story says, you know, maybe hopes of a peace deal in Iran are helping as well. We've had those hopes for like the last 8 weeks, but it's really about the AI optimism, isn't it?
Yeah, absolutely. I mean, this story is still a big part of the market. What is going on? Of course, like the headlines for a potential deal in Iran is certainly helping. But I would argue, like over the past 8 weeks, the market like increasingly was not very worried about like the macro impact from higher oil prices and what it does to inflation, and the higher rates were like basically ignored. And everybody was so hyper focused on the AI trade and within that AI trade. And I think like we are now at the point where we're talking about concentration within concentration. The chip story was just like all over it. And I mean, like going forward, we saw a little bit of a rotation since last Friday, that people have like sold or take profit on that popular chips trade and moved a little bit more into other areas. I mean, like we're seeing Europe outperforming this week, for example. But like going forward, it's really like a question. This AI trade it's becoming so big and so dominant that really the question is like, how do we look at stock markets and how do we judge if a stock market is doing well or not when like half of it or even like 3/4 of it are just like one theme?
Yeah, absolutely. Concentration front and center, which is why the S&P 500, I mean, since a year ago is up almost 30%, whereas the equal weight index is only up 15%. That's the concentration there. You mentioned rates, and I know we do have today stocks up again, and we could hit an all-new record if we push over 75.01 at the close. Rates are down. Oil is lower than it was, 24 hours ago, and these two factors have been, I mean, somewhat important to equity indexes over the past couple of weeks.
Yeah, definitely. I mean, like, I'm a little bit puzzled because everybody was talking about like, oh, the oil higher for longer. What does it mean for inflation? What does it mean for the Federal Reserve and also the ECB about in terms of cutting rates and and helping the economy if there are any struggles, or do they have to fight inflation again? But it feels like that this discussion has become more of a sideshow, at least in the last 2 weeks or so, or last 3 weeks, and that people are not that scared anymore, and that, like, I mean, we have been there, that we said, like, inflation is probably going to be transitory, but I feel like this is the consensus again. We're going to see a little bit of an inflation spike, but it's not going to be too big. It's not going to impact earnings that much. I mean, like, corporate commentary during the last earnings season was all right. Nobody was like, oh, inflation difficult, the consumer difficult. There was some weakness in consumer stocks, but it's not that the talk on the street is like massively, oh, inflation is going to be a problem. Maybe the market is wrong here, but it feels like investors right now, they have their eyes on it, but they're not overly concerned.
Right. I mean, we've had a little bit of concern in outlooks from retailers like Walmart and Target, but it hasn't stopped the broader market, or maybe I should say the narrow market, from rallying hard. JP, great to get your take. Thanks very much. We have a 3-day weekend here in the U.S. I think you only have 2 in Germany, which, you know, you have far more holidays than we do anyway throughout the year. Sources tell Bloomberg that the UAE has joined Saudi Arabia and Qatar in urging President Trump to give diplomacy with Iran more of a chance and avoid a return to hostilities. President Trump spoke yesterday.
We have total control of the Strait of Hormuz, as you know, with our blockade. The blockade's been 100% effective. Nobody's been able to get through. It's like a steel wall. And this is with the Iran conflict. That'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before.
Joining me now is Bloomberg Washington correspondent Tyler Kendall. And President Trump, I mean, it's questionable whether we have total control over the Strait of Hormuz, right? If we did, I think it would be open. But what's the likelihood that we move towards some solution over the weekend in the next week, Tyler?
Well, Matt, at this point, we're getting some mixed signals from both the U.S. and the Iranian side. Yesterday, we heard from Iranian state media that there had been some progress made in bridging the gaps in the latest U.S. proposal. And I will point out that Secretary of State Marco Rubio addressed reporters earlier today where he said that, quote, slight progress has been made. It appears that perhaps we could be moving towards a deal that would first see a reopening of the Strait of Hormuz and then postpone negotiations around potential curbs on Iran's nuclear program towards a later phase of any perhaps longer lasting peace deal. The thing is, yesterday we really saw some of the biggest points of contention come to the forefront as Iran's foreign ambassador to France told Bloomberg News that there are these active discussions to get a permanent toll system underway when it comes to the Strait. The Secretary of State said that that would mean any U.S.-Iran peace deal would ultimately be unfeasible. Then you also had Iran's supreme leader yesterday, according to Reuters, saying that that stockpile of highly enriched uranium isn't going anywhere. And Matt, we know that that is one of the big sticking points for the U.S. So it is hard to tell right now if the sides really are getting closer to any potential longer-lasting agreement.
But there's no, I mean, in terms of a return to hostilities, Tyler, I know the president said last week that he had planned on going back to war on Tuesday. There's no, that we know about, immediate plans to continue or restart attacks.
No, not at this point, Matt, though President Trump did say that he was going to give Iran a limited amount of time. He indicated earlier this week that that could mean the beginning of next week. But it is very clear that the White House here is trying to pursue a diplomatic solution amid what has been mounting political pressure, of course, here in the U.S., especially as we get closer to the midterm elections. And I will also point out, as you mentioned at the top there is this mounting concern from regional allies about what Iran retaliation could look like if the U.S. does escalate militarily. In fact, we have new reporting out from Bloomberg News about how the scope of Iran's retaliation is raising some concerns because it appears that Iran could be relying even more on some militia proxy groups after the UAE was hit with a drone at one of its largest power plants earlier this week, appearing that drone to have come from Iraq. Now, neither Iran or its proxy groups took responsibility for that attack, but it is definitely raising some alarm bells from our regional allies about just how far-reaching Iran's retaliation could be if the U.S. does choose to escalate in such a way.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there in Washington. Now, a little bit further south and west, SpaceX's launch attempt for its massive Starship rocket was delayed again last night. Elon Musk says there will be another launch window this evening following the company's IPO filing this week. Bloomberg Tech's Ed Ludlow joins me now for, you know, I would say normally the exciting stuff. The rocket launch, Ed, I think is the exciting stuff. Normally, like an S1 or IPO filing is the boring stuff. In this case, I think that may have overshadowed. But what happened last night? What went wrong with the rocket, and how likely are they to pull it off tonight?
Yeah, so it's a brand new launch pad in Starbase, as well as a brand new architecture for Starship. And if you think about the tower that's on the pad, I don't know if we have pictures of it on the pad, there's an arm that extends from that tower that's behind Starship and attaches to the rocket, and it's held in place by a hydraulic pin. And so for all the drama and all the anticipation, like, this is a really big deal, and we can get into why. It was just a piece of metal that failed in the end. But as you I think you know it really well, why do we care so much about a new version of Starship and a test flight? Because if you read the S1 very carefully over and over again, all of these science fiction predictions that SpaceX is making for its future business lines, they are all predicated and completely dependent on that system working and being reusable. On paper, it's the only launch system capable of putting payload into orbit at a level that will sustain, like, orbital data center or take humans to Mars, but in the first instance, the moon. And so it does really matter.
Yeah, I mean, I think it's so fascinating. This Starship rocket is so massive, it could end up carrying 100 or 150 tons of commercial payload into space. But the total addressable market that SpaceX suggested at $28 trillion, actually the lion's share of that has nothing to do with bringing payloads into space, does it?
Yes, the breakdown is total addressable market, 28.5 trillion. Artificial intelligence is 26.5 trillion. So the delta, the 2 trillion in between, is Starlink, the business of space-based internet and direct-to-cell service. And if you dig even further down into that chart, what SpaceX is saying is that actually they see the large part of their future in terms of how they make money being akin to OpenAI and Anthropic, selling artificial intelligence as an enterprise software product. And that is fascinating. But to do that, they need to build data centers in the form of satellites, put them into orbit. They still have this core guiding mission of making humankind a multiplanetary species. All of it does not happen. It couldn't be more clear from the S1. If that Starship system doesn't work, but also if it's not reusable for the economics of it to work, then none of that happens.
All right, Ed, great to get your take. Look forward to more coverage of these rocket launches with you. Ed Ludlow from Bloomberg Tech. His program kicks off at 11 a.m. as usual today. Check on markets here. We're looking at a renewed rally here, or a continued rally, I should say, on the S&P right now, 0.5%. The futures gain, the NASDAQ also gaining 0.5%, and the 10-year yield coming down. That helps. You can see Brent crude, right now it's rising 17 cents from the close, but it's still far lower than it was yesterday at this time. So 102.72 seems like a cheap price for Brent, considering what we've seen over the past couple of months. Let's get a look at some of the other individual movers on our radar. Chinese regulators plan to fine 3 brokerages for illegal cross-border businesses, including Tiger and Futu. Estee Lauder shares moving after talks to merge with Puig brands fell apart due to compensation demands from Charlotte Tilbury on the Puig end. And Workday earnings topped expectations and defied fears around AI's impact on the software company. This has, I think, been one of the most interesting stories of the SaaS apocalypse, because all of the big AI companies pay Workday to use their software. IMAX gaining after the Wall Street Journal reported the large screen theater company is exploring a sale and has approached entertainment companies as a potential buyers. We'll follow that story for you. Now, coming up, Chrysler is making a comeback of sorts, but with cheaper SUVs. You're looking at the all-important Pacifica there. That's the only vehicle that Chrysler currently sells. We'll talk about how much more they could broaden it out. Next, this is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. The Late Show host Stephen Colbert signed off from CBS with a celebrity-packed finale that mostly avoided politics and jokes about President Trump.
We love doing this show for you, but what we really, really love is doing this show with you. Now, I'll say to you what I've said to every audience for the last 11 years, and I have meant it every time. Have a good show. Thanks for being here. And let's do it, y'all.
CBS says the cancellation was, the driver was financial, though Colbert recently blasted Paramount over its settlement with President Trump. Miami is emerging as the World Cup's hottest host city. Lionel Messi, fever in South Florida, demand from Latin American fans, and premium matchups are driving up ticket and hotel prices. Meanwhile, some cities are worrying about weaker tourism demand other than Miami. In New York, hotels have sold 18% of available rooms. At this point last year, that figure was 26%. And Stellantis is rebooting Chrysler with 3 new SUVs, with 2 of them priced under $30,000. As inflation squeezes car buyers, the automaker says it's finally returning to the affordable market after years of chasing luxury-level profits. Chrysler, now down to minivans only, one minivan, hopes the cheaper crossovers, the broader product offering, can revive the fading American brand. Let's talk more about that. Joining us out of Detroit is Bloomberg's autos reporter, Gabriella Coppola. She was at the company's capital markets event yesterday. Gabby, I was so bummed to miss this. Last time I went to one, it was FCA, and I was interviewing Sergio Marchionne about why they couldn't put a stick shift in the 4C. In any case, what do we know? And by the way, that was an Alfa Romeo. Let me start out with that, because that's, for car lovers, such an important brand. What's going to happen with Alfa Romeo?
Well, they are talking about, putting out some new models. I think the big strategy yesterday was that they are going to focus their investment on 4 key brands: Jeep, Ram, Peugeot, and Fiat. But then they're going to kind of try to leverage those investments to, feed their other smaller brands that are more regional, that don't have as much scale, and Alfa would be one of them. So they are going to put out some new product, but it's kind of, I think it kind of remains to be seen how different this is from the previous previous plans, because they've always I mean, Stellantis has 14 brands, and the thing that Wall Street is pressuring them about is, why don't you just kill off some of these brands? But they don't want to, because people love them. Like people love it, but they just, they got to work within their means here.
And they have to sell, obviously, less expensive cars, right? I was just, as we saw, driving the Alfa Romeo Tonale, but I've driven a lot of their cars with price tags, for example, the Grand Wagoneer, that stretch way over $100,000. And right now, inflation hitting Americans hard. They can't afford to buy new cars. What's with the lower priced offerings coming out of brands like Chrysler?
Yeah, so even that $100,000 Wagoneer has been repositioned to be more affordable. And I think you've seen that across the portfolio, definitely with Jeep, with Ram, and now with Chrysler, bringing back Chrysler. This is a huge deal, because as long as I've been covering the auto industry, which is almost a decade, people have been talking about new product for Chrysler, and we never saw it, So they're going to bring back two models that are going to be under $30,000. They're going to be, it's like the Chrysler Aero and the Aero Cross, and then there's going to be a step up from that called the Chrysler Airflow. And they're positioning this as, they say none of the Detroit automakers are really in this space. It's kind of dominated by, Asian automakers, Hyundai, Toyota, Honda. They're going to try to use Chrysler to get back in there and kind of recapture that entry-level buyer that they lost in recent years, because they did focus so much on the upscale premium, tricked out Jeeps, the highest trims, the, Wrangler, Wagoneer, Grand Wagoneer, very, luxury pickup trucks. The trucks can be a luxury car. So I think they are recalibrating to adjust to the kind of affordability crisis that we are having in the U.S. car market right now.
Yeah, absolutely. I mean, I've spent time recently in the Ram RHO, which is incredibly luxurious, and that is a pickup truck. The TRX, obviously the dream with the Hemi. Chrysler made the Hemi famous back in the day, but everybody associates it now with Dodge, and they're bringing that back. What do we know about the new product offerings from Dodge?
Oh my gosh, there's so much, Matt. There's a lot. So first of all, on the affordability theme, okay, well, actually, let me be careful there, because I was starting to talk about Ram, but let me talk about Dodge. So with Dodge, I think the most exciting thing we saw was there's going to be a new sports car called the Copperhead. We just got a sneak peek of it yesterday at the Auburn Hills, at the company's kind of sprawling campus outside Detroit. It is a sexy, curvaceous, people might compare it to the Viper, but CEO Antonio Filosa said this is not the Viper, but it's different. But I think it's going to be something more accessible. It's going to be more, again, with this issue of affordability. They've brought back the ICE version after kind of disastrously killing the combustion engine, putting a stake in the heart of the things that you love, Matt. Under the previous CEO, they phased out ICE muscle cars. Now they're bringing those back. But I want to mention also the big news here is how much they're expanding the Ram lineup. There's going to be a Ram SUV, which we haven't had for over 3 decades, called the Ram Charger. And there's going to be a midsize and a compact pickup truck. The Dakota, Ram Dakota, that's a midsize. And they're going to bring the Rampage, which is a compact pickup. So again, making cars smaller to get people into things that they can afford, but they can still make a decent margin. That's the plan.
I think I agree with you. The Ram Charger is the most important news from all of their, what would you say, 13, 14 brands, because all the other American brands, GM as well as Ford, have, a 3-row body-on-frame SUV, and Ram hasn't had one for so many years. So, okay, Gabby, we'll have to talk about this offline. My producer's saying that's enough of car talk.
That's enough car. Okay. Thank you, Matt.
Bloomberg, Gabriella Coppola out of Detroit. Listen to my podcast, by the way, if you want more car talk. It's called Hot Pursuit with Hannah Elliott, and we do spend a lot of time talking about my Dodge RT Challenger Scat Pack wide body. Coming up, we're going to talk with Sarah Hunt from Alpine Saxon Woods. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherriani in Seoul, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final. The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Check on markets ahead of the opening bell. We're looking at continued gains here. 8 weeks. We're going to finish out this week with a gain as well. So 8 weeks of gains, the longest streak since 2023, fueled by the incredible growth in AI that we saw evidenced by NVIDIA this week. So S&P futures up 4/10, NASDAQ futures as well. We do have yields coming down, which helps. That's a tailwind, and crude also a much lower price than we've seen throughout the rest of the week at 103.18. When we come back, Sarah Hunt of Alpine Saxon Woods joins us to talk about this rally. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now, is pretty good. High yield has very little exposure to software. And then you can get it from private credit, where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading on this Friday. This is Bloomberg Open Interest. I'm Matt Miller. We see futures higher ahead of the opening bell, 0.4% on the S&P and the NASDAQ, on continued optimism for artificial intelligence. The growth that we've seen from the likes of NVIDIA has been just absolutely enormous. I mean, still putting up 85% year-over-year revenue growth. You got to give them some credit for that. Ringing the opening bells are a couple of foundations here at the NASDAQ market site. Another Fedora Day. These are the ladies who supply flowers to all of the monuments around the country. Remember, Memorial Day coming up, and as a result, we've got the American Battle Monuments Foundation ringing the bell at the New York Stock Exchange. More importantly, well, not more importantly, broadly, but for us, since we're focused on stocks, let's take a look at the winners of the S&P 500's longest weekly winning streak since 2023. On the Bloomberg terminal, I use the MRR function. That stands for Members Ranked Returns. I look at the S&P 500, and then I put in the starting date of March 30th. So that was basically the first trading day 8 weeks ago. And you can see since then, Intel is up 188%. SanDisk is up 170%. Micron is up 137%. And Micron is still only trading at 8 times forward earnings. Let's bring in Alpine Saxon Woods Chief Market Strategist Sarah Hunt. These gains in 2 months, if you see those kind of gains, that looks absolutely bubblicious, right? But we don't, like, the valuations for these companies are not really sky high.
Well, I think that part of the reason you're seeing so much enthusiasm is because they're really making a lot of money right now. The question becomes, can they continue to make that amount of money? And when do we start to see that infrastructure shift to other parts of this entire ecosphere that is surrounding AI, and what that looks like going forward? Right now, we're still in the gold rush days, and everybody is running to take advantage of what is working. In the end, you could see this go on for a couple of years because there's a lot of work that needs to be done, and there's a lot of ancillary work that needs to be done. I think you're going to end up with power as part of the chokehold, but we'll see how that goes, and we'll see what efficiencies can be done out of those chips. And I think that's what people are looking for, too, is another iteration of innovation.
So how do you see this broadening out? I mean, we've already seen run-ups in companies that you wouldn't think of as AI companies, right? Caterpillar and Deere are now an AI play. The Ford Motor Company may be making giant storage batteries for the hyperscalers. Companies that make boilers all of a sudden are on an absolute tear in the stock market because you need to have HVAC systems for these data centers to work.
And a lot of that is also about the energy component that we need. And there's a lot of discussions about the linear extrapolation of how much energy we need per data center. And I think that that's where you're going to see some innovation. You're going to have to see some innovation change that, because if you extrapolate that on a straight line basis, we're not building power plants fast enough, and it's too difficult to permit. There's a whole list of reasons why that's an issue, and power prices are going higher, and that's difficult for consumers on top of everything else. So there has to be some change in that technology, and I think people are expecting that will happen, and therefore there will be some other game changers that will jump into this. But right now the enthusiasm is very high.
So, I mean, if you're invested in this market already, you've done quite well. We were talking to an investor yesterday who owned NVIDIA, and we said, so are you buying new shares? And she said, no, I'm already overweight NVIDIA, like pretty much everybody is, right? Where are you going then for more exposure? Or where are you going to with new money to take part in this broadening out?
So we've always been centered on a lot of cash flow metrics and a lot of balance sheet metrics, as well as in some cases dividend and buyback metrics. For some of these stocks, you have an opportunity that works there. For some of them, you don't. So the other parts of the market, there are places that are doing fairly well. And the difficult thing here is that there's been a lot of, like, you look at things like med tech, and you look at things like biotech is working, but med tech has sort of slowed down. There's a lot of areas where things are kind of cheap relative to the rest of the market. So it's a little bit, I hesitate to use the word barbell, but I think you have to have some technology, but there are places that you can look and you can say to yourself, you know what, relatively speaking, I got a good yield here, I got good earnings here. There's some places where you can find some value in this market.
Please continue to hesitate to use the word barbell. No, I'm kidding. I get what you're saying. In terms of the AI threat, are there companies that really have problems? Like, I was sitting in a car with the people from Dolby the other day, and their stock has tanked. We're going to talk to the CEO of Axon later, which makes not only tasers famously, but also software that works with AI. Their stock has tanked. Like, why? A lot of these companies that you would think are going to be helped by AI are really hurt.
I think that that's part of the ecosystem of trying to understand of where it fits in. Is this something that's going to take over what somebody's doing, or is this something that's going to enhance it? For companies where you have to have seat growth or you have to have more user growth, the question is, do I need as many users? So that you had that sort of SaaSpocalypse aspect that was going on before. Now people look at things and they go, oh, it's going to get disintermediated, but we're not exactly sure how. And to the extent that a lot of these things need to work together, there's probably opportunity in some of that knee-jerk reaction. It's hard to figure out in that moment what is coming for which company and how that's going to, can you add it into what you're doing, or is this something that is actually going to take over some of the tasks that you do? And I think that that's where people are looking to try to understand how it fits in.
By the way, I was listening to the remix of Elton John's Rocket Man with Dolby Atmos technology, and it is astounding how different and how good that song sounds in Atmos, at least in a Cadillac Escalade IQ, which has like 26 speakers. But I mentioned that because of the Rocket Man IPO that we were all following so closely the last couple of days. What do you make of this? SpaceX, I mean, when it comes out, does everybody have to, we all sort of have to buy it, right? It's going to be included in the index. NASDAQ 100 at least straight away.
I think that that's going to give it a natural market. I think there's a natural market for it anyway, because people are very excited about all the possibilities that this opens up. Again, there's a lot of sort of challenging new frontiers things. There's a lot of great stories that you can hang around this, and you can look at markets and say that there's a giant addressable market. Until you narrow that down and until you start seeing how that works, it's hard to say. And honestly, you watch that rocket take off and get caught by something, and that's actually kind of, I mean, it's just amazing from a technological standpoint that somebody could get that all to work properly, so that it's hard not to see why there's so much enthusiasm. Whether or not the valuation and the enthusiasm are at odds with one another is harder to say, but you can see why people get excited.
But I guess you, as an investor, you have to take that ride at least for a little while, right? Even if you're concerned about what happens to SpaceX's valuation a year or 2 years down the line.
Well, I think if you're mirroring an index, yes, and if you're sitting passively and it's going to be part of an index, you're definitely taking that. As somebody who can look and be on the active side, you can take a stance on whether or not you need to do something in that moment, or you need to do something as things play out, so you can see a little bit of what's going on. It gives you more ability to decide, as opposed to it's going to happen because by definition you're in an index and that index is going to include it.
All right, Sarah, great having you on. Thanks so much for joining us. Hope you have a fantastic Memorial Day weekend. Alpine Saxon Woods Chief Market Strategist, Sarah Hunt. Let's get a look at the stock market right now. In the cash trade, we continue to see gains now, 74.93, the level on the S&P. Remember, not that it matters, but the all-time closing high last week was 75.01. We're up about 2/3% with pretty positive breadth. 362 gainers, 139 losers. Right now, we're looking at, on the winning side of the ledger, obviously most of the companies, but led by Apple, AMD, Microsoft, Broadcom, and interestingly enough, Tesla. Now, we're looking at in terms of a breakdown in points. So these are the companies adding the most points. The companies taking points away. Micron, but it's only taking away 0.6 of a point right now. It's only down 0.2%. You can see Google bouncing up and down there, SanDisk as well. So these are companies that have done incredibly well, ExxonMobil, and are maybe a place for investors to take some profits right now. Let's look at a breakdown by industry group. It's early in the session, but all of the industry groups are gaining right now. Healthcare, consumer discretionary, and IT leading the way. And the question is, do investors want to continue holding this kind of risk into the weekend. Whatever happened to sell in May and go away? Not that that has worked incredibly well. Coming up, Citi's Stephen Zaccone joins me to discuss the retail sector navigating higher fuel costs and increasingly cautious consumer. We were talking about that with JP Barner a little bit earlier. This is Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bloomberg. Time now for our top call. Some of the analysts' action in focus this morning. First up, JP Morgan is upgrading Sweet Green, saying the management reset is successfully moving from tech-heavy bets towards stronger operations and new menu items that customers want, including wraps, apparently. Next up, UBS is upgrading Alcoa, saying Middle East smelter outages should keep aluminum prices and premiums stronger for longer, offsetting short-term demand risks and weaker pricing. And finally, Seaport Global is upgrading Texas Instruments, saying rising data center power demand is reshaping how electricity moves inside facilities and should drive a surge in demand for analog chips, expanding the market and lifting margins. Now, retail earnings this week showed that inflation is impacting the bottom line and especially the outlook. Executives from companies including Walmart, Target, and Home Depot all warned that higher fuel costs are eating into earnings because consumers are having trouble making those payments. Let's discuss the theme more broadly with Citi retailing and hardlines analyst Stephen Zaccone. Stephen, It's interesting that the market doesn't seem as concerned about, broadly as concerned about inflation as these retailers do. Obviously, the consumers are their bread and butter. How serious is the issue?
I mean, it's a problem for lower income consumers. Thanks very much for having me on. You know, we've definitely heard about the K-shaped economy for some time, and I think that continues to be the theme. You know, we had a plethora of earnings reports this week from big box, you know, home furnishings, auto parts retail, right? And I think you're getting a picture of the consumer being resilient. You're getting a picture of the consumer from the top of the K-shaped really outperforming. They're doing the best, right? And I think the lower income consumer is where things continue to be choppy. You know, I would say we're focused on gas prices being high, but it's, you know, it's not at a $5 nationwide level. Feels like there could be an opportunity for that to come down if we get geopolitical tension easing. But you know, there's a lot to monitor at the moment.
Are there? I'm looking through your coverage universe, and I see certain companies where I think, you know, BJ's Wholesale, for example, maybe the higher end consumer steps down and spends more money there than he or she does at, I don't know, you know, a name brand grocery store. We've definitely seen that with Walmart, right? Are you seeing it at places like BJ's as well?
Warehouse clubs are a share gaining story overall, right? You know, you've seen more and more traffic go to that box. BJ's is down today, some more of the margin specific details, but underlying trends in the warehouse club space continue to be very strong. You know, we have seen some sort of trade down from the higher income consumer when you get into more of the grocery purchases. That's fair. You know, I would say more broadly though, BJ's has a little bit more exposure to lower income too, and that's where things have been a bit choppy and there's a cautious view going forward.
What about the more luxury leaning names, or, you know, something like Williams Sonoma? Only if I were feeling flush would I go and drop serious coin at that store, right? I would love it because I enjoy cooking with the products they sell, but they're expensive. So how are they doing?
They're doing really well, to be honest. They reported yesterday, and you know, their comps were up 4.8%, right? The home furnishings industry is down low single digits. So they're really outperforming. It's the strength of their brands. You know, they talked about the K-shaped economy. We're at the upper half of the K-shaped economy. And, you know, our consumer is not necessarily as impacted by the price of gas. So they've seen pretty good trends, and it's really bucking the trend of the housing market, you know, being weak from a housing turnover perspective. So they've been performing very well. They've got that exposure to that upper income consumer. And I think there's innovation in the category, right? They've got the good brands to come in and shop. So they're doing a very good job right now in this environment.
When I'm strapped for cash, Stephen, I want to keep, you know, the cars I have running longer rather than buying new ones. I'll go to AutoZone and buy new bushings, control arms, sway bars. Is that happening now?
Yeah, I think that's a good sector to be in. You know, auto parts retail, the AutoZones, the O'Reillys of the world, those are always good sectors to be in from a consumer perspective. That's continuing. You know, the story there is they've had a lot of inflation from tariffs. That's continued to be passed on to the consumer. The consumer's actually been, you know, able to deal with that because you've probably been prioritizing repairing your existing vehicle. So they continue to be good areas of having exposure for consumer spending. As we look into next week, AutoZone reports, you know, we're thinking same-store sales growth continues to be in the up mid-single-digit range, right? So very impressive performance when you think about consumer spending there.
What about those that are tied to housing? I mean, you cover both Lowe's and Home Depot, so I'd love to hear your take on those two and the competition that they have, but also a higher-end play like Restoration Hardware. You've got to have serious cash to buy some furniture there, so I'm guessing that the higher end of the K is doing well supporting them.
Yeah, home improvement's an interesting place. You know, we had a recent upgrade of Lowe's to buy. You know, the thesis is basically, as you think about higher gas prices hurting some discretionary spending for consumer, the home improvement space, it's been challenged for some time. So there's not as much earnings, you know, risk when you look at the home improvement space. You know, Depot versus Lowe's, we can kind of debate some of the differences. Home Depot is getting a lot quicker into the large pro, complex pro opportunity with some of the building products acquisitions. I think Lowe's has done a good job gaining share in the small to medium pro opportunity. That continues over time. Good margin expansion story there as well once we get back to better same-store sales growth. You know, RH is an interesting one. We're neutral on it. We've recommended it for a long time. We've been neutral for quite some time. It's much more of an idiosyncratic story there, where you used to have this attractive opportunity in terms of gaining share in home furnishings. And now the story has got much more complicated with international being a lower profitability channel and not needing to see improvement, you know, over in the European stores. They also have some new collections that are launching that it's TBD whether they'll be successful. I think they're optimistic, but we'll have to see how that all plays out as we go over the course of the year. So it's a much more complicated story. Plus, you've got a lot of balance sheet leverage that you didn't always have in the past. Sonoma is a much cleaner way to get exposure to home furnishings, and they're executing at a much better level.
If you're downtown, and you are downtown, Stephen, Restoration Hardware has a fantastic rooftop restaurant at their New York headquarters. Highly recommend checking it out. Maybe something to do on this rainy Memorial Day weekend. Stephen, thanks so much for joining us. City Retailing and Hardlines analyst Stephen Zaccone talking to us about the retail universe. Coming up, NYSE President Lynn Martin questions Wall Street's rush to rewrite IPO rules, just as a SpaceX listing could unleash billions, tens of billions of dollars in passive fund demand. That's next. This is Bloomberg Open Interest.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Market integrity is not something that is a competitive dynamic, and some of the rules that have been changed to woo some of the large companies, you referenced SpaceX, are questionable. And from our perspective, what is most important to us is protecting investors. To be honest, I just don't know what effect this is going to have on the market.
NYSE President Lynn Martin speaking on Bloomberg surveillance. The SpaceX IPO may already have tens of billions of dollars in automatic demand lined up because of passive funds. Joining us now to talk about this is James Seyfert, ETF analyst for Bloomberg Intelligence. And James, I've been reading, your research and the research of Rob Duboff on this, which is absolutely fascinating. I think Rob estimates there could be $48 billion of automatic buyers here in a $75 billion IPO. That's obviously well over half. What do you think?
Yeah, I mean, so what this comes down to is the main three indices we looked at for this research were the Russell 1000, or the Russell universe of indices, the S&P universe of indices, and the NASDAQ. The NASDAQ is the only one that's fully finalized on these rules, and I mostly agree with what she was saying, right? Like, I can make arguments on both sides here, right? One is like, why are they making all these rules to bend over backwards to get these things on? For NASDAQ, it makes sense. They want the SpaceX listing, and they got it, right? For some of these other indices, it's more like, why are they doing this? And there's probably good reason. I mean, these things aren't like new IPO'd companies coming to market at $100, $200 million, maybe even $1 billion, you can make the argument. Like, this thing is looking like it's going to IPO at $1.75 trillion. And the market has changed, right? These companies are not coming to market as young companies. They're coming to market as almost pseudo fully formed. So it kind of makes sense to kind of change the rules a little bit to add these things quicker, but maybe they might have gone a little bit too far, as a lot of people are saying and writing.
Yeah, I mean, I understand also why NASDAQ or other index operators would want to change the markets, right? You want to attract these listings to your venue so you get the money. But are they putting market stability at risk?
Yeah, that might be a little bit too far. I think it's a little interesting. Like right now, if we look at the passives and the Russell consultation, the S&P consultation actually goes through and they do add these things. Within the first 6 months, we're talking about 24%-ish of a $75 billion float on SpaceX that would get bought up. You add in the active managers that are benchmarked against them. If they want to get flat, basically, if you're benchmarked against an index and it goes in at whatever weight, even just to get flat, you have to buy, an additional more. So that would take over 50% of the float that came to market. So there's some concerns around that would happen after 6 months. But I think it kind of makes sense, like I said, that you want to get these in the indices. And they have done things to limit it. The NASDAQ has limited how big the weight could get because unlike the S&P and unlike Russell, which is float weighted, so basically the company is weighted by how much of the shares are actually public, the NASDAQ doesn't do that. So they've instituted other ways to limit how big it could get at these things. But they have waived, there's all these requirements on how much float is required, public voting rights, and it seems like they're going to waive those, and NASDAQ has waived those float requirements to get this thing into the index.
By the way, just 30 seconds, but the voting rights has to be a concern, right? I mean, public voting rights for the SpaceX IPO are going to amount to like, what, 3% or less?
Yeah, they're all these consultations, and NASDAQ has already waived those requirements. So they're going backwards on governance and things like, ESG was huge a couple years ago, and this is kind of going backwards on those things a little bit.
CalPERS and TIAA-CREF are going to have to own this, and there's going to be horrible corporate governance.
Yeah, and it's likely going to go to market at 90x price to sales.
All right, James, great getting your take. Love your research on this. James Seyffert there of Bloomberg Intelligence. Tune in to ETF IQ, by the way. That's on Mondays at 12 noon New York time to hear more about the big ETF news. No, not Monday? Now 1 hour Mondays, but not this, obviously, because it's Memorial Day. So next week, it'll be on Thursday, and it's a show you don't want to miss.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
NASCAR drivers and race fans are still reeling at news that future Hall of Famer Kyle Busch has died this week at the age of 41 of an undisclosed severe illness.
Just to think about the fact that that now he's gone is just impossible to try to process.
That's Marty Smith, who covers NASCAR for ESPN. ABC's Will Reeve with more on what happened at a recent race.
Just 2 weeks ago at Watkins Glen, Busch was overheard in the middle of the race asking for medical help on his radio.
Doctor, guy, tell him I need him after the race, please. I'm going to need a shot.
Race announcers characterizing it as a sinus issue.
Busch, who had been hospitalized, earned 234 victories across NASCAR's top 3 national series, the most of all time. Secretary of State Marco Rubio in Sweden for meetings with NATO foreign ministers, saying the war with Iran is working its way out.
There's been some slight progress. I don't want to exaggerate it, but there's been a little bit of movement, and that's good. The fundamentals remain the same. Iran can never have a nuclear weapon.
After first saying he would pull U.S. troops out of Europe, President Trump now says he will send 5,000 of them to Poland. Continued backlash against the anti-weaponization fund set up by the president. Here's ABC senior White House correspondent Mary Bruce.
Republicans are demanding answers and refusing to approve more funding for the president's immigration crackdown until they get them. Acting Attorney General Todd Blanche scrambling to the Hill. For over 2 hours, Blanche getting an earful, Republicans yelling at him. Some of the president's most ardent supporters telling the acting Attorney General that the president's fund will cost them the majority in the upcoming midterms.
45 million Americans expected to be either driving or flying this Memorial Day weekend. That's another record. The head of the World Health Organization says the Ebola outbreak in Congo is spreading rapidly and poses a very high risk at the national level. However, he says the risk at the global level remains low. You're listening to ABC News. We've been telling you about the number of people flying and driving this Memorial Day weekend. Well, when you do get to your destination, you might find yourself in the midst of a washout, says ABC Chief Meteorologist Ginger Z.
It's going to be really rainy along the Gulf Coast. We also have some severe storm forecasts in parts of Oklahoma, but there's also some flood watches in southern Ohio, like Cincinnati, northern Kentucky, too. That's for today. If you're traveling these roads, you will run into pockets of storms and showers.
It's going to be nice on the West Coast. A little more than a week before the start of hurricane season, NOAA weather experts are predicting a relatively quiet summer in the Atlantic with some caveats. Here's ABC's Jim Ryan.
Between June 1st and the end of November, their prediction is for a below-average 8 to 14 named storms, says Dr. Neil Jacobs.
And 1 to 3 major hurricanes with winds at or above 111 miles an hour.
But NOAA's lead hurricane forecaster, Matt Rosencrantz, urges coastal communities not to let their guard down.
You want to know your threat now to be able to plan for that threat and then get your supplies ready.
Even in a year with only a few storms, it takes only one hurricane to affect an entire region of the country. Jim Ryan, ABC News.
Stephen Colbert signing off The Late Show for the final time last night, telling the audience beforehand.
I'll say to you what I've said to every audience for the last 11 years, and I have meant it every time. Have a good show. Thanks for being here. And let's do it, y'all.
He had hosted The Late Show for 11 of its 60 years. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Friday morning, TGIF, everyone. This is Bloomberg Intelligence on Bloomberg Radio. We are streaming live on YouTube as well, reporting live from our Bloomberg Interactive Broker Studio in Midtown Manhattan. Isabel Lee joining me today because Paul Sweeney has taken this Friday off. I believe he's at the beach, but it might still be too cold for that. John, yeah?
Way too cold.
Okay, yeah, he tried last weekend and it didn't go so
I would have
well.
banked these. I wouldn't have taken off this weekend. I would have kept working.
Well, you know, Paul and Fridays, those are sacred to him. All right, we've got a lot coming up on this edition of Bloomberg Intelligence. Of course, we have the latest University of Michigan surveys coming out on consumer sentiment, and it shows that people are feeling pretty concerned, especially when it comes to inflation and oil prices. So we'll check in with Joanne Shu to get more of a read on that. Terry Spath, founder and CIO at Zuma Wealth, will share her outlook on the markets. There's a lot of talk about how these mega IPOs are coming to market, might be kind of indications of a top, or at least that's according to Michael Hartnett of Bank of America Securities. We'll get her take on that. Deborah Aitken, our luxury goods analyst on Estee Lauder and Puig ending their merger talks. And so that's consolidation in the luxury space that may not happen. We're also going to check in with Liz Hart. She is president of leasing for North America at Newmark on the state of commercial real estate with these bond yields high and moving potentially even higher. Randall Williams, he is our business of sports reporter. A lot of headlines to go through, starting with the fact that there's been some change in NFL ownership at the minority owner level, but nonetheless, changes anyway. Randall Williams will walk us through those billion-dollar deals. But first, let's go over to John Tucker for our Bloomberg Business Flash. John.
All right, guys, happy Friday. This Bloomberg Business Flash brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. We're data dependent. Let's start with the data. Joanne's going to break it down in depth in just a minute, but the headline numbers for the University of Michigan, the current conditions index, 45.8, well below estimates. The sentiment index, again, well below estimates, and the prior month's reading, 44.8. Maybe more importantly, the inflation expectations in focus. The 1 year, 4.8%, well above expectations. And the 5 to 10 year inflation expectation, 3.9%. Again, well above the estimates and the last prior reading. Stocks headed toward their longest streak of weekly gains since December of 2023. You have right now 10 of the 11 major industry groups in the S&P 500 up. Healthcare, that's leading the way. The biggest drag is coming from communication services, and that's where you're going to find Google parent Alphabet. Brian Levitt at Invesco, meantime, says he remains optimistic about stocks.
We've had 6 straight quarters of double-digit earnings growth, so it's a market that has, fundamentals have actually been quite strong.
Right now, the S&P 500, 33 points higher. That's up just about 0.5%, 74.79 in the index. The Dow up 320 points. The Nasdaq Composite Index 77 points higher. And oil also pushing higher. Brent, the international benchmark, up close to 2%, 104.39 a barrel. WTI up 1.5%, 97.92. And as we start the long holiday weekend, filling up at the Wawa, 460 this morning.
Yeah.
That ain't cheap.
No, it's going to get worse, too.
Sorry, kids. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett.
Thank you so much, John Tucker. By the way, did you watch the Knicks game yesterday?
I did. I couldn't get it on my TV.
Oh.
The rabbit ears, Isabel, it's just, I refuse to pay.
How much were they?
I don't know. It's just like, I don't think it was on, like, free TV, was it?
I think it's ESPN or something. All right, we'll get back to that later on. But let's check in with Avalon Purnell, who has our stocks to watch. And they're on the move this morning. Avalon, get us started.
Yeah, we have to talk about Estee Lauder. That's ticker EL, currently jumping about 10% to hit its highest intraday level since March, which, if you remember, is actually when the merger talks were confirmed. That's after Estee Lauder and the Spanish brand Puig agreed to end merger talks. For those unaware, Estee Lauder is behind brands like MAC, Clinique, and The Ordinary. And the move was broadly seen as a major positive for investors who believe that the merger could potentially hinder Estee Lauder's ability to turn around. And JP Morgan also writing that they view it as a positive because it shows that Estee Lauder's management has the discipline to walk away from potential distractions.
Oh, so that's how you pronounce it, Puig. I was worried of pronouncing it. What about IMAX? What's going on with the theater chain?
Yes, that is ticker IMAX, currently climbing 16% for most intraday since February. That's after the Wall Street Journal reports that the large screen theater company is exploring a sale and has approached entertainment companies as potential buyers. Worth noting, obviously, the sale process is in early stages. It may not actually result in a deal. However, Benchmark is writing that the report strongly validates their thesis that IMAX's strategic value exceeds their current public valuation.
Just for the record, IMAX considers itself a tech company, a large screen theater platform and tech platform company. So
good clarification.
John just rolled his eyes. Okay. Last one for us, Avalon.
Yes, we have Denali Therapeutics, that's ticker DNLI, currently sliding about 4.2%. It was kind of hard to find a company in the red today, but this biotech reported that its experimental therapy to treat Parkinson's disease failed to reach those key goals. The drug did not slow the progression of the disease versus the placebo, and TD Cowen writing that while the outcome is a disappointment, they do believe that the expectations were already quite low going into the program.
All right. Avalon, thank you so much. Avalon Purnell, our Bloomberg Equities reporter. And for more conversations like what you just heard, be sure to subscribe to our Stock Movers reports, 5-minute audio reports on the biggest winners and losers in the stock market, available on Apple Podcasts, Spotify, or anywhere you listen. John gave us a rundown on the consumer sentiment numbers that just came out from the University of Michigan. And if you thought they were bad at the start of the month, the revision shows that people are feeling even more downbeat than had been anticipated. Joanne Shu is University of Michigan Surveys of Consumers Director to talk us through these numbers. So we're looking at a record low when it comes to consumer sentiment, but the gap between what was reported in the preliminary release and this final reading is pretty big. What happened, Joanne?
You know, essentially over the course of the month, consumers' views of the economy just continued to deteriorate. Consumers had already been feeling pretty negative about the impact of gas prices, the Iran war, and those price developments and inflation developments. But now they're really starting to worry that the pain of this is going to persist into the long run. And we see this on a deterioration of a lot of long run expectations, including for business conditions as well as inflation.
When you look at the report, how much of the inflation expectation increase can we attribute to tariffs versus maybe sticky services inflation?
It's hard to tell exactly how consumers are weighting inflation in different parts of the economy, but certainly all of these things are weighing on them. Gas prices were mentioned by almost 40% of consumers completely unprompted. We had about 30% of consumers mentioning tariffs, but by and large, the consensus is that the pain of prices is widespread. We had 57% of consumers providing unsolicited comments that high prices were weighing down their personal finances. This is a big jump from 50%, and 50% was also already really high. The last time we saw numbers like this, it was actually during the Korean War when we had over 50% of consumers telling us high prices eroded their personal finances. So this is something that consumers are very clear on. They're frustrated by this persistence of prices, and what's happening with gas prices is just compounding on top.
Yeah, absolutely. And to your point about these concerns about inflation, it's something that market professionals are worried about as well. And traders are now fully pricing in a quarter-point rate hike by the Federal Reserve by the end of 2026. That is a huge turnaround from earlier this year when people were looking for 1 to 2 rate cuts. Joanne, thank you so much. Joanne Shu is University of Michigan Surveys of Consumers Director on our latest University of Michigan read on consumer sentiment, falling to a record low in the month of May due to the Iran war. We had breaking news headlines at the top of the hour from Federal Reserve Governor Christopher Waller. And just to recap the headlines here, Chris Waller says the next move by the Federal Reserve is as likely to be a rate hike as it is to be a cut. Let's bring in Michael McKee. He is our international economics and policy correspondent. And Mike, this is big because Waller has a big voice on the Fed board and on the committee that makes policy, right?
Correct, and he was one of the first to call for rate cuts back when the Fed began its cutting cycle, and he'd been still urging rate cuts through the end of the last cut that they made at the end of last year. Now he's changed his mind about inflation. He says inflation's not going in the right direction. That is a problem, and that he supports removing the easing bias, which is essentially the language that you were reading there, from the statement. And remember, 3 other Fed officials had dissented from the most recent decision because they wanted to remove the easing bias. Waller being also a voter, this would up that number and put incredible pressure on Kevin Warsh, the incoming chair, to do that if indeed Waller were opposed to it. But I think Warsh would want to do that. But then he went on to say that I can no longer rule out rate hikes if inflation does not abate soon. He said basically it's up to the war now. As long as the war goes on and inflation is high, then he could see the need for rate hikes if inflation expectations start to rise significantly. And of course, that's what we just saw with Michigan.
We have Neil Dutta writing a note saying a win for Kevin Warsh will be if the Fed holds off on hiking, not cutting. What is your read on this and how it will affect incoming Fed Chair Kevin Warsh?
Well, I suspect that Neil is correct in his thought there, because the president obviously wants him to cut rates, but the White House has sort of been preparing the ground for the Fed to hold steady for some months. The president said in an interview earlier this week that I'm going to let Kevin do what he wants to do. And Scott Bessent, the Treasury Secretary, has been saying that under the current conditions, he probably can't cut rates. So I think the White House may give him some rope there. But
for how long?
But for how long? That's the question. And a lot of that, as Chris Waller says, is going to depend on how long this war goes on and how long the strait remains closed.
I like how you brought up that Scott Bessent also chimed in and is kind of giving Kevin Warsh perhaps some cover for not cutting rates right away. How much more closely do you expect Treasury to be working with the Fed going forward?
Well, I suspect it'll be a lot closer, but we have to define kind of what that means. The Treasury Secretary and the Fed chair have traditionally had lunch once a week to talk about conditions, but they don't, in theory, at least what they tell us, is talk about policy. Now, the incoming Fed chair, Kevin Warsh, says he wants to talk more about policy with the Treasury Secretary and that they should work together more closely, sort of aligning what the Fed buys with what the Treasury needs to sell.
I see. Okay. Mike McKee, there's so much to get through here. And of course, Kevin Warsh will be sworn in as the new Fed chair in the next hour. Michael McKee, our international economics and policy correspondent. This is Bloomberg Intelligence on Bloomberg Radio. We're seeing stocks move slightly higher with the S&P up 0.4%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker at the Bloomberg Newsroom with this Bloomberg Business Flash. A record low for consumer sentiment as measured by the University of Michigan. This is the final May Sentiment Index. This gauge, you heard Joanne talk about a few minutes ago, was weaker than all the projections in the Bloomberg survey of economists. So consumers expect prices to rise at an annual rate of 3.9% over the next 5 to 10 years. Well, the question now is a souring consumer going to rein in spending, which, of course, is the biggest driver of the U.S. economy. And this is worth noting, Scarlett and Isabel, on the day when the new Fed chair gets sworn in, traders now fully pricing in a quarter-point Fed rate hike. by the end
Hold on,
of
that's
this
not
year.
what he's supposed to be doing, right?
This is not what.
Well, according to the person who named him.
This should, make for some interesting discussions at the White House between the new Fed head and the President of the United States. The S&P 500, meantime, well, right now on track for an 8th straight week of gains. Remember, it's an extended holiday weekend, so I asked the question, who wants to take a position over this long weekend in a headline-driven sort of environment. S&P 500 right now, 21 points higher. That's up 0.3%, 74.66. The Dow Jones Industrial Average up 268 points. The Nasdaq Composite Index 31 points higher. Yields also pushing higher. 2-year up close to 3 basis points, 4.11. 10-year is at 4.56. The 30-year, I'm going to say that's unchanged right now, but the 2-year, more importantly, is the more policy reactive of the three just quoted there. As far as oil, the Brent to the active contract up $1.92, 104.49. WTI West Texas up $1.38, 97.73. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Scarlett.
Thank you for that update, John. Let's now bring in our next guest, Terry Spath, founder and CIO at Zuma Wealth, to discuss with us the markets, joining us live from California. So it's a very early morning for you over there. Thank you for joining us. Help us make sense of this market, because the bullishness has neared extreme levels and it's triggering a sell signal. That's according to Bank of America. And according to their survey, investors are continuing to increase their allocations to stocks by the most on record. Why do you think that is the case? Why are investors continually shrugging off the market, the conflict in Iran?
Well, that's a really interesting way to start this conversation. Thanks for having me on, and have a wonderful holiday weekend when you do go home. But let's talk about the markets right now. I mean, our dominant thesis on the U.S. stock market is of those two competing forces that you're talking about. On the one hand, there's euphoria. We would call it rational euphoria. We really feel that it is a rational euphoria on this powerful AI-driven optimism story. We anticipate real productivity gains, continued strong earnings power in large cap tech, and really meaningful capital investment cycle. And that's what's propelling earnings, and really magnificent earnings reports. And that pushes the U.S. stock market higher. Stocks follow earnings. But on the other hand, we cannot ignore that this is really a highly macro-sensitive market. Oil absolutely remains a key variable. It feeds directly into inflation, into consumer confidence, and that in turn drives Federal Reserve policy expectations. So that tug of war in this market right now of extraordinary optimism around AI and productivity gains, but really the reality of inflation sensitivity means that we think going forward over the next 6 months, we'll probably see a market that's higher than we are today, but with stutter steps along the way because of that inflation story and consumer confidence really injecting concerns about the risks going forward. So that's where we're standing right now.
And those risks will likely show up in any company that's exposed to the group of consumers most sensitive to inflation and rising oil prices, everyone but the top tier of consumers, the high-income consumers. So how does that play out, Terry, in terms of the kinds of stocks that will benefit the most as you see the market continuing to move higher? Is it just all driven by big tech and eventually the companies that go public like a SpaceX?
Well, I think that's a great question. I want to be clear. Absolutely, we think that this is an AI-driven market and large cap tech earnings, but we do see strong earnings across the board. Maybe not, maybe less so in energy if those oil prices tend to come in. But we do think that the narrowing of the market that we've seen recently, sort of people piling into a smaller handful of stocks than we'd seen historically or earlier this year, is a risk for the market that we don't like. That's something that we're paying attention to. We think that there's a broad set of stocks that are benefiting from this productivity gains that we can see across the board. Everything from financials, consumer discretionary, even boring old consumer products can see benefits. So we think the broadening of a market would be something that we're looking for. We don't think you can only pile into a few stocks in a narrow market and participate. We think that that's too narrow and not the right approach. A broader approach to the U.S. stock market, we think, is absolutely the way to play this going forward.
Let's move to another asset class. Do you think that government bonds have permanently, or maybe temporarily, lost some of their safe haven appeal in a world where there's just a lot of fiscal stress and persistent inflation? And in your note, you note that Japan is becoming the most important rate stories in the world.
Yeah, I think that's an interesting question. And, anecdotally, we have clients that are very concerned about, the U.S. bond market, which we try to, explain that we don't have that same view. But that's something that concerns people, that the huge deficits that we're running in this country is something that I think is kind of slowly permeating the bond market. And that might be one of the reasons that we're seeing higher rates here. But, Japan definitely is one of the more important interest rate stories in the world. I think that's quietly getting not as much attention from investors as it probably deserves. For decades, Japan was a really ultra low interest rate economy. They were buying a lot of U.S. bonds as a result because there just wasn't a lot of reason to put capital back into Japan. And so I think what makes this really important is that markets have grown accustomed to really abundant liquidity that suppressed global interest rates. So this normalization that we're starting to see in Japan, that could be a meaningful macro force for investors over the next several years. So that's something that I'm glad you brought up, that I think is really important for listeners to start learning a little bit more and paying attention to.
Yeah, that's definitely something that people are focusing on, especially with those yields at multi-decade highs. A final question to you, Terry. When you look at investment grade, they now have a negative return year to date, yet there's still a lot of people piling into it because there's really, in some cases, nowhere else to go, especially with government bonds, so volatile, yields spiking because of oil and inflation fears. Is it better to seek safety in treasuries or investment grade credit?
Well, we're not so keen on investment grade credit for exactly the reason that you pointed out. The spreads aren't that great. And it's interesting on the government bond side how dramatically expectations have shifted to there potentially being an interest rate hike. So I think there's risks in both of those asset classes. So on the margin, we're closer to investing in safer treasuries, because just those investment grade corporates aren't giving you the return. With the spreads as tight as they still are at this point, we don't think that you're really getting paid for the risk that comes with going out on the credit spectrum. We prefer to just stay in the safer stuff, clip your coupon, and enjoy the benefits of that safety and that yield that comes with that.
All right, good stuff. Terry, thank you so much, and have a great weekend, great long weekend as well. Happy Memorial Day to you. Terry Spath is founder and CIO at Zuma Wealth. All right, let's go to one of the deals stories that had been, really supporting this idea that deal making is back with a vengeance. Estee Lauder and Puig, it's a Spanish cosmetics company, a luxury brands company, really, in talks to merge. Those merger talks seem to have fallen apart. Deb Aiken is our luxury goods analyst joining us right now from London. Deb, what can you tell us about why these discussions collapsed?
Hi. The rumors in the market, the comments in the market are around the brand, which is 79% owned by Puig, Charlotte Tilbury. The original owner, but really we don't know that it is that, and there was a lot riding on this deal coming together, really, given that Estee Lauder was amid a big strategic overhaul under its CEO Stéphane de la Faverie. So there are a lot of things going on. Also the added risks in the market too, with what's happening in Iran, the knock-on impact onto travel retail, which has been with us since the middle of March. So many different things, really.
Where does Estee Lauder go from here on out then? Because they're left to focus on reviving their company, and they've reported 3 years of annual sales drop.
They did. I think if I look at both companies, the reason for them coming together was because if I think about Estee Lauder and where the market's been in the last couple of years, Estee Lauder only has about 19% of its business in fragrance, whereas the majority of the business of Puig, although it's built in makeup and skincare, its history is in fragrances with Jean-Paul Gaultier, and then also Carolina Herrera, Paco Rabanne and others. So it was a combination of the two of those coming together that if there was some excitement, that was it. But overall, if we think about Estee Lauder, they are doing more in innovation. They are doing more in shifting online. They are doing more in cost savings. They have a huge strategy running at the moment, the profit growth program, PRGP, where they're looking actually for savings of 1 to 1.2 billion to start to come through from next fiscal year, so fiscal 27. It's been at a big upfront cost, and so a lot of the maybe risk and analysis and the questions on these two companies coming together were just when the growth and the profits are supposed to come through. Would Puig have inhibited that, in that it would have taken them longer to turn around? So certainly today, Puig's share price is down and Estee Lauder's is up. And that's contrary to how it was on the day when it was announced 2 months ago.
Very quickly, Deb, before we let you go, is Puig still on the lookout for a merger partner?
The issue is going to be that if Charlotte Tilbury is a part of the contested deal, that carries forward, and so could be a bit of a poison pill potentially. Right. I would imagine that both of these companies are looking for acquisitions, that it could make sense for both of them. You know, Puig could find more of a global platform, and Estee Lauder needs, for me, more in fragrances. I've said that for several years.
Right.
So I think there are ways forward for both of them within the M&A field.
All right, so they go back to the dating pool and look around once again. Deb Aiken, thank you so much. Deb Aiken, she is our luxury goods analyst, joining us from London on Estee Lauder and Puig ending merger talks. Yeah, that was something where like this was going to create a huge company, because I think of all the brands that Estee Lauder already owns. You go to Bloomingdale's, which is across the street from us, Isabel, and I would say it feels like 60% of those makeup counters are all under the Estee Lauder brand.
Yeah, 100%.
But ownership.
I guess the end of the talks is not a major surprise. We have Bloomberg Intelligence saying that discussions have been limited, so it wasn't a biggie. But yeah, Estee Lauder is my mom's favorite makeup brand, so I always have a
invest in your face, as one former Bloomberg Intelligence anchor liked to remind us. Definitely good advice going forward. John Tucker, investing in your face?
Oh, can't you tell?
Yes, you only have one face, so that's what they say.
All right, this is Bloomberg Intelligence on Bloomberg Radio. We're looking at gains in equities right now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages are higher, so we're headed toward the finish of the 8th straight winning week. This would actually be the longest such streak since 2023. Best performing stock in the S&P 500. Let's start there. That belongs to Dell. Shares of Dell were up about 15%. Wells Fargo raising its price target on the stock to $270 from $180. The move comes ahead of the release of Dell's first quarter results. That's May 28th. A third straight positive session for the stock. It's risen more than 20% over a 3-day surge. Worst performer, Take-Two Interactive. The Take-Two Interactive software shares, they were down just about 7%. This reverses the pre-market rally that followed the fiscal fourth quarter earnings release. Meantime, Tiffany McGee at Pivotal Advisors says market performance should dictate investor choices.
Growth up 103%. Value up 63%. High yield up 20. Listen, the numbers tell the story. You stay diversified, you stay disciplined, and you get rewarded.
The S&P 500, 34 points higher right now, up 0.5%, 7480 on the index. The Dow's up 329 points. NASDAQ Composite Index up 113. That's a rise of 0.4%. Crude oil continues higher. Brent is up $1.87, 104.44. West Texas is up $1.31, 97.66. The more policy reactive 2-year after some of the data, that's up close to 5 basis points right now at 4.12. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Scarlett.
Thank you so much, John Tucker. There's this weird bifurcation in the markets right now because, as John was telling us, stocks are higher. S&P 500 gaining 0.5%. There's going to be a lot of big IPOs coming out, like SpaceX, like OpenAI. And then you look at everything else. Oil prices are higher. Bond yields have actually given up some of their losses and are now higher, especially at the short end, because the Federal Reserve Governor Christopher Waller now says he supports making clear that the Fed's next move could be just as much a rate increase as it could be a rate cut. So where does that leave someone who invests in real assets like real estate? Let's ask Liz Hart. I mean, it's a puzzling question.
That is true. That is true, and everyone just points to corporate earnings, but yeah, I mean, it's an interesting bifurcation in the market because everything AI is great, but you see a lot of concerns when it comes to others.
All right, Liz Hart is joining us now. She's president of leasing for North America at Newmark. And Liz, I know you're eager to jump in, so give us your take on how you see things out there.
Absolutely. So I think you're right. This is a very selective recovery. We're seeing great demand in places like Manhattan and in San Francisco, where AI is certainly driving the story, as you just commented on.
How much of the sector's outlook in general depends on the path of interest rates, and how are you positioning in lieu of the changing outlook minute by minute?
Absolutely. So it does seem that we will be at a higher for longer environment. But what we're seeing right now is the demand is still surging. You still have AI companies leasing more space in Manhattan in the first quarter than they did all of last year. You have San Francisco at record demand right now, mostly driven by those AI companies again. So it does seem as though even though there may be a higher for longer environment, that companies are really optimizing for productivity and talent and how they can drive their businesses forward right now.
Okay, yeah, but New York and San Francisco are not the rest of the country. These are kind of exceptional markets. You are up in Boston right now, and when I say up, it's because we're in New York, so you're up from us.
Yes.
Boston is one of those places where, one of those cities where the government funding decreases for universities in Boston has really been felt, especially in the biotech sector. How do things look in places like Boston, which are so tied to universities and government funding?
Well, I think what you're seeing really is a recovery that's starting at the trophy end of the segment. And we've talked about this before, but the trophy segment still appears to be pretty good in all of those major markets right now. Where you're seeing more of an issue is the bottom of the market, where there isn't as much activity or demand.
What about how are you seeing AI? In your note, you allude to how AI is not a space reducer, it's a demand generator, but that's kind of hard for some to believe.
Well, absolutely. But it really is driving the demand in a lot of those major markets. You're seeing companies that didn't even exist taking over 100,000 square feet and often over 300,000 or 400,000 square feet. And so that shows us something that's really interesting about this next generation economy is that those people who are on the cutting edge, they're choosing to be in the office. They're really choosing to prioritize how they work. And we think that's a very interesting signal of how other sectors are going to start to adopt over time and how they can drive their businesses, because AI really will impact all of us in all sectors. It's just going to take some time to have that happen.
So when you see the build out of some of these AI companies, particularly in San Francisco, the Bay Area, and maybe in places like in New York, where else do you see them going to if the real estate in those cities are too expensive and they want to be able to keep their costs under control, but still be able to insist on a physical footprint?
Absolutely. So I think there's two things that are happening right now. In those major markets you mentioned, starting at the beginning of last year, we actually saw a little bit of a pop in good quality Class B space, as long as it was ready for occupancy right away. So because there's such a rush on AI right now, people really want to build today. They don't want to wait for tomorrow. So they're looking for stuff that they can get really quick occupancy on. And that's definitely driving different categories in those high talent metric markets. In terms of other markets outside of San Francisco and New York, we're starting to see AI companies go to Bellevue, definitely. A little bit in Boston, London, Singapore are great markets, and even a couple that are starting to look in Los Angeles.
You also write that the issue is not that office space is tight, it's that the right space is increasingly tight. Talk to us about what the right spaces is. I mean, Scarlett made a point that everyone probably wants to be in the major cities like San Francisco, Boston, New York, and others I may have missed, and many will be offended, but can you talk a little bit more about that?
Yeah, no, they certainly want to be in high quality office space, and they want to have it as soon as they can so that they can really focus on driving their businesses forward. I mean, look, if you're looking at the quality of space, typically that means having good natural light, good open areas where people can collaborate with each other. Just high quality space has really been driving the story for quite a long time. And obviously always a bonus if it's creative for the technology sector as well. They tend to like those type of finishes.
It sounds like my apartment, Scarlett, because I also want
Good
natural light.
space.
And, yeah.
Natural light and creative finishes. That's what we all want, right?
Yeah, that it's like the holy grail, both for office space and for apartments. Liz, we started off by saying how interest rates, especially in the rates market, are moving higher. They're fairly elevated, not just in the U.S., but in the U.K. and Japan as well. How concerned are you about mortgage rates, about interest rates, and how they will stay at these elevated levels for longer than maybe a lot of people anticipated?
It's something that certainly is a factor. But again, I think with what's happening with AI and this big, change that we're having is really the companies we're talking to are most focused on productivity. How do they position their businesses for growth and moving through this? That's something that those companies don't control, right? So they have to live within the environment and within the moment of opportunity that they have today. And they have to place their bets.
Do you think we're near the bottom for commercial real estate valuations, or do you think there's going to be more pain ahead?
It's certainly bifurcated. I think we're definitely behind. I think, 2025 was the real pivot in the major markets, and we're starting to see other markets pivot over time. So I do think the bottom is behind us.
If the bottom is behind us, which markets are lagging behind and still have a little bit of consolidation to go?
Well, I mean, it's really all the ones that we're not mentioning. New York, San Francisco, those are the ones that are ahead for sure.
Yeah.
The Southeast has been performing exceptionally well, so that's another bright spot. But there's others who still need a little bit more demand to come in, and I think that we'll start to see that through the end of this year.
All right, Liz, thank you so much for joining us. Have a wonderful long weekend. Liz Hart is president of leasing for North America at Newmark on the state of commercial real estate. And we go back to that idea again of all the economic uncertainty that's out there. You don't see that reflected in the stock market at all, given that we're at record highs, or just about.
I think it's really earnings, what they say. I mean, 90% of the companies, according to Bank of America or more, now have reported earnings, and we're seeing 26% year over year growth outlook, which is the highest in something like 2021. It's just been spectacular, actually, to see earnings. You do hear some worries, again, with the companies not involved with AI about Iran war, oil, and
even
all
the
of
weather.
That. And even the K-shaped economy. I've heard it. Yes, the weather. I've heard K-shaped economy way more than I would like, but it's true. The wealthier are spending and the lower income are feeling the pinch.
Yeah, oil prices elevated at the moment with Brent at just under 105 a barrel, WTI at 97.46. And John Tucker, I know you've been keeping an eye on how much gas is in New Jersey.
I paid $4.60 this morning. That hurts.
I know.
I can't get the giant coffee cup fill up
Oh gosh.
as a result.
So you fill up your gas tank and then you drive away shaking your head.
Drink water, yes.
Then I'm real cranky the rest of the day.
This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. Isabel Lee and Scarlett Fu here with you. Paul Sweeney is off for the 3-day weekend, and John Tucker was just bemoaning how he doesn't have cable because he won't pay for it.
No, I have cable. I just, it's limited to like 3 channels because I don't pay extra.
Okay, so then
I don't think I have ESPN. No? I don't
you must have it.
Okay.
I don't
Maybe
have
I do.
cable.
I'll look.
Saturdays. Turn the dial. I know that your TV is probably still a dial TV.
I don't move off Bloomberg TV.
Okay, that's a good answer. Good answer, John Tucker. All right, Randall Williams, our Bloomberg Business of Sports reporter, is here with us, and John could not watch the Knicks game yesterday.
I don't believe him.
He claims that he didn't watch it.
It was too late for me. I go to bed at 7.
That is true. I mean, these
so that's why I
primetime
couldn't
games.
watch it. It's not a channel issue. It's a
sleep issue.
routine issue.
But nonetheless, the reason I bring up the Knicks is because MSG Sports, which owns the Knicks and the Rangers, is looking to split off those two companies. And the timing is incredible because the Knicks are deep into a postseason run for a second straight year.
Yeah, the Knicks have been doing phenomenal, of course. And I think this split is potential split, I'll say, because they haven't fully committed to it all the way. But it's meant to maximize the value. Like, what is the Knicks worth? What are the Rangers worth? What is Madison Square Garden as an entity worth? Mm-hmm. And, who knows where they take it from there? Of course, there's the possibility of selling stakes at a different premium, but we're not quite there yet. I'd be interested to know how much the Knicks are worth versus the Rangers worth. My soft estimates would be $11 billion for the Knicks and maybe 4 or 4.5 for the Rangers.
Right. Does James Dolan want to sell the Knicks? Is this a precursor to that?
Of course not.
Okay.
I would be shocked. I think that, look, he's owned it for a long time. He's been wanting to bring a championship back. This is the closest as he's ever been. And who's to say? Like, a lot of times these teams go to championships. The smart owners retool and go back and try to win another one. And I think that's what the city of New York will be expecting if the Knicks go, because they have a tall task if they go, whether that be the Thunder or the Spurs.
Right. Well, the city of New York is 100% behind the Knicks in the same way that the city of New York was 100% behind the Mets in 1986. And I know I'm totally dating myself now.
That's all right.
Isabel Lee, any memories of the 1986 Mets?
No.
Okay, yeah,
And
that's
no
not
memories of sports at all. But I am
She wasn't
familiar
born
with
in 1986.
I was not, yes. But I was not even a thought, probably. But anyway, I do know Super Bowl.
Yes.
And it's headed to Nashville for the first time. I think if you don't know Super Bowl, you definitely live under a rock. And I know Super Bowl because I like the performances in between.
Okay.
Any expectations for that? Anything surprising? Is Nashville a
I
smart
was
choice?
not surprised. Last year, or maybe the year before last, the NFL had a meeting, an owners meeting in Nashville. That was actually my first time to the city, and I could sort of see the appeal. Like, it is sort of like a country New Orleans, a country Vegas in a sense. And they have a ton of hotel rooms. Their new stadium will be open. So it's no surprise to me. I think what's more interesting to me is who will be performing at that halftime show. Like I think Jay-Z,
It's
of
got to be
course.
country then, right?
Oh my!
You would
Taylor
think.
Swift?
You would think.
She's
I do
popular.
think that she should be the overwhelming favorite.
Yeah.
And Taylor has, I believe she said that she's not going to perform until Travis is done playing. I would expect this season to be his last year.
Okay.
And if there ever was going to be one, you have to remember it's LA for the next Super Bowl. The one after that is Atlanta. The one after that is Vegas, and then we're to Nashville. And so if there is one where Taylor said, I want that one, Nashville feels like the right one.
Or LA, because she has houses everywhere, so maybe that's not the way to think about it. The NHL All-Star Game was in Nashville not so long ago, so I feel like Nashville is really coming up as a sports city.
It is. I think Nashville is trying to grow. I think that this Titans have been there for a very long time. Of course, I believe the Nashville Predators in the NHL, but they're missing baseball, they're missing basketball, and they're not under consideration for NBA expansion right now. There's been some conversations about the Grizzlies moving to Nashville. Those conversations haven't gone.
Memphis, right? Memphis Grizzlies? Okay.
They haven't gone very far. I have no expectation for that to happen in the near future. And then there's MLB. If the MLB decides to expand, who knows who's going to raise their hand for a potential Nashville MLB expansion team.
Before we let you go, quick question on all the ownership changes in the NFL. I mean, these are all minority ownerships. It's not controlling ownership changes.
Minority stakes. The Cleveland Browns sold a stake to Arctos Partners. That money's going to be put towards their new stadium, I'm told.
Okay.
You have Josh Harris and the Commanders buying back a stake from a Blue Owl co-founder, and sort of routine, like owners do this from time to time, buy back stakes from minority partners. And then you have, I believe we talked about Durbin last week, Egon Durbin, who's the co-CEO of Silver Lake. He led a consortium to buy 25% of the team. Should Mark Davis decide to sell someday, Durbin is first in line.
Can I ask a super quick one?
Sure.
Does the ownership change affect player sentiment?
No. I mean, I think that not from so long as it's not a majority stake and owners don't come in. Now, if you're looking at what's happened in Portland, the Portland Trailblazers were sold to Tom Dundon, and he's cut a lot of the staff. He's said that, players are not going to, two-way players aren't not going to be traveling with the team. That has not been met well by fans or critics. So in those situations where there's a majority transaction, absolutely there's going to be pushback. But these minority stakes, I think players could care less.
All right. What's your prediction on the Eastern Conference Finals here?
I think Knicks in 5, and I would like to see Knicks Spurs, but I can't call Spurs Thunder. That's a toss-up right now.
Okay. All right, good stuff. Randall Williams, he is our Bloomberg Business of Sports reporter on top of all the different sports leagues and, of course, institutional investors moving in and out of some of these multi-billion-dollar franchises in the NFL in particular. A lot to come up in the next hour of Bloomberg Intelligence, including the swearing in of Kevin Warsh as the new Federal Reserve Chair. That is due to happen at the White House. So we will be all over that. We will take you there live when it begins. And for our listeners in the U.S., a reminder that you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research because the next hour of Bloomberg Intelligence starts right now. Stocks are moving higher on this Friday before Memorial Day. The S&P up 0.5%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Happy Friday morning from the Bloomberg Intelligence team from our Bloomberg Interactive Broker studio in Midtown Manhattan. Isabel Lee, Scarlett Fu, and John Tucker to take you through the second hour of Bloomberg Intelligence. Paul Sweeney is taking a well-deserved day off before Memorial Day. A lot to cover here with Kevin Warsh due to be sworn in as the next Federal Reserve Chair, so we will bring you there live when that begins. We're going to check in with Stuart Paul. He is our U.S. economist here at Bloomberg Economics to give us the setup as a Chairman Warsh takes over the Fed that at this point looks like it's going to be under pressure if it wants to execute on a rate cut as the president has demanded. We're also going to speak with Erin Hudson. She is our muni bond reporter on what's going on in the muni bond market. There's a New York City private school bidding $20 million on its bankrupt peer's new home, physical home. So we'll talk about all of that. George Ferguson, our Bloomberg Intelligence aerospace, defense, and airlines analyst, will join us to give us his take on SpaceX's IPO filing that took place this week. And Enda Curran, our Bloomberg Fed and economy reporter, will talk to us about inflation. Inflation not just in the U.S., but inflation around the world and what that means for bond markets. First, though, let's go over to John Tucker for our Bloomberg Business Flash.
All right, guys, you want the bond market? Let's start there. Swearing-in day, as you mentioned, for Kevin Warsh. I don't know, maybe he'd like to be somewhere else because bond traders fully pricing in an interest rate hike by the Fed this year. Traders boosting their bets for higher rates after Fed Governor Chris Waller said the central bank's next interest rate move is just as likely to be an increase as a cut. Also on the data front from the University of Michigan, the Consumer Sentiment Index falling to a record low. Maybe more importantly, the long-term inflation expectations worsened notably because of the war with Iran. Right now, the major stock averages, they are higher. S&P 500 up 37 points. The Dow up 324 points. The NASDAQ Composite Index up 137 points. They are on track for the longest streak of weekly gains since December of 2023. In the meantime, Alex Altman at Barclays, he's turned cautious on stocks.
And stuff began flashing warning. Real rates being one dynamic. Spot vol correlation, which is sort of evidence of euphoria by the retail investor, that's really ticked back up again. And then things like within the semiconductor sector, you've had this massive narrow breadth, obviously, within the market. You've had 10 stocks that basically contributed the entire year-to-date rally.
And he's not alone. Some mega IPOs on the way, of course. And now a word of caution. Bank of America's Michael Hartnett writes, strong price action, retail mania, slumping vol, so bubbly, as he puts it. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Isabel and Scarlett.
Thank you, John Tucker, the one and only John Tucker. Thank you for that update. Now
nobody else wants to be me. That's why.
John Tucker is wearing
to be you.
John Tucker is wearing a Bloomberg Intelligence pullover today.
Look at
very
that.
on brand.
Very
Thank
on
you, John.
brand. Good.
As
Thank
I try to look more like Bad Bunny.
Yes, very good.
Would
Bad
he
Bunny.
wear this?
You're more handsome than Bad Bunny, I would say.
Oh, Isabel. Look, I'll give you your money later.
Let's take a look
Let's
at some
have
of
Isabel back every day.
Yes, have me back. Let's now take a look at some of the stocks on the move today. I'm Isabel Lee with Scarlett Fu, and we're joined by Bloomberg's Danita Tekova, who sits beside me and who I bug too much. So, Danny, what are you looking at?
Never too much, but let's look at the IMAX shares are up more than 14%. Of course, it's coming off that Wall Street Journal report that the large screen theater company is exploring a sale. It's very interesting. Bloomberg Intelligence has a take that there may be a hurdle for a Hollywood studio to buy the company, and they say a large tech company could be a cleaner buyer. We're yet to see if that is the case, but nevertheless, a very interesting thesis. The sale process is in early stage. We obviously know that those deals can fall through. It's it's really hard to tell. But so far this year, IMAX is on track to hit 1.4 billion in global box office. They're accounting for 5.2% of domestic box office sales. They're seeing a big jump there. So people are clearly paying off for that premium cinema experience. And yeah, there is a lot of optimism. Benchmark, for example, upgraded their price tag from $44 to $60 and says this strong validates their long-standing thesis about IMAX. So a lot of optimism on the deal, big jump, and it's lifting the company up higher this year.
I do like a premium movie experience. I don't watch movies a lot, but when I watch, I want it to be fantastic.
What was the last one you watched in a theater?
Oh, well, I watched Devil Wears Prada. So
did I. Did you pay for IMAX? So is it even on IMAX?
I watched an AMC, so it was just like a lazy boy. It didn't allow my legs to fully be up, but...
So you weren't totally reclining?
Yes, first world problems anyway.
All right. Danitza, number 2 stock you're watching.
From movies to games, we're going to Take-Two Interactives. There was a lot of optimism earlier about this stock. Now shares are sinking more than 5% on Friday. The ticker, of course, is TTWO. Stock is down 12% year to date. All we have been talking about is the release of GTA 6. I don't know if you've played the previous games. I have, and they have been very fun, but people have been waiting for so many years, and this game has been delayed so many times. And actually, this earnings report was good. The company confirmed a November 19 release date, so that's why investors were pretty optimistic. Nevertheless, its fiscal fourth quarter earnings release wasn't so good. Bookings guidance came in below consensus. So perhaps we're seeing investors getting more concerned with that and kind of weighing on all the uncertainty with GTA 6. Interesting stock to watch for sure. And it's interesting to see how the optimism holds for so little time.
Yeah, I feel like everything related to Take-Two just always comes down to GTA 6 and when it actually hits store shelves. Here's one that's near and dear to us, especially because my stomach is rumbling.
I feel you. Let's talk about $15, $20. Lunchbowl Sweet Green shares are up nearly 10%. It's coming after JP Morgan raised its recommendation on the restaurant chain to overrate from neutral. A lot of optimism there. The stock is already up 45% year to date. Wow. The new price tag is $13. It comes off $8. It's been a difficult space. We've seen all those salad bowls go through like really big jump post-pandemic, and there has been a lot of uncertainty. Some of them are emerging as the new winners. Some of them are emerging as the potential losers. But yeah, interesting for sure. Sweet Green reported sales that trailed estimates for the quarter on just May 7. There was a pretty negative reaction then, but clearly they're brushing it off. Yeah, very strong recommendation from JP Morgan there.
All right, good stuff. Danitza, thank you so much. Danitza Tsakova is one of our Bloomberg cross-asset reporters. And for more conversations like what you just heard, be sure to subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I feel like $15, $20 salad bowl or food bowl is kind of underpricing it. I end up paying like at least $20 for my Sweet Green, and it kind of kills me a little bit.
Yes, but in our team, we love Sweet Green, but we have a plea, at least the one near the office. Can they bring back blue cheese?
Oh, really? Why did they do away with it?
According to Valdana's reporting, Valdana Hyrek, a reporter in our team, they said there's not enough demand, so they replace it with feta.
Costs. I think that's what it is.
I know.
Costs. It always comes down to that. All right. Let's move on to the U.S. economy because a big event due to happen this hour, and that is the swearing in of Kevin Warsh as the new Fed chair. And Isabel, you pointed out something, which is this is taking place at the White House. Does this normally happen at the White House?
I don't think so. I think it's been decades since it happened in the White House. And optically, that looks a little interesting because it just highlights the blurring line between Fed and politics. And I don't even know if the president will be there, but it'll be in the White House. So
if it's in the White House, I think
what does that look like, right?
Yeah. Well, let's bring in Stuart Paul. He is our U.S. economist with Bloomberg Economics. I mean, I don't think the president shies away from the idea that this is his pick for the Fed, and he has certain expectations for this Fed chair.
No, he certainly hasn't shied away from it. He's been very public in insisting that the Federal Reserve should be cutting rates and that the U.S. deserves to have the lowest rates in the world, whatever that's supposed to mean. But yeah, he's definitely very opinionated about what the Fed should be doing. That said, he did come out last week saying that he would allow whatever that, again, you know, he's removing any threat that perhaps could be hanging over Warsh. He's saying that he would encourage even Kevin Warsh to do what he thinks is right. Kevin Hassett, again, was out this morning saying that the White House is enthusiastic about getting Warsh in the job and allowing Kevin Warsh to lead the Federal Reserve. And so, yeah, the White House is prepared to have Kevin Warsh take the helm, and they're at least jawboning in saying that they'll allow him to be independent.
What would you be first keeping an ear on when he speaks publicly in his role? I mean, do you think he's more inflation-focused or growth-focused? How do you read him?
I think that right now everybody is a bit more inflation-focused. Kevin Warsh historically has been relatively hawkish. One of the most consequential lines that he included in his testimony before the Senate Banking Committee was that inflation is always a choice among central bankers. Now, we're living in a world of supply shocks in chips, aluminum, energy out of the Middle East, and he's still saying that inflation is a choice. You can always lean.
I don't understand what that means. Break that down for us.
So this goes back to sort of academic economics, where inflation is everywhere and always a monetary phenomenon. It's the volume of money in circulation that determines how much people can bid up prices. And as the central bank, the Fed gets to make the choice how much money and credit is in circulation to bid up prices. Now, we know that when there's a frost in Georgia, that's going to affect the price of peaches. When you shut down the Strait of Hormuz, that's going to affect the global price of energy. When he says something like inflation is always a choice, he's saying that it's incumbent upon central bankers to lean against demand despite whatever supply shocks are going on in the world. It's a very hawkish tone. But I think that if I'm going to be listening for anything today, it's about his goals when it comes to coalition building at the Fed. He is going to be the chair. He is going to preside over the FOMC, but he does not set interest rate policy alone. He doesn't set balance sheet policy alone. He doesn't get to set regulations for major financial institutions alone. He has to do joint rulemakings with the FDIC, OCC. And so what I really want to hear from him today is a comment about coalition building, both among central bankers and his fellow federal financial regulators.
And how do you think the dynamics will be like with, I guess, former Fed Chair Jerome Powell being still part of the board?
Powell has at least said that he's looking to fade into the background a little bit. He's not trying to be a public leader.
There in the meeting, I mean, if my former boss, you know, the
Sure,
one you
a
replace
looming
is
presence.
there, you'd be like, oh my gosh, I guess.
Look, I don't think that Kevin Warsh is going to be intimidated by Powell sitting in the room. I do think that, for example, Powell can be a useful tool for helping Kevin Warsh to become more ingratiated into the Federal Reserve's existing architecture, to work with staff, to be a little bit more functional as opposed to being an agent of forceful change immediately. So I think that in that regard, Powell can actually be somewhat useful to Kevin Warsh. I don't think that anyone right now, including Kevin Warsh, is going to be advocating so strongly for interest rate cuts. And so I don't think that there's going to be this standoff between the former chair and the current chair.
Okay, so no drama from that perspective, but the economic conditions just make for plenty of drama already as it is. Kevin Warsh has promised to bring regime change to the Fed. What does that mean when it comes to the way that the Federal Reserve communicates with the public?
So that's one element of it. So Kevin Warsh has said, look, the Federal Reserve does way too much communicating. It offers way too much forward guidance. And in doing so, it sort of limits its own opportunity set for changing policy in the future. Instead, the Fed should be a little bit more humble about its read on the economic environment and its economic outlook, respond accordingly, and not put itself into a corner by limiting its opportunity set. When he talks about regime change, though, he also is referring to how the Federal Reserve considers alternative scenarios, how it offers forecasts through the summary of economic projections, how it relates to staff, how it could be, how it could move further away from any sort of more slow-moving academic ideas and consider alternative perspectives, which he is a bit more open to, which Governor Myron was also a strong advocate of. So I think that those are the major two elements, just being a little bit more creative rather than stuck with older academic ideas, and being less focused on forward communication and more focused on offering either scenarios or maintaining an open option set.
Well, maintaining an open option set, that just became much more so the case because Chris Waller, Isabel, the Federal Reserve Governor, said he supports making clear that the Fed's next move is likely to be a rate increase as it is a rate cut, kind of opening the door to all kinds of options.
And after that, traders fully priced a quarter-point Fed hike by the end of 2026, and we also know like the minutes also kind of pointed to that. So Warsh has criticized the Fed for keeping rates too low and that the Fed also, according to him, has had too much of an aggressive hand during the COVID era. Any indication on how he would be handling his regime?
Well, so it's interesting. Yes, Kevin Warsh has been very clear that the Fed has made policy mistakes in the past. It seems as though he was tapped for the job because he would be open to the president's idea of cutting rates. But I don't think that this is a set of circumstances where he's going to be advocating for rate cuts. I think that...
Would he lose his credibility with the markets if he did?
Absolutely.
Okay.
Yeah. He would lose his credibility with the markets if he were to advocate rate cuts in a situation like we're currently in, where the bond market is pricing in higher inflation, where bond market is pricing in even Fed hikes in the next 2 years, as Isabel just alluded to. And this is in an environment where the labor market, while it's not very dynamic, is reasonably tight. So yes, cutting rates right now would be quite a shocker, and the back end of the curve would sell off pretty dramatically. And look, the Treasury Department knows that. Secretary Bessent knows that. I'm sure he's communicating that to the White House, and I'm sure that's what opened the door for the president to say something like he's going to allow Kevin Warsh to pursue the policy that he sees as most suitable.
And how, if you could just give us a step back view of how unique this situation is, given that, I mean, Trump has made it clear that Warsh is his pick, blurring lines between Fed independence. I mean, as someone who's been watching this space, what do you make of it?
Look, I think that Kevin Warsh is going to be at least empowered in the short run to set policy, what can be useful for a Fed chair, even one that's feeling a little bit of political pressure from the White House or is under the microscope among policymakers or under the microscope of policymakers, is that when you're in a relatively rocky economic environment, the Federal Reserve can be a useful heat shield for policymakers. If Kevin Warsh comes out and says inflation is everywhere and always a choice, the inflation consequences of the war in Iran and shutting down the Strait of Hormuz is something that he's already basically taking responsibility for. He's not responsible for it, but he at least takes some of the blame out of the world of the global security space and out of the Defense Department and puts it into the Federal Reserve. He can be useful in that regard. And so, at least in the near term, I expect the political pressure to start to fade quite a bit.
All right, we'll see how long that lasts for, though. StartupPal, Bloomberg Economics U.S. economist, joining us as we await the swearing in of Kevin Warsh as the next Federal Reserve Chair. This is Bloomberg Intelligence on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And this Bloomberg Business Flash being brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks headed toward their longest streak of weekly gains since December of 2023. S&P 500, 45 points higher. That's up 0.6% at 74.91. The Dow is up 385 points right now. That's up about 0.8%. The Nasdaq Composite Index up 174 points, and that is a rise of about 0.7%. 8 of the 11 major industry groups in the S&P 500 higher right now. Healthcare, that's leading the way. The biggest drag coming from real estate. And U.S. consumer sentiment among the data we got today, falling in May to a record low. Long-term inflation expectations worsened notably due to the Iran war. As we wait for the swearing in of Kevin Warsh, I'll go to the policy reactive 2-year, as I call it. 4 basis points higher, that Treasury right now at 4.12. Also, Brent, the active contract right now up 1.6%, 104.19 for Brent crude. West Texas is up $1.45, 97.79 right now. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Munis in Focus is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. All right, for today's Munis in Focus, we want to welcome back Erin Hudson. She is one of our Muni bond reporters. And Erin, you've written a number of stories that gets my attention, including a New York City private school bidding $20 million on the former campus of its peer, which ended up going bankrupt. $20 million, wow, that's a lot.
Yes, it's definitely a lot. And what's so interesting about this story is the seller, who is a bankrupt private school, which is very, very rare in the world of New York City private schools. And then the bidder who's offered the $20 million to hopefully buy. What this says about school finance, and to zoom out a little bit, the world of private schools in New York City in particular is very competitive. There's a dwindling number of kids in the city, and for a private school that's charging lofty tuition, that's a little bit more like college.
Oh, totally.
At some levels. They really have to justify that price, and often facilities are a huge part of that equation. So whatever schools can offer the best and the newest facilities, that's a huge part of it.
Okay, so drop some names. Which schools are we talking about?
So we're talking about, the bankrupt school that went bankrupt and closed last year is Manhattan Country School. And it is a school that was founded in the 1960s, civil rights era, as a very progressive school. The buyer, it's not a final sale at this time. It's the stalking horse bid in bankruptcy that kind of sets the bar. Is a school called Geneva School of Manhattan, which is a classical Christian school. And the classical education is a very hot thing right now in the world of schools.
Okay, so I just want to point out that in your story, you had such great details. You said that the Geneva School's curriculum had students spend time on a Catskills farm to learn how to milk cows.
Yes, so that was for the progressive school, Manhattan Country School, the school that unfortunately went bankrupt last year. And it really sort of, what education consultants say is it speaks to the...
Wait, you got to back up. There's a school that teaches you to milk cows?
Apparently.
Yes.
Do you know how to milk cows?
Yes.
And speak Latin to the cow while I'm milking it.
That's amazing.
Remember, this is for tuition of like $60,000, $70,000 a year, too.
Yeah, they're two different schools, and it really speaks to sort of the changing parent preferences right now. So the progressive school, where students had the opportunity to learn how to milk a cow, that is a school that closed, where when it took on tax-exempt debt to buy this building, That is
That would be the only useful thing you'd learn in this school, by the way.
That is true.
It was a very beloved school and had celebrities send their kids there, actor Samuel Jackson among them. But when that school closed, it took on debt to expand, and expenses far outpaced. As the pandemic started, it lost students, enrollment shrunk, and now you have this school, the Geneva School of Manhattan, that teaches classics.
Yeah, what is classical trend?
So it relies a lot on primary texts, moral reasoning, and it often has a stated religious framework to its curriculum.
So the opposite of going to take kids to the farm.
And Catskills.
Yes, they are very different curriculums. And this is the school that actually saw its enrollment expand during the pandemic, about 40%, according to the school. And so they are now making a move to expand. So it really shows the changing tides.
It's surprising to me that you mentioned earlier that demand is dwindling at a certain level, because I've always thought that private schools in Manhattan, Scarlett, are just the most competitive. I have one actual friend, and she almost said that she had to suck up to the school. And they have money, but that's not the issue.
Oh, yeah, no, not only does she might have to, she absolutely needs to do that.
Wow.
I just want to compare this, or contrast this really, with another story that you wrote, which is about Iowa's public schools. Iowa is undertaking some property tax reforms. What does that mean for its public schools? And, you know, as far away as possible from the Manhattan private school scene here.
Yes, worlds away. So Iowa lawmakers passed a law earlier this year that is diverting funds that used to go towards school infrastructure to use those funds to give property taxpayers relief. So relief on their property tax bills. And so what they're doing is they're taking revenue that came from a statewide sales tax, and that part of that is now, instead of going towards schools to help them pay the debt that they took on for buildings and facilities, now that's going to homeowners. And you know, this is a huge concern. Credit rating agencies have called this a material reduction in revenue for the schools that are impacted. And S&P put the impacted school districts on credit watch, and saying that there's a 1 in 2 chance of a downgrade. So that's a big implication for those schools.
And
go ahead.
Maybe just 30 seconds. Why is Iowa doing this?
So this is a part of a large trend. Iowa is not alone. There are a lot of states, Texas and Florida, that are considering doing similar things. So it kind of speaks to this growing tension in local government finance right now. Americans want to see lower property taxes in this time of inflation, raising costs on everything, affordability. Nobody likes property taxes to begin with. So you can see how lawmakers are really seizing on this, but the question comes, if property taxes were to go away, where does that revenue come in?
That's always the question. Erin Hudson, thank you so much. Erin is our Muni Bond reporter here at Bloomberg News in New York, and I'm so glad you asked that question. That was the obvious question that needed to be pointed out.
Yeah, I mean, sometimes you just have to ask the most basic questions at the risk of sounding basic, but you learn things.
You're never basic, Isabel.
Thank you so much, Erin. Let's now shift gears a little bit, or shift planets, I guess. I was trying to make
Solar
a smart
systems,
segue.
Universes,
Yes, let's now bring in George Ferguson. He's Bloomberg Intelligence Senior Aerospace, Defense, and Airline Analyst, to discuss with us all things SpaceX. I feel like all this week has been all about SpaceX. So, George, thank you for joining us. Talk to us about the slow launch revenue gain of SpaceX. We know that they dominate in global spaceflight, but I guess most missions support their own satellite internet business rather than external customers. Can you please unpack that for us?
Yeah, so we, in the filing this week, we got a chance to look at their businesses, and it was pretty remarkable, I thought, the percent of space launch that actually is just supporting their low Earth orbit constellation business. It was like 75% of all launches. Again, we're supporting their LEO constellation. It's about 9,600 satellites up there. And in the first quarter of the new year, even a bit larger, it was up in the 80s. So when you look at the businesses, their launch business actually only comes in around $4 billion-ish a year, much smaller than the the connectivity business, which is that low Earth orbit satellite business. But we think that if they accounted for it correctly, if they did some sort of transfer pricing and showed revenue, because they don't show revenue, they don't show sort of earned revenue for the flights for their low Earth orbit constellation. If they showed revenue for it, we think it'd be a $12 billion business, and there's a lot of technology in that business, interesting business to us.
George, when you looked at the IPO filing, what did you learn about SpaceX's competitors, the rest of the space economy, those companies that also purport to be at the cutting edge of this industry?
Well, I think we learned, and it confirmed for us that their competitors are really far behind. Now, I think one of the things I took away from the filing was, SpaceX did something like 160 some launches last year. Lots of other competitors, most of the competitors aren't, over 50. So they're far and away sort of the most repetitive launch company in the world. Again, I was kind of surprised how much was for their own constellation, because we kind of felt like demand was really growing for LEO satellites, and it is. But the sense I get from the filing is they're growing most of the demand for these low Earth orbit satellites. I think more folks, more governments, more companies will be launching low Earth orbit satellites, and this space business will be a really important business. But I think that was one of the bigger takeaways, from the filing.
And many, and at least some of the people I spoke to, said that the entire base case depends on Starship operating at a cadence by 2027. But if Starship slips materially beyond that timeline, what do you make of that? Does that still support the current valuation of SpaceX?
Yeah, so look, I mean, the valuation is astronomical, I guess, maybe pun intended. You're really buying into a big, glorious vision of the future of data centers and communications on the Earth, right? You're buying into data centers being in space, using the sun's energy, solar panels, to power them, using space to cool them, fixes a lot of problems that data centers have here on the Earth. Terrestrially, there's a lot of work to be done to get that to happen. You're also sort of buying into a world where we're using devices on the surface of the Earth to communicate into space and do some of our internet and telecommunication work. That's already happening. So you're sort of buying into that big, glorious future. Starship is all about lifting more of that equipment into orbit. You need sort of Starships 100 to 150 ton capacity to get into orbit. You need them to drive down those costs of getting things into orbit. So look, I don't think Starship not working by 2027 crushes this sort of view of the future. If you're buying into the IPO and it becomes $1.75 $2 trillion IPO, and you've bought in at 90 times revenue, there may be disappointment in the marketplace. I mean, honestly, again, those valuations are crazy to me.
Yeah.
But look, you're buying into a big tech company. But if it doesn't happen by 2027, is it the end of this sort of vision of how the future could unfold? I don't think so at all. They're far and ahead in launch. SpaceX is. They're thinking about data centers in space, and no one else is even thinking about it. If it works, it could be great. And holding them to a tight timeline, I think, is a bit challenging because they are really cutting edge, and no one's competing for them on that cutting edge.
The number that really got my attention in this IPO filing was this idea of a total addressable market.
Yes.
I mean, it was like
$29 trillion.
$28.5 trillion.
Yes.
$29 trillion. I mean, at this point, what's $500 billion?
Exactly.
How do you reverse engineer that?
Look, all of the numbers are big. And I guess the beauty about that is, again, how do you reverse engineer it? And my view on it, again, look, is clearly AI and data centers has to be a persistent trend for those numbers to come true, right? And we're seeing the beginning of AI unfold. It looks interesting in some areas. In some areas I use AI, it looks off base. It does consume a lot of energy. It does have some folks that aren't the happiest with a future that's helping, being driven by AI. So I think you got to buy into AI is the future. We'll do more of our thinking, more of our processes, take the droll items off all our work plates. And then you got to buy into a world where you can put that in space and the communication to space gets faster, so there's no latency. So to be honest with you, we see those big numbers. I find them interesting. Reverse engineering them is really difficult at this point. Again, I think you really got to buy into this is a cutting edge tech company. You think you know how the future is going to unfold. Elon Musk looks like the guy that will be, steering these enterprises that will help this future unfold. But to sort of round out all of his numbers on what it means, I think it's kind of difficult. I think you're buying into Elon Musk, his vision of the future, and his ability to execute over time.
Really an unprecedented time for all of us and in markets. Thank you for those insights. George Ferguson, he's Bloomberg Intelligence Senior Aerospace, Defense, and Airline Analyst on all things SpaceX. I guess we need to have a market check now, Scarlett.
Yeah, we need a reset here.
Let's bring in John Tucker.
All right, guys, S&P 500 on track for an 8th straight week of gains. Let's go right to Treasury yields. The 2-year is up 4 basis points. 4.12 right now, as Federal Reserve Governor Chris Waller said the next rate move is just as likely to be an increase as a cut. Money markets, they're fully pricing in a hike by the end of this year. We had data today, consumer sentiment falling in May to a record low, and maybe more importantly, the long-term inflation expectations for consumers worsened notably because of the price increases we're seeing from the war with Iran. Earnings season almost wrapped up. 472 companies in the S&P 500 have reported, and of those, 82% delivering positive earnings surprises so far. As you look at the market, some of the movers and shakers, HP and Dell, best performing stocks in the S&P 500. HP up 16%, and Dell Technologies also 15% higher right now. Worst performer, Take-Two Interactive after their results. That is down right now almost 5%. Meantime, Lori Calvasina at RBC Capital Markets sees the S&P 500 rising to 7,900.
We do not expect the path to 7,900 to be linear. Remember, it's a 12-month target. It was about 7.7% in terms of a return when we put that out. And we also, have calculated the numbers recently. It's kind of been hovering around a 6% gain from sort of recent levels.
Right now, the S&P 500, 47 points higher. That's up 0.7%, 74.93 on the index. The Dow is up 397 points, and the Nasdaq Composite Index 170 points higher. Oil continues higher. Brent crude, the international benchmark, 1% higher, 103.69. And West Texas up about 72 cents, 97.07 for West Texas Intermediate crude. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Happy Memorial Day.
Happy Memorial Day. I was explaining to Isabel, because Isabel is not originally from the U.S.
Yes.
That Memorial Day is like, yay, summer. And Labor Day is like, oh, summer's ending.
Well, let's not forget, by the way, Ken, tell you, his dad won the Silver Star in the Korean War.
Actually, I'm so glad you bring this up. This is important. Memorial Day actually does.
Yeah, and it's funny.
About
when I was growing up, the kids used to say, I'm going to see my grandpa. I'm like, I had no idea what that meant. Because it was a foreign thing to me.
Right.
Mine is still in France, buried there. So, and at the Lorraine Cemetery in France, and they're very good there because if you send a request, they'll do a whole thing where they do take a picture of the ceremony around the grave marker and send it to you, and anytime free of charge. So it's like, it's a marvelous service that they do. I think it's the Veterans Administration.
Back home, someone will definitely get those.
I love that. Thank you for sharing that.
But anyway, that's for whatever that's worth.
How touching, actually.
All right, John Tucker with our Bloomberg Business Flash, an explanation of why Memorial Day matters. All right, we need to talk about what's been plaguing the bond market. Not so much the stock market, but definitely the bond market, the government bond market in particular, and that is inflation. Worries about inflation and what this means for how central banks manage their monetary policy, especially in light of the fact that government spending does not seem to be slowing down. Yeshia is one of our Bloomberg bond market reporters. I mean, he covers markets overall. That's not limited to bonds, and he is here with us. And yeah, when you and your colleagues, Enda Curran and Mark Shores, wrote about this, $50 trillion debt market, and the idea that the Iran war has upended inflation bets overall. I mean, you think about inflation, we had an inflation scare out of the pandemic. We have another inflation scare now. Is inflation scares our new normal?
Yeah, it feels like so. So just thinking last couple of years, we had the pandemic inflation, then we have the Russian war, then we have the tariff war, now this Iran conflict. So it's just wave and a wave of this inflation supply shock. Now, typically, central bank, they would think this kind of supply shock, there's nothing they can do, and they typically think this is like transitory, the famous word now. So they would sit tight and wait for this temporary effect to fade. But the problem is that we've seen these rounds of supply shock. The worrying thing is that it become like inflation psyche is becoming more deep-seated in society. Then if the inflation expectation become unhinged, then they have to hike to counter this inflation pressure. That's the market's pricing. Now we see today after the Governor Warner's comments, he dropped the easing bias. The market is fully pricing a hike in the U.S. this year.
You quoted Dario Perkins of TS Lombard in your story saying that my guess is we're entering a different phase of the monetary cycle and it'll be a hike everywhere.
Yeah, not only in the U.S., but if we look at the European Central Bank, the Bank of England, Bank of Japan, the market has all priced in several rate cuts. Australia Central Bank has already started the easy hiking cycle. So every economy is in different cycles, but these like inflation shock is global, and we see the investors are reacting to that.
Not only that, but the governments are intent on continuing to spend. You just look at the U.S. here. We have to fund this Iran war. In Japan, they have a new prime minister who is also putting her constituents, cost of living in the, as her priority. And in the UK, there's big question marks about whether there's going to be new leadership there too. So none of these governments are looking to cut down on spending or be more responsible perhaps in their spending.
Yeah, definitely. That's why we see 30-year yields across the major G7 countries now on average level has increased to the highest in 20 years, basically. And the problem is that because of this oil shock, the government probably have to respond to it, either provide subsidy to all these energy costs or doing all these things to help consumers, then it's going to worsening the fiscal situation. And on top of that, rising yields is adding these fiscal concerns. So yeah, the bond vigilante is back, I guess.
And we know that the AI boom is the reason why stocks really haven't just poo-pooed, as some people say, or worked up by inflation risk. Can you talk to us about the dynamics between the two? It seems like if you just look at the equity markets, everything is roses and rainbows and butterflies.
Absolutely, yeah. The AI, one of the things that the bond bulls are hoping for is to see the equity market to tank so that people can have safe haven flows into the bond market. But this hasn't been happening because AI is supporting all these investments, and the financial condition has been very easing, and AI spending is inflationary.
All right, Yeshia, thank you so much. Yeshia is one of our markets reporters here at Bloomberg News. Okay, you are hearing music because the swearing-in ceremony for incoming Fed Chair Kevin Warsh is just beginning at the White House. President Trump taking the lectern here as everyone applauds. He is standing in front of, I counted, 16 American flags, and Kevin Warsh is to his right. We believe that in the front row, our spies have noticed Scott Bessent, the Treasury Secretary, Sean Duffy, the Transportation Secretary, Howard Lutnick, the Commerce Secretary, Speaker Mike Johnson. So there's VIPs galore in the front 2 rows here as they applaud Kevin Warsh right now as he gets ready to be sworn in as the next Federal Reserve Chair. President Trump giving him a little bit of a fist pump there as he again makes room for everyone to applaud the incoming Fed chair.
He's being given a standing ovation, Scarlett.
I thought that was for me.
There you go. That's President Trump speaking.
I looked around and I saw they're all looking at you. I was not happy about that. That's amazing. That's an amazing audition. And I'll tell you what, it's you have the most important business people and political people that you can possibly have in one room. That soon will be a much larger room than this. We'll have a room substantially larger than this, which we really do need, because we would have had 5 times this crowd. Everybody wanted to be here, to be with you, and it's an honor. And today I'm thrilled to welcome you to the White House, the most beautiful building. I love this building. We fix it up all the time. That's the real estate business in me, and it's in tippy-top shape, finally. But for the swearing in of our new chairman of the Federal Reserve Board of Governors, Kevin Warsh. Kevin? And I expect he will go down as one of the truly great chairmen of the Federal Reserves that we've ever had. I really believe that. I think he's got abilities that very few people have. Covers a lot of territory, and he's respected by everybody, and that's so important in that position. Congratulations to Kevin and to his wonderful wife, Jane. Jane, thank you very much. Fantastic, Jane. And to your very beautiful family. You have a beautiful family. Congratulations. It's a big deal. We're honored to be joined by some incredible people. Our Speaker of the House, Mike Johnson, who is doing an unbelievable job. Mike, thank you very much. He's working very hard on the Save America Act, but I will not say that. He'll get it done, too. He gets everything done. Thanks, Mike. Supreme Court justices, and they are great. Clarence Thomas and Brett Kavanaugh. Okay. Secretary of the Treasury, he's like central casting, Scott Bessent. If we do a movie on someday we're going to need a Secretary of the Treasury. We're starring him, I think. We'll put him in there, right? He's done a good job. Secretary of Agriculture, Brooke Rollins. Brooke, thank you. Secretary of Commerce, Howard Lutnick. Thank you, Howard. Secretary of Transportation, Sean Duffy. Thank you, Sean. Acting Secretary of Labor, Keith Sonderling. Keith. CIA Director, John Radcliffe. Thank you, John. OMB Director, Russell Vogt. Russell, thank you, Russell. White House Chief of Staff, Susie Wiles. Director of the National Economic Council, the other Kevin. I was, they kept talking about Kevin, and he's a good man you're going to be working with, Kevin Hassett. Director of the Federal Housing Finance Agency, Bill Pulte. And thanks as well, we have so many political leaders, and I just see a few, and you have Tommy Tuberville, soon to be a governor, right now a very successful senator. Dave McCormick, who's a phenomenal guy, wherever you may be, Dave. Wherever you may be. Andy Barr just had a big win. He won by 40 points. Where's Andy? Congratulations. That was a big win, Andy. I'm proud of you. Did the endorsement help? Dan Muser, my friend, who's a fantastic congressman. Dan, thank you very much. Elise Stefanik. Elise. Hi. And a highly respected guy, another friend of mine, French Hill. Thank you, thank you. Also with us, former Vice President Dan Quayle. Haven't seen Dan Quayle in a long time. Where's Dan Quayle? Wow, you look good. You look good. That's nice to see you, Dan, very nice. Former Speaker of the House, Kevin McCarthy. Kevin. Good guy. Former Secretary of State, Condoleezza Rice. Highly respected. Highly respected by everybody. Me too. Former Governor Glenn Youngkin, who's done a great job. Great governor of Virginia, and they try and take it apart as fast as they can, but you did a really fantastic job. Thank you very much, Glenn. And many others, tremendously distinguished, the biggest leaders of business and the biggest leaders of politics other than the ones we mentioned. This is quite an assemblage of talent. I see the Southern District over here. Will you stand up, please, Southern District? Jay, stand up. And I don't know if our acting Attorney General is here. He's pretty busy. He's kept very busy. So if he is, well, if he isn't, I'll just tell you he's doing a very good job working together, right? He's doing a great job, actually. So no one in America is better prepared to lead the Federal Reserve than Kevin Warsh. Kevin received a degree in public policy from Stanford University and then earned a JD from Harvard Law School. He studied under the renowned economist Milton Friedman and was mentored by the legendary Secretary of the Treasury and Secretary of State, George Shultz, all legendary names, really. Kevin has worked at the highest levels of the financial world as an executive in the private sector. He did very well, and he served at the highest reaches of government as a senior economic advisor in the White House. He knows the White House very well. He's walking through the White House. He's pointing things to me that I didn't even know. At the age of 35, he became the youngest ever Federal Reserve governor. For the past 15 years, Kevin has been a fellow at Stanford's Hoover Institution, and his credentials really are second to none when you hear them, and there's plenty more. I know that Kevin has the deepest respect and reverence for the institution he will lead starting today. We're so lucky to have him. The Federal Reserve is a pillar of the world financial system and the most important central bank anywhere in the world, with a history stretching back more than 100 years. It is truly the institution that's most looked to and most respected, and it's now taken on a new and even higher respect, in my opinion. And honestly, I really mean this. This is not said in any other way. I want Kevin to be totally independent. I want him to be independent and just do a great job. Don't look at me. Don't look at anybody. Just do your own thing and do a great job, okay? Unfortunately, in the eyes of many, the Fed lost its way in recent years. It became distracted by concerns far removed from its core mission and mandate, drifting into matters such as climate policy and DEI initiatives, with the Fed straying from its mandate. While the last administration blew out the deficit, Americans suffered the worst inflation that we had in history. It was the worst inflation we've ever had. As you know, some people say you're wrong about that. It was only in 48 years, but I think 48 years almost sounds worse. The worst inflation we've ever had, so it made it very difficult. Kevin has spoken often about the need to restore the Fed's integrity by returning to a proper focus on its two functional and really fundamental responsibilities: maintaining price stability and low inflation, and achieving full employment. And we talk about it, we've talked about it often. And right now we have the most people working in the United States than we've ever had. We have never had as many people working right now in the United States, and it's something that I like to say, and it's been pretty much that way ever since I've been president. When I go back to the first term, I had those numbers too, and I kept them. And we've done things that are really amazing, but we can bring it to a new and higher level with Kevin. I think we can bring it to a level that nobody ever thought possible. By following through on this vision, Kevin will restore confidence in the Fed, which is so important, and among Americans all across the political spectrum and people from all over the world. And they're going to be looking to Kevin, probably and possibly more than any other person that's had your esteemed position before. I think that's true, Kevin. You got a lot of people watching. I fully expect that with the greatest Fed chairs before him, Kevin will safeguard the Fed's integrity. They'll make their own decisions and hopefully make them well, but they'll be listening to Kevin all the way. I really believe that. Even if they're from a somewhat different persuasion, they're going to be listening to him out of respect, because everybody respects him. Thankfully, unlike some of his predecessors, Kevin understands that when the economy is booming, that's a good thing. We don't have to go crazy. Just let it boom. We want it to boom. We want it to be like nobody has ever had before, because we do have some debt we'd like to take care of. And the way you do that is through growth. We're going to grow our way out of it so fast. And Kevin's somebody, and I feel strongly also, we don't want to see it stifled. We want to stop inflation, but we don't want to stop greatness. And so that's really a very good thing, a very positive thing, and that's what he's looking to do. He's looking to do positive economic growth. It's so important. And as we discussed, economic growth doesn't mean inflation. It can be just the opposite, actually. But economic growth does not mean inflation. You don't have to stop the world because you're doing well. Kevin's also said that he'll bring much-needed reform and modernization, transforming obsolete data collection methods, rolling back reliance on inaccurate models, and curtailing the Fed's practice of issuing so-called forward guidance. They want to do things on that. I guess it's a little complex subject, but it's something that Kevin knows about better than probably anybody here. He has the temperament and leadership abilities to foster collaboration among the entire board, and I know he will welcome robust debate. In his mission to keep prices stable and employment high, Kevin will have the full support of my administration. Every one of these people felt, including Kevin, by the way, felt so strongly about this choice. And we have no doubt, we have absolutely no doubt. So important, too. So big, so important. I just turned on the television. I want to see how the stock market's doing today. Stock market's up 600 points. That means they like you. If they didn't like you, it's actually up to 50,702. So that's as of about 12 minutes ago. Now, who knows? But I think it can only go up. I think with you, it's only going to go up. That was a number that nobody thought was reachable during my entire 4 years. If you look at some of the great pundits, they said, well, 50,000 would be impossible during the 4 years, but sometime after, we hit it in the first year, but now we're really hitting it. And think of it, it's up to 50,702. And S&P likewise set a new record today. They both set new records today, and boy, that's something good. But you're going to bring it to a much different level. Believe me, it's good, but it can go much better, and that's what I think you're going to do. In my first year, we passed the largest tax cuts in American history, the largest regulation cuts in American history, and the largest spending cuts in American history, all things that are so important to greatness. And last year, we slashed the budget by almost $500 billion. At the same time, our military was at $1.2 trillion, and we'll be doing the one thing we are going to be doing is, and we build everything in America. We build it here. It's jobs, jobs, jobs, but it's also strength, strength, strength. We're going to be submitting a military budget for $1.5 trillion. We have the greatest military in the world. I built it during my first term. I didn't know we'd be using it so much in my second term, but they gave away a little bit of it during somebody else's term, foolishly, but it's a very small part relative to the whole. But we have the greatest military in the world. I was with President Xi, and I said to him, we have the greatest military in the world, and he actually didn't agree. We had a great meeting. He actually didn't disagree with me on that very much, I will tell you. But we really do. What we've done in Venezuela, you see, what we've done to Iran. Iran is dying to make a deal. We'll see what happens, but we hit them hard, and we had no choice because Iran cannot have a nuclear weapon. They cannot have it. So I promised to cut 10 old regulations, as you know, in my first term, for every new regulation. If you put a new regulation in, that's fine, but you had to cut at least 10. And so far, and I did that. It was actually 1 to 12, so I did a little bit better. So far, we're blowing it away this year. So far, it's 1 for 129. In other words, we're cutting 129 regulations that we put in, so that's music to your ears. We don't even have to go through Congress for that. It's a lot easier. If I do it, it's a lot easier. But all of these actions are aimed at lowering costs, creating jobs, and driving economic growth. Jobless claims recently hit the lowest level since 1969. Under our leadership, 5 million people have been lifted off of the food stamps. Think of that, just in a short period of time. More Americans are working today, as I said, than ever before. And very importantly, 100% of the net new jobs under this administration have been created in the private sector, which is a number that nobody's ever achieved. Think of that, they're all in the private sector, and we did get rid of a lot of government jobs. You had jobs where there were 10 people for every single job and every single event, and they were doing all the same thing, or they weren't doing very much. And they didn't like me for a while, and now they're all working at private sector jobs, and they're making double, triple, quadruple the pay, and they're loving life, and they're loving going to work. And it was a painful experience cutting that many people from the federal government, but it's been amazing, and you just can't have that. You can never make a country, as I say, great again if you're going to have all government jobs. We're all private jobs, and the jobs are coming. We're building more plants, more equipment than anybody any president's ever done, any administration's ever done. And the number I like the best is we have $18 trillion being invested in the United States for 11 months, not 12. We haven't gotten the results from 12 yet. We're pretty new. But in 11 months, we have $18 trillion being invested, with a T, being invested in the United States. And the record was $3 trillion many years ago by a different country that I actually just left. It starts with a C. But we have, and that was 3, and we're at 18 trillion. We're building factories, car plants, everything, AI, everything, all over the country. Nobody's ever seen anything like it. And I have to say, I have to give the credit to what I used to say was my favorite word of all, but I got in such trouble because when I said tariff is my favorite word, the media went crazy. They said, what about your wife, your family? What about God? What about religion? So I said, okay, good, I'll make it my 5th favorite word, right? But because of tariffs, we have tremendous amounts of, the car companies are all coming back. They left us for 35, 40 years. They left us. We will have 50% of the chip making capability of who that man right there is. Don't stand up, will you please? But is that right? We're going to have 50% by the time I leave office, and maybe more than that. They're moving in from Taiwan, they're moving in from other places, and they're building in Arizona in particular, in that particular case. But between the auto plants, we have more auto plants under construction now than we've ever had before. We went many years and there was no plant built. And it's all due to what we did with tariffs, I guess November 5th, but all because of the tariffs and what they've done, used properly, used judiciously. So it's really something special. So we have all these plants under construction. They'll be completed over the next year and a half, and you're going to see numbers like we've never seen in this country before. No country has ever seen the kind of numbers you're going to see. And we have some of the people in this room, I look at them, some of the geniuses that are building those plants. You know, a plant used to cost, if you built a shopping center, it would cost $50 million a nice center, but $500 million a giant, beautiful center. These people are investing. You're going to have to look in $50 billion on a building for AI. $50 billion. I say, how big is it? Well, it goes 3 miles by 5 miles. In other words, you drive 3 miles, 5 miles. But it means jobs, and it's got tremendous potential for a lot of things. But when you talk about growth, no country will see, and you'll start to see that very soon, no country will see the growth that we're going to experience, and that we're already experiencing, but that we're going to experience. And one of the things that you see early on is we have the highest number of construction jobs we've ever had, and that's because they're building all of these plants, the auto plants, all of these plants are being built, including medical. Medical is pouring back in. Eli Lilly and so many of they're building 6 major plants. They're going to make almost all of their medicines here. We learned during COVID, it's not good to be held hostage by foreign countries. We're building all of these plants here. Lilly, Pfizer, all of them, they're all building tens of billions of dollars worth of medical plants. We're going to have almost all of our medicines made in our country, which is a really good thing to have. During 4 years of Biden, our country secured less than $1 trillion. Think of that, though, and we're doing $18 trillion, and everyone's talking about that because nobody's ever seen anything like it. And a short time ago, and I say this often, the King of Saudi Arabia said to me 2 years ago, he said, I was over there, and by the way, they invested $2 trillion, but I was over talking to him, getting him to invest a lot of money in our country, and he said, you know, President, 2 years ago you were a dead country, and today you're the hottest country anywhere in the world. We're the hottest country anywhere in the world, and we're going to need guidance, and you're going to give us that guidance. But all of the things that we've done, numbers that have tripled and quadrupled, and we need a really steady hand at probably, maybe in many ways, the most. I don't know. I have 2 great justices of the Supreme Court here, so I have to say, I don't know which is more important, being a justice of the Supreme Court or your job. I'm not sure about that. I'm not sure. I think I'd rather be a justice between you and I. It might be easier. You're going to find out. You'll be saying that. Well, that's a very easy job. With the support and strong and wise chairmanship at the Federal Reserve, so important, America's future will truly be unlimited with Kevin at the helm. And he's off to an incredible start with his family, with his education, with his background, with all of the things he's done. He's respected by everybody. So important is to have that level of respect where you can walk into a room and people will listen to you, as opposed to walking into a room and not having that kind of persona. He has a persona like nobody else. So I just want to say congratulations, Chairman Warsh. You are really a special person in getting this job. The people that wanted this job, the most highly trained, highly educated, some of the greatest credentials I've ever seen. And as far as I'm concerned, nobody was even close. And I just want to congratulate you. And I'd like to ask, if I might, Jane to step forward, and our very highly respected Justice Clarence Thomas to come up and swear in, give him a good oath if you would, because Clarence, we need a really good oath delivered here. Okay, thank you very much. Thank you. Please.
I, Kevin Warsh, do solemnly swear
that I will support and defend the Constitution of the United States.
This is live from the White House. Kevin Warsh being sworn in off mic by Supreme Court Justice Clarence Thomas. President Trump standing by watching this as we listen live on Bloomberg Radio and watch live on YouTube. Search Bloomberg Business News Live if you want to see the rest of this ceremony, as they may well be taking questions from those in the room. We'll find out together live on Bloomberg.
For purpose of evasion.
without any mental reservation or purpose of evasion.
And that I will well and faithfully discharge.
And that I will well and faithfully discharge.
The duties of the office on which I'm about to enter.
The duties of the office of which I'm about to enter.
So help me God.
So help me God.
you, Mr. President. This is above and beyond. It is such an honor for Jane and me to have this ceremony here in the East Room with you, sir. I couldn't ask for a more beautiful setting or a more gracious welcome, and I am grateful. I recognize, as the President said, that ours is a time of great consequence. It's also a great honor for me to have the oath of office administered by one of the great and longest-serving public servants, a brilliant and independent thinker, a man dedicated to our Constitution, and no less important, a joyful and collegial presence on our highest court, my esteemed friend, Justice Clarence Thomas. Now, Justice Kavanaugh is here as well. We served as young staffers a full generation ago in this building, and I shouldn't be speaking for another justice, but I will tell you something that I always felt, that Justice Kavanaugh and I felt the majesty of this place where we're now sitting, and we counted ourselves blessed and grateful to serve the nation we love and to do it in your building, sir. And of course, I must thank Leader Thune, Chairman Tim Scott, and his fellow members of the Banking Committee who saw me through the Senate confirmation. My whole family and I are joined by many others here today who I'm honored to call friends and colleagues, mentors, confidants. Their presence means a lot to me, and I think it means a lot to the President too. It's the honor of a lifetime to be called back into public service. And with this oath, I've accepted a high and solemn responsibility. At the swearing in of Alan Greenspan at this very place in 1987, President Ronald Reagan called the chairmanship of the Federal Reserve a, quote, great role in American life. I've known 5 of my predecessors in this job, some of them quite well, but Chairman Greenspan was the first to tell me and show me what this role demands. He recently marked his 100th birthday, and although he can't be here, I'm thinking about him today too. Like Alan, I intend to fill the role of chairman with energy and purpose, just the way Chairman Greenspan did, faithful to the mission and the very best traditions of the Fed. As you demonstrate, Mr. President, every day, energy and purpose are how big obstacles are overcome. Your greatest ambitions are for America, for what free people can achieve when they have the chance. And while I'm not naive about the challenges we face, I believe, Mr. President, these years can bring unmatched prosperity that will raise living standards for Americans from all walks of life. And the Fed has something to do with it. Our mandate at the Fed is to promote price stability and maximum employment. When we pursue those aims with wisdom and clarity, independence and resolve, inflation can be lower, growth stronger, real take-home pay higher, and America can be more prosperous. And no less important, America's place in the world more secure. To fulfill this mission, I will lead a reform-oriented Federal Reserve, learning from past successes and mistakes both, escaping static frameworks and models, and upholding clear standards of integrity and performance. Today marks a return to an institution that I do in fact cherish. It was nearly a generation ago, at another time of great consequence, that I worked with some outstanding public servants at the Fed, both here in Washington and at the reserve banks. My goal now is to create an environment in which the best people can do their life's best work, and to face every challenge in the spirit of common purpose and devotion to the national interest, in a word, to excellence.
These duties are now mine, Mr. President, because of the trust you have placed in me. I accept them with gratitude and will strive every day to serve our fellow citizens well. And in final, I'll just say I'm going to look around and try to hold on to this special moment. But after we leave this stage, the real work begins. So let's begin that work. It's an honor. Thank you again, Mr. President.
Pledging to lead a reform-oriented Federal Reserve, the 17th chair of the central bank, Kevin Warsh, in the East Room of the White House, an historic moment as it is made official in the swearing in by Supreme Court Justice Clarence Thomas. We heard it and saw it live here on Bloomberg Radio and on YouTube, where you can find us by searching Bloomberg Business News Live. Quite the crowd there as the president greets those in the front row. The music comes up. We see Scott Bessent, the Treasury Secretary, and of course, a who's who in the room, as we've already established here. Senator Tommy Tuberville is there along with David McCormick, the former Virginia Governor Glenn Youngkin, Transportation Secretary Sean Duffy, Kevin Hassett watching along, Kevin McCarthy, the former Speaker of the House, the current Speaker, got a shout out as well, and of course, Supreme Court Justice Brett Kavanaugh, a longtime friend of Kevin Warsh. With many questions still about the tenure of Jay Powell, how long he plans to stay on the Fed, what will be the Supreme Court's ruling on the potential firing of Lisa Cook, and of course, the prospect of a renewal in the criminal investigation into the refurbishments, the renovations at the Fed building, all keeping Jay Powell aboard. French Hill, of course, the chair of the Financial Services Committee in the House, getting a handshake from Kevin Warsh as he makes his way out of the room. And the president, of course, going to be leaving town now. We reportedly from the pool, the motorcade was waiting for him in the driveway with the president heading up to New York State here to talk about affordability, tax cuts, and yes, SALT, the local tax deduction. I'm Joe Matthew in Washington. Thanks for joining us. I missed you yesterday. We're back in the nation's capital. And at a moment like this, an historic moment like this, we turn to the T-Rex of finance. Tom Keene up late with us here on Balance of Power. He was watching and listening as well. And Tom, pretty noteworthy to hear the new chairman refer to Alan Greenspan. He said, the first to tell me and show me what this role demands. What does this role demand?
Well, the role demands now is politics. I think, Joe, in the zeitgeist over the last 24 hours, I've seen enough that this is the politicization of the Federal Reserve System, of everything to do in Washington. And I would say our chief Federal Reserve correspondent in the coming months, quarters, and years could be Joe Matthew and Kaylee Lines. I mean, politics is really front and center here, far more than it was a time of Chairman Greenspan.
Well, and I guess the president knows this too. You know, we ran the headline, Tom. He had to say it, and I'm wondering what you make of the way he phrased it and what he really meant. Honestly, I really mean this. That's always an interesting way to start a statement. This is not said in any other way. I want Kevin to be totally independent. President Trump says, I want him to be independent and just do a great job. Don't look at me. Don't look at anybody. Just do your own thing. Washington wasn't seeing it that way, Tom. How about you?
Oh, no, not at all. And across the country, I would suggest that we've proven that this president, you know, he mentioned it. He mentioned the stock market early in the comments. Yeah. Joe, I got a Dow up 369 points, well over 50,000. That is the measurement for this president. The key thing here, Joe, and, you know, you're going to take the entire show, I know, to balance off what Governor Waller said and this and that. But what is so important, and the president was so correct on this, our solution back to Greenspan, our solution back to 1951 and McChesney Martin, and even to Marinol Eccles at the time of the Depression in 1935, is growth leads the way. And with the high nominal GDP right now, and with the haves of America showing buoyant growth, Damian Sassower, Joe, earlier this morning talking about another bout of American exceptionalism. That's how you get out of this debt conundrum, is a Trump growth mode, and that's what he's looking for from Chairman Warsh.
Wow, really something. So where are we going to be in 6 months when the conditions are still not there to cut and we're rolling into the midterms?
Oh, I think, Joe, that we're far, far from a cut. I mean, the Governor Waller bombshell today. You talk about a lack of a honeymoon. I mean, Warsh didn't even get out of the church after the vows, where Governor Waller is talking about bringing it back to some form of neutral, the word extended using someone like Neil Dutta. I mean, Joe, you and I are the only ones working today. I think Charlie Pellet showed up. You'll have him on later. But, Joe, Neil Dutta's working today at Renmac, and he wrote a blistering note that this is going to be an on-hold Fed. And there's other ways, Joe, to become more restrictive besides overt policy. And as you say, over the next 6 months, that will be what Chairman Warsh has to go from meeting to meeting with, is the idea of, are we in the system restrictive, or do we need to go more restrictive with rate increases that 1600 Pennsylvania Avenue would not be happy with?
You better take Truth Social off his phone if that's the case. Tom, what about Jay Powell? Does he just fade away like a pair of blue jeans? What's going to go on?
I played Grateful Dead in the show this morning, Alabama Getaway for Chairman Powell. He's Chairman Powell. It's Governor Bernanke, Chairman. I get the titles mixed up, but it's odd and unusual that it will be Governor Powell. What I would suggest here, Joe, for those that aren't students of the game, every central bank is different. And is this a Warsh central bank that will be very British-like? And that will we see a new bout of dissent and debate, whether overt or quiet in the back halls, maybe alluding to the time of Greenspan, but will we see some new regime of dissent, which harkens back to the derby that goes on week to week, month to month at the Bank of England?
Yeah, really something. I don't know what's going to happen with Jay Powell. Obviously, none of us do, but I just wonder how he will be remembered and how long it might take to get rid of the political noise around his tenure now. I mean, in 5-10 years, is everyone talking about too late Powell?
I don't think so. There's two camps on this, okay, and I think people know the camp I'm in. There's a camp highly critical of Chairman Powell. Yes, transitory and all that, but you know, the cards were dealt, and there's a lot of criticism of Chairman Powell. I'll speak for Michael McKee and suggest Mike McKee and I are not in that camp. Joe Matthew, I'm far more accommodative of the tough decisions, even right or wrong, that had to be made. I will point this out, and this is something that never goes away. Warsh up on stage just now in the East Room, Joe Powell up on stage, I believe it was in the Rose Garden ages ago.
That's right, yeah.
They're not part of the priesthood. This is very important. You look at his Wikipedia, Warsh wanted to do Stanford economics with John Taylor, Boskin, the giants, Schultz was mentioned, the giants of Stanford economics. And his father had his Bart Simpson total cow and said, no, you're coming east to get a law degree. So maybe he's got an asterisk, but at the same time, Warsh and Powell share in common that they're not a full-blown PhD economist like the king of game theory, Waller of Washington State, or Clarida of Illinois on to Columbia University.
Really fascinating. You put that all together here, Tom. This is a Fed chair who wants to get rid of the dot plot, right? No, not so much Fed speak. We're gonna. Is that all going to happen?
I'm not going to get out in front of that. McKee is expert on that. I'm less expert. Everyone knows I'm not a fan of the dot plot going way back. Certainly you're going to see some changes.
But tell us why, though, because that makes, what improves when we put the genie back in the bottle? Brilliant. Stop talking so much. What do we get for that?
I'm looking at the control room here in New York. I'm never doing this show again. Joe's going to get me in trouble. The problem, Joe, is too much information. It's like your kids at home. You know, your kids are well-behaved, mine aren't. But the answer is there's too much information, and can we all do a little bit better with less information? That's the heart of the debate. Now, Chairman Warsh mentioned the dual mandate. They're two movable themes. Do we go back to the time of Greenspan? Lawrence Meyer of the Washington University in St. Louis wrote a beautiful small book, Joe, ages ago, a term at the Fed about the silence and the power of Greenspan within the Greenspan Fed. I don't hear anybody saying go back to that. Will we be something new? I would suggest yes, there will be something new at the Warsh Fed. I'm not sure I know what it is.
That shouldn't be so controversial. I'm with Tom Keene. It's great to have you back, sir. Thank you. I hope you can go have the surveillance nap and a long weekend.
We're going to have the surveillance nap and a long weekend. Maybe the Red Sox will win this weekend. You never know, Joe.
We're just going to be real careful with that. Great to see you. You know, it's a big one when we have Tom Keene with us here on Balance of Power, and we learn something every time we talk to Tom. Remember all of that, because we're going to come back to these issues a lot over the coming months here, and exactly what the vision is that Kevin Warsh has for this Federal Reserve, how close he can actually come to making that work. We've got a great conversation on the way with Rahm Emanuel. He's going to be with us in a moment. We want to just set the baseline on Wall Street. We haven't heard from Charlie Pellet yet. And after all that talk with the president and Kevin Warsh, let's see where we are, because the numbers look pretty good right now. President referring to Dow 50,000, Charlie Pellet. We're pretty far above it right now. What do you have?
Absolutely right, Joe Matthew. 50,686 right now on the Dow. All of this with Kevin Warsh as Fed chair. You heard him being sworn in right here on Bloomberg. Oil is higher, and so are stocks. In the meantime, do you want to begin with a headline? Breaking news right now on the Bloomberg. Uber said to be studying options for a full takeover of Delivery Hero. Delivery Hero shares higher in Germany, 52-week high right now. Looking at Uber in the U.S., trading lower, down now by 2.9%. Rival Lyft is advancing by 0.3%. Bottom line here, S&P 500 index on track now for an 8th straight week of gains. No record. The number to beat would be 75.01. That was the closing high last week on the S&P. 74.90 where we stand right now, up 0.6%. The Dow at a record up 0.8% above 50K. NASDAQ up 144 now, up by 0.5%. We have got the 10-year currently yielding 4.56%. 2-year yields hitting the highest since February of 2025. The 2-year 4.12%, and the 30 5.07%. Again, West Texas Intermediate crude advancing, up 97 now, up by about 0.7% at $97 a barrel, up 0.7. We've got Brent crude at 103.45, up by 0.8%. Bottom line here, rally underway to wrap up another winning week for stocks. I'm Charlie Pellet. Back we go to Washington. Balance of Power continues right now. And once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet. We'll have more on the markets in just about 15 minutes time, a little bit less than that. We got to Charlie kind of late here as we keep our eyes on the prize. And by that, I mean the price of gasoline. $4.55 today nationally. The price on this 22nd of May. Yes, that means we're about to do the big driving holiday this weekend, right? And as I read here, you know, they do these studies every time we get to the Memorial Day or 4th of July, Thanksgiving. How many people are going to go out on the roads? I don't know where they come up with these numbers. But 45 million Americans, we're told, an estimated 45 million will travel at least 50 miles over the holiday weekend, up from 44.8 million in 2025, just under 43 million in 2019. Gas Buddy says for the average American, they're going to be paying well over $1 more than they were a year ago, right? We're about $4.50, as I mentioned. That's up from $3.14 last year, if you're keeping score and playing along on your home game. And knowing that Republicans are very busy trying to redraw maps across the country and Democrats are trying like heck to keep up with them, there's a thought that you've heard on this program before, that the fundamentals in this race will outweigh the technicals. Broadly speaking, in the midterms, the issue of affordability, energy prices, a war that is not popular with the American people, not to mention the attempt at reforming ICE and all the rest, will come together in a wave election that will leave the congressional maps irrelevant when it comes to the final score. We've got 6 months to figure that out. And I was delighted to hear today that Rahm Emanuel was going to join us. I don't know how we put the titles in correct order here. I will always think of him as President Obama's chief of staff, but you might think of him as the mayor of Chicago or maybe the ambassador to Japan. Either way, he's with us right now, and the state of the Democratic Party. Rahm Emanuel, I understand you can't turn your camera on. Welcome back to Bloomberg. Yeah. It's great to see you, and I'm wondering your thoughts on this. Now that we've got this autopsy in hand, do you have the message that outweighs the maps?
Yeah. So you asked two questions. One is, look, I've seen more thorough reports, autopsies from a local coroner's office than that. And you knew more about what happened in 2024 before that autopsy was issued. And everybody acts like this is complicated, but I want to be straightforward about this, having worked on President Clinton, President Obama's both election, re-election, and taking back the House and making Nancy Pelosi Speaker, which is, we're a minority party. You want to win? You got to find common cause with independent voters. Second, in the last 3 presidentials, 7 states, 500,000 voters have decided who's president of the United States. They're all swing states. So you can't win based on Democratic votes. You got to find common cause with independents. 3, that is true for Senate candidates, and it's true for House candidates. You're going to win or turn a red district to a blue district or a red state to a blue state senator. You're going to have to win in places Democrats aren't just talking to Democrats. That's it. That's the combination of luck. And they both, by candidate, message, and capacity, find the common ground that builds a broad-based majority coalition with independent voters. And getting caught in what I call the cultural wars, where we decided to have cultural wars into our schools, we lost. And our kids paid the price for it. Don't worry about bathroom access. Start worrying about classroom excellence. You'll find out that's where parents are. Stop talking about defunding police and start talking about better policing. That's where the residents of all major cities and counties and communities are. Stop worrying and debating with your college faculty lounge on whether the term Latinx applies. Nobody cares. Start talking about what matters to people, that their kids get a college education, have $30,000 in debt, are living now in the basement, and that you're not having your best years and they're not having their best years. Your health care, you spend, your doctor says X and your insurance company says X minus. Come on. That's where the world is today, and focus on it. It's not that hard.
Does the unapologetic progressivism, democratic socialism of Zoran Mamdani challenge that view, though? What happens if Democrats go full liberal, or is liberalism dead?
Joe, I mean, look, let me just say this. The same day that this autopsy came out, which again, I wouldn't even use for cat litter, and I don't have a cat. The New York Times have had a poll of just Democratic primary voters. They told you what the Manhattan Institute poll said of 2,500 primary Democrats, and what the Third Way 1,500 Democratic poll said. All 3. 50% of the voters in the primary self-describe or want a more moderate, pragmatic candidate, which helps you get independent. Only 25%, that is less than 2 to 1, want us to go, quote unquote, left. They want us to be quiet and be more mainstream on immigration, on crime, on trans issue, and what I call the cultural landscape, where we made ourselves look like a caricature of a stereotype of ourselves. So when you say to me, and I would say this to everybody that covers, the left, the fact is, in politics, sound is not always fury. Do I believe that there's more sound in and around the cultural left and the quote-unquote progressives? Yes, but look at what primary voters are telling you about themselves. Now, I will tell you, historically in the party, when we are out of power, you know what the number one ideological check that people care about? It's not left or center. It's winning. Winning. That's our primary
I'd love
ideological.
to be able to. I want to have this conversation with you in an opportunity where we can see each other and spend some time.
Yeah, I don't know what
Rahm
happened
Emanuel,
here.
thank you for joining. That's all right. We're going to figure it out, because I'll come find you. We'll do what we have to do. I want to get to the bottom of this and spend some time with Rahm Emanuel here on Balance of Power. Thank you for chiming in. Our panel's next, only here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks trading at a record right now with the Dow Jones Industrial Average up 413 points to 50,697. That is a gain of 0.8%. The S&P 500 index trading at 7488. It is up 42 now, off session highs up 0.6. The old record set last week on the S&P 7501. Right now, NASDAQ is up 126 for the NASDAQ Composite Index. That is a gain of 0.5%. The Russell 2000 Index doing a little bit better right now. Small cap shares advancing. The Russell 2000 up by 0.9%. The VIX now below 17 with a 10-year 4.57%, the 2-year 4.13%, the 30-year 5.08%. Gold down $24 the ounce to $45.18, down 0.5%. And West Texas Intermediate crude higher today, $96.92 for a barrel of WTI, but below $100, up 0.6%. Barrel of Brent, $103.41. Brent crude up by 0.8%. Hopes for a deal between the U.S. and Iran that will turn a fragile ceasefire into lasting peace, fueling today's optimism. As for the market backdrop, Tiffany McGee is Chief Investment Officer at Pivotal Advisors, and she was interviewed this morning on surveillance.
The markets are like trying to really price in multiple things at once, right? So AI-led earnings power, Fed patience, we've got geopolitical energy risk. That's a lot to digest before coffee. Then you throw in some election year noise and a new Fed chair for good measure, and these things aren't really going away anytime soon.
Tiffany McGee of Pivotal Advisors interviewed this morning on surveillance. Standard Chartered CEO Bill Winters has apologized now for his comments about AI affecting, quote, lower value human capital after those remarks spurred public backlash. Shares of Standard Chartered down today by 0.7%. Again, recapping. S&P trading higher, Dow at a record, NASDAQ is also advancing. Crude oil, though, also gaining as well. West Texas Intermediate, 96.89 a barrel, up by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that Joe Matthew is a Bloomberg Business Flash.
All right, Charlie. Good to see you, my friend. Happy Friday. Charlie will be back at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the conversation. Keeping tabs on another BAFO rally today. Micron has got a bid, and I mention that because the stock has been on such a tear, along with all the storage names. It's up $1.50 right now, trading back above $763. This is a stock that is up 142% year to date and is up 700% year over year. Parabolic because we've got a data storage shortage, and it has been feeding stocks like Micron, SanDisk, Western Dig, you know the whole story. Micron's the American company in this mix, though. And 1 hour from right now, we're going to have the CEO, president, and chairman on the air here. Sanjay Mehrotra is in Northern Virginia, in Manassas, with Bloomberg's Tyler Kendall. He's visiting a new wafer manufacturing facility out there that's going to be starting a new kind of DRAM, and we'll talk to him about that 1 hour from now. He's actually out there with members of the administration in Manassas, about an hour outside of the city here. Micron Technology on the way. We're also going to have a conversation in our next hour with the former president of the Dallas Fed, Rob Kaplan, on this day that Kevin Warsh was sworn in. He is now officially the 17th chair of the Federal Reserve. Donald Trump didn't swear him in. If you were with us a little while ago, top of the hour here, you saw Clarence Thomas, the Supreme Court Justice, take care of that. Big questions now as the president leaves the bubble. He's going to talk affordability in New York State with Mike Lawler and others. There are big questions about what is going on Capitol Hill and whether the president has found the line. Two important things happened yesterday. Number one, they all left. They bailed. I'm sure we're hearing references to jet fumes while I was gone yesterday. In, yes, their attempt to craft a reconciliation bill that will fund ICE and border protection. Reconciliation 1.0. I haven't even brought up the ballroom. That was supposed to go in there too. And the president said he wanted it on his desk on the 1st of June, right? That was the Truth Social post. Well, that's probably not going to happen. This is Memorial Day weekend. 1st of June is just about a week away, and they left without crafting the plan. What also took place was a war powers vote that came so close to passing in the House, Republican leaders had to pull it. They yanked Gregory Meek's war powers resolution because it appeared with 10 GOP absences that this thing might pass. And we learned something else in the process. Brian Fitzpatrick, Republican from Pennsylvania, he said next time it will pass because it seems he's on board now. Along with Tom Barrett of Michigan, Tom Massey, you shouldn't be surprised there. Donald Trump was asked about this. Have you lost your juice with Congress? When he spoke with reporters in the Oval yesterday. Listen.
Are you losing control of the Senate Republicans?
I don't know. I really don't know. I can tell you, I only do what's right. I don't need money for the ballroom. You know, I'm making a gift of the ballroom. We're on time, on budget. It's going beautifully. I have all the money I need.
Okay, so he did talk about the ballroom. $1 billion. That's why he pulled reporters out there the other day. We weren't supposed to see that construction site, and now it's being used as part of the sales pitch. You can't stop it now. And a lot of people think that taxpayer money should be used in this case for ethical reasons. President says, as you just heard, I don't need money for the ballroom. It's a gift. He's also suggested that a massive military complex is being built underneath it, and that's why we need to finish the job now. He's compared the ballroom to a shed that will protect something important below. It does not look like that's going to get in the bill. Republicans have an allergy to this idea. They've got to go on the campaign trail and justify it, just like they would any number of other ideas that the president has, including this slush fund, as it's being called, the DOJ, to give money to those who have been wronged by the government. Let's whip this all into one big Friday shake here with our great panel. We've got a good one for you. Bloomberg Politics contributor and Democratic analyst Jeannie Shanzano is with us, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. And Lisa Camuso Miller is back, Republican strategist, senior advisor, Rock Solutions, and founder of Friday Reporter Public Affairs. Ladies, it's great to see you both. Happy Friday. Jeannie, you could hear Rahm Emanuel smiling, even though you couldn't see him on camera, when I was talking about the messaging that Democrats could potentially enjoy this cycle. Can they add this? Has Donald Trump lost Congress?
He could have. I mean, it's hard to tell. Listen, all of these Republicans in Congress, they know what they've signed up for. We've been at this for 10 years now. So I am not convinced that their movement away from Donald Trump in the last 24 hours is going to hold. But yes, absolutely, Democrats can use this because, of course, what is Donald Trump? What is the GOP saying, more importantly, as they go out on the campaign trail? They are saying, and we just heard Trump say it in the swearing in for Warsh, we have $1.5 trillion to put in the military. We have $1 billion of your tax money for a ballroom. We have 1.776, very cute, billion for this slush fund. And yet, as he said on Easter morning, we can't afford Medicare, Medicaid, Social Security, all of that stuff we've got to cut right out of the budget, cut your health care. We can't give you a pittance, but we have all this that we can spend. That's what the GOP has had to run on at this point. And so, of course, they want to run away from it.
Lisa Camuso Miller worked in a Republican speaker's office, not this one, a prior speaker, and knows the significance of pulling a bill like this. Lisa, what did you think when you saw Speaker Johnson yank the War Powers bill because it almost passed? Does that mean it will next time?
You know, what happens when members go home, Joe, is actually quite interesting. It's going to be a little bit of a, clearly the speaker has the power to do that, and he did it, and for good reason. He knew it wasn't going to pass and wasn't going to be favorable. But when members go home and they start to do the work that they do in the district work period, which is what they're headed to do now over Memorial Day weekend and all next week when they're sitting down with constituents, it's going to be interesting to see how they feel when they come back. And it's remarkable how a district work period like this can sometimes change the hearts and minds of how people feel about a piece of legislation. I'm not necessarily thinking that it's going to make people feel great about the War Powers package, but I do think that it could very well change the atmosphere around how people feel about it, and could very well give the speaker an opportunity to make the case for why it should go the way he'd like to see it go when they return.
Really interesting. This is after a similarly worded resolution actually moved ahead in the Senate. I was really struck to see that happen, and look no further than Bill Cassidy the other evening here, Jeannie. Some of these decisions that the president has made to go against incumbents like Bill Cassidy, like Tom Massey, can splash back on him in a very difficult way. This would be one of them, right?
This is, I think the biggest example of that, and you just mentioned Cassidy, is of course Cornyn. I think that really struck senators on the GOP side. I mean, Cornyn has been a guy who has ushered through as whip at one point some of Donald Trump's most important pieces of legislation. He is a friend and colleague to so many of these people. You had the majority leader spend, I heard $90 million on Cornyn. And yet just the other day, Donald Trump announces he is going to back his challenger, Ken Paxton, somebody who many people feel is going to make it much harder for Republicans to win that Senate seat in Texas. So I think that environment matters a lot. And, you mentioned before, Brian Fitzpatrick. He is, of course, one of the most vulnerable members of the House from Pennsylvania. And what did Donald Trump do just hours ago? He threatened to primary Fitzpatrick because he didn't like a question that Fitzpatrick's fiance, who's a reporter at Fox, asked him. And of course, now, bad news for Donald Trump, that primary already happened, so it's not going to really yield much for him. But this is like the danger that you run when you play this game, is all of a sudden you've cut these people loose. They have nothing to lose. And that's where Donald Trump finds himself today on this. And to Lisa's point, as these members go back home and they get an earful from people who are struggling to pay their bills. And, I was hearing Paul Begala talk about focus groups with Republicans in Iowa. Things like the ballroom resonate with people who don't follow Washington, D.C. Those are the kinds of things they're hearing about.
Well, it certainly makes for an easy talker here. People hear about the ballroom, and, this is the stuff that talk radio runs on, Lisa, which is why a lot of people are wondering why he went there to begin with. I want Lisa to weigh in on Texas, though. We were down in Atlanta when that story broke. It was primary day. And we, at the time, were surveying a number of races the president had chosen to endorse in. And in some cases not, like the runoff now for the governor of Georgia. I wonder if, maybe he will pick a side in that one. But what does this mean for John Cornyn, Lisa? Does it guarantee a Ken Paxton win in the runoff? Or is there a moment where Donald Trump can go too far and voters remind us that they don't like to be told what to do?
If it were any other state, Joe, I might go along with the concept that perhaps Cornyn could be successful. But the way that Texas works and the way that Texas stands very firmly behind Donald Trump, it seems like the uphill battle has gotten increasingly steeper for John Cornyn, which is a tremendous loss, not just for the Senate, but for the Republican Party. He has been, as you said, in the leadership, not just when you elect a brand new senator, even if Ken Paxton could be successful over James Tallarico, he's a brand new senator. He doesn't have as much of the institutional knowledge. It's a loss to the U.S. Senate. It's a loss to the country to lose someone like John Cornyn. I know we're living in a populist time when people don't want to see the same old. But John Cornyn does not represent that. He represents someone who has a tremendous knowledge and understanding about how the Senate works, what the country needs, how the Constitution is all overlaid and all of that. It's a big loss. But when you're the president, this president specifically, he sees it as an opportunity for him to demonstrate his power and his leadership. And he believes that Paxton, for him, the president, is the better candidate because it's someone that he knows can be more of a voice on behalf of the Trump administration.
Just got about 30 seconds, Jeannie. Is it easier for James Tallarico to beat Ken Paxton, as the conventional wisdom suggests?
It is easier, certainly not a sure thing, but I agree with Lisa. I think all marbles are on the fact that we're going to see Cornyn lose this primary likely on Tuesday, and then Talarico has a slightly easier time. But it's Texas. Come on, I bet on Texas all the time, and we always lose as Democrats in Texas. Maybe not this time.
I think you owe Rick Davis a couple dinners on that. We'll save that for another show. I don't know anything about it. Jeannie Shanzano, Lisa Camuso-Miller. We'll be back in our second hour. We've got a great panel and a lot of news to discuss as Kevin Warsh is sworn in, and some breaking news on Iran. We'll have it for you coming up ahead on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The president gets his man at the top of the Fed. Welcome to the Friday edition as Kevin Warsh is sworn in as the 17th Federal Reserve Chair at the White House with an ever more challenging environment to potentially cut interest rates. We're going to discuss it all with Bloomberg's Michael McKee with insights this hour from former Dallas Fed President Rob Kaplan, he'll be joining us from our Dallas bureau. The Ayatollah says the highly enriched uranium cannot leave Iran. And with the strait still closed, we're going to talk about the conflict and what might lie ahead this weekend with Michelle Bruhart at Kepler. And later, an important conversation with the CEO of Micron Technology. He's going to be joining us from a wafer plant in Manassas, Virginia today, where he's joined by administration officials. And all of this follows our check on Wall Street. Charlie Pellet has that for us live from World Headquarters in New York. How's it look, Charlie?
Right now, we're looking at a record on the Dow Jones Industrial Average. You mentioned Micron. Ahead of that conversation, we do have Micron shares up now by just about 1%. But the Dow, the S&P, NASDAQ, all pushing higher. As you heard right here on Bloomberg, Kevin Warsh is now Fed chair. The Dow at a record. Stocks are pushing higher, and so is oil. S&P 500 index close to a record 74.91 right now. That is a gain of 45 points, up by about 0.6%. The Dow at a record of 419, up by about 0.8%, while the NASDAQ Composite Index up now by 144 points, up 0.5%. The 10-year 4.56%, the 2-year 4.12%, and the 30-year at 5.07%. Gold is down 0.5%. 45.18 the ounce, while West Texas Intermediate crude higher, little change. WTI right now at 96.46 a barrel, up 0.1%. Barrel of Brent crude 103.10, up by 0.5%. Earnings from two names frequently encountered in the office. Workday, which is a maker of workplace management software, posted better than expected results in the first quarter. Workday shares, they're up now by 5.3%. And we also heard from Zoom Communications. It projected stronger than anticipated sales growth, suggesting that customers are adopting its expanded suite of Office products. Zoom shares up by 11.3%. Again, recapping here, we've got the 10-year at 4.56%. West Texas Intermediate crude is trading higher by 0.2%, 96.54 a barrel, and the S&P higher by 48, up 0.6%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie Pellet will be back in about 20 minutes with the latest on the Friday trade. And Charlie, we thank you. Welcome to the Friday edition of Balance of Power on Bloomberg TV and radio. We're live from Washington following our stay this week in Atlanta, and Kevin Warsh is now installed. You saw it and heard it live here on Bloomberg. A short time ago in the East Room of the White House, there were some questions about the choreography, who would handle the swearing in. It was not Donald Trump. He delivered introductory remarks. The Supreme Court Justice Clarence Thomas actually came to the stage and swore Kevin Warsh in as the 17th Federal Reserve Chair. The message from the president, as we read in the headline on the terminal: do your own thing. Listen.
I want Kevin to be totally independent. I want him to be independent and just do a great job. Don't look at me. Don't look at anybody. Just do your own thing and do a great job.
With questions about independence at the top of the Fed, we highlight that comment because you know it will be played back many times, considering conditions economically that will make it very difficult for Kevin Warsh to cut rates anytime soon, as the president has indicated. But you've also got a new chair who has promised reforms at the Fed. And that's where we start our conversation with Michael McKee, Bloomberg's international economics and policy correspondent. This is the man who's going to be asking questions of Kevin Warsh, should he choose to hold news conferences at his meetings. Do we actually know that, Mike? Has he said he'll keep doing the news conferences?
We don't know that. He has said in the past that he thinks that they could be eliminated or they could be cut down. There are good reasons why you probably don't want to do that. So I think he will probably begin his term, at least, with the news conferences. But we'll find out on June 17th.
How did you read the remarks of the president today? Will he be able to, quote, do his own thing?
I suspect for a while it is pretty obvious that you can't cut interest rates right now with inflation going up and up and up. And Scott Bessent's been vocal in saying that he understands that Kevin Warsh can't do that right away. But the question is, at what point does the president get back on track? I might point out that if you were on one of those prediction markets betting about when the first tweet would come about Kevin Warsh, it's already happened. The president's put out on Truth Social that he thinks that Kevin Warsh will be one of the truly great chairmen of the Federal Reserve. But he has not commented on interest rates and Kevin Warsh yet.
Warsh referred to Alan Greenspan in his brief remarks in the East Room. He said, Greenspan was the first to tell me and show me what this role demands, and I'm thinking about him today. Like Alan, I intend to fill the role with energy and purpose. Was he talking about the personal demands on the Fed chair?
I think he was, but there's also a lot of professional demands as well.
Yeah.
And Greenspan was in office for 18 years as chair, so he would know a lot about what it takes. Greenspan also was the one who drove the transparency at the Fed, beginning with the first statement in 1994, and then up through expanding the statements and changing the dates of the minutes. He didn't start the news conferences. That was Ben Bernanke. But Greenspan did set a sort of example that maybe Kevin Warsh wants to follow to a certain extent.
I can't imagine Alan Greenspan holding news conferences. Michael McKee, we've got a breaker here that does not involve the Fed. Fox News is reporting that Tulsi Gabbard is out, resigning as President Trump's director of national intelligence. I will note that many didn't think Gabbard would be confirmed for this role to begin with, considering her stand on Syria, the comments that she's made before about a potential war in Iran, apparently making this more difficult. Whether this comes to fruition and is in fact confirmed by the White House or Bloomberg News for that matter is a different thing. This is a single source, Fox News, saying that Tulsi Gabbard is out, not fired, but resigning as the director of national intelligence. And we'll have more for you here, of course, as we learn it. What about reforms at the Fed? Michael McKee, the president talked today about a reform-minded chair, and he's suggested that he would like to see and hear less Fed speak, that the criterion for rate changes might be different, the dot plot might go away. Would those be difficult changes for him to make?
Some more than others. It's certainly going to be difficult for him to shrink the balance sheet as he would like to do. And it may be hard for him to tamp down on the speeches that open market committee members make, particularly the regional bank presidents, since they feel they have a constituency they need to talk to in their districts. He may be able to get rid of or adjust the dot plot or the way they do the summary of economic projections. And he may be able to change some of the inflation measurements that they use, but it's unlikely they will get rid of the PCE as the main index for the 2% target, because there's not anything that's necessarily proven better. And at this point, it is so embedded in Wall Street that it might send the wrong signal if they change that. So, you know, he can do a few things tinkering around the edges, but he's going to have to build up a lot of credibility. I mean, you saw Chris Waller today sort of almost say in your face by coming out and changing his position and saying, well, I think we could maybe have to raise rates if inflation keeps going up.
You don't see that happening, though, either.
Well, Chris Waller doesn't necessarily see that happening, but he admitted that if the war keeps going and inflation keeps rising, then inflation expectations would rise. And we saw that today in the Michigan sentiment survey. It doesn't get as much credibility as it used to from the Fed, but it is a sign that Americans are worried about inflation. And if they start thinking the target's not 2%, but it's 3% because it can't get to 2%, et cetera, then the Fed's got a problem. And so they might have to consider raising rates.
Yeah, amazing. Rest of this year is going to be a doozy, and Michael McKee is instrumental in helping us understand it all. It's great to see you, sir, and I hope you have a long weekend. Bloomberg's international economics policy correspondent. He'll be down in Washington whether or not there's a news conference for the next Fed meeting, I can tell you that. With reporting, if you're just joining us now by Fox News, that Tulsi Gabbard is out, resigning as the DNI, the Director of National Intelligence. We're trying to learn more on this as we speak. And whether the White House confirms this today. The president does have a public event, as I mentioned, a couple of hours away in New York State. He's going to be talking about tax cuts, affordability, and SALT, alongside Congressman Mike Lawler, the Republican from New York. As we turn our attention to the aforementioned war in Iran, as Michael was just suggesting, it's showing no signs of ending here. The strait is still closed, and we've got $4.55 to show for it for a gallon of gasoline. There are a couple of interesting stories today as the UAE joins Saudi Arabia and Qatar in urging President Trump not to restart the war. Fascinating, with reporting that an attack on a nuke plant in the UAE has raised a lot of fears about Iran's threats to start responding and targeting areas outside of the Middle East, beyond the radius that we have seen so far. Now, as soon as I mention this, the president's got another voice in his other ear, and it's coming from the Senate Armed Services Committee chair, Roger Wicker, a Republican in Washington whose words bring a lot of weight, saying that the U.S. should finish the job in Iran. Quote, "We are at a moment that will define President Trump's legacy." The chairman says his instincts have been to finish the job he started in Iran, but he's being ill-advised to pursue a deal that would not be worth the paper it's written on. Our commander-in-chief needs to allow America's skilled armed services to finish the destruction of Iran's conventional military capabilities and reopen the strait. Knowing the president has said 2-3 days, maybe even this weekend, the U.S. may resume strikes here. That's where we start our conversation with Michelle Brohard, the head of policy and geopolitical risk at Kepler's, with us now on Bloomberg TV and radio. Michelle, when you hear words like that from the chairman, what does it tell you about what might happen this weekend?
It does raise the risk of escalation going into the weekend. We do have a long weekend, and I know every time we start to see escalation, it typically is on the weekend when the markets are closed. And because the markets will be closed on Monday, it does give a little bit of more of a timeline or runway for the president to execute military strikes on Iran again. But can he finish the job in 3 days? What does finish the job actually look like is also another question I would really have, and probably a question the president would also have. What does that look like? Finishing the job most likely looks like coming up with a comprehensive deal rather than eliminating Iranian military.
Yeah, or attacking power plants, for instance. Here's what the president said yesterday, Michelle, in the Oval Office when he was asked about the strait. Listen.
We have total control of the Strait of Hormuz, as you know, with our blockade. The blockade's been 100% effective. Nobody's been able to get through. It's like a steel wall. And this is with the Iran conflict. That'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before.
That will end very soon, which we've been hearing since the beginning of this. And the president said we'd do this the easy way or the hard way. But I'm struck by this attack on the nuke plant in the UAE. That said a drone targeting the plant was launched from Iraq. They called it a terrorist attack, and there are real worries about what this means for Iran's proxies. Michelle, it's kind of like the war on terror, as you hear. They only have to be right once. We have to be right all the time. Iran knows where the short hairs are. They send a drone at a nuke plant in the UAE. It changes the entire landscape. They put a speedboat in the strait, and we've got our entire Navy out there, and it can change the course of this conflict. How do you compete with that?
I don't think you can. I think you really do have to get to some sort of diplomatic deal. And what does that diplomatic deal look like? I know that the president's red line is uranium. Iran's red line looks like being able to control the strait. And I think they could reach that incremental mini deal, which has been proposed several times, where Iran can implement a toll booth or some sort of structure around controlling the strait while they work on the remaining nuclear issues in the future. That probably feels a little bit more peaceful than allowing Iran to initiate proxy wars and the U.S. bombing power plants and bridges. Escalation isn't going to solve the problem. We have to get to a point where we can have diplomacy to solve the problem.
Will the proxies widen this war first?
It looks like they're working on it. We haven't seen any action from the Houthis, and that's where I'm waiting. The Houthis have been relatively quiet. Iraq coming into the game over the last week or so is new. It could just be a warning across the bow. Like, we have this option and we have this optionality, and it's not just Iraq, it's also the Houthis, it's also Hezbollah in Lebanon. So Iran might be just reminding the president that they do have options other than just controlling the strait or trying to navigate around the current naval blockade.
When the president was asked earlier this week about his intentions and the potential for resuming military strikes, he said 2 or 3 days. Maybe it's Saturday, maybe it's Sunday, maybe it's the holiday. Could we be back at war on Memorial Day?
Yes, we could be. It feels like it's so binary. We could either be back at war or we could have some sort of mini deal. And it looks like, because the Iranians have said uranium is not an option for them, it looks like we're heading more toward escalation. Could it last 3 days? It seems like 3 days is a short amount of time in order for him to finish the job, if that's what the arrangement is supposed to be. But 3 days also is enough time for Iran to activate their proxies.
I'm really glad you could join us, Michelle. It's good to talk to you. She's the head of
Thank you so much.
policy and geopolitical risk at Kepler. That is Michelle Brohard. Thank you for being with us on Balance of Power. I'm Joe Matthew in Washington as we get back to the breaker this hour. Still waiting for more information as Fox News reports that Tulsi Gabbard is resigning as the president's director of national intelligence, knowing that this has been a controversial figure since before she was even confirmed. Knowing as well that several members of the president's cabinet have been dispatched. And we wanted to spend some time with Jeff Mason, of course, Bloomberg's White House correspondent, who's been all over the recent developments and the changing contours of the administration. Jeff, it's great to see you.
You too.
A lot of folks thought Gabbard wouldn't be confirmed to begin with because of her stand on Syria, because of her opposition to a war with Iran, not to mention some of the conspiracy theories, frankly, that she had been associated with. There's been so much water under the bridge since then. I'm wondering what you make of this now.
She's certainly a controversial figure and has been for a while. It doesn't seem surprising that she's leaving. She's been sort of at the top of our watch list for potential administration officials, cabinet members who would be going. One thing that's been a little bit of a tell on that is that she really has not been part of the public conversation about Iran.
That's true.
Right? You haven't seen her in the meetings. You haven't seen her in press conferences. And
the DNI would typically be part of this.
She's the director of national intelligence. Absolutely. I mean, the agencies that report up to her are giving intelligence to the Pentagon and to the White House about Iran and the war. So that's been interesting. According to Fox, she cited her husband's cancer diagnosis as the reason that she's leaving. Also notable that she's a woman, and most of the big departures from President Trump's cabinet in the last month or so have all been women.
This is a job that maybe not everyone is familiar with. Yeah. She was well known before she got this job, but DNI isn't like Defense Secretary or Secretary of State for a lot of folks to understand what that means. But everyone remembers the picture of her in Fulton County.
Yeah.
People remember her testifying about her views on Iran.
Yeah.
Were these the breaking points?
It's hard to say. It's possible. I mean, it's certainly, especially perhaps the disagreement over Iran is not in lockstep with the messaging that President Trump has certainly been delivering about the war. But going back to sort of her controversial past, it's worth noting she at one point ran for president as a Democrat.
Yeah.
Really was not a fan of Hillary Clinton, and Hillary Clinton not a fan of hers either. So they had some tension there, and then she became a Trump supporter and joined his cabinet. But not entirely in line with him on some of these major issues.
Sure. President is on his way now to New York. He just left the White House. Is this something we expect he might speak about, or is this all handled on Truth Social, or maybe not even acknowledged?
Well, I would imagine he'll have to acknowledge it at some point. Certainly, if she's delivered the resignation letter to him, then he's probably gonna want to be the one to confirm the news. So far, the White House hasn't confirmed it, at least before I got on the air.
Yeah, sure. No, we haven't seen that. And just quickly as well, is there an heir apparent? Do you know where he would turn next?
Well, I don't know where he would turn next, and it's interesting because one of her deputies resigned several weeks ago and put out a pretty noteworthy note of opposition to the Iran war. So it's not going to be him, but we'll see. Yeah.
All right. I know we pulled you away from your reporting on this, Jeff. You're great, and thank you. Let us know what you're learning, of course, throughout the day. I suspect there's going to be a lot more news with Jeff's help on this. He's our White House correspondent, Jeff Mason, live here in Washington. We want to hear the panel on this one. They didn't see it coming either. Tulsi Gabbard is out, and Jeannie Shanzano is with us, Bloomberg Politics contributor, our Democratic analyst, and of course, democracy visiting fellow at Harvard Kennedy Center's Ash Center. Republican strategist Lisa Camuso-Miller is here as well, former RNC spokesperson, advisor, Rock Solutions, and founder of Friday Reporter Public Affairs. Lisa, what do you think on this one? To Jeff's point, it is another woman, but few should be surprised that it's Tulsi Gabbard who is leaving. Some might say they were surprised she lasted this long. What about you?
I think that that's a fair assessment, Joe. We haven't seen her in some time, and there's been quite a bit of activity around what the DNI ordinarily would speak out or at least be part of announcements. And we have not seen her much at all. And so this has not come as a tremendous surprise. It will be interesting to see. Jeff makes a great point. There's been a couple of exits from the DNI, and it's going to be interesting to see what comes next. You make mention of the fact that she is one of several females now that have exited the administration. That's an interesting point of view for us to keep an eye on. She also was at one point herself affiliated with the Democratic Party. And so all of that to say, it does look like this was a choice that ultimately she is attributing to the sickness of her own husband. And so we wish him and her well in that journey. But it is one to really keep an eye on, especially as we talk about other conflicts, as we talk about the escalation in the Middle East, some things that could potentially be happening in other corners of the globe. Ordinarily is very involved in those kinds of decisions, and that's one that I think that we will be watching very closely.
Indeed, Lisa. Axios has got this now as well, Jeannie. So we've got two reports pointing to the big picture. Axios says the departure is not due to controversies surrounding her work or job performance, quoting, by the way, a Trump administration official on that, but due to her husband being diagnosed with a rare form of cancer. What do you make of the way this is being framed, Jeannie, and the fact the White House has not spoken yet?
Yeah, I mean, of course, we wish her husband well, but you have to also look at what we know. We know that for some time, Donald Trump has been publicly and privately polling advisors about whether he should replace her. We know that just a few weeks ago, it was Roger Stone, of all people, who convinced the president to keep her on. We know, to Jeff's point, that she has not been active at all, really publicly at least, in discussions of what is going on in Iran, Venezuela, and the like. And of course, she's lost not just Joe Kent, but other members of her team of late. So this is certainly not a surprise by any stretch of the imagination. I do think that it is a win for the neocons. This has been a huge dividing line in the Republican Party. And she did, not a traditional Republican, certainly. She ran as a Democrat for president, but she did represent people in the MAGA base, people like a Tucker Carlson or others who really fervently believed Donald Trump when he said no more wars, no more foreign wars. She was a person who was really vocal on that issue. Hence, the way she's been sidelined. Even Donald Trump the other day said they frequently disagree. So I do think this is policy-wise a win for the neocons. I just don't know how it's going to play out with Donald Trump's decision-making.
Well, you can still go on TeePublic and buy one of Tulsi Gabbard's No War with Iran T-shirts, Lisa. You know, it's Friday. We got a long weekend. President just celebrated the beginning of the Warsh era. Does the timing make sense?
Well, you know, all good news happens during the week and all the lousy stuff gets rolled out on Friday, Joe. So,
that's it.
I mean, this to me feels like a long weekend kind of announcement that they're hoping maybe will just get swept up in the rest of what's happening. And certainly not hearing from the White House right away tells me that this is one that they're hoping gets sort of swept under the rug and into the next week of activity.
Is this as simple as Iran? Jeannie? Is it as simple as that?
I think it's Iran. I think it's Venezuela. I think it is his division with her on these big issues. I also do think there are questions on the gender issue. It's not a question as to why he might or she might want to leave. It's a question as to why others that are not female haven't chosen to leave or been pushed out. And I'm thinking of people who are under the gun, like Kash Patel, Howard Lutnick, and some others. So I do think there are real questions to raise about the gendered nature of so many of these high-profile departures from the cabinet.
Appreciate both of you weighing in on a breaking story here. Jeannie Shanzano and Lisa Camusa Miller, we thank you, as always, for the insights and a great panel today. The president has not said anything about this on Truth Social, but he has been posting. It's not just that he's on his way to New York. In fact, the last post that hit right after we came to air this hour had to do with his son's wedding. He's not going. President says, while I very much wanted to be with my son, Don Jr., and the newest member of the Trump family, his soon-to-be wife, circumstances pertaining to government and my love for the United States of America do not allow me to do so. I feel it's important for me to remain in Washington, D.C. at the White House during this important period of time. Good luck to the newly married couple. We're going to be hearing a little bit later on this hour from Rob Kaplan on this day that Kevin Warsh was installed, sworn in as the new Fed chair. First, we want to check on markets and check in with Charlie Pellet. He's got the Friday trade live from World Headquarters in New York. Charlie?
Hi, thank you very much, Joe Matthew. Just running the weekly numbers on the S&P 500 index. We are looking at an 8th week of gains. So far this week, the S&P 500 index is up 1.1% on the week. The Dow right now at a record 50,697. We've got the Dow up 411, up by about 0.8%. S&P today up 0.6%, as is the NASDAQ Composite Index. The Russell 2000 Index of small cap shares up by 1%. The 10-year 4.56%, the 2-year 4.12%, and the 30-year 5.07%. West Texas Intermediate crude oil higher right now by just about 0.4%, 96.79 a barrel. Brent holding above $100 at 103.49, up now by 0.9%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Okay, thank you so much. Charlie Pellet will be back in about 20 minutes with more on the markets as Washington now refers to Chair Warsh. Took place in the East Room a short time ago with President Trump. Kevin Warsh sworn in as the 17th Federal Reserve Chairman against a backdrop of rising prices and a Strait of Hormuz that remains closed. It's at this moment that we send things down to our Dallas Bureau and our Texas Bureau Chief, Julie Fine, who's with Rob Kaplan, the Goldman Sachs Vice Chair and former Dallas Fed President, for an important interview here on Balance of Power. Julie, take it away.
Joe, thanks so much. And thanks so much for being with us, Rob. First of all, I want to talk about your reaction to Kevin Warsh as the next chairman of the Fed. You know him. You've brought him to Dallas in the past. What do you think about this?
I think he'll be an excellent Fed chair. He's got a lot on his plate, especially in the next number of weeks. He's got to get prepared for that first meeting and the press conference and the dot plot explanation. But I think he'll do a very good job. And he has a number of challenges in front of him, but I think he'll be an excellent Fed chair.
You just pointed to that next meeting. What do you expect in terms of interest rates, especially when you're looking at inflation and the war?
Yes, so the reason I say it's challenging is if you roll back the clock, 8 weeks ago, I think the view was the next Fed move would be a cut. It's just a question of how late in the year was it going to be. Because of oil prices being elevated and inflation readings being stickier, now the view is, and probably the conditions would warrant, the next Fed move may actually be a raise, and they may do nothing this year. And if they were going to do something, it would be more negative from a rate increase point of view because they have to deal with inflation. So he's going to have to work through that. And the meeting itself, he's got to get to know people after today around the table. He has to understand their views. This is before the mid-June meeting. He's got to clean up the statement so it has more of a neutral bias rather than, remember, the 3 dissents in the last meeting about the downward bias. He has to clean that up. And there's a dot plot that comes out after this meeting. And the dot plot's going to show expectations for the rate path are firmer, not lower. And so he's going to be responsible for explaining the dot plot in the press conference. So that's a lot to prepare for in the next 3 or 4 weeks.
As you very well know, you saw how President Trump was very public about Jerome Powell and his decisions. President Trump saying today, and this really stuck out to me in the press conference, he's telling Kevin Warsh, I want you to be independent. I want you to do your own thing. Is that even possible?
Yeah, I think it's not only possible, I think it's essential. And I think Donald Trump in his comments obviously is indicating that, and Kevin Warsh knows that, meaning he has to be seen not only in the room at the FOMC as is independent, but I think to the public, for the Fed's moves to have credibility, I think he'll have to position himself as an independent arbiter who's trying to make the very best decisions to make sure we control inflation and we have full employment. And so whatever public statements might have been made in leading up to confirmation and up to now, I think you can wipe the slate clean on those. And I think Kevin Warsh will, and my advice to him would be, he needs to not worry about any political constituencies at all, and I don't think he will. He has to worry about doing the job.
Former Fed Chair Jerome Powell has decided to stay on as governor. You talked about the voices in the room. How does the new Fed Chair handle that?
Well, I would guess Jay Powell's approach will be to be as quiet as humanly possible, given he's sitting around the table and he'll get a turn to speak. But I think he wants to fade into the background as much as he can, allow the new Fed chair to take over. He's staying for a very narrow reason, I believe, which is he's worried about the legal overhang. And I would hope that Jay Powell stay there, the time frame will be minimized as little as possible. But I think he'll try not to do anything that might impede the ability of Kevin Warsh to step up and take control and do his job.
I'm curious, I want to shift to Goldman Sachs before we let you go. I want to know what your clients are telling you right now about AI.
So we obviously know that inflation's been stickier, the rate curve is moving up. It's having some challenging effects on the economy, low and moderate income consumers. But to your point, against all that, you've got a historic structural trend of not only AI infrastructure to build compute, that's the $800 billion being spent this year, but AI adoption. And what we're seeing is every business is having to work on use cases about how they can build in AI adoption to improve their business. Here's how it's playing out. In the U.S., in the economic growth is solid but kind of sluggish. Corporate earnings growth, on the other hand, is being revised upward. And I think we're going to see potentially a multi-year trend where S&P earnings are improving at double-digit rates, even though GDP growth is a little bit sluggish. It's going to be more concentrated in smaller names, but many businesses are going to use AI to improve their margins and their business, and that's what we're hearing from clients.
Before I let you go, we're sitting here in Texas. You're going to have a large new office in Dallas, well on your way to more than 5,000 employees here. What are you hearing from those that are deciding, hey, we're going to move to Texas?
So at our firm, we've got already 4,500 plus people here on our way to, as you said, over 5,000. That's part of a global firm that has 45,000 plus or minus people globally. This will be a major presence. And one of the things we like about Texas is it's a growing state, magnet for people and firms here, pro-business culture, access to talent. And one of the things that we're also seeing, there's a very collaborative atmosphere between government, business, academia, nonprofits, to where we have shared ownership. And I think that kind of mindset has been a magnet for people and firms to move here. It's a very welcoming environment and pro-business in a constructive way. And I think that's some of the various things that we like at Goldman Sachs and many of our clients like, which is why they're coming here.
Rob Kaplan, thanks so much for being with us, and I'll send it back to Joe.
All right, Julie Fine, live from Dallas. Thank you so much. Julie, for bringing us an important conversation today on balance of power. We've got another one for you, too. Just moments from now, we're going to bring you to Manassas, Virginia, for a conversation with the CEO of Micron Technology. Bloomberg's Tyler Kendall is out at a fab in Manassas, Northern Virginia, outside of the nation's capital, with members of the administration who are with the Micron CEO to talk about reshoring and domestic manufacturing of such badly needed chips. I will mention quickly the White House just updating the president's schedule today as he makes his way to New York for an event with Congressman Mike Lawler. He's coming back to sleep in his own bed tonight. They have scrapped the trip to Bedminster, as the president also lets the world know he will not be attending his son's wedding this weekend, Don Jr., because he needs to stay in Washington to attend to the war with Iran. I'm Joe Matthew in Washington. We'll have much more ahead here, only on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Kevin Warsh is now Fed chair. The Dow is at a record. Stocks are pushing higher, and oil is now lower. In fact, West Texas Intermediate crude just about at an intraday low of 95.43 a barrel, down now by almost 1%. Barrel of Brent below 102 now. Brent crude down 0.6%. The Dow at 50,789, a record. The Dow up 1%. S&P up 0.7%, just below 7,500, and NASDAQ is up by 0.6%. We've got the 10-year at 4.55%, the 2-year 4.12%, the 30-year 5.06%. All of this with a VIX now below 17. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet will have more on the markets coming up at the top of the hour, 2 p.m. Eastern Time, as Bloomberg Business Week Daily gets underway. First, we have something special for you here on Balance of Power and a conversation that you'll only hear right here. We step just outside of the nation's capital to Manassas, Virginia, where something important is happening today. Bloomberg White House correspondent Tyler Kendall sits down now with the CEO of Micron Technology. This is live on Bloomberg. Tyler, take it away.
Hey, Joe, thanks so much. As you mentioned, I am pleased to say I am joined now by the Micron CEO, President, and Chairman, Sanjay Mehrotra. Sanjay, it's so nice to see you, and thanks so much for joining us here on Bloomberg Television and Radio. We are here in Manassas, Virginia, to mark the start of the 1-alpha DRAM manufacturing in the United States for one of the most highly advanced and widely used memory chips. I know Micron has a commitment to onshore 40% of its DRAM manufacturing. Can you just give us a little bit of insight? How does today help you with achieving that goal?
So first of all, Tyler, thank you very much for having me on the show. In terms of what today means, it really means, as you noted, bringing the most advanced DDR4 memory built with 1-alpha technology, which is critical for industries like automotive, aerospace, defense, industrial, networking. These are critical industries that power America. And by us bringing this technology from Asia into now manufacturing here, it will help us quadruple our production here at this site in Manassas for their DDR4 memory. This is going to be huge for our customers in those key sectors. Memory today is absolutely key across all industries that have electronic systems. And Micron is, of course, investing in Boise, Idaho, building our leading-edge fab. That's for leading-edge memory that goes into smartphones, PCs, servers, and that leading-edge memory in Boise, Idaho, will bring first wafers out middle of next year and then ramp up from there on. We'll have a second fab in Boise, Idaho soon to follow that, start first wafers by end of 2028 there. And then we have production planned for Syracuse, New York area, where we'll build over time a mega cluster or 4 fabs. And you can see $200 billion of investments that Micron is making here in America to bring these long life cycle production that will be managed here in Manassas, Virginia, along with production in Boise, Idaho, and Syracuse, New York. And that will bring Micron's total production over the course of about next 10 years as we ramp up all these multiple fabs to about 40% of our production. By comparison, it is about 10% today. And all of that 10% comes from this site here in Manassas for Micron. And this will totally our investments, massive investments in long life cycle technology nodes, as well as leading edge technology nodes to serve these vast markets that are really surging in demand driven by AI. Micron is going to be bringing those investments, that's semiconductor manufacturing, and in the process, create 90,000 new jobs here in the US as well.
Well, on this point of demand and how this investment is seeking to help reach that growing demand, I'm wondering, how long do you expect the shortage of memory chips to last? When can we expect an easing?
Of course, the demand for memory has really surged. And that is because of the importance and the value and the capability of memory that is really essential for all advanced systems. And yes, there is a shortage, but Micron is working hard to increase supply through these projects here in America, here in Manassas, Virginia, Boise, and New York. And we see this shortage continuing beyond, well beyond 2026 timeframe. But the important thing is that Micron is working hard with our customers, working also on the long-term supply agreements with our customers to really ensure that they can have predictability for supply. And of course, Micron can have the confidence for the investments that we are really committing to here for the long haul.
Well, historically, memory is a cyclical business, right? Periods of boom, periods of bust. I'm wondering if a $200 billion investment here in the U.S. signals perhaps more of a confidence that that demand, that high demand, is going to be permanent, or are there concerns here that the industry could be overbuilding capacity?
Of course, what we are doing is building these fabs, which are very long lead time item. As you can see in terms of what we are doing at Boise and New York, it really takes several years just to construct the shell. How we equip that shell really very much depends on our latest assessments of demand at a given time. So important thing is to have that preparedness to meet the market demand. And memory has become a key enabler. It is a strategic asset for our customers today. It is a strategic asset for AI across consumer as well as data center industries, because without memory, you don't really have that intelligence that is critically important for the future roadmaps that our customers have. So memory is critical. Our investments, of course, will always be managed with discipline. Today, we are able to meet the demand of our key customers only about 50% to about 2/3 in many cases. And it's really important that we, of course, bring up this supply with discipline and continue to really fuel the growing demand, provide serve the necessary demand that is ahead.
Where are your biggest bottlenecks right now in the supply chain? And I'm wondering how labor fits into that picture, because a lot of the announcement here today was about boosting jobs here in the U.S.
As I mentioned earlier, our investments will create 90,000 new jobs. These are high-paying jobs. Of course, Micron is very much focused on engaging with the communities, with the colleges and universities, with really local systems in order to even support and advance apprenticeships. So we are very much focused on investing for the training and development of the workforce across the United States, particularly in the regions where Micron plans to have these fabs. And that is, of course, an important critical priority. In terms of the bottleneck, in terms of bringing up the supply, of course, it is the construction. That is really long tent in the pool. And as construction happens, then it is about bringing in the equipment and qualifying the lines, which also takes some period of time. And that's why we see that meaningful new supply in the industry doesn't really start ramping until 2028 timeframe, because our Boise, Idaho fab will have first wafers out middle of next year, and subsequent fabs will have wafers out later in the future as well.
Does it advantage you to be the only American company in this space working with the Trump administration in this way? I'm wondering if you could shed any light on that, and where does this position you against your largest competitors like Samsung, SK Hynix when it comes to market share?
I'm very proud of Micron's team, and of course very proud that we are the only US memory manufacturer, and memory today is absolutely critical for everything electronic system. So yes, very proud, and of course our customers here in the US very much value our investments in the US. They value resilient, secure supply chains that Micron is investing in to support their future growing requirements. We are very pleased with the partnership, the engagement. We are very thankful to President Trump and his administration and his focus on bringing leading-edge manufacturing here to America to support a wide range of our industries. And our partnership with the administration is strong. As you saw, I mean, Secretary Lutnick, as well as Ambassador Greer, made strong comments in support of our investments today. We are very thankful to President Trump for the support. And we are very much focused on making our supply grow so that we can meet our customers' requirements, but have it grow in a disciplined manner, focusing on, of course, always demand and supply, and, of course, accelerating the timeline for our investments as much as possible.
In the final minute that I have you, you mentioned U.S. Commerce Secretary Howard Lutnick, who gave remarks today. I think it's fair to say that he's been pretty integral in the administration's perhaps more hands-on industrial policy, including when it comes to taking stakes in companies. The U.S. government has done this to try to spur the kind of production that Micron's doing. But I'm wondering, have you had any conversations with the administration about that?
Our discussions with the administration are always focused on bringing up supply. You know, President Trump, as well as Secretary Lutnick, are always focused on how do we go bigger, how do we go faster, particularly, when the supply is tight. And Micron is a technology leader today. We are a global technology leader today. Our DRAM, as well as NAND technology, are most advanced, ahead of others in the industry. Leveraging that technology leadership and building the future of America with large-scale manufacturing is absolutely a priority of President Trump, Secretary Lutnick, and our discussions with the administration.
Sanjay Mehrotra, the CEO of Micron, also the president and chair, thank you so much for joining us here live on Bloomberg Television and Radio. Joe, this has been a conversation here at one of Micron's manufacturing facilities in Manassas, Virginia. I'll send it back to you in Washington.
Yeah, beautiful shot there, Tyler. Thank you so much, and thanks to the chairman. Shares of Micron right now up about $9, a little more than 1% to $771, up 700% over the last year, and up more than 100% year to date, which brings us back to the memory shortage, the storage shortage that Tyler was talking to Sanjay about. We want to continue that conversation with Michael Shepard here in our Washington bureau, senior editor for technology and strategic industries. The headline that cranked out of that conversation pretty early on, Mike, was Micron CEO sees memory chip shortage lasting beyond 2026. The stock popped higher when that headline ran, because that is the question that every shareholder has today.
That caught my ear too, Joe, and it really echoed what we heard earlier in this week on these airwaves from Jensen Huang and Michael Dell, who were interviewed by our colleague Ed Ludlow. Yeah. They too said that, look, the memory shortage is here. It may not be here to stay for good, but it is here for the foreseeable future. And it is one of the biggest bottlenecks when it comes to the AI rollout right now. Yeah. Now, Micron is really having a moment, as you said, pointing to their share price gains over the past year. Enormous. And it really is driven so much by the AI boom. But more broadly, as we heard from the CEO just now, their products go into literally every electronic device out there in the world. Yeah. Not just the smartphones on our desk here, but also into cars, into missiles, you name it. Everything has a memory chip in it to some degree or another. And the demand for AI is actually creating a squeeze in those markets for those goods as well. And we've heard even Apple CEO Tim Cook talk about that as well as a challenge. And he talked interestingly about disciplined growth, because one of the characteristics of the memory market has been this boom and bust cycle, that with the economy, you'll see demand for memory go up, followed by a glut, then number go down, and that is something that they have to manage even as they expand plants like this one.
Well, so in our remaining moment here, it's not unlike the oil business, right? Prices are up. We need you guys to pump more, and they get left holding the bag. Yeah. Does Micron eventually get left holding a bag full of memory chips that nobody needs?
Well, one of the things that they are trying to avoid with the rollout of all the plants that he was talking about, not just the one in Manassas, just a few miles from here, but also the ones they are planning to build in Boise, Idaho, their headquarters, and the big sprawling facility outside Syracuse, New York. They want to space that out to make sure that they are not holding the bag. But one of the questions, Joe, surrounding memory these days is, will this be sort of a jailbreak moment on memory? Will we get to this point where we're no longer in the boom and bust and that they are in a permanent growth trajectory that's a little bit more stable, thanks in no small part to AI?
Would the chips work in space, right? Can they bring Micron chips to outer space data centers?
I think they'd be willing to try it. Howard Lutnick could set them up with Elon Musk.
Exactly, right?
Yeah.
That's where this is all going, is into orbit, apparently. Shep, thank you so much. Michael Shepard with us live in Washington, and thanks again to Tyler for bringing us that conversation. I'll meet you back here for the late edition of Balance of Power. We'll see where these markets finish with our eyes on Micron technology. Live from Washington, this is Balance of Power, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yes, indeed. Across Bloomberg platforms, it's a Fed Friday. Right?
All right, I like that. Yeah. We had a Fed Wednesday earlier this week.
You did, because you got
minutes.
FOMC minutes, right? Today, you know, of course, it's a big day. We've got a new Fed chair, Kevin Warsh, being sworn in earlier at the White House. So we're going to dig into that. That is certainly front and center. At the same time, with just about 2 hours to go, you are looking at an S&P 500 that's heading for its longest streak of weekly gains since 2023. So in a few years, we continue to see that push higher when it comes to the U.S. equity trade.
Yeah, pretty much been a straight path up for the S&P 500 going back to the end of March, up 0.6% right now. This week, Carol, as of now, up more than 1.1%.
All right, but the move higher certainly over the last month or so. Hey, so we're going to talk about the trade. We're also going to talk about hopes for progress on a peace deal in the Middle East. That's actually going to come your way later on Bloomberg Business Week Daily. Meantime, ahead of the long holiday weekend, keep in mind the bond market wrapping up the trade for the week. So we are going to talk about a new day at the Fed, as Kevin Warsh is now officially the new Fed chair. We're also going to talk to the head of Qualcomm's automotive, robotics, and IoT business, Internet of Things, especially when it comes to self-driving cars.
Yeah, and that deal with Stellantis. And Stu Leonard on the cost of your Memorial Day weekend barbecue. He's going to be joining us. And I think he's going to have some suggestions for food to buy, because that's what Stu Leonard does.
We're taking bets in the newsroom, holding up a lobster, some shrimp, like what will it be? All right, let's get you going on this Friday, folks. It is Friday, yay. Let's get to Charlie Pellet with a check on the trade.
Thank you very much. I'm pulling up a record right now on the Dow. Dow, S&P, NASDAQ, all advancing, but the Dow Jones Industrial Average trading at a record at 50,732. The Dow up 447 right now, up by about 0.9%. Hopes for a deal between the U.S. and Iran, fueling Wall Street optimism, driving stocks toward their longest streak of weekly gains since 2023. The S&P this week on track for 8 weeks of gains. Right now, on the week, the S&P 500 index is up by 1.1%. We've got the S&P currently higher by 0.6%. No record right now has to top 75.01 to be a new high. NASDAQ up 0.5%. The NASDAQ 100 index up 0.8. The Bloomberg Mag 7 index up by 0.1%. 10-year at 4.55%, with the 2-year currently yielding 4.12%, and the 30-year is at 5.06%. Spot gold down $26 the ounce to $45.16. That is a drop of 0.6%. And West Texas Intermediate crude now at 96.09 a barrel, down 0.3%. Oil has been swinging between gains and losses as traders assess the outlook for a peace deal to end the war between the U.S. and Iran. Brent, the global benchmark, at 102.73, up now by about 0.1%. Oil majors are declining, even as oil advances. ExxonMobil shares down 0.3%. Chevron, little change, just about flat on the day. As for ConocoPhillips, also little change, up now by 0.1%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So persistent inflation, political pressure, Fed independence, question mark, rising U.S. debt, a war with Iran, maybe more geopolitical actions to come.
As you always say, Carol, it's complicated.
It is. We've also got a White House that definitely surprises and takes actions that impact the global economy and global markets. You've got a massive technological change, AI. We talk about productivity gains. We talk about the cost of it. Some are saying it's a disruption technologically that we've never seen before. We don't really know how it totally impacts, but that, Tim, is our world.
And the world at 12:10 p.m. Wall Street time, Kevin Warsh inherited as he was sworn in as the chair of the Federal Reserve by Supreme Court Justice Clarence Thomas. President Trump nearby. The Fed's dual mandate still front and center.
Our mandate at the Fed is to promote price stability and maximum employment. When we pursue those aims with wisdom and clarity, independence and resolve, inflation can be lower, growth stronger, real take-home pay higher, and America can be more prosperous. And no less important, America's place in the world more secure.
That, of course, was Kevin Warsh earlier at the White House, sworn in by Supreme Court Justice Clarence Thomas. President Trump, of course, nearby. We knew we wanted to talk really more about the macro, the environment facing the new Fed chair, Kevin Warsh, what we know about him from his past views on things. With us, a killer roundtable. Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent, and Stuart Paul, Bloomberg Economics U.S. and Canada economist, right here in studio. Welcome, welcome. We did our planning call. We're like, let's get these two guys to talk about the new Warsh world and what he is dealing with. President Trump said that Kevin Warsh will be able to do his own thing. Mike, let me start with you. Will he be?
For a little while.
Yeah.
The president has a tendency to say things that either aren't true or change his mind. So I'm not putting a lot of credence in that, but it does give Kevin Warsh a little bit of a runway getting started in terms of not cutting rates, because you can't cut rates with inflation doing what it's doing, with the war going on as it is right now. And it was kind of ironic, that sound from Kevin that you just played, because to do what he's talking about doing may require raising interest rates. And that is the exact opposite of what the president said he wanted in a Fed chair. But maybe Scott Bessent has convinced the president that it's better to not pressure a guy into doing something that everybody knows is wrong.
Well, Stuart, come on in here, because Federal Reserve Governor Chris Waller said he supports making clear that the Fed's next move is likely, just as likely to be an increase as it is a cut. So, you know, you're starting to hear people say, in addition, traders now betting on this too, that the next move could be higher.
That's right. I mean, there's definitely a bet in the market that the next move is going to be a hike. I'm not entirely convinced the next move is going to be a hike. For one thing, when financial conditions tighten, markets are doing some of the heavy lifting already for the Fed. So at a minimum, it buys the Fed a little bit of time to be more prudent, to be more cautious.
Wait, where are conditions tightening
Well,
right now?
so we saw 2s and 5s are up 75 basis points over the last 2 months. 10s are up 65 basis points. The intersection of financial markets and the real economy is mostly at the long end of the curve, where interest rates start to affect things like home prices and mortgage rates and so on. We see buying conditions for things like durable goods, things that are financed typically, and buying conditions are deteriorating materially. And so when that's the case, the Fed can afford to be a little bit more cautious and prudent. I just want to hone in a little bit on what we heard from Kevin Warsh. And exactly to Mike's point, I think that the most important line, even the most important phrase, is that the Fed has to pursue its dual mandate with independence and resolve. That hits my ear, at least, a little bit hawkish. So as much as we know that President Trump is, as he was a self-professed low interest rate guy, the world that Kevin Warsh is moving into, I think he even recognizes requires someone who's both independent and perhaps leaning incrementally hawkish.
This is a good thing, a really good thing to kind of heard that. I want to ask, and just throw this out to both of you. We were thinking about, a new Fed chair era. Is this significant, Mike? Like, you have covered so many different heads of the Federal Reserve. You've been in Washington. You've questioned them. Is it significant when a new Fed chair takes over? Is there also a period where they're kind of learning the ropes a little bit?
Well, yes, he'll be my fifth Fed chair that I've covered, but it takes a little while for somebody to settle in. Now, Kevin Warsh worked at the Fed for 5 years, so he knows basically how the place operates. Much has changed in the 15 years since he's been there, but he will have a much better feel for it than the average person just coming in who had never been there before. In a way, circumstances are working in his favor, because even if he wants to cut rates, there's 18 other people on the open market committee who get a vote on this, and he's got to be able to make a convincing argument to them about whatever monetary policy is going to be. And if they're going to be on hold indefinitely, then he doesn't have to push something on people or try to get a consensus on something that isn't very obvious or isn't something that everybody wants to do.
So dare I ask, politically, does that mean he could have it both ways?
Yeah, he'll have it both ways for a while, and
because he could personally say, this is what I think we should do, but I can't get everybody on board.
Consensus says.
Well, I don't think you want to say that right away, because then you're admitting you don't have a lot of influence. I think he will probably say basically he doesn't like forward guidance, so he'll probably say we're going to be attentive to what's happening and do what monetary policy must do under the circumstances at which time we're voting.
Let's talk about this practice of issuing forward guidance. President Trump says Kevin Warsh will curtail the Fed's practice of doing so. Stuart, is that good or bad, or what does that mean for folks like us who watch it? What does it mean for investors who watch it and economists who watch it?
Frankly, I think it's a good thing for policymakers to preserve some optionality. The more forward guidance they offer, the more they back themselves into a corner. For folks like me who want to understand what the Fed is going to do next, look, it makes my job a little bit harder, but that's what I'm here to do.
Does this mean no more dot plot?
Well, so I think that he wants to move away from the dot plot. I think he wants to move away from the summary of economic projections. The next dot plot that comes out in June is going to be a very difficult dot plot to try to explain to the world, especially if most of the members of the FOMC are going to eliminate any cut that they had marked for this year. So it's going to be a very difficult one to explain under the best of circumstances. And I think that it gives him even more of a reason to want to move away from the dot plot and the broader SEP.
So, Mike, what do you think in terms of the summary of economic projections? Has this been a good thing? I mean, you've seen several cycles. I don't know, when did it first go into effect?
It first started under Ben Bernanke after the start of the great financial crisis, but they've been talking about it for a long time, putting out some kinds of forecasts rather than just the individuals talking about it in speeches. The thing about the summary of economic projections is it's generally fine. The idea of saying what you think inflation and unemployment and growth are going to be, because those are the elements that are going to make up your decision tree for what you do about rates. The problem is that we have gotten into this situation, and it's partly because they use the dot plot, and it's partly because of Stuart and my fault, that we look to the median, and everybody on Wall Street tends to think the median is a Fed forecast, and it's not. It's 19 different forecasts, and so they do have a problem with the dot plot. But when I talk to other members of the Open Market Committee, a lot of them agree that it's not the best way to present things, but they say we need something. And so until you have a better idea of what we could use to kind of give people an idea of the path and why, we're going to probably have to stick with the dot plot.
I want to go back to your point about the dot plot getting rolled out under Ben Bernanke. Its real value to policymakers was to indicate that they had no intention of raising rates in the future, and so they could flatten the curve through their communications process. That was really the use of the SEP when it was rolled out. When you have a period of high inflation, when you have a period of uncertainty, when you're going through global shocks that have nothing to do with monetary policy and that really can't be addressed by policy,
like a global pandemic,
like a pandemic, like shutting down the Strait of Hormuz, like supply chain snarls and lack of access to aluminum in North America. When you have things like that, the SEP just constrains your opportunity set. It doesn't help to provide any sort of communication that's valuable for addressing rates further out the curve. And I think that that's something that Warsh definitely recognizes, and he doesn't want to be backed into a corner.
Yeah, one problem, too, with the SEP is that the Fed does it 4 times a year. And markets recalibrate the economy 4 times a second. So the narrative on Wall Street is always that the Fed is behind the curve. And so even if Fed officials want to change their forecast, it's harder to get that across. As Stuart was saying, you've got you've got this SEP out there, and people may think that they're constrained by it. Now, an individual bank president might say, I'm not constrained because I've changed my mind, but people don't necessarily know that, so they're thinking that this is where they're going to be.
I want to shift a little bit and just talk about the economic landscape right now and the U.S. consumer. We're going to be speaking and kind of doing a deep dive on retail and the consumer in the 3 o'clock hour. And the picture that has emerged as some of the big box retailers have reported this week is that there's a worry that their customers are really starting to feel strain as a result of higher gas prices. So, Mike, how does Warsh come in, Fed Chair Warsh come in and address a consumer, a portion of consumers that are starting to feel under pressure in a more inflationary environment when there's sort of uncertainty around the end of a war and when that will actually bring fuel prices down?
Well, there's not a lot he can say, because the Fed's goal is going to be stable prices, which means probably they might have to raise rates, but inflation is going up. He can do what Jay Powell does at every press conference and come out and say, we recognize this is very important to Americans and the pain people are feeling.
The beginning and the end of every press conference
but
he did, right?
there isn't much he can say about what the Fed can do to help people at this point. It's not in their power. They can raise or lower interest rates, and that's about it.
Yeah. Well, you know, there's going to be a lot that actually happens before the first FOMC meeting that Kevin Warsh presides over. That's June 17th. We're going to get data points on jobs, CPI, PPI, all before the next Fed meeting. I'm just thinking about, in terms of the data right now and what it shows and what are the drivers, in particular, of inflation. I was reading about the build of AI, the cost of chips and how that plays into it, the higher energy prices, of course, because of the U.S. war in Iran. You know, what is temporary? What is the real inflation story right now, Mike, when it comes to the U.S.? There is still higher inflation, right, when you add it all up?
And when you talk to Fed officials, they're noting that the inflation has started to broaden out some, and you're seeing it in service areas that people thought were done, and the idea that tariffs were going to, we'd seen the peak and we were going to see things go down. That may not be the case because we've got more tariffs coming up. So they are concerned about it. Now, in general, the Iran war is driving the headline numbers because of energy prices. So if that starts to come down, if the war ends, then Warsh has the opportunity to say, you know, Mr. President, I can't cut rates today, but we're on a path to be able to do it. And maybe that is the best he can hope for.
Look, I think that what's interesting is that Kevin Warsh is in a position where he has said himself that inflation is a choice that central bankers make. And we're living in a world where there are a lot of supply shocks and there are a lot of fiscal policy decisions that are taking place that are themselves inflationary. So the only extent to which Kevin Warsh has any control over the decision about inflation is to lean against demand, which is not something that he wants to do. We heard just this morning that he wants to deliver more growth, that he wants to deliver higher real wage growth, and basically he needs to wait for the inflation pressures to dissipate. And so what does it end up meaning for him? It is just a waiting game. He needs to see low aggregate labor income and low aggregate and low real wage growth start stifling that broadening of inflation pressures that Mike was just alluding to. We know that policymakers are worried about that broadening of inflation pressures. That's being facilitated by things like elevated tax refunds. And until we start to see a narrowing of the breadth of inflation pressures, Kevin Warsh is going to have to stay on hold.
30 seconds from each of you. There's also that guy in the background. What's his name? Oh, Jay Powell. What's the impact of that, Mike?
You said Fed Friday. I was thinking Freaky Friday. You know, Kevin Warsh and Jay Powell wake up in different bodies, in each other's bodies. Jay Powell, you're not going to hear much from him or see much from him.
But does
he's
he
just going to stay as low profile as possible.
Okay.
But he's a presence there at the Fed.
He's a presence
and in the
there,
meetings.
and it is going to be a little harder for Kevin Warsh because he's got to deal with him in the room when they're all talking. But
right.
He doesn't want to have to face him, have a public face-off.
Look, I don't think that Kevin Warsh is going to be intimidated by Chairman Powell. I don't think that other folks in the committee are going to be swayed by Chairman Powell. I think that more importantly, folks in the committee are adequately independent and assertive in their own right, and we know that enough folks on the committee are hawkish enough to prevent any sort of missteps in the dovish direction.
Great stuff. Thank you both. Really appreciate it. Michael McKee, Bloomberg TV and Radio, international economics and policy correspondent, and Stuart Paul, of course, Bloomberg Economics, U.S. and Canada economist. When we come back, Qualcomm, self-driving cars, we're going to put it all together for you. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Kevin Warsh is now Fed chair. Dow Industrials at a record. Stocks are pushing higher. S&P up 8 weeks in a row, and oil is back in the green. Right now, the S&P is up 46 to 74.91. That is a gain of 0.6%. Now, it's all about hopes for a deal between the U.S. and Iran, fueling the optimism today. The Dow up 458, up 0.9 at 50,743 to underscore. That is a record. NASDAQ up 0.5%. We've got the NASDAQ 100 index up 0.8, and the Russell 2000 index of small cap shares outperforming, up just over 1%. The VIX below 17 with a 10-year at 4.55%, the 2-year 4.12%, and the 30-year 5.06%. Gold is at $45.15 the ounce, down 0.6%. West Texas Intermediate crude has been bouncing around 96.57 a barrel now, up 0.2%, while Brent is trading higher by 0.8%, 103.42 for a barrel of Brent. We're keeping an eye on Stellantis shares, up 0.6%. Stellantis plans to reinvigorate its Chrysler brand with new low-cost models, all part of an effort to address affordability concerns. Chrysler is going to be introducing 2 models that will start for less than $30,000. Recapping S&P up 0.6%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Tim. Tim?
Yeah, I'm here. Charlie's here. I'm
Hi,
here.
Tim.
Hi.
Hi, Charlie.
I know it's been a couple days since you've seen me.
I've been on the road. I am
How was
so
the trip?
sleep deprived. Well,
Good.
We'll talk about it later. The flight out, like almost 6
Oh,
hours
I meant
delayed.
the whole, like, project.
The shoot was really cool.
Okay, good.
It's
All
really good stuff. Insight on retail, AI, company you know.
Okay.
It's some good stuff coming your way. I'm just going to leave it there.
Okay, that sounds good.
We're going to go to tech
Nice
now.
tease.
It's a deep tease. Top gainer in the NASDAQ 100 right now is Qualcomm. It's also a top gainer in the S&P 500. Shares are up more than 20% in the past 3 trading sessions. Yesterday, you guys were dealing with this news, right?
Yeah, Stellantis and Qualcomm expanding their multi-year collaboration, integrating Snapdragon digital chassis systems on chips across the next generation of Stellantis vehicles for cockpit connectivity and advanced driver assistance systems. Non-binding letters of intent for AI Motive to join Qualcomm Technologies. That's owned by Stellantis. That bought AI Motive. That's the Hungary-based AI and autonomous driving software company. That was back in December of 2022. So a little bit of a background for this partnership.
Try to explain it, because we've got a great voice to talk about it. Let's head to San Diego right now and to Qualcomm's head of its automotive, robotics, and IoT businesses. Nicole Dougal is with us, joining us. Nicole, so great to have you here with Tim and myself on Bloomberg. Tell us about this partnership, and I want you to kind of go into exactly what this means by expanding it for those who understand your world and maybe for those smart investors who don't totally understand it. Break it down for us.
Thank you, Carol. Thank you, Tim. Great to be with you. Yeah, our business in automotive has been on a tear over the last many years. We are going to exit FY26 at a $6 billion of annualized revenue, which has grown up 8x over the last 6 years. The partnership with Stellantis is actually one of a kind. We've been building for the digital future of cars for a number of years, and physical AI, as you know, is coming into every single vehicle. The digital chassis that we build essentially allows an automaker to be able to modernize all of their vehicles across the board, from connectivity to the in-cabin experience to the driving experience of a vehicle. And this partnership with Antonio and Ned at Stellantis is a one of a kind. This essentially means we get to deploy, starting in model year 28, across all of their platforms, from Chryslers to Fiats to Dodge to the Peugeot brands, the Citroen brands, across every global footprint the Stellantis vehicles are deployed in, which is really every market outside of China, our entire fleet of products. This is a new change in the way Stellantis is developing their vehicles. It's one single architecture that gets homogenized so that you can move fast. You can become a software company, working with partners across the board to be able to bring self-driving capability, AI into every single cabin, and of course, connected vehicles. And, we've been building this for really the entire industry over the last many years, and this is what we're going to do with Stellantis.
So if somebody buys a Stellantis after that model year, any vehicle across Stellantis' portfolio, as you mentioned. After that model year, will Snapdragon technology, this technology that you are talking about right now, be included in that vehicle?
That's right. That's right. And we are already a supplier to them, and this is now going to happen across ADAS, cockpit, and telematics.
So what does that mean for the driver experience?
You are starting to now see AI essentially come to the fore, especially for platforms like a car, which is a physical platform. It's your daily driver. It's something that you spend a lot of time in. And bringing AI into the in-car cabin experience essentially allows your personal space to be completely transformed. We've been preparing for this with the entire ecosystem. We've been working with this with companies like Google, with, of course, our automotive suppliers and partners. And Snapdragon cockpits are now AI ready. That means the experience that you will have in your in-car cabin experience will be no different than what you're starting to see on your smartphone. You can have a conversational experience with your car. It shops for you. It sets up your appointments. It entertains you. That experience in your car changes the entire way that consumers will engage with the vehicle. And then that same thing extends over to the driving experience. So as you're starting to see technology like FSD get deployed very broadly, this is also something that's part of the partnership that we've built with Stellantis, where we will power their self-driving stacks along with our silicon. And this essentially is a brand new type of product that starts to get deployed starting 28.
Nicole, it's an expansion. So you guys were already involved, right? In terms of not only kind of the AI or experience, that sounds like it's taking it to another level, but you were already involved in kind of the mechanics, if you will, or the inner workings with Stellantis. Is that correct?
We've been working with both Fiat Chrysler and Peugeot for a number of years.
Yeah.
I think this big shift is really as the technology transforms with AI becoming such a central part of the transformation of the car, this allows us to be able to help Stellantis move into this new architecture. And to do this across the board, as you know, the car industry is complex, a lot of different architectures. This is going to be a one-of-a-kind change because this is one common harmonized architecture across their entire global fleet of vehicles. So any change that is made brings that experience to every tier of vehicle deployed across any part of the world. And that is what makes this partnership very unique.
Is it exclusive? I know it's an expansion of the partnership. Exclusive, or are there other companies, AI or tech, that are doing similar parts?
This is a partnership between Stellantis and Qualcomm on all of the silicon and all of the self-driving software capability, and of course all the connectivity that we are building. So it is something that we are building. We are the ones that are their dedicated supplier for this next generation.
Why expand it and why now? And talk to us about the financial opportunity for what it means for Qualcomm.
For us, we've been growing our business in automotive actually by looking at the car architecture and thinking about it in the context of what is the digital product mean for a car. And to do that, you really have to be able to envision what type of technologies a car is going to deploy. AI has now become very central, both for driving, but now also in-car cabin experiences. You have to focus on every tier of vehicle that you have to supply to. You have to focus on the global nature of this business in that this is 90 million cars produced all over the world. Automakers are designing for a software product. We are growing our business. We've been growing at about 25% plus over the last many years. And we really see automotive as this definition of what a physical AI product looks like. And, so far, it's really been going great. We are super happy with the way that the business is growing. We're going to share more at the Investor Day that we have coming up in June. We will talk a lot about what we are doing in automotive and of course, other areas.
Well, you've done a lot in automotive for a lot of years with a lot of different partners, of course, apart from just Stellantis. You're working with Chinese EV makers as well, Toyota, Honda, BMW, Mercedes-Benz, among others. Since you have such a good view on what you are calling an embodiment of physical AI, what's a realistic time frame for you to tell us that we as drivers will be removed completely from the equation when it comes to this technology?
I would say that the driver completely removed is probably much farther out because this is at the end of the day a safety product. But I think that the car essentially taking over for a number of scenarios where the driver is involved but perhaps not deeply engaged, that is upon us now. And maybe let me describe it like this. I think the rate at which AI is accelerating, even I would say in the last 12 months, the capabilities of the models, what they can do, both for conversational AI, the human-facing AI, but then also the machine and the physical AI. The car is probably one of these products, one of these parts of our life that is so central to where you spend time, your personal time, your time with family. It is a global product. You will start to see, I would say in the next 2 years, AI entering the digital cabin and cars becoming much more intelligent in terms of the way that they are driven. This will drastically accelerate because all of the other pieces are in place. The silicon is in the SoCs, the silicon is in place. We've been building that for a number of years. We've standardized the architectures. We have made them such that they can be applied to really any tier of vehicle. We are obviously doing this globally. This is not specific to any region. So this acceleration is something that every automaker has been waiting for. And I think the Stellantis deal is a reflection of how quickly can automakers really leapfrog a legacy way of working, a legacy way of thinking, and just embrace what is bound to happen. And this deal for us was actually an indicator of how fast this is actually coming. I would expect by 28, you will start to see this get deployed across multiple parts in the Western world.
Yeah, we're going to stop soon calling it a car, I think. We're going to call it, I don't know, we're going to have to come up with some other name, because if you think about the amount of technology that are in our vehicles today, it's just pretty astounding.
I mean, a lot of observers have said you have to think about Chinese EVs as smartphones with wheels.
Yeah.
But I don't know if we're there.
Yeah.
It's hard for me as a New Yorker who's doesn't have a new car, doesn't spend any time in cars to relate. But.
My car is in full self driving, and it's old. It's more than 10 years old, but you can literally take your hands off the wheel and it drives itself. Like the systems have been.
Are you sure?
It tells me to put my hands back on it after about 40 seconds. But it is pretty amazing, Nicole, what we're seeing. And what I'm wondering about in terms of, I was just looking at the FA page on the Bloomberg. You guys are, at least the forecast that we have, I guess, from the street and guidance, looking at over $42 billion in revenue for you folks this year when you wrap up the fiscal. But I'm just thinking, I think you guys shared some numbers that in the second quarter of this year, you guys clocked $1.33 billion in automotive segment revenue. How much more could it be as a result of deals like that this becomes maybe a bigger part of your top line? And just forgive me, about 45 seconds here.
I think it's a great question. Look, I think we've been preparing for the way that this business is growing. I think this deal that you saw is an indication of the market saying, hey, we are now ready to really scale up. I would say that the car becoming a digital product, both on the self-driving side and the cabin, is going to happen across the board. And every automaker is now essentially waiting to figure out how do they accelerate that. We've been growing 25%. I think we see similar trajectories continuing, certainly in the near future.
Sounds like it could be even a much, much bigger part. Hey, listen, stay in touch. We love talking about this stuff. Nakul Duggal, he is, of course, head of Qualcomm's automotive robotics and IoT business, of course, at Qualcomm, as we said. Stick around. We're back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got just over an hour to go until it is on to the weekend with the Dow, the S&P, NASDAQ all advancing. Dow Industrials trading at a record at 50,717 right now, up by about 0.9%. The S&P has to close above 7,500 for a record 74.90 where we stand right now on the S&P. It is on track for its 8th week of gains. That is the longest weekly rally since 2023 right now. We've got the S&P up 45, up by about 0.6%. The NASDAQ Composite Index up 0.8%. The Russell 2000 Index of small cap shares is rallying by 1%. All of this with the VIX below 17, the 10-year at 4.55%, the 2-year 4.12%, and the 30-year 5.06%. West Texas Intermediate Crude has been bouncing around. Right now we got WTI once again trading lower, down under 0.1%. Little change. Barrel of Brent, though, the global benchmark does remain higher. Brent crude 103.20 right now, up by about 0.6%. Uber exploring options for a full takeover of Delivery Hero to better compete with DoorDash outside of the United States. Today we are seeing shares of Uber. They are trading down by 2%. Rival Lyft, both based in San Francisco, up 1.8%. DoorDash up by 1.5%. Recapping stocks higher, the Dow at a record, S&P up by 0.6%. Carol and Tim, that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, it's the unofficial start to summer.
Did anyone tell the weather that?
It always rains.
It's rainy and cold.
It's rainy and cold.
Yeah.
It's kind of a
earlier
bummer.
this week here, and look, I know we're broadcast all over, so forgive me for just talking about sort of like Northeast weather right now, but I was talking to my dad about this, and my parents used to live on the East Coast, now they're and on the West Coast, and he said, oh yeah, Memorial Day, whenever we were on the East Coast, was always like, the weather was always terrible.
I have to just tell you, I used to march. I used to play clarinet, and I was in a marching band.
Okay.
And so we always marched in the Memorial Day parade. And it was always...
We're going to need some video of this.
I swear to God. And it was like, we had little jackets, and we like...
Oh, no, I believe you. I just want to see it.
But it was always like dealing, like, could we march? Yeah. Would we get it done before the rain started? I
think some parades this weekend might be canceled.
All right, yeah. So fingers crossed that maybe they hold off. I got to say, though, we're talking about a lot. We're thinking about Memorial Day. We're thinking about what goes into a Memorial Day picnic and celebration. This is happening as global food prices climb to their highest level in more than 3 years as the Iran war disrupted supply chains. We kind of kicked it off talking with Stuart and Michael McKee, of course, about inflation concerns, and that includes food. So we've got a great voice to get into all of this.
Well, let's head to Stu Leonard's in Norwalk, Connecticut, the president and CEO of Stu Leonard. Stu Leonard Jr. joins us. Stu, happy summer. I just want to start off with the question, is it a happy summer at this point? What are sales telling you? What are customers telling you?
Well, first of all, hi, Carol and Tim. How you doing? First of all, the thing that would make me happier if you didn't talk about all the rain and everything that's supposed to happen this morning. That doesn't help our sales. We want everybody to go out and barbecue and cook cheeseburgers out in their backyard. No, but I would say right now, sales are brisk. Customers are buying, but they're also complaining. Okay, they're complaining about the prices of food right now. And not only just food, but I think their overall, expenses in their normal lives. Like as an example, the other morning, I got a phone call from our tomato farmer in Florida. He said, I got some bad news. He said, we had a big freeze down here. I had to replant my crop. Tomato prices are going to be up. And it's going to cost me $2,000 more to send a tractor trailer truck from Florida up to the New York area to your stores. And then I come down here in the store and I'm talking to a customer that just said, hey, I just went and filled up my Suburban and that cost me $50 more, and my energy costs at home, insurance, everything. So I'm stuck in the middle a little bit. On one hand, I got to negotiate with this farmer, which I did, and we're going to split the cost, but I can't raise prices. So our prices at Stu's compared to last Memorial Day are probably up about 3%. They'd only be up like 1% if it wasn't for meat, And you asked me about some props earlier, but, here's one of our great...
tomahawk.
Oh yeah, this is what if you can put this on the grill this weekend, for Memorial Day, it's a crowd pleaser.
But Stu, yeah, it would be, but that's going to set you back. I mean, you're talking about a very expensive cut of meat there, and you mentioned cheeseburgers earlier. Mike McKee talking to us a little earlier, and he said, at some places they're charging you just for walking by the meat department. That's how expensive it's gotten.
But one thing people are doing is they're switching from their protein. Like, that's obviously the most expensive thing you can buy is a big ribeye steak. But then you can also go down to just getting some plain hamburgers. So we notice people switching a little bit. They're going to chicken. That's only in the $4 to $5 a pound range right now. They're going to pork. I've even been doing that. Instead of having a steak, get a nice pork chop, and it's like $10 a pound less. So
how much is that tomahawk that you held up per pound?
Oh gosh, I bet you this will be about $70.
Okay,
to get this, but hey, if you went to a restaurant and you ever ordered something like this, you'd be paying $150 or at least double or more for that thing. So
how many people can eat that chop?
Well, how much would I eat?
I know my husband be like, that's mine, but I'm just saying 2 or 3 people could probably chop into that, right?
Oh yeah, for sure. It really depends. I mean, who's a big meat eater? Your husband probably would love to devour. I got a son-in-law who loves meat all the time, and he could make a big dent in that thing. So, right now you're seeing people really just trying to save money. But you know what? The thing with meat right now is we're at a 50-year low in herd price sizes in America. We just had some of our ranchers back from the Midwest, and they're really just saying there's just less cattle. And why is that? Because, it costs them a lot of money to feed them because of the droughts and everything that happened in the Midwest. And there's not as much, grass out in the fields for the cattle to eat. They got to import the corn and the soy and alfalfa for the cattle to eat. So,
Stu, that was a problem I feel like last year too. Like we've been talking about the herd situation for a while. Is that, as you talk to the ranchers, any of that going to get better or easier or no?
It's getting better now, but it takes 2 years to really grow a little calf from like 300-400 pounds when they're born, all the way up to maybe 1,600 pounds when they're harvested. So it takes time, but you're seeing it build right now. It is growing, and that's why I'm optimistic about a couple of things. One of them is I do think meat prices are going to be coming down in the future. Even our ranchers and everything agree with that. And the second thing, I really think fuel prices are going to come down once we get things straightened out in the Middle East, which can't be forever. I mean, it's got to be resolved at some point. So I think we're going to see some softening on these inflation numbers as far as food goes in the future. But you know what? Here's what's really interesting, Carol. I think you have to break up this inflation into supply and demand and actual cost. Like from our standpoint, like I'll give you an example. You can go buy this watermelon right here. By the way, watermelons are great right now. They're really sweet. So here's a watermelon. You can go buy that. It's about $6 or $7 at the store. Or you can do this. We can have somebody cut these up. The labor for me to have a nice lady or guy back there cutting these up, it's for us nearly $25 an hour right now without benefits.
And that's never going down.
That's never going down. And so there's a couple of things that are not going to go down. Labor's not going to go down. That's inflationary right now. But I think the supply and demand of food, like for instance, I always laughed when I would read about people saying about egg prices. Eggs had nothing to do with inflation.
Right.
That had no government policy or anything. That just had to do with the avian flu. So supply and demand is built in. And if you look, we just had some fires out in Simi Valley, as I mentioned, the cold snap down in Florida.
Right.
So the droughts out. These affect food prices.
Well, we got to run. Always love checking in with you, Stu. Happy Memorial Day. We're going to keep our fingers crossed you don't get rain. Stu Leonard Jr., of course, President and CEO of Stu Leonard's. Enjoyed talking with him. We talked with his daughter, Blake, who runs their spirits and wines business a little bit earlier. Hey, coming up, Stocks on the move.